has been declared under the income tax returns by these HNIs as per the internal data of the tax department. It is also important to note that this action by the income tax department has started post the special window which was launched by the income tax department that ended on 31st December last year, where voluntary disclosures were sought, and the tax department had said that failure to disclose foreign assets or income in ITR can attract 10 lakh rupee penalty. So let's see how much of this inquiry will lead into mismatch, matching of data, and yes, not to forget, getting back these foreign assets data back in the country, noting an uptick in the returns and especially the revenue. Back to you.
Okay, Timsy, thank you so much for that. But move on, and the Bombay High Court heard Volkswagen India's plea challenging the $1.4 billion tax demand. The auto giant has said that the total bill, including the penalty, could mount to nearly $3 billion and called it a matter of life or death. Volkswagen also claimed that it is following the same procedure in Mexico, Malaysia, as well as Thailand, and the company warned India could become a and I quote, a laughing stock. Ashmit Kumar is joining in with us to give us more details on this one. Ashmit, take us through what has transpired in the court.
Well, Volkswagen seeking quashing of that $1.4 billion show cause notice served in September of 2024 and made a number of arguments. Number one, it expressed a fear that this 1.4 will turn into $2.8 billion if the penalty is accounted for, and that will make it a life or death situation for Volkswagen here in India. Second, Volkswagen argued that as far as the industry is concerned, this is a practice that is followed by a number of players across the industry, and that setting this example will be a dangerous precedent. It will impact the entire industry. Third, Volkswagen argued that this is a practice of importing these parts and then claiming tax benefits that it follows in Mexico, Thailand, Malaysia, and that if there is a regime change, if there's a position change here in India, India will turn into the laughing stock. It will raise questions about ease of doing business. It will raise question about foreign capital coming to India. And to substantiate that point, Volkswagen argued that they've brought in as many as 30,000 consignments over the last 15 years, and it's only now that there suddenly seems to be a change in stance by the customs authorities. And speaking of these consignments, important to clarify that there were fears expressed that consignments destined for Volkswagen are being held up by the customs authority. That is something that the tax department has clarified on, saying that no effort is being made in that direction. It's been recorded by the Bombay High Court that no such impeding efforts will be made by the tax department. But having said that, the tax department also saying that it's considering whether Volkswagen needs to cough up a bank guarantee to secure this demand of $1.4 billion. The hearing in this case will resume on February 20th.
Okay, thank you so much for that, Ashmit. But on that note, we're going to slip into a very short break, and we get you cues from the world of commodities after the break. Welcome back and thanks for staying tuned into Power Breakfast on CNBC-TV18. Now, Election Commissioner Gyanesh Kumar has been appointed as the Chief Election Commissioner by the Prime Minister Narendra Modi-led selection committee effective of February 19th. His term will run till January 26, 2029. He will be replacing Rajiv Kumar, who took charge as the CEC in May 2022 and will be retiring today upon reaching the age of 65. So that's the latest update that we have there. But let's move on and get you the latest coming in the world of commodities. And we have Manisha joining in with us this morning to tell us that. Good morning, Manisha.
Morning, Vinny. Thank you for that. I'll start with the crude oil prices, which have continued to stay under pressure. The investors are watching possible peace deal between Russia and Ukraine. But in the meanwhile, you also have Iraq's oil export, which is expected to resume next month. And then the markets also are looking at global trade war fears. So it's very contradicting with the kind of cues that we have in the global markets there. I also want to talk about metals, where we are looking at very mixed cues here as well. The major decline clearly comes in for copper, which fell more than 2% in the overnight markets. And with that, it has come off its 7-month highs that we were trading in the previous week there. Also, when you look at the U.S., that is COMEX and LME copper prices, the gap has now widened to nearly 10%, where the U.S. copper is commanding a higher premium. China also ordering restrictions on copper smelting has had the prices coming off there. And a quick word on gold then, and the prices here as well have seen some support coming back. The decline in US dollar index has taken gold prices back above $2,900 an ounce. There is a risk of market disruptions due to US tariffs, and that uncertainty keeps the safe haven demand going for gold.
Okay, Manisha, thank you so much for that. But let's move on. Chinese President Xi Jinping met with the Chinese tech leaders. Emily Tan is joining in with us to give us the details from the symposium.
Of course, if you may remember what happened last week on Friday, the Hong Kong market, the tech plays went gangbusters, and that was all leading up in anticipation of this symposium. We weren't quite sure when it was going to be happening, but it took place yesterday morning when President Xi Jinping met with about 20-30 of these top CEOs of these private sector entrepreneurs in Beijing. It was a very mixed picture, but Tencent was a standout there, as you could see, and China He as well, up 3.3%. Xi Jinping telling the entrepreneurs it is the right time for enterprises and entrepreneurs to showcase their talents and make significant contributions. He assured them of the persistent government support and giving them wider market access, also urging them to contribute more to tech innovation amid intensifying rivalry with the United States. Also, to maintain competitive spirit and to have confidence in the country's future, with President Xi Jinping saying that the challenges were temporary. So this did provide a boost to the sector sentiment. The sector basically was reassured after entrepreneurs had been rattled. It basically went to lift up confidence a little bit, and the event will likely, analysts say, be followed by some concrete pro-technology policies. That is now what we need to see, of course, as the government tries to support its economy in the last half year, as we've been watching, of course, all the policies that have been thrown at the economy. We really need the demand side policies to kick in here. So this, on the whole, a strong show of support from President Xi Jinping. It fueled a market rally, and then we're going to be watching what's next in terms of the policies that come through. You could see one of the standouts yesterday was Tencent shares up 4%. Xiaomi as well, better for 1%. Martin.
Okay, thank you so much for that. But that's all the time we have on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, pass our morning call.
जब दिल्ली में जगह जगह पावर कट होते हैं, जब उत्तम नगर, नवादा, संत नगर, बुराड़ी, त्रिलोकपुरी, संगम विहार, देवली में 3-3 घंटे, 4-4 घंटे बिजली जा रही है, तब भारतीय जनता पार्टी वाले कहते हैं नहीं नहीं नहीं, अभी तो आतिशी सीएम है, अभी तो केयरटेकर सीएम आतिशी है, वो जिम्मेदार है दिल्ली की बिजली व्यवस्था के लिए। जब यमुना में कोई मशीन उतरती है तो कहते हैं नहीं नहीं नहीं, बीजेपी चला रही है सरकार, एलजी साहब चला रहे हैं सरकार।
खुद अरविंद केजरीवाल ने चुनाव से पहले ये कहा कि हरियाणा गवर्नमेंट ने जहर मिला दिया है पानी में। इससे दिल्ली के लोग और नाराज हुए और दिल्ली में अरविंद केजरीवाल के खिलाफ जमकर वोट किया। अब हम लोगों पर जिम्मेदारी है कि जमुना साफ हो पूरी तरह। तो सरकार तो बनेगी, 20 तारीख तक सरकार बन जाएगी, लेकिन उससे पहले ही लेफ्टिनेंट गवर्नर साहब ने जमुना की सफाई का काम शुरू कर दिया है।
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello, and welcome to a brand new, fresh edition of Bazaar Morning Call. We're coming to you, of course, from the CNBC-TV18 Motilal Oswal studios, and I have both the boys with me this morning. We're missing Prashant in action. But, guys, morning. I think not too much cues overnight because it was a holiday in the US. But I guess the bulls here are going to hope that they can get some reprieve. And yesterday's slight pause in the selling, maybe at least that can sustain.
Well, that's right. At least you live to fight another day, right? So yesterday, after a while, you had the losing streak that was broken. 8 straight sessions we ended in the red. So good to see some green. We started the the week at least on a positive note, and you hope that there is some kind of stability. Forget about running away. Some kind of stability.
Maybe Mangalam is going to be that good luck charm.
Yes,
I hope so. If only it was that easy. But to be very honest, it's a good thing that we recovered from the lows. What's not good is that we recovered from lows in the absence of the FII volume. So let's see whether that continues or not. But just generally, we're in this low news sort of phase for the market, right? Where, there is not much in terms of a big trigger coming in. All the big news is out of the way. I was just looking at the big cues for the week, and the only thing that the street seems very excited about are the minutes of the FOMC meet that already took place. So that's telling you about, how many things people are looking forward to. But be that as it may, let's, talk about what are the important cues that we're looking at. First up, Surabhi, what do you have on your list?
So, like you said, not too much action, overnight on Wall Street. We're looking at, some mild gains in futures coming through right now. The only sort of, noteworthy commentary last night came in from one of the Federal Reserve governors. So this is coming in from Governor Michelle Bowman. And she went on to say that we need to see some more stability, some more improvement on the inflation front before charging ahead on the rate cut path. So the markets were sort of, not trading. But perhaps that's a comment that they'll take on board. The good news is that the dollar index has cooled off in the last couple of sessions, and we're looking at levels below 107 persisting even this morning, though it's moved up. Yesterday's low on the dollar index was 106.74. From there, slightly higher this morning, but nonetheless, it's a level below 107, and that's good for equities. But the bigger talking points are really coming in from China. And in the last 24 hours, the biggest meeting that's made the headlines is the Chinese president meeting with members of industry, meeting with the private sector, trying to fire up the Chinese animal spirits. Why are we tracking that here? Because we know what's happening in terms of the outperformance and underperformance. The India-China question is very much alive from a market standpoint. So what happened in this meeting that took place yesterday? It was a closed-door symposium, and Mr. Jay made some very, very interesting points. He is now calling for a clean, quote-unquote, clean relationship between the private sector, businesses, and between the government. And remember, this is a meeting that's coming in after the big crackdown in 2020 that we had during COVID, when there was a crackdown on large Chinese tech firms and all that chatter, whether they were becoming too big for the state itself. So after that, by the way, Mr. Jack Ma was present at this meeting. There were executives from, big Chinese enterprises like Meituan, Xiaomi, many of these big corporations were represented in that meeting, so to speak. Now, what did the meeting really say? And I want to put up this quote because it's an important one. He seems to be addressing what's the heart of the issues that cropped up in 2020. And he goes on to say that we must focus on solving the problem of arrears of accounts owed to private enterprises. We must strengthen law enforcement supervision, focus on rectifying random charges, fines, inspections and seizures, and effectively protect the legitimate rights and interests of private enterprises and private entrepreneurs in accordance with the law. So perhaps do away with random fines, seizures and inspections. And this is exactly what a lot of Chinese enterprises were complaining of over the last couple of years. And he also goes on to say that some of the economic issues are temporary in nature and that, the private sector can really go ahead with the investment. What does this mean? I mean, some of this has already been building into the markets. The excitement that started with DeepSeek, is it spreading? Is it getting a little wider? We've been asking our experts this as well, and that's the picture. The rally has been largely restricted to the Hong Kong listed market right now. If it starts spreading to the mainland market, Shanghai Composite is up about 3.2% in the last 1 month. If more money starts getting sucked into Asia, which is what some of our guests were saying yesterday as well, obviously it would be a lot of competition for India. We know what we've done in the last 1 month. I mean, the Nifty's been under pressure, down about 2-3%. Now to talk about the trade here back home. Yesterday was a day of respite because we did manage to at least preserve and protect the 22,800 mark. Is this the bottom formation process? Have we seen the worst of the shakeouts and the shakedowns or not? Is the mid-cap pain over? Well, the answers will only reveal themselves as the day progresses, the next couple of days progress. But of course, we've still got pressure from the foreign institutional flows, and we'll talk more about that as we go forward. But Nigel, I guess, like you said, I completely concur. If the market can at least hold its own, stop falling, just consolidate 1 or 2 sessions, I think that also is going to be a positive sign.
Well, more time at the pitch, helps you get into better form. So I think that's something that I'll be looking at. And the question now is, we're talking about double, triple, and has the market made a quadruple bottom? That's going to be important because the recent low off around this 22,700, 22,750, that's going to be the important mark. So that's the question, quadruple support or not? Well, that's something that we'll be looking at. Yesterday was a good session, no doubt, and we have got a good recovery from the day's low, but you need to note that the FI participation, the gross volumes are 30% lower than on the average that we saw last week itself. So that's clearly telling you that we didn't have full participation, and that could be one of the reasons that we outperformed. So today actually will be the real test. Moving to, the F&O data points that we got, yes, the markets moved up, and there was open interest shared both on the Nifty as well as in the Nifty Bank. That's telling you there's a bit of a short covering bounce that did play out in yesterday's trading session. And you put in the FI data points, it perfectly fits in. Because on the index futures, there was mild short covering that we saw out there. They continue to remain net short though out there. And on stock futures as well, you did see a short covering bounce that did play out. So there was long addition that we saw, and there were some shorts that did cover out. Though you need to note that on stock futures, the FIs actually are net long. And that's why both the clients as well as the FIs on select stocks, that's on stock futures, they are net long as well. There could be an arbitrage that plays out there, but that's the data point that we have. I'm looking at the options data then, the 22,800 call, 22,800 put. Both of them were fairly active in trade yesterday. 22,800 call, not so much, but otherwise, if you put this premium together, you get a close to around 350 rupees or thereabouts. So in case there's a strategy that's playing out, then you're adding 350 rupees to around this 22,800, and then you're deducting 22,800, if that is the case, which is known as a short straddle. So if that's the case, then you're playing for this broad band of close to around 700 points. So just fitting in, the options data, as well as the recent levels that we looked at, the crucial support comes in at around 22,700. With as per the options data, well, then you can look at around 22,500 as well. But that's the first line in the sand that you're looking at, 22,700. You don't want that mark to get broken. On the upside, last week we made an attempt to get to around 20,150, and from there we did take a U-turn. 20,150 is an important mark on the upside. The bulls would get confidence only once we get past this mark. What was encouraging yesterday was the Nifty Bank. It ended very, very close to the 20 DMA. It ended actually pat in line with the 20 DMA, and that's the one that will actually have to build on from here if, in fact, we need to see higher levels. So the 50,000, there's a lot of resistance at that mark. You'll want to see the Nifty Bank scale up from those levels. That's going to be important. And finally, your portfolio will be feeling good yesterday after a while because the number of stocks that were advancing, well, that moved up a little bit. And all through the trading session, you did see fair bit of buying on select stocks. So that's why you had close to around 900 stocks that were advancing. You want that number to be in that vicinity of around 900 to around 1,000, because there were days in the past week when in fact, we did see just 200-300 stocks that were advancing. So for the time being, some kind of consolidation will be okay. The bulls will not want the 22,700 mark to break on the downside. Mangala, what about you?
I take that point. The bulls will not want that mark to be broken down. And we had limited cues coming in from Wall Street. We do know that the Wall Street trading was closed on account of President's Day. But the US futures are higher for what it's worth, 0.2% higher on all the frontline indices. And the big event that we will be watching out for from Wall Street this time around would be the Fed minutes, where, there was some sort of aversion towards further rate cuts coming in. So what is the key cue coming in from there is something we'll be tracking very, very closely. Importantly, if you look at the macros as well, not much change. The US 10-year yield close around 4.5, the dollar index hovering just below that 107 mark. The good part for us here is that the continued slippage of Brent, is positive for India. It's now closer to that $75 per barrel sort of mark itself. Here, the Nifty snapped its 8-day losing streak, gained about 234 points from yesterday. You spoke about a quadruple bottom. Look at those, levels. Jan 27, 22,787, Feb 12, 22,789, 798 rather. And yesterday, the low was the lowest, 22,725. But even the bounce from the lows was the highest itself. The good parts, Nifty Bank led the recovery. Second part, you had both HDFC Bank and Reliance index heavyweights coming back into form. So we'll keep an eye out on whether this sustains or not. And then the cash market flows. Yes, the FII sold, but gross volumes, like you pointed out, were on the lower side itself. Whether this recovery continues or not is something we'll be watching out for. The most important thing for this recovery to continue will be, the 20-day moving average. That is something that we'll need to see crossing on a sustainable basis, perhaps closing above that as well. The Nifty, fair distance away from that, but the Nifty Bank is just about 100-200 points away from the 20-day moving average. If the Nifty Bank, which continued to lead the recovery yesterday, can support the frontline indices and close above the 20-day moving average, maybe bulls will have some hope for the Nifty to move further as well.
Absolutely, and bulls are right now living on hope, living on a prayer, call it what you want. But that's exactly what the last couple of days have been about. And yesterday, at least, we had some respite from the selling pressure. So let's kick it off with the equity call of the morning. And this one is coming from one, long-time India bull. Rhythm Desai of Morgan Stanley says, third quarter FY25 earnings growth was up sequentially, beating low analyst expectations. He says the market looks good for a near-term bottom given improving growth. He says if global cues do not surprise negatively, India should resume its outperformance versus EM soon. Their best bottom-up ideas following the earnings season are overweights on L&T, Bajaj Finance, ICICI Bank, M&M, Titan, Trent, Maruti. And they're underweight on Aisha, RBL Bank, Wipro and Concord. That's interesting, overweight, including a Trent, which has been beaten down badly in the sell-off in the last 1 month. Okay. Let's quickly move on and take the conversation forward with our first guest on the show. Anurag Singh, managing partner at Ansett Capital, is with us. Anurag, great to have you on the show with us. Thanks so much. First we were just looking at ourselves and looking at Wall Street and the outperformance over there. And now we have to start looking over our shoulders and look at China because that market started doing well as well. What have you made of the sell-off? I mean, it's the same question we've been asking you, right? But the sell-off has continued here in India. Is it time that foreign investors start buying in? Have we reached those levels in terms of valuations?
Yeah. So good morning. Yeah, I understand. Look, I think, and there is no clear answer to that, right? So I can't pretend that I know the answer, right? So multiple reasons we have discussed, right? There's no point repeating that, right? So, as long as the 10-year yield doesn't settle, as long as the dollar doesn't settle, as long as the rupee doesn't depreciate much, significantly, I think so we'll continue to face these headwinds. But outside of that, I think, look, India was a beneficiary of this for the last 3 years where, go 3-4 years back, China used to be 33% in MSCI, and again, add Taiwan another 12%. This block used to be 45%. And India was somewhere between like 15, 16, 13 to 15. And India got up till 20% and China came down to like 20, 25%, 23, 24. And I think some of that is reversing, right? Because China was very cheap and on the margins, especially with the DeepSeek. I think this has really rekindled hope. And by the way, their Xi Jinping is meeting the corporate investors and business people as well. So I think this is kind of bringing back the hopes that, China may not be as against the capitalism as earlier thought out to be, right? So I think all this combined Plus, I think, yeah, Indian market was good, fairly valued, good story, but there's no surprise there. There's no big trigger. It's good, but not for the time being, right? So if you're invested, that's fine, but otherwise there might be short-term money might be chasing, China for the time being, right? And US, by the way, right? So there's no, I mean, it's a popular trade. It's, I don't know whether it'll be right or wrong, but currently the trade is go long US, long China.
All right. Hi, Anurag. Good morning. And interesting as always, you've been maintaining that stance, right? That India seemed to have run ahead of themselves a little bit. And I think that point on the SIPs makes me a little bit nervous, but I'm keeping it going out here in India. Hopefully it makes, it makes my kids good money. But, a couple of points with regard to these FI flows. The rupee, at least in the near term, is showing some signs of stability, which, we had spoken about last time around. Do you think, with the kind of stability that we're seeing of late, the FI selling has been very, very relentless here in India. Do you think there is, there is a debate that in fact, maybe, or there's a point that maybe they slow down a little bit, at least in the near term, and maybe the second half of the year could be better with regard to FI flows? And also on the the Nifty 500 companies, you had made this point that there's plenty of froth in the broader markets. But if the earnings season has just concluded, actually wasn't so bad because the earnings growth was roughly around 8.5%. Not great, but at least better than what we saw in the previous 2 quarters. So a quick word on the flows as well as on the broader markets here in India.
Correct. So, Nigel, a lot to unpack there. So, by the way, keep the SIPs going. My opposition to the whole concept was that 80% of Indian SIPs were going to mid and small. That's a wrong concept. As a broad idea, 70% should go to large cap, and then remaining 30 you can do whatever, right? Debt funds, mid, small, whatever. If people think mid and small going to outperform large cap in 20 years, I don't believe, but that's my thought. And that's historical thought till 2019. That's what the data suggests. I'm not selectively picking data from selective years. That is from 1994 since inception of Nifty. So that has been my thought, but let's see how it plays out, right? But if it is in large cap SIPs, 12% is not going anywhere, keep it going, right? That's one story. Nifty 500, Nigel, again, till 2019 from SIP from inception, Nifty 94, don't go to BSE, and that's all distracting, right? BSE started in 79, that's all. You will always get 16, 17% there. That's not the real return. Nifty 94, 95, when it started, till 2019, Nifty 500 is below Nifty 50. So Nifty 50 is 12 to 13, including dividends. Nifty 500 is around 10 to 11, which means collectively it underperforms by 1 or 2%. And third, add to this the flurry of IPOs which are coming, which are all offered for sale. There's no 100, 200 bagger here. It's all juiced up IPOs, right? So all of this makes me believe that only the big gets bigger. That's the India story. So stay within Nifty 50, right? That's okay. So this is limited take here. On to your, Nigel, the rupee debate, and I was surprised RBI again did the intervention last week, right? And try to hold the rupee. So the point is RBI will have to make up the mind as to what the level it is comfortable with. My sense, it should be 92 to 95 anytime. And by the way, what is there to protect? It's the export or tariff war is just about to get unleashed. It will be very competitive. China will devalue the currency. I don't know why are we getting into this tariff currency war. We'll be kind of on the receiving end of this otherwise, right? And by the way, US will negotiate tariffs. I'm sure this will be negotiated as well. So that's my limited take. But by the way, FI is not so much. Look, if they have to buy, they buy at any price. So I'm sure if the growth comes back to India, which is one view is that it's pretty cyclical and it'll come back. They will come back. They come back at any price, right? And it is just that this is just maybe 2025 is not the year, or maybe 2024 was not the year. That's how I believe on this, Nigel.
What will make you change your view, or what would make this shift from long China, long US, move back towards perhaps long India, largely because valuations have seen some bit of moderation, and we've also seen some stocks coming back into comfort zone. What are your thoughts here?
So great. So Mangalam, I think Nifty is already at a good level, by the way, right? You can't try and bottom it, right? Exactly catch the bottom, but Nifty is already right there where it should be, right? And if the earnings pan out next year, maybe 12 to 14%, I think it can anyways, hover between 22,000 to maybe 28,000, depends on the multiple, right? Real factor to watch there is what is the nominal growth in the economy. If that is more than 10% and sustains, that's good. If that suffers a bit, I think there'll be a bit of a rethink. Second is the credit growth in India. It has come to 11-12%. If RBI is able to just manage this economy in the manner that monetary policy and fiscal policy work in tandem, and the credit growth comes back to 15 to 18%, that's a thing to watch. I have always maintained a positive stance on India. It is just on the margins, where do you go underweight, overweight? Look, that's what the world does. If $100 start from US, 80, 70 go to US, 20 go to Europe, 10 go to emerging markets. Within this 10, about 2 comes to India. That's the 20% allocation. So about 1 trillion, about 20 billion goes to India. That is the long-term equation. That is how the numbers stand. On the margins, it can be 25 billion in some years. It can be 15, 10 billion in certain years. So I think we have to take this flavor, with the way it is. The bigger risk, Mangalam, if I can leave with one thought, and I was little shocked when I heard this on your channel. I think Prashant and Surbi, you were there, you were interviewing the Access Management. They said about $55 billion of IPO listing / QIP promoter selling is expected in 2025, right? On the base of, and I could see the discomfort where you were trying to prompt a question like, is this a good thing? And the answer was, well, this is a good thing as long as SIPs keep coming. This is a bit too much, right? I don't know whether that can keep going, right? And I also remember a very fantastic interview, by the way, with Sanjeev Prasad of Kotak. I think that's a very good interview, right? Almost 50% of the money, this data, by the way, is not public. And I'm, thankful to him that he made that public. 50% of the money, 45 billion, came in 2024. That is equal to 21, 22, 23 combined. Yeah. I don't know how those investors are going to behave, right? So those are the equations. I would say, Mangalam, to your question, I think that is what is facing. So FIs might be capping returns on Nifty, but that'll come eventually, right? There's no confidence gap there. Rest 450, that's the issue, right? It's the domestic selling issue that's happening. So long question.
Anurag,
yeah.
No, absolutely. Take your point. And I think these are ultimately it's the flow of money and the color of money, right? Till now, domestic institutions have been supporting this exodus of FPIs. How long can that continue? Well, we can only keep our fingers crossed. And on the IPO bit, I think, the IPO market has kind of sobered out already. Let's see. Market sentiment also determines the kind of issuances that we get. So we'll figure out how the next couple of months are. Thank you very much for joining in with some perspective this morning, Anurag. Well, let's quickly move on and tell you what the rest of the show is looking like. Lots of interactions lined up as always at 8:35. We will have Mr. Ashok Atluri of Zen Technologies come back to us. Remember, he was speaking to us about the defense deals with the US earlier. This time it's on Q3 earnings of the company. At 9 a.m., Nitin Agarwal of Motilal Oswal Financial Services joins in. We talk about bank earnings and what lies ahead. Is there any sense in picking bank stocks right now or not? At 9:20, Krishna Sangvi of Mahindra Manulife Investment Management is our market master of the day. At 9:30, we get chatting with the management of Cummins India, talk about the outlook ahead for the industrial segment from here on. At 9:50, Kamaljeet Saluja of Kotak Institutional Equities joins in to talk about key trends in the IT sector. And towards the end of the show, we will be in conversation with the management of Rallis India and talk about the company's Q3 performance.
Well, time to slip in a short break, but we've got a lot of stock-specific action to track for you. We get to that in just a bit. For the time being, we run you through the list. We look at Bharti Airtel, ABB India, Zomato, Power Grid, GMR Reports, GR Infra, Bharat Forge, KIMS, Paytm, and DCX Systems. All of them will be reacting to positive news flow, and on a day like this, in our top 10 segment, all are expected to open up in the green. Stay with us. We'll slip into a break, get into further detail on all of these names.
more incomes in the higher bands have also been brought into the lower bands, so that they'll benefit from a lower tax rate. So if you would only look at the rate charts that we've come up with, where the income bands and the rate applicable to them are also rehashed in favor of every taxpayer. So if you are talking of the new regime, the new higher incomes are coming into lower band, the rates for all of them have also been brought down. So on the question of your FIIs and the retail investors, it is true, and I thought you were implying it in your question itself, that FIIs also go out when they're able to, in a position to book profits. Indian market today, Indian economy today, has an environment in which investments are also yielding good returns and profit booking is also happening. And I'm sure you would have seized that fact also.
See, there are some interesting data points. If you have the time, I will share. See, there are two issues over here. When people believe Indian retail investors have done very well, keep in mind the fact that you have a lot of new investors who come to the market in the current financial year. About 8 million out of 53 million unique mutual fund investors have come in the last 9 months. Yeah, and these are investors who I don't think will have the risk appetite to bear a big market correction.
Welcome back. The GIFT Nifty indicating a cut of almost 27 points at the open. Not really a worry. We did see a recovery from lows yesterday. Let's get stock specific now. Our research team is standing by with the CNBC-TV18's list of top stocks for the day. Good morning, guys. Let's go across to Sudarshan first. Sudarshan, there was a big cut on Bharti Airtel in the last hour yesterday, and now perhaps we know why. Tell us more.
That's correct. So promoter entity, that is India Continent Investments, which held 3.31% stake as of December 2021, is likely to sell nearly 1% stake via block deals today. And offer size of the deal is around rupees 8,000 crore with offer price at rupees 1658.80 per share, which is a discount of just 1% to closing price. And there will be 180-day lock-in period if this promoter entity plans to sell further stake via block deals. Now, I'm going with green first because of the discount is just of 1%. And second, this deal is likely to happen in the block deal window. So I'm going with green.
Okay. All right. Got it, Sudarshan. Thanks very much. So Bharti Airtel on the radar. Let's move on. We had some numbers come in yesterday. ABB India was in focus. Vivek, morning. How are the numbers?
Well, good morning. A strong beat across the board as far as ABB India is concerned. Remember, the stock has endured quite a bit of volatility in the run-up to this particular set of Q3 or Q4 C525 numbers on the back of the fact that you saw slightly muted commentary from the global parent and also kind of valuation de-rating that the entire capital goods sector is concerned. But the numbers are very strong. Revenue growth of almost 22%. This is driven by across the board growth in the, barring the process automation system. So growth is seen in the robotics segment, the motion segment, as well as the electrification segment. So revenue beat the CNBC poll by close to 7%. The core EBITDA came in excess of 650 crore, which was a 17% beat to the CNBC-TV18 poll. EBITDA margins at 19.5%. We were working with a range of 17.8%. On the back of that, profitability beat the estimates by 15%. Now, the only blip as far as the entire results was concerned was the order inflow growth. Order inflows actually fell 14% on a year-on-year basis, but we have to remember that the base that the company was working with in terms of order inflow, the base was very strong. So excluding that, if you're looking at only the base orders that grew 4% on a year-on-year basis, company says growth led by metals and mining, energy and chemicals, electronics as well as renewables. Also, management commentary quite positive in terms of private capex too, picking up modestly, going with the green as far as ABB is concerned.
Okay, all right. Thanks a lot for that, Vivek. Mangalam, coming across to you. Zomato, tell us more.
Well, Zomato is a company, it seems like, they love to be in the news for whatever reason. Change the name, get share of, market space, get share of stomach space, get share of the screen space as well. And this time around, they've gone ahead and opened one of their internal tools for external sale as well, which is Nugget, which is an AI customer support platform for third-party use. Basically, what it does is it enables, customer service, customer support systems. It has been doing that for their own businesses.
This is what I'm talking to when I'm resolving a query, right?
If you,
this is what it is.
If your biryani does not come to you in time,
Nugget is who I'm talking to.
More often than not. So it powers about 15 million plus support interactions per month for Zomato, Blinkit, and Hyperpure. It's built over 3 years as an internal tool. What Zomato has done is they said that, okay, this is successful internally. How about try and open it externally as well? So they've shown it to a bunch of companies, and the company says that 90% of the company who's seen Nugget, they've signed up. We don't know how many of the companies have seen it. And secondly, they've said the first launch has come in from their in-house incubator. More coming soon. Will this be as big as Blinkit? Will this be as big as Zomato itself? Perhaps not. But what does it do? It keeps some money coming in for the company. So not a bad deal if you're leveraging some of your own internal tools. So mild green is what I'm going for with Zomato.
All right, and talking about it staying in the news, let's see the Nifty rejig as well will be announced. So let's see whether or not it does make it. But going back to Vivek, tell us about some more stocks and news.
Well, that's right. Quite a few stocks in focus on the back of news flow that came in post-market hours yesterday. First on the list is Power Grid. The company has emerged as a successful bidder under the tariff-based competitive bidding. This is for 2 projects to establish interstate transmission systems. One project is in Karnataka and the other project is in Rajasthan. GMR Airports, the company gave its operational updates for the month of January. Passenger traffic is up 11% on a year-on-year basis, but December being a stronger month, you actually saw January volumes dip 2% on a month-on-month basis. January domestic passenger traffic up 11%, international passenger traffic up 12.4%. Aircraft movement was up 9% on a year-on-year basis, and again, on a month-on-month basis, went down 1%. The other stock on the radar is GR Infra. The Madhya Pradesh highway project that was constructed under the hybrid annuity mode has been completed. The project is fit for commercial operations from Feb 1st. Remember, the bid project cost was close to 907 crores, so positive news flow for all 3 of these companies.
Okay, all right, sounds good. Thanks very much, Vivek, for that. Let's go back to Sudarshan. He's watching out for a couple of other stocks as well. Sud, which ones are these?
So I have 4 stocks. We'll start with Bharat Force. It has launched mobile gun system on 4x4 all-terrain platform, and the range is beyond 36 kilometers, and deployment time during the day is 1.5 minutes, and during the night deployment time is 2 minutes. KIMS, it has entered into a strategic partnership with Usha Kal Abhinav Institute of Medical Sciences located at Sangli, Maharashtra. Also, KIMS will have an option to acquire majority stake in the UAIMS in coming years. Paytm, its subsidiary Paytm Services partners SBI Mutual Fund to launch Jan Nivesh with an option of rupees 250 SIP, and it also provides flexible SIP options of daily, monthly or weekly. Last one is DCX Systems. Company has bagged domestic and export orders of 24.51 crore rupees, and these orders are for manufacturing and supplying cable and wire harness assembly, and companies awarding projects include BL and Rafale Advanced Systems. Israel. So keep an eye on these stocks.
Okay, all right, sir. Thanks a lot for that. Well, here's a quick recap of all the stocks we just discussed, and all of them are with positive news flow. Bharti Airtel, ABB India, Zomato, Power Grid, GMR Airports, GR Infra, Bharat Forge, KIMS, Paytm, and DCX Systems. All of them reacting to positive news flow. But that's about the equity markets. Manisha Gupta joins us to tell us about the commodity space. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, after yesterday's gains, we are looking at the crude oil prices holding above $75 a barrel right now. There are 2 reasons to that. One, the oil market is supported by reports that OPEC and allies are considering delaying a series of monthly supply increases going forward. And the second is there are reports that Ukrainian drones have struck a major pumping station of a pipeline in southern Russia on Monday, disrupting oil flows from Kazakhstan. So these are a couple of factors which really seem to be supporting crude oil prices. In the meanwhile, you have gold also rising back above $2,900 an ounce. It's a second straight day of gains coming in for gold prices also. The risk of market disruptions due to U.S. tariffs, the decline in U.S. dollar seem to be supportive not just gold but for silver prices as well in the Asian markets right now.
All right, Manisha, thanks a lot for that. That's something we'll most definitely keep an eye out on. With that, take a short break. Come back on the other side. We will have Amnish Agarwal of Prabhudas Leeladhar Capital for some fundamental stock talk. Stay with us.
Don't know, but I'm sure there could be some signs. I suspect there could be some signs of panic over there. If you look at the valuation of the large cap index, let's say the Nifty 50 index, it's not too bad, roughly about 20 times 1 year forward, about 17.5 on a March 27 basis. There will be earning downgrades, I am sure, in some of the sectors. But broadly speaking, I don't see too much downside, as far as the large caps or some of the large caps are concerned, namely the financial names, IT, pharma, etc. Yeah, there are still pockets of overvaluation even in the large cap, but I can live with that. The problem still remains in the mid cap and small cap, areas. That is, sector will be dominated by mid cap, small caps, or the mid cap, small cap stocks. Still a lot of froth over there, and I think you would see a lot more correction over there. There are just so many stocks here, especially in the mid cap and small cap areas. So either you have companies which are trading at very expensive valuation but have decent fundamental. These are the high growth companies, let's say in the capital goods space, EMS, etc. But we just struggle with the valuation of these companies, and they are so much priced to perfection. Even now, by the way, despite coming down 20-30% from their peak level. So any disappointment, you would see a big cut in the market price over there. Look at the PSU names in railways, metals. You will get a very good sense. But look at something like a BHEL, which we have been sounding cautious for the last 1.5 years now. The stock went up from whatever less than 100 to 300, now down to below 200. I still think it's supremely overvalued. It will come to below 100, or rather, I should say, I can't forecast stock prices. The fair value of the company.
Welcome back. You're watching us here on Bazaar Morning Call. Not materially changed for the GIFT Nifty of the last few minutes. But let's see what the market holds for today. A couple of stocks on our radar, like we pointed out earlier. Amnish Agarwal, who's the Director of Institutional Research at Prabhudas Lilladher Capital, now joins in. Good morning, Amnish. Two stocks on our radar. One is Bharti Airtel on account of that large block deal. The other one is Zomato on account of them opening up one of their internal tools for external sales as well. On both these stocks, your thoughts?
Yeah. Hi, Mangalam. First on your Bharti Airtel. You see, in many companies, we have seen that the promoters have been, you can say, pruning some stake here or there. So I think looking at the way the financials of the company are panning out, and today, I think telecom is the most vibrant thing, and the business model looks very sustainable. And with the lag impact of the tariff hikes, which happened last year, is yet to play out fully. I think the next couple of quarters also should show very strong numbers from Bharti Airtel. So I think the offer is likely to be lapped up very easily, I think, and Bharti remains one of the top stocks as far as your telecom. And even if you look at, say, in case of, say, discretionary spending also, I think Bharti Airtel, you can say, ranks among the top companies today. Now, secondly, coming on to Zomato, you see, Zomato, we will have to see what the new, you can say, app or the tools which they are now opening up for the external people, how much, you can say, they can contribute over a period of time. But having said that, Zomato is always looking to enter, say, new segments. Suffice to say, today the major value for the company is getting created from Blinkit, which was an external acquisition, followed by their food delivery business. So while it is a positive, I don't think market is going to react anything in a very major way to this development, because we have got very limited, you can say, idea about these tools as of now and the scalability of the same.
Okay, all right. Amnish, request you to stay with us. For the time being, we need to get to a conversation with the Zen Tech management. Mr. Ashok Atluri, the chairman and MD of Zen Technologies, joins us on the show. Hi, Mr. Atluri. Well, the markets didn't like the numbers, and that's why the stock was down 20% yesterday. And from the peak, it has halved. But let's get a couple of questions out of the way. First up, in terms of the financials, earlier you were talking about around 900 crores of revenues with approximately 35% of margins and your receivable days coming down. Do you think that you're on track for all of this? And the working capital cycle is very, very important, sir, because, the cash from operations as well have been very, very bleak. So please confirm these details. Mr. Atluri, you're on mute, sir. Our viewers, your shareholders are waiting to hear you.
Yeah, 900 crore, we are on track, Nigel. And with respect to the working capital days, we are thinking that it will stabilize around 200 days on overall year basis. So otherwise, everything is good. We think there is a slowing down in the orders received from the government, and we think the orders should pick up in the Q4 and Q1. So we are looking forward to that.
Okay, all right. So 900 crores of revenues, working capital days at around 200 days, and margins at around 35%. All three numbers is confirmed, right?
Yes.
All right, Mr. Atluri, before we get into further details, when a stock runs up big time, the street is very, very happy. But when it falls, they want to see the largest stakeholder come in there and give some support. Now, your shares, your holding in the company, from around, I think, 60% because of dilution, etc., it's come down. The last reported number, I think, is a little below 50%, at around 49%. With the kind of fall that you've seen in the stock price, and given that you believe that the company is still on that growth path, would you come in there and, try to support and maybe find the stock attractive enough and back up the stock, pick up some stake and increase it from around 49%, say, take it back to around 50%? Is that a thought process in your mind?
So there is no such thought process now, Nigel. The reason is that, we diluted, the dilution has been mostly done because of the QIP that we did. We did sell, we did sell 4% of our stake, on 2 occasions. But the dilution has mostly been because we raised the money for acquisitions and working capital needs. So, I don't think we will be entering the market to buy it. Because the intention was not to trade sell high and buy low. The intention was we wanted to have some money on the table. So that was the reason, yeah.
That brings us to our next question, which is the acquisitions that you have made or the acquisitions that you've announced along with your results itself. I look at some of the numbers. You've bought Applied Research for about 127 crores. Out there, the revenue is 92 crores. You've invested about 4 crores in Bhairav Robotics, no revenue. You've invested about 25 crores for 51% in Vector Technologies. Here as well, absolutely no revenue. Nearly 13,000 rupees is what you reported in the last financial year. So what one wants to understand is what is the scalability in terms of revenue for these acquisitions, and are they margin accretive? If not, then by when?
So ARI is in the business of naval simulation, and we are very. I think it's almost like a twin for Zen. Zen has been very dominant in the army simulation, and ARI has been dominant in the marine simulation, not in the naval simulation. Now, difference between marine and naval is that naval simulation also require weapon systems, etc. As an addition to make them transfer from marine to naval, and Zen has those weapon systems, the simulators with them, or they can be achieved very easily. So this will be a completely new market that we will be addressing in a big way. Actually, about 15-20% is already from Navy for ARI. But this is an extraordinarily, opportune moment for us to invest in this company. And we have been saying that we want to get into Navy. And this
Could you give us a sense of how much bigger can it be? It's 92 crore as of the last financial year. You've paid 127 crore for this business. How much bigger can this be over the next 1-2 years? What margins are you targeting here? And on the others as well, Vector and Bhairav, when do they become revenue accretive? Because you've paid a fair amount for them, together close to around 30 crores.
So with respect to by 27, I think it should at least double. The revenue should at least double for ARI. That's our expectation. And
margins of
margin. I think it should get to the margin of 35 EBITDA and 25 net. Even though now it's around 13-14%, we expect that to ramp up, especially when we go with our value addition.
And what about the other 2 acquisitions, sir? You mentioned that revenues for this one. Yeah.
Yeah. So, but the Vector is a very, very rare company in the sense that they actually make the BLDC motors. They make the engines. They make the counter rotary the propellers. So this company, Zen looks not at the turnover but at the potential and the IP that they have developed. The IP this company has developed is extraordinary, And we think that this is a absolutely win-win position for us in the sense that not only will they be helping Indian drone companies to indigenize, but they'll be also exporting a lot from here to North America and Europe.
Okay, so you've bought it for the IPs. Got it, got it. All right, sir. Coming back to the overall question, the guidance you've already reiterated that you will do 900 crores in FY25, right? And you're saying that revenue from at least ARI, some of these other acquisitions should start trickling in. So what is the top line growth expectation that one can have for FY26 from Zen Tech?
So, I think for FY20, again, we have been saying that there will be a CAGR of 50% over the next 3 years, average CAGR of 50%. So depending on the inflows of the order in Q4 and Q1, we will be able to actually predict what will be the top line for Zen in 26. But we expect even if it is muted, we expect that the 27 and 28 will more than make up the gap in terms of absolute number that we are planning to achieve.
So you're saying 50% CAGR top line, you're still intact with that sort of outlook and guidance?
On average. Even if this year is a little shortfall, we'll try to cover it in 27.
Okay. Now, on margins, I think you've mentioned that you will be around this 30% handle. Just trying to understand what's happening because you've already done these acquisitions. So, how much cash is left in the books and why did your finance cost go up so much in the third quarter?
So, the finance cost, we had taken, a loan from an NBFC preemptively, but it was a 10% cost. So the cost that has gone up is because of the interest on that, but it was 60 crores because by that time QIP was not done. So in anticipation of delays of QIP, we had raised some money. But this will be repaid by this May, and so we'll not be having any finance costs in that regard.
Okay, all right. Very quickly, sir, what is the pipeline you have bid for orders? Because currently, I think your order book is around 800-900 crores approximately, and you're expecting things to pick up in the first half of next fiscal. So what is the pipeline of the orders you have bid for? Because that will give us some visibility, sir.
I would say, the pipeline, we say whenever the fund allocation happens, etc., we think by the first quarter, almost about 800 crores worth of orders would have been decided.
All right. And these acquisitions that you made for the IPs, does that enable you to bid for more? If you could give us a sense of, by when do you start bidding for projects from these acquisitions that you've made?
So ARI, we will start bidding immediately. I mean, as we speak, we will be going and start talking to the navies, not only India, but all global navies about, the capabilities. And again, we want to be absolutely aiming to be number one in that. And I think the revenue should start in FY26, but I think they'll really accelerate in FY27 and 28.
Okay, all right. Mr. Atluri, thanks a lot for joining in and clarifying on all of those details. For the last 1 month, your shareholders have been clearly nervous. The market has been such as well, but your stock price has come off by close to around half. And even now, it's at around 10,000 crores of market capitalization. So execution of orders, getting more orders, and reporting a good amount of profitability is something that the street will track very closely. Thanks a lot for joining in. Amnish Agarwal is still with us. Amnish, thanks a lot for staying by. Tell us about your view on the defense stocks. A lot of them have come off the top. What's your top buys out there? And any view on Zen Technologies? Would you be interested? The management has been talking about a very, very good order pipeline. Though delivery could be a little bit short in the near term, though they're talking about 50% CAGR growth over the next 3 years. Would you be interested?
You see, we haven't done any detailed work on Zen Tech per se, so I won't be in a position to give my views on the same. As regards to other defense stocks are concerned, I think the outlook on them seems to be quite good because the ordering has improved considerably over the past few months. And the way the government is looking at, say, ramping up the, production in the domestic sector, I think that actually gives a very good visibility of growth. Having said that, what actually happens is that many of these defense projects, whether it is, your Tejas orders for HAL or some of these submarines or frigate orders which come for some of these, Mazgan Dock or your shipyard, these companies. Now, some of these are very long gestation projects. In some of these, for example, in the first 3-4 years, you will be booking just around 40% of the revenues, and maybe in the 5th or 6th year, the full revenues will come. Now, whether these companies will grow, the answer is yes. Can the growth be a structural 25-30% kind of a number in top line? I don't think that is the way these companies operate. So whenever the booking of any large order gets completed in terms of execution, then you will see, you can say, more execution and numbers coming in. But having said that, many of these stocks have now corrected to much more reasonable levels. For example, within the ambit of some of the stocks we cover, Bharat Electronics is one such stock where the stock has corrected from 340, 350 levels. It is now trading at maybe around, say, 30 or sub 30 times FY27 numbers. And the advantage is that it caters to all the armed forces, whether it is your Army, Navy, or Air Force. The execution is strong, and the track record in terms of listing and delivering to shareholders is there from the last 30 years. So Bharat Electronics remains our pick in the space. But having said that, some of the other names also, well, I think they look good in the long term, and particularly so because they have now seen significant correction. But one should not expect the kind of return we have seen in the past. But I think a slow and steady climb from the lower levels can be witnessed in some of the defense stocks. So I think there is no reason to be, you can say, negative. But yes, one needs to be very selective in picking these names now.
Okay, fair point, Amnish, got that. Thank you very much. Stay on, we'll have some more questions for you in a bit. As we take the break, should look at the Hong Kong market once again. Just can't take your eye off on it. Started quiet. Remember, there was a 3% rally in Hong Kong, 3.5% on Friday in anticipation of this Xi Jinping meeting. The meeting happened and now there's, fresh exuberance, 1.5% up out there on the Hang Seng. We'll take a break, come back. We'll also have our technical experts join in. Sudarshan Sakhani and Mitesh Thakkar will join in with some trading perspective.
Well, the merger between JioCinema and Disney Hotstar is done, and there's a brand new app. Now, the most obvious benefit will be that users don't have to choose between these two apps or toggle between the two different apps to get to the content they want. The new Jio Hotstar app will have it all, over 3 lakh hours of content across 19 languages. So potentially, we will now have India's largest OTT player, with the company saying that it will have a user base of over 50 crore. Now, these 50 crore people are not necessarily all paid users, but that just means that there's potential to convert them. So what happens to your existing apps? Now, JioCinema will now redirect you to download the new app or prompt you to open the Hotstar app if you already have it on your phone. Now, the Hotstar app should automatically have been updated to Jio Hotstar or will prompt you to install the latest update. Now, your existing premium plans will continue on Jio Hotstar for the remaining duration of the plans, and once those plans expire, you will have to subscribe to the new plans. Now, these new plans start from 149 rupees for 3 months for a mobile plan, and it goes up to about 1499 rupees or 1500 rupees for a premium ad-free plan that allows you to access 4 devices. And what does Jio Hotstar now entail in its new avatar? Well, everything that both apps used to individually offer is now under one umbrella. Now, Jio Hotstar will also aggregate the libraries of NBC Universal Peacock, Warner Bros, Discovery, HBO and Paramount as well. Now, it also plans to double the South Indian content to about 1100 hours, taking on what has been the USP of platforms like Prime Video or ZEE5. But the biggest draw for Jio Hotstar will be sporting events. Now, the new entity holds rights to all the sporting events that Jio and Disney Plus Hotstar held individually. So that's IPL, ICC events, English Premier League and Wimbledon are all covered. Now, the company has also plans to widen its offerings to bring more sporting events under its umbrella.
Welcome back. You're tuned into Bazaar Morning Call, and we have our technical experts who join us, Sudarshan Sakhani as well as Mitesh Thakkar. They are on the show. Good morning, gentlemen. Thanks a lot for joining in. Well, before we come to you, just want to alert our viewers that large trade has taken place, 3.5 crore shares worth of around 5,800 crores. That's changed hands in the block window. If you saw the stock yesterday, towards the end of trade, there were a lot of shots that got into the system. Now this has taken place in the block window, and also we know there is a lock-in for 180 days. So some of those shorts, they'll be scrambling for cover. Bharti Airtel could be the stock of the morning that will pop up well in the green because it's taken place in the block window. But coming back to you all, Sudarshan as well as Mitesh, thanks a lot for joining in. Well, Mitesh, you go first. Tell us about the Nifty, bottom, double bottom, triple bottom, quadruple bottom, 22,750, 22,700. Will it hold or is it set to break?
Good morning, Nigel. So I think, my initial feeling is that there's a chance that it might hold, despite the fact that we have done more than 3 attempts. The reason being is that a lot of indicators, which were declining because of this multiple times the market has taken support around this area have stopped falling. They've started turning flat. Now, the only thing is that if they can start turning up, then we might have a slightly better price action scenario. So I hope that this 22,800, 750 levels holds. And once that happens, and once we get a reversal sign, which could be closing about 23,150 at least, that will give you a short-term reversal. Then we might, see that there is some base building which could lead to a reversal and we could get into some kind of an uptrend. But for the timing, I think I'm just keeping my fingers crossed that this level, despite the fact that it's being tested multiple times, is managing to hold on, and I hope it continues.
All right, let's take the same question to Sudarshan as well. Sudarshan, when a door is knocked at multiple times, chances are that people either leave from the door or that door opens. What side are you on right now?
Good morning. See, yesterday the Nifty made new lows and it bounced from that. But the fact remains that new lows for this bear market were made. And that's not good news. The bounce could be anything. It could be a dead cat bounce. It could be the beginning of a new bull market. But it's too early to say. So we'll just have to assume that the downtrend that had started, or we can call it a deep correction, that correction continues. And these bounces are just normal in an ongoing trend. Whether it was up or down, we are in a downtrend and we will see those small corrections on the upside. Now, at some point, I hope we will all be proved wrong and the market will really take off. But today is not the day. So the trade for today remains the same as yesterday. It's best to avoid the index.
Got it. Best to avoid the index. And let's talk about individual stocks. Sudarshan, you go first. What do you have on your radar?
Well, Nigel, this is also a problem. A lot of stocks are giving sell signals. I wish again that I had a big buy list, but I don't have it. So that's one of the themes that at least the mid-caps are getting crushed, mid-caps and small caps. Bharti India is an intraday short with a stop above 1320. Supreme Industries is again a short with a stop above 3700. And SAIL, a third short idea, with a stop above 108. So just to balance it and make it cheerful, I have SBI Life, which is a positional buy. I mean, intraday it could do anything. SBI Life is giving some signs of life. We consider a positional buy with a stop under 1445. Broadly, it's still a sell market.
Okay, largely a sell market. 3 short ideas and 1 long idea to balance that out, and that to a positional one. We'll keep an eye out on that, Sudarshan. Mitesh, your stock ideas?
I have a few more buy ideas. Ashok Leyland was a recommendation yesterday as well. Is a fresh buy with a stop at 218 for targets of 235. Hindalco is something which I like. So if it starts getting past yesterday's high of 612, buy with a stop at 602 for a target of 635. Also buy on ABB with a stop at 5190 for targets of 5350. And KPIT Tech is a sell call with a stop at 1336. Look for targets of 1255.
All right, gentlemen, thank you for joining in. We'll come back to you soon. For now, we take a short break. Come back. On the other side, we have the pre-opening, and also Nitin Agarwal of Motilal Oswal Financial Services joins in to review the third quarter earnings of banks.
Mean that then you'll have to pay for IPL? Maybe not, because the company says that some content will be available for free every day. But whether this includes IPL or not, that we don't know yet. Now, what will be interesting to see is what this means for the OTT landscape in India. With nearly 36 million paid users, Hotstar was already the market leader here. And it was followed by Prime Video, Netflix, and then Apple TV+. Now, the merged app will actually have about 52 million paid subscribers to start with. And this could shoot up once the IPL starts in a month's time.
We are actually using AI to tackle AI. It has to be like that. We've actually used a lot of AI for a very long time now. We always had models where we could detect that this number is likely to be a spammer or this message sender is likely to be a spammer. Those were some of the basics that we did a long time ago. We're now looking at AI almost across the business, not only protecting consumers and improving consumers' communication, but also from a business point of view, from our biggest revenue stream is advertising. How can we help brands leverage AI on our platform and get better bang for their buck? We've invested very heavily on various parts of our business, even operationally. We're using AI on customer support, for example. Even our legal team is looking at AI products. Our developers looking at AI products. So AI is very deep into our business now, and pretty significant investments are being made into AI.
Let's double down on India and your focus here on India. How do you see this market evolving? How do you see this market growing for you? What are the opportunities that you want to build on, considering the fact that the line...
Welcome back. You're watching us here on Bazaar Open Exchange, live from the CNBC-TV18 Motilal Oswal studio. Quick look at the Asian markets. The Hang Seng continues to hold well. It's about 1.5% higher, and we have the Taiwanese index as well, about 0.1%. Has that done anything to the GIFT Nifty? Not much. When we, wrapped up 5 minutes ago on the previous segment, we saw the GIFT Nifty down about 31 points. Now down about 33 odd points itself. Though all eyes will be on what happens in that famous meeting, between the Chinese, the government and the corporates, and what comes out of that. Because if that's a positive, then that may be India negative, because a lot of money, everyone is talking about going to China.
See, a lot of people attended, and then you have to attend. You can't say no when you know the Chinese president is there. But the fact that Xiaomi, Huawei, there was Meituan, BYD was there. So, all the big giants were there. Jack Ma himself showed up. So, I think it was this big confidence-boosting measure. And then you had a release come out of it. The visuals that we're seeing, it was all very well organized to send out a message. And that message seems to be that China is open for business, and the government wants to, again, to reiterate that quote that I had put up earlier, that, unplanned, random seizures and checks, they should not take away the confidence. That seemed to be the message, and it's a message that's being very well received by the markets.
Reminds me of a Bollywood scene, where both US and India are saying, I have earnings, I have demographic dividend, I have, Donald Trump right now, I have tariffs. So what do you have, China? The Chinese government says, Mere paas?
Jack Ma hai. All right, let's take things forward and now come back home, because while that's the buzz around China, the fact is that we're looking at the earnings season that's just concluded. It's not been a very blockbuster, so to speak, earnings season at all. Let's put the spotlight specifically on the financial space and talk about what lies ahead. Q3 was fairly modest for the BFSI space as well. But now what is FY26 looking like? What are we in for, considering the rate cut cycle has just begun here in India? Nitin Agarwal, who's head of BFSI research at Motilal Oswal Institutional Equities, is with us. Thanks very much for joining in, Nitin. So that's the real question. As these rate cuts get underway, what can we expect? We've seen a little bit of a hiccup in asset quality. MFI issues are still persisting, but NBFCs went ahead and met the governor, and there's hope that they'll have better and easier access to funds. So let's start with your big picture in terms of, if you were to look at buying or adding to any BFSI positions, what is looking the best to you?
Yeah. So good morning, Subhi. Yes, with the start of the rate cut now, we will see further sort of compression in bank margins. While a large part of it has already played as the funding cost kept on rising over the last year. But as now the lending yield also reprices and the loans which are linked to repo rate reprices down, there will be some incremental pressure on margins that we will see in the coming quarters. And depending on how and at what pace RBI moves, I think bank NIMs will be linked to that extent. And NBFCs, on the other hand, select NBFCs, especially the ones who are in the vehicle business, will likely see NIM expansion, because their large part of their borrowings comes from by way of banks. And as their funding cost comes down, they will likely see a uptick in their NIMs in the coming year or coming quarters, I will say. And but it will be for select NBFCs, I think, because especially for say housing finance companies, if you look at, I think they may still continue to see some NIM pressures, and the picture may remain mixed there. But for passenger vehicle players and the CV players, I think there is a good case of NIM expansion to play out over the year.
All right. Hi, Nitin. Good morning and good to see you, Win. Let's focus on Kotak. Yesterday we had an exclusive chat. The top boss out there, Mr. Vaswani, had a chat with our top boss, Shreen. And what he said was, with the launch of 811, he hoped to add close to around 4 to 5 lakh customers a month. Do you think that number is something that you would be working with as well, or do you think he's being too ambitious?
I think yes, because see, Kotak has lived through this ban over last 1 year. They navigated along still pretty well and handled all the uncertainties and still delivered a pretty reasonably good growth overall. And now with the ban getting lifted, I think the team overall is quite energized and looking to go for it and make up for the loss that they have seen in the past 1 year, because the market share in credit card has come down quite meaningfully. And now with the renewed focus on growing the consumer business, they have already done some acquisitions. And in the card space, while the overall markets are still not very conducive when it comes to unsecured loans, but Kotak, having not been able to grow in this kind of market, was kind of a blessing in disguise, I'll say. And to that extent, now as they come back fully in the market and look to grow the unsecured portfolio, I think the bank is better positioned to deliver stronger growth versus many other private names. So we have also upgraded Kotak alongside the 3Q results.
All right, so you've upgraded Kotak. So let's get stock specific now. Nitin, with the kind of results that you've seen in the third quarter and the kind of environment that we are in right now, where do you see maximum credit growth coming in? Which companies stood out in the third quarter results for better performance over the next few quarters? And from an industry standpoint, what is your expectation on credit growth and asset quality?
Yeah. So, Mangalam, we are looking at overall around 10.5-11% kind of industry growth for this year. And even for next year, I think the numbers will be only slightly better, somewhere around 11.5 to 12 is what we are looking at when it comes to credit growth. And deposits is something that continues to remain a challenge for the overall sector. And the CD ratios for many banks still remains elevated. Even PSU banks are now looking at a fairly optimized balance sheet, and CD ratio for many of them have approached 75. And few banks like Bank of Baroda are already in early 80s. So to that extent, I think deposits will continue to guide loan growth, while at the margin, given the regulatory steps in terms of the reduced repo rate, and which will continue likely, and alongside the measures on the budget that the government has announced, may spur some demand on the consumer side. But the actual translation of that in terms of growth, I think, will still be relatively controlled. And to that extent, we are expecting only a slight uptick in FY26 growth numbers over FY25. And when it comes to stock, I think large banks are doing relatively much better in this part of the cycle, while NIM compression is playing out, but that pace has come down very meaningfully. And on the asset quality side, the larger banks, like you look at ICICI, HDFC, they're all reporting very stable trends. So the pain that we are seeing is very much limited to the unsecured segments, and within that, the MFI and credit card. And it's only impacting the select mid-sized banks and those players. And I think these trends are likely to continue, while overall credit costs will see some uptick, but we are penciling in a calibrated upticks over there. And to that extent, ROAs will still remain fairly healthy for the large banks. And that's where our preference lies in the current markets.
Okay, so Gaurav, that explains why you like stocks like ICICI Bank, HDFC Bank. I think these are some of your large cap picks. On NBFCs, Nitin, you mentioned that some select NBFCs could actually see, that pressure on NIMs to come off. Maybe NIMs even improve, are you saying? Which ones would this be? Would Bajaj Finance make the cut? Essentially, what are you buying in NBFCs?
I think, vehicle financiers looks interesting because the valuations overall are quite reasonable for them. And now, with the way the utilization levels are expected to move up, and in respect to the demand that is going to see some recovery, and alongside the funding costs, which will come down, because for these vehicles happen by way of banks, borrowing from the banks, and that interest rate will come down and linked to the repo. And therefore, players like Shriram, Chola may see some recovery in margins over the year. And these are the, Shriram is one name, MMFS is another name that we like a lot in the vehicle space. So Shriram, MMFS are the names that we like.
Okay, so Shriram and Mahindra Financial as well. Final question, Nitin. I mean, we've seen the MFI stress, and you're saying probably the worst of it is has played out or is playing out now in the fourth quarter. Is there any other pocket in tier 2 banking as well? Any other accidents that we need to be watchful of, potential accidents? Because all the banks you named are the pristine quality A-grade banks. What about tier 2 lenders and anything else? Any other red flags on the horizon?
I think, see, MFI as a space still continues to face the headwinds. We are still not fully out of it. And once the new guardrails comes into effect from the next quarter, we will still need to see how the industry takes up to that, how the borrower behavior is, and what kind of growth rate are we really looking at. So possibly the stress and the elevated credit costs will continue for a couple of more quarters. And hopefully from second quarter of 26, you will see the normalcy returning to the sector. And while there has been an improvement in collection efficiencies across states on a month-on-month basis, but this is still not good enough to take them home. And to that extent, I think the overall slippages and the credit cost will remain elevated. And it will take time for the sector to come out of it, and because there are very acute problems of over-leveraging. And this guardrail-related impact is something out there which also needs to be watched out for.
Right, Nitin, thank you so much for joining in. Always a pleasure speaking with you. With that, let's look at a couple of these stocks which are settling well in pre-open. ABB India is top of the pops, up nearly 4% in pre-open itself. There was a beat across the board when the company reported its results yesterday post-markets. Vivek joins in once again to take us through the numbers. Vivek.
That's right. You put it right. It's a beat across the board. Revenue strong, almost 7% beat versus estimates. What drove the revenues higher? The robotics division up 30%, motion division up 22%, and electrification up well in the almost mid-30s. EBITDA coming in at 657 crore, which is a 58% year-on-year jump. 17% beat to the estimates. EBITDA margins beating the estimates by almost 200 basis points. Profitability beating estimates by 15%. Like we mentioned earlier, the only blip in the results was the slightly muted order inflow. But remember, it comes off a much lower base. So order inflows actually fell 14% on a year-on-year basis. But excluding the large base order, you actually saw a 4% growth as far as order inflow was concerned. Growth the company saves was led by metals and mining, energy and chemicals, electronics, renewables. Stock looking to open up in the green. Interesting to see whether the street looks beyond the order inflow blip.
Okay, all right. Got it, Sudarshan. Thanks very much. Let's revisit Bharti Airtel as well, because that block did take place, like Sudarshan was alerting us. And Bharti is actually, in the pre-open, it's up about 1% or so. So let's revisit the details.
So Bharti Airtel saw a change of hands for more than 5.1 crore shares in block deal window, and that shares were worth rupees 8,480 crores. So entire block deal that company was planning to sell via India Continental Investments, that is a promoter entity which held 3.31% stake as of December 2021. So the term sheet that CNBC-TV18 had an access to indicates that this promoter entity is likely to have sold 0.8% of its total holding of 3.31% stake in today's block deal window. So yesterday, Bharti Airtel, because of this news, was under pressure. But today, we are expecting a green start for Bharti Airtel.
Green start for Bharti Airtel. Sudarshan, thank you so much for that. So that's from one suit. Let's go across to the other one. Sudarshan Sukhani joins in now. It's 9:10, the time for the 9:10 call. Sudarshan, what do you have on your radar?
Yeah. Here it is. SBI Life is a buying opportunity with a stop under 1445. Make it a positional trade.
And Mitesh?
I'll go with a buy on Hindalco in case it starts trading above yesterday's high of 612. Buy with a stop at 602.
Okay. All right, gentlemen. Thank you very much for that. Now, before we get to the market open, Nigel has hopped across to the wall to take stock of a lot of the commentary that's trickling in, given the market correction, the fact that we're just finishing up our earnings season. So what lies ahead for the Indian market? Nigel, tell us.
Well, let's get you what the top voices are saying. Let's start off with Rhythm Desai of Morgan Stanley, who's the most bullish of the lot. He says that Q3 earnings growth was sequentially better than subdued expectations. He says that the market looks good for a near-term bottom, given the improving growth. That's provided global cues do not surprise negatively. India, he says, could resume its outperformance in comparison to emerging markets rather soon. They're also overweight on L&T, Bajaj Finance, ICICI Bank, Mahindra & Mahindra, Titan, Trent, Maruti. while they're underweight on Aicha, RBL Bank, Wipro, Concor. Moving to Surendra Goel of Citi, he says that the headline trends in Q3 missed expectations with EBITDA growth of around 7% on a year-on-year basis. But he goes on to add, with a pickup in central government capex in the past few months, the budgetary support to consumption, and with the start of rate cuts, they expect growth to pick up. But the impact of the reciprocal tariffs from the United States, that's something that needs to be watched out for with regard to its impact on select sectors. After a 12% decline, though, from the peak, they believe that valuations at around 19 times 1 year forward is below the 5-year long-term averages. And the FIIs, they're underweight on the benchmark, which is at the highest levels we've seen in the last 15 years. He goes on to add that India looks relatively well placed post the correction, and their December 25 Nifty target is roughly around that 26,000 odd mark. So those are a couple of big market voices that we got earlier. During the course of the day, we'll get you a few more voices as well.
Okay, all right, Nigel, thank you very much for that. So there's some interesting views there coming in on the market. By the way, the pre-open is absolutely flat. There's nothing much moving, but like we've been saying, maybe flat is not such a bad thing after the brutal fall. If we can just spend some days in consolidation, the bulls will take that also with both hands. Let's check some of the trend stocks that are, showing some green, flashing some green. Bharti Airtel is one for sure. There's Adani Enterprises, Grasim, Aisha, and M&M. The pre-open is suggesting that the M&M will see some stability after yesterday's 4% dropping. So let's see how it goes. Mangalam, you're watching for anything? I wonder how Zomato with Nugget, which they're the nuggets that they're going to offer to the rest of the world now.
Just a nugget of a game. Again, see, about 2/3% is what we're seeing on Zomato. The pre-open comes up for you. Again, imagine a food delivery company going into, or rather a food delivery / quick commerce / outgoing event sort of company now going into B2B SaaS. That wasn't on anyone's 2025 checklist. And maybe that's also the reason why they want to, go beyond Zomato and turn into Eternal. Because they want to be a bouquet of offerings and not just a couple of apps itself. But what's actually catching my attention is Senco, which has seen a big cut over the last few trading sessions, largely on account of weak numbers. This month itself, the stock is down 28%, from its highs down about 56%. It had peaked when the company raised money via QIP. Now it's seeing some signs of life, up around 3.5% in pre-open. Westlife Food, remember we were talking about how there could be some hope coming in terms of recovery for the quick service restaurants. Westlife Food, again, has seen a big cut at pre-open, up around 9%. How much of that is pre-open fun and games is something that we'll know only when the market opens.
Yeah, volume is very low
right now. No volumes, 115 odd shares. So that's something we'll keep an eye out on. But then ABB India, definitely top of the pops. High volumes, good numbers coming.
Just one more stock, Max Health. There's a big upgrade that's come in from UBS. I think earlier the target price was 610. Now the target price is at around 1200 odd. So that's a big U-turn. They have upgraded the stock to buy from neutral. So we can keep an eye out on that one. Could explain why. On decent volumes in pre-open, the stock is up closer around 3%. But I think we got a few seconds. Let's get straight to all the rates we're getting in. As the markets open up. So, take it away. Tell us about the Nifty levels first.
Okay, flat is the start. That's what we're getting. Actually, flat across the indices. Nifty, Midcap, Bank Nifty, everything is flat. And now as we start getting in the first rates, about 4 to 5 points up on the Nifty. It's already flashing a little bit of red. Okay, let's see. Talking about the gainers. Grasim, Bharti Airtel, Aisha Motors. There's some green on Apollo Hospitals, but the green is very quickly going away and the Nifty is now down 20 points. So let's see what's pulling up the downside or pulling down the downside. Power Grid, M&M is again down 1%. That's interesting. M&M is now again the biggest Nifty loser this morning as well. There's BPCL, there is Bajaj Finserv, there's Ultratech Cement, Titan is a little weak, ONGC is a little down. No trends really, it's all over the place. The only interesting stock is Mahindra and Mahindra. That's follow through selling. Second day running. And on the upside, there is Bharti Airtel after that block. It's up in about 1% higher. And that's about it. There's a bit of obviously a defensive color to the market. So Wipro, Apollo Hospitals, Cipla, Sun Pharma, these are your names. The banks are sitting on the fence right now. Axis around 0.25% higher, ICICI at the flat line. So let's see. Bank Nifty is very, very quiet. I'll just end up with HDFC Bank, which is also very flat. No clear trends on the Nifty. Watch out for the selling on Mahindra and Mahindra. Guys?
Well, one stock from the broader markets that's taking it hard is Borosil. The stock is down closer around 15%, 18% I think. So just keep an eye out on that one. I'm not sure whether it's numbers or something else that came about on that one. But volume's fairly high, that's down. The other couple of names that are lower, Best Agro, that's another stock that's down closer around 8%. Techno Electric is down closer around 7%. Volume's decent on all these names. And Zen Technologies said that all is well and they're expecting things to improve from here on, and they're expecting that 900 crores of a revenue target that they'd given earlier this year. But that stock is down another 5%. A few stocks that are doing well, TVS Supply Chain, that stock is up closer around 5%. Volume's fairly decent out there. Borosil Renewables, that is up closer around 5%. So both of them going in opposite directions, and we'll have the management of Borosil Renewables in the next hour or so on Chartbusters to detail their numbers. All cargo terminals as well has opened up well in the green. So the start is more or less flattish on the headline index, but a lot of stocks actually are moving around, and some of them in terms of the top volume movers today. Zen Technologies tops the list. RVNL is a little bit lower. Z Entertainment, that's up closer around 1.5% to around 2%. And I think Piramal Pharma as well, another one that's a little bit higher. Mangalam?
I'm looking at ABB India. We looked at the stock, and pre-open as well, up around 3.5–4%. Right now, holding with gains of about 3%. Interestingly, Max Healthcare, which was holding well in pre-open and opened well as well, has seen some sell-off from the highs. Currently back in the red. Persistent Systems and a couple of these mid-cap IT names doing extremely well. Persistent Systems is one of them. First Source is the other one. Both of them seeing some traction. Siemens on the back of perhaps ABB or not. Maybe, some of these capex names doing relatively better. Varun Beverages is the other one that I'm looking at as well. Up around 1.5% at the open itself. I'm just trying to see what, some of these brewery names are doing. United Breweries is up around 0.5%. Remember, the company was, sanguine on the prospects of demand going forward, with EBITDA margins seeing some bit of recovery, largely on account of the price action that took place in Telangana. So whether that continues or not is something we will most definitely keep an eye out on. AB Fashion and Retail is the other one, which continues to gain after a decent set of their third quarter numbers. So ABF Fashion and Retail holding with a gain of about 0.5%. But right now, as we speak, all the frontline indices firmly in the red. The Midcap index by a smidge, the Nifty Bank by 0.25%, the Nifty and the Sensex by about 1/5%.
A couple of textile/apparel stocks are looking up. So there is, I saw Gokuldas Exports flash by somewhere, was 5% higher. There's Raymond Lifestyle, which is up about 4% as well. And Trent in the pre-open was up. I don't know if we can get Trent up on the screen again. No, not Trent, Trident, beg your pardon. Yeah, that's Trent. Trident is the stock that I was, looking out for. So some of these stocks are, a little bit of green. We'll actually discuss this in more detail. A lot of them are export-oriented companies, large exporters. What lies ahead for them if we're getting into these big tariff negotiations with the US? But that later. Right now, we get into the market conversation. Our market master of the day is Krishna Sanghvi, Chief Investment Officer, Equities at Mahindra Manulife Investment Management. Krishna, thank you very much for joining in. Welcome to the show. And it's been a tough last couple of weeks and months, right? The simple question to you to start off with, do you think the market is in the process of making some sort of a bottom? Or would that be, too much of conjecture at this point in time? What's your sense?
Yeah, I think it's too early to judge, because let's look at the dynamics of market first playing out really, right? We're looking at a large amount of selling by foreign investors, as well as, large amount of money raised by listed companies or maybe to be listed companies via IPOs. So somewhere, that supply dynamics of the market has, taken a change vis-a-vis what we were used to in last maybe overall 2 years period. If you look at last 4 months have undergone this change, and we need to worry about that from a market dynamics perspective. I think as far as economy is concerned, reasonably on track, that 6.5% GDP. Yeah, we were possibly going to clock a bit lower than what the number was at the beginning of the year in terms of FY25. But some of those, deviations are likely in this geopolitics world where too many things happening outside India, outside our own comfort zone. Plus, some marginal hits and misses on companies. So I think the real challenge in last 4 months period for market has been, how the supply side of the market has caught up vis-a-vis, the demand. So we not really sure in terms of, how that incremental selling can happen, because especially for FPIs, they do look at India as one of the countries to invest. They have their own, opportunities or options to evaluate vis-a-vis some other emerging markets or even some developed markets also.
All right. Hi, Krishna. Good morning and good to see you. But Krishna, do you think that we are closer to the bottom? There was exuberance that played out. That's why we went dancing away, both the headline index and the broader markets as well. But do you think, going by the RBI action, the government as well, they've laid out a good outline with regard to the consumption picking up in the second half of the year. Capex is picking up on ground. And these are various indicators that indicate that the economy is doing okay. The markets are, in a bit of a flux. So do you think, putting all this in the backdrop, do you think we're closer to the bottom on the headline index that's on the Nifty? Would that be fair to say?
Yeah, it'll be fair to say, because, if you look at markets, whatever concerns of, valuations were more in the, the larger market, like small cap, mid cap indices had these challenges of valuations. I think on a large index, Nifty, reasonably, comfort on valuation front, plus all those factors you mentioned, economy on a better track, especially, the December GST collection was pretty good at, double-digit collection growth we saw after quite some time. So yeah, macroeconomy angle, things looks okay. The government policies in place, RBI policy also has changed the, the dynamics in terms of giving a lower rate environment we've started. So that way looks good, yes.
Good, but as we speak, currently at the low point of trade for the frontline indices, the Nifty below that 22,900 mark, and it's been led lower by a couple of these, a lot of the domestic-facing names itself. We have Grasim, which is at the low point of trade. We have Shriram Finance lower as well, BPCL lower, ONGC, Bharti Airtel. After that up move that we saw at the open itself, that's been sold into, currently at the low point of trade. And we are seeing some declines in a couple of these auto names like Hero Moto and Eicher Motors too. On the way up, however, some support coming in from IT. LTI Mindtree has moved to the high point of trade. Tech Mahindra is doing well, as is HCL Tech. So the IT index comes up for you, the Nifty IT. That's telling you that there is some support coming in from that part of the market. M&M, interesting, very, very interesting, was down 4% in yesterday's trading session, opened as the top Nifty loser. That dip has now been bought into, and the stock is marginally in the green. Krishna, you did say that maybe, at the headline index, we seem to have made a bit of a bottom. But going forward, if you had to deploy fresh capital, what sectors would you deploy it in? Where have the valuations become a lot more reasonable vis-a-vis expectations? And where do you think there is a better chance of you outperforming, the market over the next 1 year itself? And where would you pull out your money from?
Yeah. Yes, I think, in the context of valuations, over and above the sectoral dynamics, I think one needs to be slightly more, receptive to the fact that across all sectors, the large caps are more attractively valued vis-a-vis the mid and small of the same sector. So, it's going to be a little bit a combination between sectors on one face as well as, the large cap versus mid and small. And that has been the case, right? Even in CY24 or maybe quite a bit part of CY23, we had this, situation where large caps as a category would have underperformed across the sectors vis-a-vis their own peers in those sectors. So I think it's a little bit reversal of that large cap versus mid and small trade. Coming to sectors, clearly today, financials looks interesting category from a valuation front. We are possibly at a bottom in terms of, what we've seen historically on financials. Earning growth is on track. Even last quarter or so, financials continue to report a nice earning growth. In fact, if you look at quarterly, financials are almost 40% of NSE 500 profits. So it's a large, profit surprise or profit growth coming from that segment. Financials are interesting. Yeah, consumers can be a nice sweet spot for, a lot of volume growth, stroke profitability growth, because post-budget, that large number of 80,000 crores to 1 lakh crores range for tax saving by, individuals, which can flow into consumption-related activities. So those two looks, a good spot. I think IT, pharma has their own challenges, partly emanating from outside India in terms of what can happen to tariffs. So it's slightly difficult to, gauge any policy action coming from US on tariff front. So no clearly view right now. Let's wait for a month or so, for US to really spell out what they're looking to do on tariff front.
Okay. By the way, the news from the screen is not very promising. Look at the Midcap index already. It's down about 0.7%. There's a familiar pattern that we open and then the drift down starts. Even the Nifty is now down 60, 65 odd points. And I just want to point out one more thing. The VIX has been moving higher the last couple of days. The VIX has now crossed 16. I mean, it's still not at the high seen just before the budget. That's when the VIX had really spiked because of volatility, pre-budget volatility. It moved up to almost 18. But nonetheless, and this is a big move. I mean, this is just today we're talking about 16 on the India VIX.
And this is after all the major events are out of the way.
Yeah.
That is something that is a lot more, noteworthy than had the VIX been rising ahead of the RBI policy meet or the budget or maybe Modi-Trump, tariff sort of meet.
And one more point, in yesterday's trading session, we ended high with a gain of around 30-40 points, but the VIX moved up. That's normally not something that normally happens, right? You normally see the VIX move in an inverse relation with the Nifty move, but that's precisely what's happened. But 50-point downtick on the Nifty, you'll take that, some kind of consolidation. I'm keeping an eye out actually on the number of stocks advancing. It's still closer to around 900, 950 stocks. You want to end somewhere in this vicinity because in the past we have seen that number, once it slips drastically. Even 750 stocks as we speak.
I thought you were going to say you're watching out for 22,800. Whether it'll be now quadruple is done. Now what penta, some bottom, I don't know.
We'll get that.
just as you spoke about that, 900 stocks advancing, just 750. It became 750. That's the ferocity with which the market is declining. Though HDFC Bank has continued to hold well. It did recover from the lows and currently holding in the green. Yesterday it was HDFC Bank and Reliance, both of them led the recovery. Reliance isn't falling much, down about 1/3%. HDFC Bank is actually at the higher end of today's limited trading range so far. So those are a couple of things that we'll keep an eye out on too.
By the way, just pointing out, ACC, Grasim, a couple of these stocks are down quite a bit. Borosil, Nigel had spotted early in the morning itself. It's about 12% lower. The company posted the transcript of its investor call on the exchanges last evening. Maybe there's something that the street didn't quite like over there. We'll get more details on it in a bit. But anyway, in general, there is a bit of a mid-cap unwinding that's already underway this morning. Krishna, and that's the question, this whole mid-cap pain. And it's not institutional. It's not just the FPI selling. When FPI sell, larger stocks fall. And domestic institutions have been still net buyers, and their patience and faith is really getting tested. What do you make of this whole mid-cap unwinding that's going on? And what's the buzz that you pick up from the street? I mean, is this because of sell orders from large HNIs? Is it, direct retail? How much is it, margin issues that are playing out? What are you picking up?
Yeah, I think there will be always those kind of, dynamics which might play out on either margin or some selling. But I think let's look at a big picture again, simple. The continuous selling by FPIs have made, large caps far more attractive. So even from a domestic portfolio manager looking at, with a flexible mandates like a flexi cap or a focus or a funds, where fund manager actually have a mandate to increase their large cap allocations materially vis-a-vis what, they were running in the past. I think it really makes sense to do some sort of a tilt in the portfolio because, finally valuations is what we should look at as an investor, and large caps are becoming attractive mainly because there's this, continuous selling by FIs.
Right, and you said that large caps look a lot better than mid caps. That was earlier the reverse case, where in a particular sector, the second or third rung players would do a lot better. So do you bet now on the return of quality? And if yes, then in that as well, what are the sectors that are best placed? You like financials, you said.
Yeah, sure, but I'll not really equate, this to only, return to quality kind of comment, because there are quality companies even in mid cap and small caps. Essentially, what we're witnessing really is that there are quality companies across the curve. It is just, that the money flow was chasing far more towards the mid cap or maybe small cap end of the segment. And that adjustment is perhaps got, tilted because FPI selling started coming in. I won't really see only quality as the primary variable behind this because, there are quality companies also having come down on, on a stock price front. But it looks more like, valuation adjustment playing out. In a way, what we're witnessing right now is a classic reversal of what we would have seen in the last year first quarter. For example, look at March 24 versus what we're seeing right now. It's just nothing but, in a way, a reversal of what was playing out then. So it's not really only about quality, it's also about valuation.
All right, Krishna, appreciate you joining in and filling us in with your take on the market. So thanks a lot for joining in.
Yeah.
Well, let's focus on another corporate, Cummins India. The company reported a good performance in quarter 3 that was led by the double-digit revenue growth. To discuss the outlook for the next fiscal, we're now joined by Shweta Arya, the Managing Director at Cummins India, from the sidelines of the Kotak KEI Chasing Growth Conference. Hi, Ms. Arya. Thanks a lot for joining in. Well, let's start off with what is your view on the domestic as well as exports market for the next couple of years, that is 2025, 2026. How do you see things panning out?
For financial year 2025 and for financial year 2026, we expect positive growth in the domestic segment, largely driven by the power generation segment, as well as some of our industrial segments, and continuous growth in the aftermarket. So our anticipation is for financial year ending 2025 and financial year 2026, both the years we anticipate double-digit growth. For exports, the end market demand is still not showing a very clear trend. We have been focusing a lot in improving our channel presence, making sure our products are available. There is reach that we provide through our channel in different markets. So our efforts are continuing in that direction, yet we don't see clear demand trends from each of the different markets that we operate. So it's a mixed bag in terms of anticipation from exports in the coming financial year.
Okay, so you're saying domestic demand is looking robust, but export markets, you're still awaiting some more clarity. Another third quarter was the second quarter after transition to the new emission norms. So have things settled now? How is the overall demand environment for these CPCB4 plus gensets?
So on the ground till December of 2024, CPCB2 inventory was available. There was CPCB4 selling in the market from 1st of July 2024, but there was inventory of CPCB2 available. From January 1st, we will see across the channel in India only CPCB4 plus product. So till December, there was very good demand in the lower than 800 kilowatt hour product range, which has moved to the new emission norms of CPCB4 plus. Now we will see how this plays out. We definitely believe that there is demand in the power generation market in different segments in the ranges where CPCB4 plus is applicable.
And what about the order pipeline, Shweta? How is that shaping up? What's the kind of visibility that you have here?
These are not all long-term orders. These are short-term, shorter lead time orders. So we do not have visibility for very long-term. But as far as I can talk about today, we have a healthy order board available for the next few months.
Okay, all right. Could you tell us what is the margin trend going forward?
See, our margins, since we play across power generation, in the power generation across the ranges in low horsepower, high horsepower, medium horsepower, and then in the industrial space in segments like rail, defense, marine, oil and gas, and then the aftermarket. So our margin is a blend of all of these different segments. So in every quarter, there could be a slight change in the margins. Our endeavor is to always improve our margins. We work on cost optimization of our products to be able to provide right value to the customer. We work on improving our manufacturing operations, where we can get in more efficiency and more productivity. So our efforts are in that direction. There could be a quarterly difference based on how the mix in our portfolio plays out.
Okay, all right. Well, could you help us out, though, with a margin range at least?
Nothing specific. Our endeavor is to grow profitably so that we manage our margins and bring in even better margin growth or even better profitable growth.
Okay, what about the competitive intensity, Ms. Arya? I mean, how is that shaping up with peers introducing their own products in the market as well? How is the tech being received in the market for these gensets? And are you able to command, say, better premium on your products?
I would say that we are seeing competitive intensity in the market. All our competitors have launched a full range of CPCB4 plus product. Like I said, the switchover to CPCB4 plus happened July 1st, 2024. There was some channel inventory available till December 2024. So we will now see how competition plays out over this quarter and the next.
Okay, so you're saying that you will see how competition plays out over this quarter and the next. So let's talk about now itself. How are your products in this priced versus the peers? Because both purchase of equipment and, you know, from a lifetime running cost perspective, India is a very competitive market. Do you think this incremental market share would come at the cost of profitability?
We would say that we have been there in the Indian market since 1960s. We have presence, we have a formidable aftermarket presence as well. We also launched, if I were to very specifically speak about the power generation market, we launched our CPCB4 Plus product on July 1st of 2023. For the whole year of 2023-24, from July 1st, 23 till July 1st, 24, CPCB2 and CPCB4 Plus, both products were available. We did sell CPCB4 Plus products in that time frame, and that gave us a lot of advantage in terms of managing what we call initial teething issues in the product. It helped us improving the quality and reliability of our product. So I would say that definitely gives us an advantage. We were able to see the product performing in the field in that time frame.
All right, Ms. Arya, do you see any threat from BESS, that's battery energy storage systems, and other alternatives as battery costs, they've continued to decline?
In the power backup space, we believe over the longer period of time, batteries could be a possible solution. The way we see it is that our end customers will probably have different energy sources. You can have grid, you could have solar panels, you can have battery. We do see a place for gensets even in that scenario, because for a longer duration of time, providing reliable power is what gensets can do today. We need to see battery prices falling even further, and every day there is research happening in battery technology, battery prices, there are different chemistries available. As we see it today, we see gensets being a part of the overall energy solution for our customers.
Okay, got that. By the way, that's an update, interesting update coming in from BMC here in Mumbai, asking MGL for a lot of these institutions, bakeries, hotels and roadside vendors. I think they have to switch to some clean fuel. We'll try and get more details on this in a minute.
So, you know, a lot of the bakeries in Mumbai, there are around 5,000 or so. All of them were asked to shut operations largely because they were using, so to say, unclean fuel, and that was causing a fair amount of pollution. We have been speaking about, you know, the air quality in Mumbai, etc. And now, with them having asked to shut operations, they've now directed, the BMC has now directed to MGL saying that you have to cater to these guys as well. Is this a big business positive for MGL? Not so much, just a mild positive that, okay, these were the businesses that were affected by the BMC's direction on clean fuel, and now they've been directed, to use fuel from MGL. Yeah. Slightly incremental business positive coming in out there, but this is more environment positive than business positive. The stock has seen a bit of a recovery, but at what cost do they supply to these guys, and do they have the necessary infrastructure to supply to them or not is also the big question. We need to know the timeline and all of that as well.
And I guess a lot of the larger establishments anyway would have been, working on CNG.
So this isn't about the larger establishments. This is about the smaller
vendors,
the roadside vendors, the roadside bakers, the unorganized lot, basically.
Yeah. So anyway, not much of a volume impact over there. But to get back to that conversation with the management of Cummins, Ms. Arya, I just want to go back to the point on exports. You said that, of course, you need more visibility in terms of demand, but there is a recovery that seems to be, visible as of now. So can you tell us which regions are doing well and which geographies are still, so to speak, struggling? What's the outlook?
For exports, it's very difficult to say that here's one geography which will really take off. We have seen in a particular quarter orders coming in from one geography and in the other quarter coming in from another geography. So still the geopolitical situation hasn't stabilized as much, and we are not seeing clear demand trends from one particular geography. Our endeavor is to improve our product availability, make sure we have fit for market products for those end markets where we are selling, and also make sure that we have the right channel partners to be able to sell our products in those end markets.
Since we're speaking about exports, can't take your eyes off what's likely in the US. Do you foresee any impact coming in from Trump's tariff policies on particularly your export business?
We are evaluating this at this point in time. It is a wait and watch situation. Not all tariffs are announced yet. We are evaluating on how it impacts which geography in which way.
All right. And is the best of your margins behind you? And I ask this specifically because you had in the conference call mentioned that, the peak of the gross margins is what you saw in the prior quarter. So the question is whether this sustains or maybe from here on it's only downhill from a margin standpoint.
So gross margins for us are a play of the product mix. Since we are present across various segments in power gen, in industrial, and there's aftermarket, there is a segmental play there and there is a product play there, product mix, which plays across our margins. The margin is a blended margin of all those products. And we believe that there is room for us to improve our margins because there are cost reduction efforts that are ongoing, manufacturing operational efficiencies that we are building in. So we believe that we can improve our margins.
Okay, you believe that you can improve your margins. Your shareholders will like that. So finally, the big picture questions. FY26, what is the outlook? If you can, leave us even with a guidance band of sorts, revenue. And since you're talking about margin improvement, how much? Is it a rough target you're working with?
For financial year 26, we believe that we will be able to sustain the double-digit growth from a revenue perspective. From a margin perspective, as I mentioned, it is a mix play here based on which product portfolio sells in which segment. And we continue to put in our efforts to improving our margins and delivering profitable growth.
Okay, and finally, a broader question on the industry. This whole talk about, private capex. Do you see a pickup on the horizon?
We believe that with this budget being announced and 11.2 lakh crores of capital expenditure by the government is trying to draw a balance, in our view, between government capital expenditure and trying to boost private capital expenditure. We haven't seen it happening just yet, but our belief is that it will pick up in this year.
All right, take that point. Thank you, Ms. Arya, for joining in and giving us an outlook into your business on the competitive intensity and the near-term views on exports and the domestic market itself. We wish you good luck at the conference and for your business going forward as well. But just before we slip into a short break, Nigel, we were talking about 900 stocks advancing, that going down to 700. Now that's down to around 524 itself. The decliners moving all the way up to 1900. Though all is not lost. I'm looking at a couple of stocks which have seen sharp recoveries from lows. We were talking about Godfrey Phillips as, the stock of yesterday up nearly 17-18%, and this month up 50%. It opened lower, maybe on account of some profit booking, so was lower by about 5%, and that itself has been bought into. The stock has recovered about 11% from lows, up around 3% now as we speak, and that's taken this week's gain on the stock itself up to around 21%, and this month's gain to 61%. So report good numbers, do better, and the outlook for the industry improves, the street rewards you. Whereas on the other hand, stocks that were, seeing a bit of decline, or rather seeing a bit of an up move at the open, have now been sold into. Westlife Food is one of them. At pre-open was higher, opened about 3-4% higher, and from those highs, the stock has actually corrected about 6%, currently at the low point of trade.
Okay, all right. On that note, let's quickly take a break, come back on the other side, and we will connect with Sudhir Sekri, Chairman at the Apparel Export Promotion Council, and Prerna Jhunjhunwala of Elara Capital, as there is a lot of talk on reciprocal US tariffs. So what does that mean for Indian textile and apparel exports? We discuss this with the experts.
Comes from the market. I mean, do you believe you've hit saturation here in India?
So India, firstly, is our most exciting market. I think globally, for a lot of companies globally, India is the most exciting market, right? It is for us as well. Our biggest investments in the last, I would say, 6 or 7 years have been in India. We actually have more engineers in India than we have in our head office in Stockholm now. We build in India and we ship globally. A very large chunk of our product is shipped globally out of India as well.
Welcome back. So the news from the market is that the Nifty is stable. It's the Midcap index. It's continuing to nurse a cut of around 1% at this point in time, and the market breadth is still quite weak. Let's pull up the advanced decline ratio. It's the Midcap index, advanced decline ratio. Still far more many declining stocks. Let's see if this improves as the day progresses. For the time being, we're putting the spotlight on the textile and apparel sector. Of course, after US President Donald Trump has issued that executive order on reciprocal tariffs, the fear is that perhaps either India will have to reduce its own tariffs, imports coming into India, or the US is going to be increasing tariffs on many of the product categories and lines. The issue is, how does this impact big exporting sectors out of India? We discussed what happens to defense manufacturers the other day, and today we're putting the spotlight on textiles and apparel because it's a huge export industry for us. So joining us are Sudhir Sekhri, Chairman at the Apparel Export Promotion Council, and Prerna Jhunjhunwala, Vice President Equity Research at Elara Capital. Thank you very much for joining in, ladies and gentlemen. And I'll start with the lady. Prerna, let's go with the numbers first. Textile exports into the US, but companies have done a phenomenal job, right? Groups like Wellspun and so many others, Gokuldas exports, whether it's textiles, terry towels, linen, apparel themselves. So India's done a phenomenal job. Now, is that whole story at risk if the US suddenly increases the tariff barrier, several fold? What are the numbers telling us? What is the export picture now?
So if you look at the US imports, India's market share in home textiles is at around 61.4%, 61.5% approximately. And for terry towels, it's around 45%. For garmenting, it's around 7% odd. So we are a big exporter to US in terms of home textiles, and we are gaining market share in the garmenting business. So it is definitely an important geography for Indian textile exports. Now, in terms of tariffs, if US puts in tariffs, there could be an impact for the cost structure that US importers will have to take into account because of the increase that happens due to tariffs. But at the same time, we'll also have to see how India can be replaced. I don't think so. Such a big geography, India can be replaced in US's imports of textiles, and where do the country finds another alternative? So all these are challenges. Textile industry is a complex supply chain wherein imports happen from multiple countries, but not one country or a few countries can satisfy other countries' demands and skill sets. So hence, we believe that, tariffs could have an impact. There could be talks with the importers, but how much and if at all tariffs comes to India in textiles, we'll have to wait and watch.
Okay, by the way, let's just pull up this table. I think we'll have it. This is a calculation done by Nomura, and it's talking about the total differential tariff. Basically, if you net off how much we're charging for US imports coming in versus what they're charging us, this is a net. So our tariffs obviously are higher, and the differential is as high as 17% in footwear. Food products, it could be 35%. Textiles, about 15.5%. Let's come to Mr. Sekhri as well. Mr. Sekhri, so isn't this a straight area of concern? If the US increases tariffs, what is the blended tariff? What is the import duty one has to pay as of now for apparel exports that are going into the US?
Yeah, and as far as apparel is concerned, I don't think there's much of a concern that we have. Let me explain to you why. You've shown a difference of 15.6% in a difference of tariffs in the textile area. But when you cover apparel, just apparel, the difference is much smaller. It's to the tune of about 7%, because the import duties of garments into the US range from 2.6% to 32%, 33% as a matter of fact. Man-made fabrics, for instance, attract duty as high as 33%. It's the cotton where the duties are lower. Now, I do agree that our exports to the USA are more in cotton fabrics, cotton garments, which forms about 65% of our total exports, whereas the other 35% is rayon or man-made fabric exports. However, if you balance it out, I think the average duty that works out is about, I mean, we're still working out the exact details, but it works out to something like 19% if you see an average and the actual export that is being done, being made in the two categories of cotton and man-made fabric. Now, as far as import duty is concerned, import duty on apparel is 20% with a 2% surcharge. And in certain categories, of course, it goes by it's 45 rupees per piece or 20%, whichever is higher. So if you average it out, it comes to about 24%. So not 24.5%. So if you see the differential is about 5.5 to 6%, as opposed to textiles, where it is, appears to be 15.5%. So, however, why I said that there's not much of a concern, because, if you see it pragmatically, there is a demand for Indian apparel. And if the duties go up in the US because of higher duties in India, I mean, that will affect our neighboring countries also. Our competitor, for instance, China is our biggest competitor. And China, we all know that they are being, huge duties are being imposed on China. So China is actually out of the picture when it comes to competition. They are not going to eat into our business at all. On the contrary, probably we are going to eat into their business. We'll get part of their business. Similarly, our other competition is Vietnam, Bangladesh. Bangladesh, which is in our neighborhood, they have their own problems. Their business is not, I don't see any increase in business happening there. I won't say the business will go down, but the 5 to 10% increase they were seeing annually, that is not going to happen because of the political situation over there. So, all said and done, in spite, even if our duties, the government, first of all, we don't know whether the Trump government is going to increase duties because of this slight differential. But I'm saying, even if, as a worst case scenario, even if they do, I don't see our business getting affected in any way.
All right, we take that point, and fair points made out there. The harm would be a lot more on neighboring states like Bangladesh, Vietnam, and China, who have been eating away our share of exports as well due to some of their policies. But now they're in economic doldrums. But as you were speaking briefly, the Nifty and the Sensex moved into the green. It was led by the IT pack, and it was led by HDFC Bank. We're pointing out that HDFC Bank has been doing well despite the weakness that we're seeing in the market. HDFC Bank at the higher end of today's trading range so far, and the IT index as well. So both these heavyweight sectors actually, contributing. Though, just keep an eye out on the Nifty Bank itself, down about 1/3%. Recoveries are being sold into as well. But let's get back to our conversation with Sudhir and Prerna. Sudhir, just a follow-up on what you said. Duties being increased is one thing. The bigger differential is the cost of production. So even if the duties are increased by a certain proportion, the cost would still be a lot cheaper to import as against manufacture locally or look for other alternatives. So if you could give us a sense on, what is the cost differential between Indian products and the ones that are made by our competitors and exported to the US versus what's manufactured in the US itself. That's point number one. And secondly, with the depreciation that we've seen in the rupee, which is much more than what we've seen in some of our peers, how much does your cost advantage improve by?
Okay, let me take it one at a time. See, first of all, when we talk about the cost advantage between that Bangladesh probably has because of their low labor cost over India, that cost advantage would remain even if the duties go up and down. So that cost advantage imbalance will remain. Now, you ask the question whether the manufacturing in US, so there's hardly any manufacturing of garments in the US. Of course, there is manufacturing in South America or Latin America. But again, you know that Mr. Trump is going to impose some duties there too. So I would think that as far as duties is concerned, I think we'll have to see it separately, and because it does not really affect the cost of production. That was your first question. And what was your second question, please?
The depreciation in the rupee, how much has that been an advantage?
Well, of course, definitely, you know, this is going to be a big advantage for exports. We've already seen a depreciation of about, what, 3 to 4% till now. We expect another 2-3% depreciation. And this means that obviously if I give away the entire gains that I have made to the buyers, then the buyer stands to gain 5 to 6%.
Sure.
The whole lot of money.
No, absolutely. And we have to see how these negotiations go, because the US president has very clearly said the tariff is just one piece. He's looking at a lot of other aspects, including currency, which could be making exports coming into the, or the imports coming into the US cheaper. Very quickly, Prerna, on you, I mean, from a stock perspective, as these negotiations play out, we'll only have clarity, I think, around the 2nd of April or so. Right now, the textile and apparel stocks under your coverage, are you changing any views, anything? And what are your picks? What do you like the most in the whole sector?
Among our coverage, we like Arvind Limited and KPR Mill. Given the price correction in the stocks, they look attractive at current prices. We're not changing our view as of now, as we don't know what is going to happen and what kind of tariffs would be imposed, and will there be any material impact on these stocks. So we'll maintain our positive view on these stocks.
Okay, all right. Ladies and gentlemen, thank you very much. Slightly shorter conversation, but we would definitely want to revisit the issue once we have some more clarity on the, the final tariff lines that are agreed upon between India and the US. But there's AEPC maintaining that Indian apparel exports will not be impacted. Well, with that, I think we have to quickly move on to our next guest, and we're putting the spotlight now on the IT sector. The sector, of course, has reported a mixed performance in the third quarter. So what lies ahead, and are these green shoots of demand really blossoming into full plants and maybe even trees later down the line? We have with us Kanwaljit Saluja, who's Senior Executive Director and Head of Research at Kotak Institutional Equities. And of course, he's joining us from the sidelines of the KIE Chasing Growth Conference. Kanwaljit, thanks so much for joining in. In a market that's beaten down so badly and confidence is so low, we keep looking out to tech as some island of safety. But beyond that, that's a tactical positioning point of view. I mean, I want to start with the real growth question and what stood out for you. Before we talk about large caps, actually, let's talk about the tier 2 companies, whether any of them really fired up your imagination.
Well, I think what's been happening in the sector is essentially a gradual recovery. What you're going to get, in our view, in FY26 is a growth rate which will be better than FY 2025, but it will still not hit the normalized level of growth. And the reason is because the growth recovery is patchy. There are segments in the market that are doing well, which is financial services and retail. And at the same time, there is deterioration in the manufacturing vertical. Now, within this spectrum, what is happening is that some of the challengers are doing better than some of the incumbents, especially the likes of Coforge and Persistent, which seem to be firing all guns and actually would end up reporting growth rates which will be materially better than the peers. Again, having said that, not all challenges are the same. Not all incumbents are the same. There are basically a mixed bag of performers in both the segments of the market.
Okay. We'll come to the mixed performance in a bit, but now at a headline level, now I'm talking about the traditional IT services companies, the big boys. There, Kanwaljit, what are the different trends that are emerging? Most of them, I remember the commentary, you were talking about sort of cautious optimism and seeing some improvement in demand in North America. So for FY26, what's the kind of growth in the business that you're penciling in?
I mean, essentially, it's a recovery. It's a very gradual recovery. It's a frustrating recovery as well. So let's say if you're penciling, if these companies would have grown by around, on an average, 4 to 4.5% in FY 2025, then at best you can pencil in 6.5 to 7% growth in FY 2026. Again, there'll be dispersion in growth rates depending on a couple of factors. One is the large deals and mega deals. I mean, there are not many of those. And second is the contribution of revenues from verticals that are in a state of recovery versus verticals that are in a state of challenge. So FY26, again, at a broader level, there will be some improvement, but within that, the dispersion in growth rates will again be there, as you saw in FY25.
All right. Hi, Kawaljeet. Nigel on this side, and good to have you on the show after a while. You know, the argument is that global IT peers, where you look at Cognizant, you look at Accenture, they're trading at relatively cheaper multiples in comparison to what our Indian companies trade at. Could you tell us your comment on that? Justified? How does it shape up?
Accenture, I think the valuations have almost converged with Infi and TCS. Cognizant, you cannot compare on valuation because the growth rates are lower and the company is in a turnaround phase. So, so to that extent, there are not enough number of global services companies for comparison. But when it comes to specific, it's just the factors that I just laid out.
Right. You spoke about valuations converging with TCS and Infosys for some of these companies, but TCS, which is up only 3% in the last 3 years, has been an underperformer. It's one of your top picks, and you do acknowledge that, it'll be difficult for the company to backfill the loss of revenue from the BSL deal in FY26. What makes you still bullish on TCS?
The BSL deal does not change the EPS, right? It's a zero margin deal. So the only thing is that the top line becomes lighter, the margins go up, your EPS growth will still be around 9 to 10%, yeah. So think about BSNL as empty calories for now, yeah.
Okay.
Empty calories, okay. Usually we try and avoid them, but then again. So, to go back to the point, and I'm just simply asking from a, portfolio positioning point of view, are you better off, if someone has to allocate fresh capital to Indian IT, are you better off being with the safety of the likes of TCS or Infosys? Or should you look at, Coforge and Persistent, the companies that have been showing growth, or should you go to the third leg, which is some of these ER&D companies like KPIT Tech, Tata Elxsi? They've had a bit of a rough ride last few quarters. Do you see that, also recovering? Where to put the money in IT?
Okay, so I'll give you a boring answer. First of all, for the time being, avoid engineering services because there are headwinds in engineering services across multiple segments, whether in autos, whether it's in high tech, etc. So I would avoid engineering services. When it comes to between the incumbents and challengers, there has to be some fun, right? And there has to be what I would say some sugar as well, rush as well in names like Persistent and Coforge. So you end up buying. I will recommend Coforge because the growth will be turbocharged, far better than what basically the street is building in. 20% plus organic growth in FY 2026. The stock has come off, so we'd recommend Coforge. And Infi and TCS, one can basically pick any of them at the current levels. I'll just say that Infosys nudges ahead purely because they have a higher discretionary exposure, and the base assumption is that in FY26 discretionary spending will recover. Then maybe the growth rates will end up being better in Infosys. So Infosys, Coforge, you pick one. From each category.
Kawaljeet, you're really whetting our appetite this morning,
huh? If you want to have a wider portfolio.
Yes, go on. I'm saying you were really whetting our appetite with the empty calories and a little bit of sugar rush with Coforge and then Infosys. But please complete the point. You're saying maybe Infosys can edge ahead on the growth. But please complete.
No, but if you want to basically have a well-balanced, rounded portfolio, have Infi, have TCS, have Coforge. There's a turnaround play in the form of TechM, which seems to be forgotten. So there are plenty of options to look at in IT services here.
Okay, right. but no ER&D. We remember that point as well because engineering in some of those sectors like autos still perhaps the recovery is still some time away.
We have some, absolutely. Some good companies, but unfortunately the macro environment is fairly challenging for them. But there's some very good companies in the space over there.
Thank you so much for joining in. The basic idea is a balanced diet and a balanced portfolio. Use the macros right with Infosys, TCS, and TechM, maybe a bit of sugar rush in terms of Coforge as well, but no more than that. Thank you for joining in and wish you a good conference as well. With that, Let's go back to Nigel, who's standing by at the wall to talk us through the market outlook from top voices of few brokerage houses. Over to you, Nigel.
Well, let's get you what the top voices are saying. Rhythm Desai of Morgan Stanley, well, he says that Q3 earnings growth was up sequentially, which was better than the subdued expectations. He goes on to add that the market looks good in the near term and we could be in for a near-term bottom, given that improving growth. If global cues do not surprise negatively, he adds that India should resume its outperformance in comparison to the emerging markets, and that could be rather soon. They're overweight on a few stocks, which include L&T, Bajaj Finance, ICICI Bank, Mahindra & Mahindra, Titan, Trent, Maruti. While they're underweight on Eicher Motors, RBL Bank, Wipro, Concord. So that's about Morgan Stanley and his stake. Moving to Surendra Goel of Citi, he says that the headline trends in Q3, they missed expectations with the EBITDA growth of just 7% on a year-on-year basis. But he goes on to add that with a pickup in central government capex in the past few months, the budgetary support to the consumption space and also the start of rate cuts, he expects growth to pick up. But also goes on to add that the impact of the reciprocal tariffs from the United States will be something that could impact select sectors. After a decline of 12%, well, valuations at around 19 times 1 year forward is below the 5-year long-term averages. And the FIs, well, they're underweight on the benchmark, which is the highest that they've seen in the last 15 years. He winds down by saying that India looks relatively well placed post the correction, and their December 2025 Nifty target is 26,000. Moving to Rajiv Batra of JP Morgan, he says that Q3 was another subdued quarter with regard to earnings growth, which was driven by moderation in urban consumption, tighter liquidity, a depreciating rupee, and also the rise in input costs. But now they expect a nascent recovery in Q4 earnings on a sequential basis, and that's because of sustained upswing in rural demand, a rise in government spending, and also lower raw material costs. They add that despite the recent earnings downgrades, consensus expectations for calendar year 25 as well as 26 are still elevated, and that's why there could be further downgrades specifically in energy, materials, industrials, as well as passenger vehicle plays. They reiterate, though, their overweight stance on financials, consumer staples, consumer discretionary healthcare, as well as real estate. Well, let's wind this down then with a technical call coming in from Lawrence Blanco of CLSA. And he's particularly commenting on the dollar index. He says that the dollar index is strengthening the 103 support, though in the past 3 months, the US dollar index has been capped at around that 109.8 to around 110.18. And they found some kind of support in this vicinity of around 106, 107 area. A break below this mark of 106, 107 support would suggest that December's breakout, from that 2022 to around 2024 trading range was not genuine one, leaving the dollar index could head back to around that 99 to around 100 mark to that zone of around 106, 107 trading range. Within the old range, the 200 EMA offers some kind of support, the near-term support at around 104.8 area. So that's what all the top voices are saying with regard to the Indian markets, as well as Lawrence Blanco winding it up with the technicals.
All right, we take that point. Nigel, Lawrence Blanco winding it down with the technicals. So what we'll do is we'll wind this segment down, take a break, come back. On the other side, we'll have more technical trades coming in from Mitesh Thakkar and Sudarshan Sukhani.
India continues to grow very, very rapidly. The entire stack that is available to an Indian citizen now to conduct business digitally has made the mobile phone number even more important than it used to be. And that's where we believe our relevance continues to grow in India. We haven't reached saturation at all. We are fortunate to have a large user base in India. I think we crossed 350 million users in India, but we still have a huge space.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com.
Welcome back. Recoveries are being sold into. Now the Midcap index down about 0.75%. Look at Zen Tech. It's locked in 10% lower circuit despite the management saying that they will meet the 900 crore revenue guidance with 35% margins as well. So the street is in the mood of taking money off. The promoters said that they have no intent of buying in the open market right now. And then we are seeing some decline in a bunch of other stocks as well. So Jubilant Pharmova lower at the day's low, Hindware Home among others are selling off, and Strides Pharma from the frontline F&O stocks also at the low point of trade. Let's go across to Mitesh Thakkar now. Mitesh, your trade's at 10. What do you have on your list?
I have one buy and one sell call. On the selling side is Ambuja Cement with a stop at about 487 for targets of 460. And Kotak Bank is a buy. Keep a stop below levels of 1930 here and look for target of around 1995 2000.
Okay, all right. Mitesh, thanks for those trades. We will come back to you later in the course of the day. Right now, another quick break. Market's still down about 45 points in the Nifty. Back with some moving stocks in just a bit.
CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back. Let's focus on a couple of stocks that are in news this morning. MGL is reacting to that update that was flashing on the screens just a while back, which basically deals with BMC issuing a sort of directive saying that all the smaller, perhaps street side vendors, etc., operating in Mumbai, they need to switch to clean fuel. Now, what exactly does this mean? And is it material at all for the company? Let's ask Sudarshan. Sud, what's happening here?
The reason the stock of MGL is in focus because Mumbai Municipal Corporation, or say BMC, has issued directions to all the roadside vendors or say eateries or dhabas to shift to clean or eco-friendly fuel. And it's categorically saying that either adopt CNG or PNG instead of polluting fuels. And it's on the back of the recently High Court orders saying, basically High Court had issued directions to BMC to ensure that all these dhabas, it is shift to these fuels and in a specific timeline. So now BMC has to come out issuing directions to these eateries, dhabas to shift to this clean and eco-friendly fuel, and the deadline is given is of July 8. And BMC also has issued notices to more than 84 restaurants and eateries and dhabas in Lower Parel and Prabhat Devi, and it says licenses will be marked as not to renew until the transition is completed. Also, no new licenses will be issued to establishments using conventional fuels if these eateries and dhabas don't shift to eco-friendly fuel by July 8. So it's important for MGL because it's the biggest player in the city as far as the clean fuel or say CNG or PNG is concerned.
All right, it is good news for MGL in terms of business opportunities, Sudarshan, but all of us here are tempted to ask you, which is your favorite dhaba or eatery in the city?
I don't stay in town, so I stay in Dombivli, so I can't talk about it.
You work here, you work in Worli, you work in Lower Parel.
No, I don't have any favorite.
So Darshan likes his
He's a healthy guy. He has green tea and he only has his high-protein diet. Home food is the best. There we go. All right, Sudarshan. Thank you so much. Well, let's quickly move on. I think we have another management in focus.
Well,
Rallis
that's
India.
right. Rallis, that's the one on our radar. It was a challenging Q3 for them. The company did report some kind of weakness, both in pricing, exports as well. They saw a degrowth in revenue due to a significant fall, in fact, in exports. My colleague Vamakshi caught up with the MD and CEO, Mr. Shukla, from the sidelines of the Kotak Chasing Growth conference and began by asking the reasons behind the slowdown. Let's listen in.
When you look at Rallis, I think it is very important to understand Rallis operates in multiple segments. One of our businesses is domestic and then export. On domestic, we have crop protection business, we have biological business as well as seeds business. So when you look at performance of biologicals and seed business, I think they have done very well. Even on crop protection side, domestic business has done very well. On volumes, we are up. Obviously, industry is going through a very difficult phase where prices remain subdued. And as a result, performance may not exactly be what it looks like in the number. Our biggest challenge has been export market, where global commodity prices are low. We are also dealing with some of the legacy product where because of the excess demand supply situation, prices and volume both are subdued.
All right, but what is your outlook going forward when it comes to the volumes as well as the pricing? Because even though the domestic business has grown by 2.5%, the pricing over here has still declined. Similar is for the exports business, where we're seeing both a 34% volume decline as well as a 4% price decline. So going ahead, do you think the decline in volumes and the declining in prices will continue, or have prices stabilized now?
So global situation still remains very challenging, where commodity prices are low, farmer earnings are still low. As a result, and we are also stuck with what we call legacy portfolio. So global business, I think we have seen the bottom. Things should only look better from here. But you have to understand our business. It's a very seasonal business. It is very, very difficult to judge rallies based on the quarter, because these quarters overlap from Kharif, Rabi to different seasons. What I want to tell that our company is going through a transformation process. We have identified some gaps, and we are trying to work on those. For example, we believe our seed and biologicals portfolio can do better from here. That's a area which is growing. We are focusing a lot on that. Within the crop protection portfolio, we had weakness in the herbicide business. We are fixing on that. I also believe the efforts we are taking on the demand generation side to get more focused on the domestic markets would also start giving us volume momentum. Prices, of course, I cannot control because prices are driven by what happens based on the global demand and supply situation.
Well, so you're saying that volumes, the degrowth that we've seen, that is going to end now, especially on the exports part. Now, from now onwards, if we compare on a quarter-on-quarter basis, it's going to improve. Is that what you're saying?
Well, based on the orders we have and based on the conversation we are having with the customers, looks like while prices continue to remain low, but volume certainly should start picking up.
Sure, that's quite promising. And, you know, briefly, you mentioned about how you're changing, so now you actually had planned a portfolio cleanup as well as a leaner organization structure. So I wanted to ask you, is the churn in the product portfolio, at least, is it largely through? And another question on that front is, when will the benefits of this start flowing through, and how will it exactly impact your own profitability?
So our focus remains to improve profitability. We are in a seasonal business. We get only one chance in a year to sell to the customer. But some of the efforts we are taking in terms of making our organization structure leaner, trying to pivot more on the customer, leveraging digital, also cleaning up the portfolio. We have recently evaluated and done with the exercise of looking at the tail portfolio. We are certainly going to deal with as we enter into the new season in 2025-26.
And what would the improvement on the profitability be on account of this sort of restructuring?
So it's very difficult for me to give you a short-term projection, but our long-term goal is that on a continuous basis, we should improve our return on capital employed. And it has to come from combination of portfolio mix. So we need to start weeding out low margin portfolio, start adding in more higher margin portfolio. On the cost side also, we are looking at how do we utilize our assets better, at the same time manage some of our costs differently so that the cost we incur, it is being used for more productive uses, for example, demand generation activities, etc.
All right. So when you're talking about adding more better margin products to your portfolio, you've also mentioned about metalaxyl. So it is, I think, in the final stages of being commercialized. So when will that commercialization take place? And is this a part of the products that you're talking about? And apart from this, what other products are in the pipeline that could probably, help your margin expansion plans as well? And, quantify for us the long-term potential that you see from these newer products that you plan to introduce.
So the way we look at it, our crop protection portfolio, I think we expect our herbicide, for example, herbicide as a part of crop protection contributes lowest in the overall crop protection portfolio. In domestic contribution of that should accelerate. On the seed side, we should actually accelerate our business. I think this business we had bought 12 years ago, it is now showing sign of improvement. Similarly, on the biological portfolio, I expect high double-digit growth in the years to come.
All right, and just one more question on the margin front. Your EBITDA margin was under pressure in the third quarter, despite the improvement that we saw in the gross margins. Now, you mentioned that pricing did decline in Q3. So where is the improvement in gross margins coming from?
So improvement in gross margin is always a factor of product mix. As I said, we have seed business, biological business, domestic crop protection business, as well as export business. Because there was a lower export business, which is a low margin business, that has led to overall margin improvement. But we expect that business to remain under challenge because of the global demand supply situation. But we expect to continue to improve our margin on the domestic side.
Sure. Thank you so much. And one last question from my end. For FY26, what could your revenue as well as margin profile look like? If you can just give, if not specific numbers, but at least something qualitatively.
See, our effort in the what you call five-year horizon is going to be that we start growing faster than the industry average. Industry grows about 5 to 7%. Our effort will be to really grow faster than the industry. But more importantly, I'm expecting significant improvement on return on capital with the combination of portfolio adjustment as well as some of the cost-cutting measures we take. So I expect at least 500 basis point margin improvement in next 4 to 5 years.
ABB India delivers an all-round beat in the fourth quarter. Stock rises nearly 4% as the revenue of the company grows over 20% and margins improve.
Zen Technologies loses another 10% after 20% fall yesterday. The stock continues to sell off post-earnings, even as the management tells CNBC-TV18 that they stick to their guidance given for FY25 and see a 50% revenue CAGR over the next 3 years.
JP Morgan issues an outperform rating with a target of 7,200 rupees per share on persistent systems, citing 29% earnings compounding till FY27.
Tech Mahindra 2 trades higher following a bullish note from CLSA. The brokerage has set a target price at around 2,030 a share for the stock with an outperform rating.
You're watching us here on Chartbusters, live from the CNBC-TV18 Motilal Oswal studio. I'm Manglam Malu, with me, Nigel D'Souza. And we're seeing the mid-caps sell off a little bit today. This morning, we have the mid-cap index down by almost 1.1%. There was a brief recovery immediately after the open on the frontline indices and the mid-cap index as well. But seems like those recoveries are being sold into. Currently, the Nifty 2 firmly below that 22,850 mark after having crossed levels of 22,900 and briefly going into the green this morning as well. We're at the low point of trade. The picture continues where we see an opening at the flattish level that gets sold into. There is a recovery. That recovery gets sold into once again for the markets to be at the lower end of today's trading range so far. The question is where we go from here. Hi, Nigel.
Well, yes, that's right, Mangalam. Some select stocks are getting seeing a little bit of buying from the day's low. PI Industries, the stock has seen, it's almost moved into the green, actually. I think we should get PI Industries up for you on the screen. Even in Jubilant Foods, that's another one that's seen some kind of buying from the low point of the day. So keep an eye out on a couple of these names. But let's go across the Shilpa route of Prabhudas Liadar, who joins us for a technical check. Hi, Shilpa. Good morning. Good to see you win. What's your take? We were talking about a quadruple bottom at around that 22,700. Does it hold, or do you see further levels down south?
Good morning, Nigel and Mangalam, and thank you for having me on the show. Talking about the indices level, we keep seeing that 22,800 is time and again tested and defended. But the more we test on the downside, I believe you get to the weaker side where levels of 22,600 should be tested from here. And as long as we are not sustaining above 22,930 decisively, we are definitely going to see some sort of weakness in the market today, and some more slide is definitely pending. Maybe 70-80 points or 100 points of downside move can again happen today. So sell on rise is the key for the session today, and any move towards 22,900 should be considered as a selling opportunity.
Okay, sell on rise. Got it, Shilpa. What about individual stocks? What are you looking at?
I have one buy and one sell. The buy would be in IT HCL Tech. HCL Tech is definitely looking better, and IT is performing much better in this scenario. So with a stop loss of 1,700 for the stock, you can look for targets of 1,745 to 1,750. The other one would be a sell in Hind Petro. We are definitely witnessing some sort of long unwinding here, and stock is trading at around 314 zones. There's a resistance at 320, so that should be a stop loss, and look for targets of 300 to 295.
Okay, all right. Just one thing, Shilpa. This sell on rise, when does it get negated? As you were saying, a bounce towards 22,900 should be a good shorting opportunity. Beyond what level would this get negated?
This texture actually on a few if you consider for a few more sessions to go, until and unless we don't sustain above 23,200 decisively, to be more precise, a close above 23,200 will definitely show some sort of respite to this trend, where levels of 23,600 to 800 can again come in. But until and unless that is not happening, so any intraday rise also can be a selling opportunity. Otherwise, for positional sellers, also keep that stop loss of 22,200 on closing basis, and if you do that, I believe a level of maybe 22,200 to 21,800 can also come in positional.
All right, we take that point, Shilpa. Thank you so much for joining in. So before we slip into a short break, pull up the intraday chart of Gillette. That sees some buying at the high point of trade, and Godfrey Phillips is the other one, which continues to do well, up around 6% now. Take a short break, come back. On the other side, we have the management of Borosil Renewables.
Welcome back. Markets down 130 points or thereabouts. But the other stock we're going to be looking at is Borosil Renewables. You know, the past quarter was a weak set, but the street wants to look ahead. And that's why I think the stock was higher in today's trading session, holding with a gain of closer around 5%. To help us out with what's the way ahead, we're joined by Mr. Keruka, the executive chairman of the company. Hi, Mr. Keruka. Good morning, and always good to have you on the show. Well, could you give us a couple of details? You know, you were rallying for some kind of protection, and the government of India heard you. And you have already said that, you know, since you've got the protection, you're looking at expanding capacity and fulfilling the needs of the domestic industry. So let's get a couple of points out of the way. On an average, what was the realization you got for the past quarter? And now, since you have that, minimum import price that's been levied, or the duties that have been in place, how much do you see pricing improve? And what does it mean in terms of profitability of a standalone business? The margins for standalone business have been in mid to high single digits. Do you think you get to those mid-teen margins?
Yes, sir. Thank you very much. Nice to be on your show as always. The government was very supportive of Indian industry and decided to give us a provisional duty, which we got on the 5th of December. Since we had already since we were contracted out for supplies in December, we could not get any advantage on the prices in that month. However, effective January, we've started getting much better realizations, and that is continuing. So we're looking at a much better financial working now as compared to what we've seen in the last couple of years. The working is good enough for us to already decide to press ahead with another 500 tons of production expansion, because the country needs the glass, and we are not going to be lagging behind in delivering the glass. So yes, the last time we spoke, we had a provisional duty which had been recommended, and now the final recommendation has come in from the Ministry of Commerce, which has been forwarded to the Ministry of Finance. We still need to have the final nod from the Ministry of Finance, but chances are that we should get it, because they already supported the provisional duty. And it's very clear from the government's intent that they are supporting Indian industry. And with all of this, we should be looking at good times ahead.
So if you could quantify those good times, Mr. Keruka, we wanted to understand what was your average realization in the previous quarter. The duty which has come in, and the price that is mandated is close to 56,000. Yeah. How far are you from that? By when do you get there? And once you get there, what do your margins look like?
So we were at 42,000 during the last quarter. Okay. And the minimum import price recommended is around 56. So we are well on our way there. January was already a good month for us, and we expect to see similar kind of situation the next couple of months. And we feel that, in fact, my finance director was saying yesterday that we're looking at about 30% margins now, which is much better than whatever we've had in the past. So we're looking at good things. Obviously, we require full support from the Ministry of Finance now, and then everything should be fine.
So, Mr. Keruka, just to come on to that point, you're saying the standalone margins will start gradually moving towards that 30% odd mark. Since you'll be getting the full benefit, should we assume from the last quarter, I can see you did around 7% standalone margins. So going by, the kind of business that you've seen in January as well as early February, for this quarter, that is for quarter 4, should you be in the vicinity of around 20%? And from quarter 1 of the next fiscal year, you'll get back to that 30%. Should that be, the rough estimates we should work with?
We should be better than 20%.
Better than 20% in quarter 4 itself. Can you be? All right. And then from quarter 1 of the next fiscal year, you go to around 30%.
Yeah, we might actually be between 25 and 30% in this quarter.
In quarter 4 itself. Wow, that would be the best margin, sir, all the way since June 2022. So clearly this protection is going to help you.
It will. You see, it's very important for everybody to know that we have a very low asset turnover ratio. So of course, we have brownfield expansion, so we have a better asset to turnover ratio. But if there's a greenfield person, for every 100 crores that he invests, he only gets 80 crores of turnover. So, you know, even if it's 30%, it's still not so much compared to the investment that he has made. And the second thing which is very important in the glass industry is that every 5 years we have to redo our furnace. And that's a very expensive thing. So we need to be able to do that. You know, we need to have enough money there to grow. And unless investors get a decent IRR, people will not come in. So what the government has done essentially, it has given the boost for fresh investments. And we need to ramp up capacity in India, we are well on our way to that, I must say.
All right. You know, so let's talk about that itself. You said that Q4 will be 25 to 30%. Thereafter will be 30%. And I presume that 30% is when you expect, you know, your realizations to be at that 56,000, the aspirational 56,000 mark. That happens by the first quarter of next financial year gradually. For the next full financial year, what are you projecting in terms of volumes and overall EBITDA? Largely because you are also expanding capacity. So at what point do these capacities come on stream?
So next year, we will not have fresh production, which means we'll continue to have our 1,000 tons per day. We have been working very hard to ramp up, to squeeze out more glass from the existing capacity. So we might see maybe a 10% higher output in terms of quantity, but not much more than that. And we expect to be able to have a nice year going forward. And in the meantime, of course, we're continuing to expand. We're continuing to invest in a new unit, which would be 50% of our existing capacity, which is not small. Okay. And I expect that might be on stream perhaps by October of next calendar year. Calendar year. I'd say a third quarter of 25-26.
October 2026.
Yes.
Okay, all right. Very quickly, sir, you know, on the consolidated basis, we would like to understand the profitability. And if I look at your consol minus standalone, that's still a loss because the European business has been struggling. So two-part question. One is, how is domestic demand on ground? Is it as strong as you anticipated? Point number one. Point number two is, when does the European business turn around? Very quickly, sir.
Domestic demand is strong. We see absolutely no problem in selling whatever we are producing. So that's out of the way. The second thing is the European business. So what happened in Europe, you see, the European Union itself has mandated that 25% of all renewable energy generated in the European Union should come from equipment which has been manufactured in the European Union. This has not been adopted by the German government, which is the largest economy in Europe, in their last iteration. So the last coalition government, there was a very small fraction partnership by the Liberals, and they very strongly resisted any kind of support to domestic industry. And they were then dismissed from government by the Chancellor, and fresh elections were called. Now, the elections are due on the 23rd of February, which is just a few days away. And it is strongly expected that the CDU, which was the rightist, the rightist government in Germany, which is strongly pro-industry, and the AfD, which is the far-right movement, and of course we have the SDP. So I mean, I'm not a political pundit over there, but whether it is the CDU and the SDP, which is the Social Democrats, both those parties are strongly pro-industry. And the CDU and the AfD are probably also strongly pro-industry. So we do expect that a decent kind of an policy decision will come, in which case the German factory should be doing very well again. So that is, we are keeping our fingers crossed on that.
Okay, all right. We'd like to understand about that a little bit more detail. But as you said, things looking up, particularly on the domestic front. Standalone business is bulk of your profitability. So we'll track that. Thanks a lot, Mr. Keruka, for joining in and filling us in with all of those details. By the way, keep an eye out on the bottom of your screen. Jyoti Structures, I think they have a current rights issue that's underway. Their board has approved potential one-time settlement with lenders. That'll be good news for them, because otherwise the fear is that if that settlement doesn't come about, then, you know, there could be various legal hurdles as well. So that stock has seen a bit of recovery from the lows of the day. As I said, I think that's the rights issue that was scheduled in February itself. For the time being, let's shift focus to a special segment where we get you a few ideas for profit from Money Control Pro. Nitin Agarwal of moneycontrol.com joins us to talk about a stock that is tracking closely. Nitin?
The company that I have chosen for today is Landmark Cars, which is an auto retailer for luxury and the premium segment. First, let me touch upon its Q3 number. The company's revenue from operation recorded a growth of around 18% over YOY basis, primarily driven by the new clients and the new store expansion. However, the ramp up in it's a new store weighed on the EBITDA margin, which contracted. However, there are a couple of factors that make us a bit about the company. First, there's a significant headroom for the growth. India being the third largest car market, the penetration of luxury and the premium vehicle is less than 1%, which in compared with any other developer and the developing country is very low, and hence there's significant room for the company to grow. In addition to that, in the anticipation of the significant growth that is expected in the premium and the luxury car segment, the company has been expanding its reach across the various regions in India, and it has already opened up 23 new stores outlet in FY25, meeting its target. Further, the company has tied up with all the premium segments in the country. Some of them are Mercedes-Benz, Jeep, Kia, Hyundai, Mahindra and Mahindra, BYD, etc. In terms of valuation, the company currently trades at around 22.3 times FY26 projected earnings, which we believe is very reasonable given the earnings growth outlook for the company and the significant demand that we are expecting in the premium and the luxury segment in India.
Okay, all right. Thanks a lot for that, Nitin. For the time being, we slip into a short break. Come back, continue to focus on markets and stock-specific action. But as we do that, here is some good news for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or scan the QR code on your screen. More news and updates awaiting you.
जब दिल्ली में जगह जगह पावर कट होते हैं, जब उत्तम नगर, नवादा, संत नगर, बुराड़ी, त्रिलोकपुरी, संगम विहार, देवली में 3-3 घंटे, 4-4 घंटे बिजली जा रही है, तब भारतीय जनता पार्टी वाले कहते हैं नहीं नहीं नहीं, अभी तो आतिशी सीएम है, अभी तो केयरटेकर सीएम आतिशी है, वो जिम्मेदार है दिल्ली की बिजली व्यवस्था के लिए। जब यमुना में कोई मशीन उतरती है तो कहते हैं नहीं नहीं नहीं, बीजेपी चला रही है सरकार, एलजी साहब चला रहे हैं सरकार।
खुद अरविंद केजरीवाल ने चुनाव से पहले ये कहा कि हरियाणा गवर्नमेंट ने जहर मिला दिया है पानी में। इससे दिल्ली के लोग और नाराज हुए और दिल्ली में अरविंद केजरीवाल के खिलाफ जमकर वोट किया। अब हम लोगों पर जिम्मेदारी है कि यमुना साफ हो पूरी तरह, तो सरकार तो बनेगी, 20 तारीख तक सरकार बन जाएगी, लेकिन उससे पहले ही लेफ्टिनेंट गवर्नर साहब ने यमुना की सफाई का काम शुरू कर दिया है।
Welcome back. Well, as we were telling you, that one-time settlement announcement from Jyoti Structures that were just, on the bourses, that's been taken note of by the markets, and the stock has seen a good recovery. Besides the stock, at least the good news is being absorbed by the markets. Stock aside, good news should be appreciated, and at least in this case, it's taken place because over the last few days, the mood has been so somber that a lot of good news has been ignored. But that said, let's get in Vinny. She's here to tell us about a brokerage update on Persistent Systems. Vinny, take it away.
Absolutely. So Persistent System, we have a positive outlook coming in from JP Morgan, and this is, do not forget, despite the high valuation that one has seen for Persistent System. The stock has seen a run up of almost 27% in the last 1 year, while Nifty IT, when you look at it, it's down almost 4 to 5%. So, despite this, Persistent outperforming the Nifty IT, JP Morgan is quite positive on Persistent System. It's one of the fastest growing companies for JP Morgan in their coverage. 29% in terms of earnings growth, growth over the next 2 years is what they're expecting. Management, they are highlighting, is navigating well through the tough macro environment, and they are seeing that there is a lot of opportunity that is opening up for high quality growth stocks, is what JP Morgan is highlighting, and they believe Persistent could see a good run up coming in from here. They've given a target price of 7,200 rupees per share, and currently the stock is trading at somewhere around 5,600 rupees per share is what we're looking at. They see a potential in terms of margin expansion also coming in, especially in terms of reduction coming in from subcon as well as operating leverage, and a credible growth is what they're watching out for. So they're quite bullish on Persistent System.
Okay, thanks a lot for that, Vinny. Well, it's time to wrap up on this edition of Chartbusters. But as we end this edition, well, a small programming note for our viewers. CNBC-TV18 and HSBC India are back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact, and shaping the future. Nominations are now open. Scan the QR code now and submit your entry for SME Champion Awards Season 2.
Incomes in the higher bands have also been brought into the lower bands so that they'll benefit from a lower tax rate. So if you would only look at the rate charts that we've come up with, where the income bands and the rate applicable to them are also rehashed in favor of every taxpayer. So if you are talking of the new regime, the new higher incomes are coming into lower band, the rates for all of them have also been brought down. So on the question of your FIIs and the retail investors, it is true, and I thought you were implying it in your question itself, that FIIs also go out when they're able to, in a position to book for profits. Indian market today, Indian economy today, has an environment in which investments are also yielding good returns, and profit booking is also happening. And I'm sure you would have seized that fact also.
Well, the merger between JioCinema and Disney Hotstar is done, and there's a brand new app. Now, the most obvious benefit will be that users don't have to choose between these two apps or toggle between the two different apps to get to the content they want. The new Jio Hotstar app will have it all, over 3 lakh hours of content across 19 languages. So potentially, we will now have India's largest OTT player, with the company saying that it will have a user base of over 50 crore. Now, these 50 crore people are not necessarily all paid users, but that just means that there's potential to convert them. So what happens to your existing apps? Now, JioCinema will now redirect you to download the new app or prompt you to open the Hotstar app if you already have it on your phone. Now, the Hotstar app should automatically have been updated to Jio Hotstar or will prompt you to install the latest update. Now, your existing premium plans will continue on Jio Hotstar for the remaining duration of the plans, and once those plans expire, you will have to subscribe to the new plans. Now, these new plans start from 149 rupees for 3 months for a mobile plan, and it goes up to about 1499 rupees or 1500 rupees for a premium ad-free plan that allows you to access 4 devices. And what does Jio Hotstar now entail in its new avatar? Well, everything that both apps used to individually offer is now under one umbrella. Now, Jio Hotstar will also aggregate the libraries of NBC Universal Peacock, Warner Bros., Discovery, HBO and Paramount as well. Now, it also plans to double the South Indian content to about 1100 hours, taking on what has been the USP of platforms like Prime Video or ZEE5. But the biggest draw for Jio Hotstar will be sporting events. Now, the new entity holds rights to all the sporting events that Jio...
Well, good morning, hello and welcome to Trading Hour, live from the CNBC-TV18 Motilal Oswal studio. I'm Vivek Iyer and with me today is Winnie Motiwala. Good morning, Winnie. It's another session where you're seeing a very significant sell-off. Volatility index, the VIX is something that is surging, but markets aren't doing too well. In fact, if you look at the broader end of the markets, seeing significant amount of pain. Look at the small cap index. The small cap index is down over 1.5%. And as you can see at the top of your screen, both the Nifty and the Sensex well deep in the red. The Nifty at this point of time managing to hold on to the 22,800 mark, but just about the selling pressure on every rise is quite intense. If you look at some of the sectors that are doing quite well, it's actually the IT pack that's led a certain amount of support as far as the markets are concerned. Winning names like Persistent, something you've been highlighting, names like HCL Tech, Tech Mahindra,
Absolutely.
LTI Mindtree, LTTS. These are some of the names that are actually making a bit of a comeback and aiding the slight recovery that you're seeing in the market.
Absolutely. And Vivek, you know, just highlighting also just a short while ago, TechM also has a positive brokerage note that's come in. Persistent System has a brokerage note, a positive brokerage note. And both these IT names actually are some of the ones that have actually seen a good run up, right, in the recent times versus the Nifty IT. And despite that, you know, brokerages are quite positive on this one. TechM especially, they believe it's a turnaround story coming in from the IT pack. Now, other than that, Nifty IT obviously top sectoral gainer. We have Nifty Realty. That's also managing to hold on to some bit of a green today. So interesting to watch out for that. Today we're seeing that pressure is coming in specifically on those metal names. So yes, metals is something to watch out for. Nothing exciting happening there. We have Adani Enterprises that is down and out. Other than that, we have names like Welspun Corp, NMDC that's seeing some bit of a pressure, as well as Vedanta. That also is seeing pressure coming in today's trading session. Pharma names today again subdued. Yesterday, Vivek, we saw them run up in trade, but yes, today
very short-lived bounces.
Absolutely. Just the day that you see it coming up and hoping that that recovery is something that would continue, but doesn't seem like it. But okay,
also, quite a lot to do with the tweet that you saw from Donald Trump. You know, he's once again reiterated the fact that there are going to be reciprocal tariffs, and that is something that we need to keep an eye out for. Well, we'll now focus on some stocks on the move. MGL, remember, is reacting to a news update from the BMC, which has issued directions for switching to alternative fuels. Sudarshan is here with more details.
So MGL has made a good recovery from intraday low, has gained around 2 to 3%. And the reason is BMC, that is Mumbai Municipal Corporation, has issued directions to all the eateries, dhabas and roadside vendors to shift to eco-friendly or clean fuel. And the deadline is given by July 18. It's on the back of the recent High Court order. That order had issued directions to make sure that these dhabas, eateries and roadside vendors shift to clean fuel to curb the pollution in the city. And on the back of that, this municipal corporation issued notices to more than 84 restaurants, eateries and dhabas in Lower Parel and Prabhadevi, saying that these offices, basically these eateries have to shift to clean fuel. And otherwise, if it's not done by July 8, BMC says licenses will be marked as not to renew until the transition is completed. Also, no new licenses will be issued to establishments using conventional fuels after July 8. This is important for MGL because it's the largest player as far as Mumbai is concerned, and for CNG and PNG, that's the reason you are seeing a major recovery from intraday low for MGL.
Okay. That's why we're keeping an eye out on MGL in today's trading session, up 1.5% as of now. Let's move on. In Tech Mahindra, what I was highlighting before, we have a brokerage note that's coming from CLSA. Outperform call, target price of 2,030 rupees per share. Currently, the stock is trading at 1,682 rupees per share. What they're saying is, and what they're reiterating, is that in the large cap IT names, Tech Mahindra continues to be among the top picks coming in. They said that Tech Mahindra is actually walking the talk in terms of the growth that they've highlighted. Tech Mahindra spoke about, profitability, focusing on that, improving that, and that is what we've seen in terms of numbers coming in from the company. Look at the EBIT margin also, seeing an improvement significantly. And in Q3, the EBIT margin was at 10.2% versus Q1 FY24. When you look at it, it was just 6.80%. So, good improvement in terms of the margins of the company. What else is highlighted by CLSA? That they're confident that the company will achieve their guidance in terms of FY27, both for the revenue growth as well as, targets that they've set for themselves, and they will be doing better than the peers in terms of an average that they're looking at. Their aspiration for FY25 guidance was in terms of EBIT margin of 15%, and they're already nearing that. Like I mentioned, 10.2% in Q3 is what they saw coming in. Profitability improvement, it seems like it's on track, and that is why Tech Mahindra is in focus. We're seeing the stock also holding on to some bit of it.
That's right, Vinny. In fact, ever since the new management has joined, this particular stock has done quite well. But the stock I'm focusing on is ABB India. ABB India is doing very well in the session, and why is that so? Because it's a strong beat across the board as far as ABB is concerned versus the CNBC-TV18 poll versus the street expectations. In fact, if you look at the revenue growth is almost 22% on a year-on-year basis, and this is helped by all of the segments that have contributed quite significantly. So the robotics arm, the motion arm, the electrification arm, all of these arms have grown very well. In fact, electrification growing almost 33%. EBITDA, on the back of very strong operating leverage, EBITDA is almost a 17% beat versus the CNBC-TV18 poll, indicating a growth of close to 58% on a year-on-year basis. EBITDA margins is at 19.5% versus 15.1%, indicating that it's almost a 440 basis points jump when it comes to margins, and operating margin leverage has led to a sharp beat as far as profitability is concerned, 56% higher, a beat of close to 15%. In fact, the only blip as far as ABB was concerned was the slight dip as far as the order inflow is concerned, which fell 14% on a year-on-year basis, but the management has clarified that this was due to a large one-off order that the base quarter saw. So adjusted for that particular order, order inflows, or the base orders as the management calls it, is actually up 4% on a year-on-year basis, still slightly muted. In fact, the call is now going on with the analysts. The management has indicated that order backlog gives them good visibility for the next 1 year. 60 to 65% of the total orders, as far as the order book is concerned, will be executed this year itself. The stock, in fact, has cooled off from the day's highest point, in line with the kind of volatility that the market has seen, Vinny.
Absolutely. So that is ABB in focus today. But on that note, we're going to step into a very short break, viewers. And when we return, we'll discuss some market technicals with Mitesh Thakkar. So don't go anywhere.
Held individually. So that's IPL, ICC events, English Premier League and Wimbledon are all covered. Now the company has also plans to widen its offerings to bring more sporting events under its umbrella. Does this now mean that then you'll have to pay for IPL? Maybe not, because the company says that some content will be available for free every day. But whether this includes IPL or not, that we don't know yet. Now, what will be interesting to see is what this means for the OTT landscape in India. With nearly 36 million paid users, Hotstar was already the market leader here. And it was followed by Prime Video, Netflix and then Apple TV+. Now, the merged app will actually have about 52 million paid subscribers to start with. And this could shoot up once the IPL starts in a month's time.
We are actually using AI to tackle AI. It has to be like that. We've actually used a lot of AI for a very long time now. We always had models where we could detect that this number is likely to be a spammer or this message sender is likely to be a spammer. Those were some of the basics that we did a long time ago. We're now looking at AI almost across the business, not only protecting consumers and improving consumers' communication, but also from a business point of view, from our biggest revenue stream is advertising. How can we help brands leverage AI on our platform and get better bang for their buck? We've invested very heavily on various parts of our business, even operationally. We're using AI on customer support, for example. Even our legal team is looking at AI products. Our developers looking at AI products. So AI is very deep into our business now, and pretty significant investments are being made into AI.
Let's double down on India and your focus here on India. How do you see this market evolving? How do you see this market growing for you? What are the opportunities that you want to build on, considering the fact that the lion's share of your revenue comes from the market? I mean, do you believe you've hit saturation here in India?
So India, firstly, is our most exciting market. I think globally, for a lot of companies globally, India is the most exciting market, right? It is for us as well. Our biggest investments in the last, I would say, 6 or 7 years have been in India. We actually have more engineers in India than we have in our head office in Stockholm now.
Welcome back. Thanks for staying tuned into CNBC-TV18. You're watching Trading Hour. But let's move on and bring on board Mitesh Thakkar now, who's going to give us a quick take on the technicals as well as top bets coming in from him. Mitesh, good morning. Thank you so much for joining in with us. While we just thought that there may be some bit of a respite with Nifty closing yesterday in the green, but doesn't seem like that's the story, because now Nifty is almost near the day's lowest point again. 22,830 is what the Nifty is holding at. What are the levels that we should keep an eye out on? 22,800 surely seems like that support, but what should we be doing now?
I think that's the key level to watch, 22,800 to about 22,750. I think this 50-point band has in the last few days held on and given a bounce back every time the market has been here. So I hope that we don't close below that, but in case we do, then I think another 250, 300 points downside could happen very quickly on the Nifty. So 22,750, 800 broadly is the level which I'm watching, and we're right there.
Mitesh, in terms of the Bank Nifty, what are the levels that you're watching? It's held quite steady today. In fact, you could say that the selling pressure there hasn't been as much as it's been in the broader end of the markets. And any specific cues you have as far as the pharma pack is concerned? It's another day where the pharma stocks have seen significant selling pressure.
So on the Bank Nifty, 48,700, 48,300 are the two pivots, and then 48,000, which is where the markets had bottomed out last time, which was on the 13th of January as well as on the 26th of January. So these are the three levels watching. But broadly, I think 48,000 as a round number also, and given the fact that there is good concentration over there, I think is the most important of the three. So that's the level on the downside for the Bank Nifty to watch. As far as pharma stocks are concerned, I think they still remain, slightly on the negative side, though Lupin has pulled back a bit in yesterday's session. But it's just hovering around its 200 average, which is at about 2005-6 levels. So once we see a break below 2000, maybe you'll see more supply come in. Similarly, Glenmark has had a breakdown on the weekly and the monthly chart, which means that more correction could happen.
Right. Mitesh, could you also give in a word on Nifty IT as well? Today, when you look at it, Nifty IT is in the only sector as of now which is holding on to some bit of a green, right? So what are you looking out for in terms of Nifty IT, and anything that you're looking on the technicals in terms of stocks?
On the Nifty IT, one most important thing was that yesterday, it made a low of around 40,592, and 40,450 is the area 40,480 is the area where the 200-day average, simple average is placed, and the Nifty IT would, be close to testing that nearly about after 9 months. So I think that should be a very important level. Therefore, you will see some buying happen around the 40,500 mark on the Nifty IT and the Nifty and the components of Nifty IT. I think that's what is playing out. In fact, I do have HCL Tech as one of the possible recommendations. I would want to see the stock get past levels of 17, 18, 17, 20 And above that, a long trade with a stop below 1700 can be taken. Once that happens, look for a target of around 1760 on the upside. And ACC is something, which I believe could see some more decline. So ACC is a short call. Keep a stop at about levels of 1865. Look for targets of 1770.
Thank you so much, Mitesh, for joining us and giving us a sense of the market technicals. Well, have a look at some of the capital goods names like ABB, names like Siemens. These stocks have cooled off significantly from the day's highest point. In fact, ABB, which was trading with gains of almost 5%, is now in the red with a cut of close to 0.5%. Let's now take a short break. Jeffrey Garrett, Dean at USC Marshall School of Business, joins us on the other side.
In India, and we ship globally. A very large chunk of our product is shipped globally out of India as well. India continues to grow very, very rapidly. The entire stack that is available to an Indian citizen now to conduct business digitally has made the mobile phone number even more important than it used to be. And that's where we believe our relevance continues to grow in India. We haven't reached saturation at all. We are fortunate to have a large user base in India. I think we crossed 350 million users in India, but we still have a huge space.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, match.
Welcome back to Trading Hour. Well, let's now go across to Nigel, who's standing by the wall to talk us through the market outlook from top voices of few brokerage houses. Over to you, Nigel.
Well, that's right. Let's get you all the top voices that we have got. Let's start off with the most bullish. Rhythm Desai of Morgan Stanley says that Q3 earnings growth was up sequentially, which was better than the subdued expectations. He says that the market looks good for a near-term bottom, given the improving growth trajectory. Goes on to add that if global cues do not surprise negatively, India should resume its outperformance in comparison to emerging markets rather soon. They are overweight on L&T, Bajaj Finance, ICICI Bank, Mahindra & Mahindra, Trent, Titan, Maruti. Those are the overweight stance. On the underweight side, they're talking about Eicher Motors, RBL Bank, Wipro, as well as Concord. So that's about rhythm. Moving to the Citi view, Surendra Goel of Citi says that the headline trends in Q3 missed expectations, with EBITDA growth at just around 7% on a year-on-year basis. But with the pickup in central government capex in the past few months, the budgetary support which will help consumption trends later on in the year, and also the start of the rate cuts, they expect growth to pick up from here on. They also go on to add that the impact of the reciprocal tariffs from the United States will be something to watch out for, and the kind of impact it can have on select sectors. They also say after a 12% decline from the peak, valuations on the Nifty at around 19 times 1 year forward is below the 5-year long-term averages. And the FIs, well, they're underweight on the benchmark, which is the highest we have seen in nearly around 15 years. They wind down by saying that India looks relatively well placed post this correction, and their December 2025 Nifty target is at around 26,000. Rajiv Batra of Morgan Stanley says that Q3 was another subdued quarter with regard to earnings growth, which was driven by the moderation in urban consumption, the tighter liquidity, a depreciating rupee, and also the rise that we saw in input cost. But they expect a nascent recovery in Q4 earnings owing to the sustained upswing in rural demand, a rise in government spending, and also the lower raw material costs. They add that despite the recent earnings downgrades, consensus earnings expectations for this calendar year as well as next, that's 2025 as well as 26, are still elevated. And also there could be further downgrades specifically in energy, materials, industrials, as well as in passenger vehicle plays. They reiterate the overweight stance on financials, consumer staples, consumer discretionary, healthcare, as well as real estate. But let's wind this down with a technical call coming in from Lawrence Blanco of CLSA, and he's talking about the dollar index. He says that the dollar is threatening the 106 support, though in the past 3 months, the US dollar index has been capped at around that 109.8 to around 110.18, and it's found support in this vicinity of around 106 as well as 107. A break, though, below that 106, 107 support would suggest that December's breakout from that 2022 to 2024, that trading range was not a genuine one, leaving the dollar index ranging back to around the 99-100 odd handle to around that 106 to 107 trading range. Within the old range, well, he goes on to add that the 200 DMA offers the initial support on the dollar index at around that 104.8. So that's what all the top market voices are making of the Indian markets. Back to you guys.
Okay, Nigel, thank you so much for giving us the update coming in from all the top market voices. But let's move on, and we do have Jeffrey Garrett, Dean at USC Marshall School of Business, joining in with us in the studios this morning to talk to us about US macros, everything that's happening in the world. Jeffrey, thank you so much for joining in with us. It's a pleasure having you, and thank you so much for coming down.
It's my pleasure. There is certainly a lot going on in the world. So.
A lot is going on, and a lot is going on in US. Let's start. The year began by Trump taking over, coming in as the new president, second term. Your view firstly in terms of the economy currently that's going on in the US, new president coming into place. What are we watching out for? Because tariffs surely started trending post his coming back. So what are we doing now?
So maybe just one step earlier than economic policy, I think is the overall perspective of this month has been that Donald Trump is doing or trying to do exactly what he said he was going to do when he was running for president. I think the real issue now is whether he can actually implement his agenda. So with a lot of the domestic stuff, it's now hung up in the courts. The courts are going to have to rule on the extension of executive power. And then with respect to international policy, tariffs above all, there's been a lot of bluster. The reciprocal tariffs announcement obviously was a very big one, but we've seen the president be willing to pull back from tariffs because I think he's worried about the inflationary consequences in the US of imposing big tariff increases.
Jeffrey, one thing that's clearly being mentioned is that world trade, as we know it, is going to change,
Yes.
right? Reciprocal tariffs. Does this actually work for the US economy? Because especially if you look at a country like India, we are exporting quite a lot of pharma, and it comes at a cheap price as far as the US consumers are concerned. So, sectors like pharma, sectors like IT, where Indians actually do quite a lot of the groundwork. Does it actually work if he actually puts in a reciprocal tariff?
So wearing my economist hat, of course, I would say no, that reciprocal tariffs are very cumbersome, very complicated to implement. And as you said, in general, yes, India runs a trade surplus with the United States, but American consumers benefit. We've seen that in the IT sector. You mentioned generic drugs. I think that's true. But the Trump view is that trade deficits, it's like a win-loss record of your favorite sports team. A deficit means we're being taken advantage of. But if I was in the prediction business, and we've seen lots of examples of this, I actually don't think President Trump or the administration actually wants to impose tariffs. What they want to do is change the deal. Donald Trump is the deal guy. And so I would expect with respect to India, rather than implementing reciprocal tariffs, again, really hard to do, if there are some win-win concessions that India could make in terms of US products coming into India, that strikes me as the much more realistic path forward.
Right. Jeff, today I was looking at some data, especially coming in versus the rates that India as well as Asian countries actually charge in terms of tariff versus what US is being charging these countries. And quite a huge difference, right? We see in terms of the rates. So whether you look at India, we're charging much higher rates versus other Asian countries. China, South Korea do come in that play. How does that whole come into the picture as well? Because there is a huge gap still between US and India, right?
Yeah,
so there would be some bit of a tariff or something that comes in.
Yes, again, economists have thought for a long time that it made sense for emerging economies to have higher tariff rates because you want to protect what we've always called infant industries. Then in a case like India, you obviously have agriculture playing an enormous role in the economy, and the whole world protects agricultural products. The US does too. So if we're looking at the global economy, Indian tariffs aren't a central story, right? The big narrative in the US is both for economic reasons and for national security reasons, the US wants to decouple from China. Then there's all this fallout for the rest of the world, and I think that it's complicated to navigate that, but the decentering the global economy away from the China-US axis actually creates a lot of opportunity too. One example that is talked about a lot in the United States that I'm sure your viewers are familiar with is moving the Apple supply chain from China to India, right? That makes geopolitical sense for the US, but it's a great opportunity for India.
So de-risking from a sole global supplier to actually having multiple moving parts within the supply chain is something that you're looking at. Well, coming back to the Indian context, you said that certain goods, like you've actually seen a cut in tariffs as far as bourbon is concerned, also expecting a cut as far as American motorcycles like Harley Davidson is concerned. Will that satisfy Trump? Number one. Number two, there's also been quite a lot of worries in terms of US aid being cut off. And multiple articles, multiple news reports indicate that there's been complete cutoff of funding as far as these important programs are concerned. Elon Musk has come out and said that we will rectify our mistakes immediately, but on-ground reports suggest otherwise. So what do you think is going to happen next?
Okay, two big topics. With respect to Indian concessions to the United States, obviously the ones we've seen are symbolic, not enormous dollar value attached to them. Right. Predicting the future is difficult, but I would think that if India did two things, said it would buy more American fossil fuels. The US is now an oil and gas exporter. Buy more fossil fuels and buy more military equipment from the United States. Those would be big wins for the Trump administration. And again, I would expect that the tariff pressure would go off if India did that. Now, neither of those things is easy for India. I understand that, but I think that would be a path that would work. With respect to foreign aid in the US and USAID, there's a political reality in America that voters think that the aid bill is enormous, and that it's squandered, spent on bad things. So politically, taking on USAID was a very smart thing for the Republicans to do. And you've noticed that even the Democratic Party isn't defending USAID because they know it's not politically popular domestically. But I think you're right that foreign aid programs have been incredibly important and very good soft power for the US. And I worry that one thing that's happening at the moment is that the US is withdrawing in areas like aid, and the Chinese government is investing big time, right? The Belt and Road Initiative and everything that goes with that. So I think from a geopolitical standpoint, foreign aid is a valuable thing.
Another question, when it comes to emerging markets, there's been significant repercussions as far as currencies are concerned. How do you look at the Chinese currency, the Indian rupee, and also, do you currently feel China is better placed versus India when it comes to global money management?
So it's interesting that the world often flips, right? So for the last 5 years, India's been the hottest place in the world and China not so much. I think the last 6 months, obviously we've seen foreign money flow out of India. One of the reasons for that is that there's money to be made back in the United States, but another is what was a gradual turn, but looks like an accelerating turn of embracing business back again in China. So we had fiscal stimulus in China in the fourth quarter. Then we had this incredible DeepSeek announcement. And just overnight, Xi Jinping hosted all of the big tech leaders, very symbolically hosted all of the tech leaders, including Jack Ma, in Beijing. So I think the markets and foreign money will react very positively to that. So there's obviously the underlying economic context here with the consumption challenges and things like that. But it seems to me that there are international reasons why some foreign money might move out of India, continue to move out of India.
Okay, Jeff, thank you so much for joining in with us in the studio, helping us understand the macro data, the economic data points of view coming in from across the globe. So thank you so much for coming.
My real pleasure. Thanks for having me.
Thank you so much for that. And on that note, we're going to slip into a very short break. Viewers, don't go anywhere. We'll be back with more news and updates after this break.
Very good. One of those massive working days.
So much longer, much more. By 2025, it's like a very one time.
Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge. So it's our 4th biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million right now. So
breaking news. The last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
We've now matured our ML and our AI teams to adapt to this new technology, and we've pivoted every product team inside Canva now to think AI first.
Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Welcome back and thanks for staying tuned into Trading Hour on CNBC-TV18. Let's move on. And life insurers have seen a good growth in embedded value over the past few years. But despite a rise in market capitalization, the sector has seen a derating in valuation over the past few years. Yash is here to give us more details on this one and explain us what is happening here. Yash.
Well, through these few numbers from the last about 4.5 years tied up in this piece, we intend to demonstrate what has been the embedded value growth for life insurance companies, what has been the growth in their market capitalization, and how a function of these two, that is price to embedded value, reacted to that growth. To start with embedded value, which has grown at a CAGR of 8 to 23% when compounded over the previous 4.5 years between FY20 to H1 FY25 for listed life insurers, HDFC Life Insurance has seen the strongest CAGR of about 23%, followed by Max Financial Services at 21%, followed by ICICI Prudential and SBI Life at 16.6 and 16%. LIC being the slowest at about 8.4%. On the other hand, when compounded over the last 1.5 years, LIC has seen the strongest jump in its market cap, growing at a CAGR of 53%. Again, compounded over the last 4.5 years, Max Financial's market cap grew at a CAGR of 36%, followed by SBI Life at 27%, and then ICICI Prudential Life at 19%, and HDFC Life at 13%. We spoke about, of course, the embedded value growth. We spoke about the market cap growth. A function of these two is how life insurance companies get valued, that is on price to embedded value. Now, here's the big question. With a strong growth in the embedded value for life insurance companies, have the multiples responded in a similar fashion? The answer is an emphatic no. Look at how the price to embedded multiple has moved between FY21 to FY26, which are estimated figures. The biggest derating has come for HDFC Life from 4.8 times in FY21 to just 2.1 times for FY26 estimates. This despite HDFC Life witnessing the strongest growth in its embedded value. Price to embedded value for all listed life insurance companies except for LIC have gotten derated. If valuations are supportive, then what's really coming in the way as far as the price to embedded multiple is concerned? Now, we spoke to a few analysts and they point out that the big reason has been the fear of regulatory intervention either from the government or the regulator, that is IRDAI. The second reason has been how the product mix for various life insurers have turned very ULIP heavy, which has led to a significant deterioration when it comes to margins for these life insurance companies. Finally, the problem has been that the Indian insurance market is not growing. Penetration and density for a very long time has remained stagnant, and out of that market as well, unlisted players are taking a large part of market share away from the listed life insurance companies. These are some of the reasons why the multiple in terms of price to embedded value hasn't responded to the strong growth either in embedded value or the market cap.
Thank you so much, Yash, for joining us and giving us a sense of what exactly is transpiring as far as the insurance space is concerned. Time now for a short break. We bring you excerpts of our conversation with Abhilash Gupta, Managing Director and CEO at ThinkGas, on the other side. Welcome back to Trading Hour. Well, while the benchmark indices, the mid-cap and small-cap index are seeing selling pressure, select stocks are witnessing some buying emerge from the day's lowest point. Names like Berger Paint, PI Industries, ABB India, some of these stocks are actually doing quite well, even in what is essentially turning out to be another very lackluster session. MGL was the other stock that's doing quite well. But we are now shifting focus to the energy space. Think Gas is a leading player in this Indian city gas distribution industry. The company's CGD network supplies compressed natural gas for use in vehicles as well as piped natural gas to domestic households, commercial establishments and industries. Manisha Gupta caught up with Abhilesh Gupta, Managing Director and CEO of Think Gas, from the sidelines of the India Energy Week, and began by asking him about how gas aligns itself with India's gas aspirations.
What was missing from the perspective of taking our gas share from 6 to 15%, we feel that the missing link was the last mile connectivity. While you have LNG terminals, you have the trunk pipelines available. Of course, we need more trunk pipelines, but ultimately the missing link was that gas has to reach to the end consumer. Gas has to reach to the household, each of the household. There should be multiple CNG dispensing stations. There has to be pipeline reaching to the industrial customers and the commercial customers. So in Think Gas, this is where we came and tried to fill the gap. And we have done very significant development on infrastructure. And we have laid around 1,700 kilometers of steel pipeline, almost 10,000 kilometers of polyethylene pipeline reaching to some of the household as well as the industrial customer. And we have set up 470 CNG stations. Okay. Along with that, we have also set up 19 LNG stations also. So we feel that this infrastructure, which is now ready to serve the customer, will support the vision of taking the gas share from 6 to 15% going forward. Of course, there will be some more support required from the government on the policy front to see that how do you manage your logistic costs much better, how do you have better tax optimization, etc. But having infrastructure reaching to the last mile connectivity is something which we have delivered. We are looking to deliver it in much better manner going forward with the brand merging now. And this is where I see that our contribution to be there to increase the gas sale.
Since you did mention on policies and you've also clarified the areas where you see better policy support from the government, what is it that you're actually anticipating or asking?
Yeah, so actually gas have been developed in the very select cities going earlier. Very few cities had the gas network, or also some part of India had the gas network. So the policies were framed, or probably they were not required to maintain the proper tax optimization which is possible, because gas is flowing from one state to another state. I think this time has come where we have to really see that how the tax optimization happen, because natural gas is not under GST. If it's not under GST and we are unnecessarily lumping tax one and another on the one state, another state, and then the third state and fourth state, that creates problem, and ultimately the gas cost increases. If the gas cost increases, the end customer is not going to get the benefit which he is entitled to get the benefit of. This is one area. The another area that you can come up with some kind of more forthcoming discussion to see that the logistic costs are minimum. When you need where the gas you need, the logistic cost should be minimum, so that ultimately the end cost of gas is also reduced. So there is a lot of scope of that. So there the sustained dialogues are required with the regulatory authorities, Government of India, and we see that with this itself, the gas cost can be reduced by 20%. It's very significant.
I was actually coming to that, the cost efficiency part of it, and as you said, there is now a target to take it from 5 to 16, and we're talking 2030 right now. What more will need to be done in that direction?
I think one important part is that we have to see that in the entire value chain of gas, the cost at each value chain has to be optimized. Today, there are persons who are importing natural LNG. There are trunk pipeline operator, there are LNG terminal operator, and then there is a distribution company like us. Each chain, everybody has to look at how do we optimize the gas cost and how do we increase the volume. Rather than earning or trying to recover the infrastructure cost from a limited pool of gas, which is 6% today, if we try to increase the gas share and the gas reaches to 15%, pool becomes bigger, the infrastructure recovery happens much faster, and overall gas cost has to come down. And if the overall gas cost comes down, end consumer will willingly going to take and start using the gas, then the regulation which force them to use the gas. So I think this is something which is very, very important for gas sector to grow, apart from more infrastructure development, which we are doing.
Yes. You've also had a tie-up happen with AG and Pratham. What does that bring to the table for you and for overall system as a whole?
So we were earlier operating under two brand names. One was Think Gas, which was primarily operating in the northern part of India. Another one was AG&P Pratham, which was primarily operating in the southern part of India. So while the shareholders merger has already happened in last year, now we wanted to merge both the brand also. Okay. So every employee, every stakeholder, every customer see it in one brand, one umbrella, and we work in tandem to look at that. This is our ultimate goal is. So we have merged the brand today. So there is one brand which has Think Gas, but we have taken color from AG&P Pratham.
Okay. As we move ahead from here, and there's a lot happening in the international markets as well, in sense of cues now for the energy markets. You've spoken about India, yes, but what is it that you see as impact coming in from the global cues?
I think it's important that while we see very clearly there is a maybe 6 month, 1 year delay, but we clearly see that a lot of LNG will be available going forward. And India has to be ready when LNG is available at an affordable price going forward. We have seen earlier also when the LNG price dropped to $3.50, but we were not ready with respect to infrastructure to use $3.50 gas. And we still remain with the same kind of import which was happening when even the LNG was $16, $17. So I think it is important now that everybody focus and develop the infrastructure to reach to last mile. While government has done its bit and the regulator has awarded all these areas already to city gas distribution companies, time has come that we develop infrastructure at a faster pace and we take advantage of this situation, and the window is very short. So we have to work together. But we clearly see as such, and it's more or less consensus that gas prices are going to remain in affordable territory going forward.
Okay, on that note, we're going to step into a very short break. Viewers, don't go anywhere. After the break, we'll put the spotlight on persistent systems and find out why it's buzzing in trade.
जब दिल्ली में जगह जगह पावर कट होते हैं, जब उत्तम नगर, नवादा, संत नगर, बुराड़ी, त्रिलोकपुरी, संगम विहार, देवली में 3-3 घंटे, 4-4 घंटे बिजली जा रही है, तब भारतीय जनता पार्टी वाले कहते हैं नहीं नहीं नहीं, अभी तो आतिशी सीएम है, अभी तो केयरटेकर सीएम आतिशी है, वो जिम्मेदार है दिल्ली की बिजली व्यवस्था के लिए। जब यमुना में कोई मशीन उतरती है तो कहते हैं नहीं नहीं नहीं, बीजेपी चला रही है सरकार, एलजी साहब चला रहे हैं सरकार।
खुद अरविंद केजरीवाल ने चुनाव से पहले ये कहा कि हरियाणा गवर्नमेंट ने जहर मिला दिया है पानी में। इससे दिल्ली के लोग और नाराज हुए और दिल्ली में अरविंद केजरीवाल के खिलाफ जमकर वोट किया। अब हम लोगों पर जिम्मेदारी है कि जमुना साफ हो पूरी तरह। तो सरकार तो बनेगी, 20 तारीख तक सरकार बन जाएगी, लेकिन उससे पहले ही लेफ्टिनेंट गवर्नर साहब ने जमुना की सफाई का काम शुरू कर दिया है।
Welcome back and thanks for staying tuned into Trading Hour on CNBC-TV18. We have seen that fall coming in the market, 22,800 around. That is what the Nifty is managing to hold on to, recovering from the day's lowest point. But yes, just a very slight bit of a recovery. As of now, Nifty is down 100 points in today's trading session, 0.4% of decline. Mid and small cap continue to see a sharp fall as well, underperforming the benchmark indices. Individual names that we should look out for today, we have top losers. PTC Industry because of its numbers. Amber Enterprises, that's down and out in trade, down almost 7%. Campus Activewear as well as Garden Reach among the top losers coming in the Nifty 500. Some bit of a momentum and move that we're seeing coming in up move for Gillette India. It's up 10% in trade. And Godfrey Phillips, that continues to see a positive up move in the last few trading sessions as well. So yes, surely keeping an eye out on that. But let's just focus and talk about Persistent System because that's another stock that's been buzzing in trade today, and that is because we're seeing a positive note that's coming from JP Morgan. Now JP Morgan is bullish on Persistent System, and this is despite the higher valuation that Persistent is trading at. Persistent System stock has moved up 27% in the last 1 year, while Nifty IT is down almost 4 to 5% in the last 1 year. So, you know, that outperformance came in from Persistent System. But despite that, JP Morgan is highlighting and giving a target of 7,200 rupees per share. Currently, Persistent is at 5,662. So, significant upside that we are seeing for from JP Morgan that they're expecting for Persistent System. They expect this to be among the good movers, fastest growing company in their coverage. They're expecting a revenue growth of around 21% in the next couple of years. They're seeing a potential in terms of margin expansion coming in for Persistent System, making it a credible growth compounder candidate for the company going forward, and especially how the management has been navigating through tough macro environment. So they're quite positive on this one, and they see that the 13% drop that we saw in the last 3 to 4 weeks for Persistent would actually become a good opportunity to buy the stock, especially a high quality stock is what they're looking at in terms of the IT space.
That's right, Vinny. In fact, today, if you look at market, it's actually the mid-cap IT pack that's actually helped market stay afloat to a certain level, and Persistent System amongst the top gainers as far as the mid-cap IT space is concerned. Thank you so much for highlighting that particular note. With that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime report is up next.
More incomes in the higher bands have also been brought into the lower bands so that they'll benefit from a lower tax rate. So if you would only look at the rate charts that we've come up with, where the income bands and the rate applicable to them are also rehashed in favor of every taxpayer. So if you're talking of the new regime, the new higher incomes are coming into lower band. The rates for all of them have also been brought down. So on the question of your FIIs and the retail investors, it is true, and I thought you were implying it in your question itself, that FIIs also go out when they're able to, in a position to book profits. Indian market today, Indian economy today, has an environment in which investments are also yielding good returns and profit booking is also happening. And I'm sure you would have seized that fact also.
But the merger between JioCinema and Disney Hotstar is done, and there's a brand new app. Now, the most obvious benefit will be that users don't have to choose between these two apps or toggle between the two different apps to get to the content they want. The new Jio Hotstar app will have it all, over 3 lakh hours of content across 19 languages. So potentially, we will now have India's largest OTT player, with the company saying that it will have a user base of over 50 crore. Now, these 50 crore people are not necessarily all paid users, but that just means that there's potential to convert them. So what happens to your existing apps? Now, JioCinema will now redirect you to download the new app or prompt you to open the Hotstar app if you already have it on your phone. Now, the Hotstar app should automatically have been updated to Jio Hotstar or will prompt you to install the latest update. Now, your existing premium plans will continue on Jio Hotstar for the remaining duration of the plans, and once those plans expire, you will have to subscribe to the new plans. Now, these new plans start from 149 rupees for 3 months for a mobile plan, and it goes up to about 1499 rupees or 1500 rupees for a premium ad-free plan that allows you to access 4 devices. And what does Jio Hotstar now entail in its new avatar? Well, everything that both apps used to individually offer is now under one umbrella. Now, Jio Hotstar will also aggregate the libraries of NBC Universal Peacock, Warner Bros, Discovery, HBO and Paramount as well. Now, it also plans to double the South Indian content to about 1100 hours, taking on what has been the USP of platforms like Prime Video or ZEE5. But the biggest draw for Jio Hotstar will be
Midcaps come under pressure as stocks edge lower amid continued uncertainty over Trump's tariff moves. Telecom, industrials and consumer durables are the big drags today.
Bharti Group Arm sells close to 0.8% stake in Bharti Airtel for nearly 8,500 crore rupees via block deals. Marquee investors pick up stake along with Bharti Singtel's JV, Bharti Telecom.
ABB beats estimates on all counts with revenues growing strongly across segments, barring process automation. Margins too expand on the back of a better pricing, cost optimization and higher services income.
BHP Chief Commercial Officer sees demand for copper in India growing at 5 times in the next 25 years and steel output rising from around 140 million tons to around 300 to 400 million tons in the coming years.
You're watching us here on Halftime Report. I'm Bangla Malu. With me, Nigel D'Souza. The halftime does not look particularly good for the bulls. As we speak, at the top of your screens, you can see the Nifty below that 22,850 mark, the Sensex below that 76,000 mark that it conquered yesterday. The bigger drags are actually the mid-caps. The broader markets tell you that portfolios are in pain. Over 1,700 stocks in the red for just under 500 in the green. So not looking particularly good. The street would want some sort of support come by for the markets from here on itself. Those lines tell you the story of the day. Hi, Nigel.
Hi, Mangla. Mira, just one thing. The PCR is moving back down to around that 0.75 odd. So that is one hope. The other factor is that the FIs are net short as well. And the bulls are counting on this 22,700, 22,750 odd level that's holding out. So numerous times during the day, we are going back down towards the 22,800 marks. But that's being met with some kind of buying. So that's, the hope that, in fact, we do defend lower levels. and also the breadth of the market that Mangalam just spoke about. At the start of trade, we had 1,000 stocks that were advancing. That number's come down to around 400 stocks. So you'll want that number to get a little bit better, and you'll want both those two lines to come a little closer to each other. So we'll keep an eye out on that as well. But plenty of stocks are moving around. So let's get to a couple of them. One is Zen Technologies. Yesterday, it was down close to around 20%. Today as well, it is down close to around 10%. We had the management who joined us earlier today. Upasana joins us to help us out with a quick analysis on that. Upasana?
Well, the stock is down about 30% in the last 2 days after company reported its Q3 FY25 numbers. Now, company's growth lowered this quarter as compared to the past quarters, and it also missed the street estimates. Now, we spoke to the management earlier this morning, and here are some of the important highlights given by the management. Well, company says that it has no plans to buy shares from the open market, and it sticks to its FY25 guidance of 900 crore revenue and EBITDA margin of 35% for FY25. It has also guided that the top line will be growing at a 50% CAGR for the next 3 years, and margins, which were the key concern, management has clarified that the margins saw a dip of nearly about 1,400 bips in Q3. This was mainly because of the product mix of the company. It has also emphasized that 800 crore order will be finalized by Q1 FY26. Please listen in.
Diluted, the dilution has been mostly done because of the QIP that we did. We did sell, we did sell 4% of our stake, on 2 occasions. But the dilution has mostly been because we raised the money for acquisitions and working capital needs. I don't think we will be entering the market to buy it. Because the intention was not to trade sell high and buy low. The intention was we wanted to have some money on the table. With respect to by 27, I think it should at least double. The revenue should at least double for ARI. That's our expectation. And margin, I think it should get to the margin of 35 EBITDA and 25 net. Even though now it's around 13-14%, we expect that to ramp up, especially when we go with our value addition. Diluted, the dilution has been mostly done because of the QIP that we did. We did sell, we did sell 4% of our stake, on 2 occasions. But the dilution has mostly been because we raised the money for acquisitions and working capital needs. I don't think we will be entering the market to buy it. Because the intention was not to trade sell high and buy low. The intention was we wanted to have some money on the table. With respect to by 27, I think it should at least double. The revenue should at least double for ARI. That's our expectation. And margin, I think it should get to the margin of 35 EBITDA and 25 net. Even though now it's around 13-14%, we expect that to ramp up, especially when we go with our value addition.
All right, that was our Insight Edge segment. The street not particularly happy with the fact that the promoters have said that despite a big correction in the stock of Zentech, they won't be going ahead and buying from the open market. Though there is a smidge of a recovery that we've seen from 10% lower circuit. The stock has now recovered a bit and currently sitting with a cut of almost 6%. But from the peak, it has seen a near 70-75% correction itself. Speaking about corrections, look at M&M. It is a very volatile stock, and now at the low point of trade. Yesterday, it gave us an update onto their e-SUV business. Over 30,000 registrations made for their BE XUV. The stock opened mildly in the green today, and that has been sold into currently at the low point of trade after a 4.5% recovery, 4.5% cut rather in yesterday's trading session too. In the first half of trade, we had some support coming in from the IT pack. Now look at TCS. TCS has moved to the low point of trade, and you pull up that with the IT index itself, and that tells you that that recovery in the IT pack has been sold into as well. The IT index, while mildly in the green, is significantly off highs at the lower end of today's trading range. But one stock which is on our radar is MGL, reacting to a news update coming in from BMC this morning. Sudarshan.
So MGL has made a sharp recovery from intraday low, now up around, the stock is up around 1.5%, but from lows, if you see, it's up around 3%. And it's after the news came out that BMC, that is Mumbai Municipal Corporation, has issued direction to roadside vendors, eateries, dhabas to shift to eco-friendly or say clean fuel, and the deadline is given of July 8. And it's come on the back of the recent Bombay High Court order, which had instructed BMC to ensure that these vendors shift to clean fuel very soon. And now BMC has come out with the directions. What does BMC says? It says officials are assigned to ensure transition to cleaner fuel alternatives. Else, licenses will be marked as not to renew until this transition is completed, and no new licenses will be issued to establishments using conventional fuels after July 8. And the news is positive for MGL, considering it's the biggest player for both CNG and PNG as far as Mumbai is concerned, and that's the reason you are seeing the stock is off lows.
Okay, all right. Thanks a lot for that, Sudarshan. Well, time to slip into a short break. On the other side, we'll get chatting with Sachidanand Udekar of Trade Pulse. Stay with us.
The new entity holds rights to all the sporting events that Jio and Disney Plus Hotstar held individually. So that's IPL, ICC events, English Premier League and Wimbledon are all covered. Now the company has also plans to widen its offerings to bring more sporting events under its umbrella. Does this now mean that then you'll have to pay for IPL? Maybe not, because the company says that some content will be available for free every day. But whether this includes IPL or not, that we don't know yet. Now, what will be interesting to see is what this means for the OTT landscape in India. With nearly 36 million paid users, Hotstar was already the market leader here. And it was followed by Prime Video, Netflix and then Apple TV+. Now, the merged app will actually have about 52 million paid subscribers to start with. And this could shoot up once the IPL starts in a month's time.
We are actually using AI to tackle AI. It has to be like that. We've actually used a lot of AI for a very long time now. We always had models where we could detect that this number is likely to be a spammer, or this message sender is likely to be a spammer. Those were some of the basics that we did a long time ago. We're now looking at AI almost across the business, not only protecting consumers and improving consumers' communication, but also from a business point of view, from our biggest revenue stream is advertising. How can we help brands leverage AI on our platform and get better bang for their buck? We've invested very heavily on various parts of our business, even operationally. We're using AI on customer support, for example. Even our legal team is looking at AI products. Our developers looking at AI products. So AI is very deep into our business now, and pretty significant investments are being made into AI.
Let's double down on India and your focus here on India. How do you see this market evolving? How do you see this market growing for you? What are the opportunities that you want to build on, considering the fact that the lion's share of your revenue comes from the market? I mean, do you believe you've hit saturation here in India?
So India, firstly, is our most exciting market. I think globally, for a lot of companies globally, India is the most exciting market, right? It is for us as well. Our biggest investments in the last, I would say, 6 or 7 years have been in India. We actually have more engineers in India than we have in our head office in Stockholm now. We build in India and we ship globally. A very large chunk of our product is shipped globally out of India as well. India continues to grow very, very rapidly. The entire stack that is available to an Indian citizen now to conduct business digitally has made the mobile phone number even more important.
Welcome back. Perfect time to look at the F&O setup of the day. The Nifty now down 100 points. The Nifty Bank also low by about 0.5%. So the indices, they continue to fall. Midcap index is actually the one which has taken the biggest knock, down about 1.2%. What's interesting is that we've been talking about the market recovering from lower levels, but over the last few trading sessions, the highs have also been sold into. So if you look at Feb 13 high of 23,235, thereafter the next day 23,133. Yesterday's high was 22,974. Today's high just a little above that. From there, we've seen a big drop as well. So those are a couple of things we'll keep an eye out on. The pain in your portfolio visible on this chart out here as well. More stocks declining, way more stocks declining than the number of stocks which are advancing. A lot of short positions being added in a couple of names. ABB India, the results were an all-round beat, but thereafter, the stocks, after holding in the green, maybe some commentary coming in from the management in the conference call or, in the interview, we have seen that stock lower from those highs, seeing some fresh short positions being added. MCX and ACC are the others which stand out. Because the Nifty has been making slightly lower highs as well, the 22,900 call writers have come back into fray. So we have 110 rupees in terms of premium for 22,900, telling you closer to 23,000 supply continues to be there. Whereas the put writers at 22,800 may be unwinding their positions, and there's some punt buying at the 22,500 put. Well, it may not be the case that the market goes to 22,500 if it sees support around that 22,700 odd mark itself. But were it to break, there are punt positions being bought at 22,500 for 24 rupees a pop itself. A couple of stocks on my radar from an F&O standpoint. Hindustan Copper, it's midday itself. The open interest threshold has moved towards 92% as against the MWPL. Typically, when the stock crosses that 95% mark, enters F&O band. So keep an eye out on Hindustan Copper. The other one is Deepak Nitrite. Has been an F&O band for a couple of trading sessions. Maybe the stock exits F&O band today. So that's something that we will most definitely keep an eye out on. With that, yes.
All right, Mangalam, thanks for that. Well, let's get straight to Sachidanand Utekar, the AVP Technical Equity Trade Bulls, who joins us on the show. Sachi, how are you feeling? What do you think? This bottom's going to hold, or are we going to break it?
Good afternoon, Nigel. Good afternoon, Mangalam. I think clearly, the verdict is on the bearish side. If you look at the last 10 trading sessions, despite of the intraday moves, Nifty is not able to sustain or, display a closing above its 5-day exponential moving average. Even if you look at the, data here, I think 22,800 looks very fragile. We are of the opinion that probably we may see the Nifty breaking this particular support and sliding further towards 22,500. So we have recommended, short positions to our clients. I think the only relief would be seen in case the Nifty starts trending above that 20,040 mark. We need a decisive close above this particular level to really, kickstart that short covering move. But if you look at last 10 trading sessions, both the Nifty and the Nifty Bank are trending comfortably below their 5-day exponential moving average. So I think the short-term trend is clearly negative. And we may see that 22,800 support would be breached during this particular series itself.
Got it. All right. So 23,040, right, on the upside. That's the important mark.
Yes, Nigel. I think that is a decisive level wherein some short covering relief may unfold. But as of now, I think the data is supporting that near to that particular level, it is better to create fresh short positions.
Got it. All right. Give us some stocks as well. Trading ideas.
M&M has started declining, and if you look at the breakdown, it has been decisive at 2,900, and since then the move has been amplifying on the lower side. Even right now, it looks like the stock is headed towards its 50-week exponential moving average support, which is placed somewhere close to around 2,700. But if you look at the overall pattern on the weekly scale, it looks like a broadening structure with a base placed somewhere close to around 2,630. So I think there is a good amount of room on the lower side. Hence, we are recommending building fresh short positions in M&M. The stop loss for the trade can be placed at 28.25 on a closing basis, an immediate move towards 2,700, followed by a move towards 2,630. And on the long side, Berger Paint has been displaying a good relative strength since the beginning of the series. 480 has been a very strong support. If you look at last 4 weeks of consolidation, this consolidation now looks mature for a breakout. So we may see a bullish move towards the end of this particular expiry. We are expecting a swing towards 510, 515, where its 200-day exponential moving average is placed, and hence we are recommending building long positions in Berger Paints. One can keep a stop loss at around 480 on a closing basis.
All right, Berger Paints this time around, the volume growth was also a lot better than everyone else in the industry, at least the listed space. Just one question, Sachi, before we let you go, on Kalyan Jewellers. The stock had seen, seemed to arrest its decline after its third quarter results, where we saw a big move on the way up after a sharp fall. But now as we speak, the sell-off has begun once again. The stock is once again below that 500 mark, closer to that 480 rupees mark on Kalyan Jewellers. Has seen a big cut from the highs. It's down about 5% and very close to its lows as well, the earlier lows that it hit.
Well, I think the major trend is still weak. We don't see any relief rally here. Probably the one which we had seen so far from 450 to 500, 550, that particular rally is also arrested. The stock is now comfortably trending below its 200-day exponential moving average plus its 20-day exponential moving average. So I think the overall major trend still remains weak. We may see the stock again sliding towards that 400 mark. So it's better to use these rallies to exit long positions. There's a good chance that the stock may continue to slide further towards 400.
All right, it'll be very interesting to see where it goes. If it stays below this mark for a very long time, maybe the promoters will have to offer some of their more shares for pledge as well. Sachi, thank you for joining in. And as we slip into a short break, let's get you some good news coming for our viewers here. You have the CNBC-TV18 app, the India Business News Leader app is now just a click away on both Android as well as iOS, where you get instant access to breaking news, in-depth articles, and financial world updates, all of that at your fingertips. What you can do is download the app now from the App Store or Google Play Store. Or if you can't do that, then just hold on for a bit. You will get the QR code right up for you on the screen. Once you get that, just put on your phone cameras, scan that for a bit, and you will be redirected to a link that takes you to the CNBC-TV18 app. All the business world updates at your fingertips.
And that's where we believe our relevance continues to grow in India. We haven't reached saturation at all. We are fortunate to have a large user base in India. I think we crossed 350 million users in India, but we still have a huge space.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Well, let's focus on the life insurance space. And life insurers have seen good growth in embedded value over the past few years. But despite a rise in market capitalization, the sector has seen a de-rating in valuations over the past few years. Yash joins us to help us out with a quick analysis on that. Yash, take it away.
Well, Nigel, through these few numbers from the last about 4.5 years tied up, what we've tried to demonstrate is how the embedded value for life insurance companies have grown. What has been the kind of growth when it comes to the market capitalization and how a function of these two, that is price to embedded value, reacted to that growth in embedded value as well as market capitalization. Let's start with embedded value itself. The embedded value for life insurance industry has grown between 8 to 23% over the last 4.5 years. This is of course compounded in that period. And as far as that period itself is concerned, FY20 to FY25, HDFC Life was the company which saw the strongest growth in its embedded value, growing at a CAGR of about 23%, followed by Max Financial at 21%, followed by ICICI Prudential Life and SBI Life at 16.6 and 16%. LIC being the slowest in terms of embedded value growth at about 8.4%. On the other hand, when compounded over the last 1.5 years, the market cap growth has been strongest for LIC. That has grown at about 53%, as I said, compounded over the last 1.5 years. Now, when you look at the last 4.5 years, Max Financial's market cap, that grew at a CAGR of 36%, followed by SBI Life at 27%, then ICICI Prudential Life at about 19% and HDFC Life at 13%. Now, we spoke about the embedded value, we spoke about the market cap growth. A function of these two is how life insurance companies get really valued, that is through price to embedded value. Now, here's the big question. With the strong growth in the embedded value for life insurance companies, have the multiples responded in a similar fashion? The answer is an emphatic no. Look at how the price to embedded value multiple has moved between FY21 to FY26, which are estimated figures. The biggest derating has come for HDFC Life from about 4.8 times in FY21 to about 2.1 times for FY26 estimates. This despite HDFC Life witnessing the strongest growth in its embedded value. The embedded value for all listed life insurance companies have gotten derated. If valuations are supportive, then what is really coming in the way of the multiples which these life insurance companies are getting? Analysts point out that the biggest reason has been the fear of regulatory intervention, either from the government or the regulator. We saw that coming in the form of taxation. We saw that coming in the form of surrender value regulations as well. The second reason has been how the product mix for these various life insurance companies has turned very ULIP heavy, which has led to a significant deterioration when it comes to the margins. Finally, the problem has also been the Indian insurance market, which is not growing. The penetration, the density for a long time has remained stagnant, and out of that market also, unlisted players are taking a lot of market share away, which is again posing a risk for these listed life insurance companies.
Take that point, Yash. Thank you. Well explained. With that, we'll step into a short break. On the other side, we'll connect with Ankit Haku, who's the director at CRISIL Ratings, to focus on India's solar cell sector. Stay tuned.
If you look at markets, whatever concerns of, valuations were there were more in the, the larger market, like small cap, mid cap indices had these challenges of valuations. I think on a large index, Nifty, reasonably, comfort on valuation front, plus all those factors you mentioned, economy on a better track, especially, the December GST collection was pretty good at, double-digit collection growth we saw for quite some time. So yeah, macroeconomy angle, things looks okay. The government policies in place, RBI policy also has changed the, the dynamics in terms of giving a lower rate environment we've started. So that way looks good. Clearly today, financials looks interesting category from a valuation front. We are possibly at a bottom in terms of, what we've seen historically on financials. Earning growth is on track. Even last quarter or so, financials continue to report a nice earning growth. In fact, if you look at quarterly, financials are almost 40% of NSE 500 profits. So it's a large, profit surprise or profit growth coming from that segment. Financials are interesting. Yeah, consumers can be a nice sweet spot for, lot of volume growth, stroke profitability growth, because post budget, that large number of 80,000 crores to 1 lakh crores range for tax saving by individuals, which can flow into consumption related activities.
Welcome back. Well, let's focus on India's solar cells sector. We have CRISIL in recent reports said that the solar cell capacity is expected to go up by 5 times to around 50 gigawatt by FY27. The capacity is aided by government's policy thrust to reduce imports of cells as well as modules. To help us out with a quick analysis on that, we have Mr. Ankit Haku, the director at CRISIL Ratings, who joins us on the show. Hi, Ankit. Good day and thanks a lot for joining in. Well, we're going through your report. First, let's get a couple of details out of the way. India is on its way to around 500 gigawatt of renewable energy. And as of now, going by the renewable capacity as of now, solar is roughly around 30%. So by 2030, do you see that, solar should be approximately 160, 170 gigawatt or thereabouts? Should that be the fair estimate?
Yeah, that should be a fair estimate, Nigel. Considering that 500 gigawatt is an overall number, but pure solar and wind would be actually lower. There are other forms of clean energy which also constitute a part of this 500 gigawatt.
So solar should be approximately 30% of that mix, right?
Yeah, roughly that, Nigel.
Okay, all right. Now let's focus on a couple of aspects. To get solar plants, you require modules as well as cells. Could you give us an updated number? Currently, what is the total module requirement? What is the cell requirement? And how much of both these two are made domestically and how much is imported? Please go ahead.
Yeah, sure. See, if we take that nearly 19 gigawatt of renewable capacity was executed in fiscal 24, and you may say that nearly 17 odd gigawatt of that 19 gigawatt was solar. So that 17 gigawatt is what is the overall module demand. And earlier, the modules were largely sourced from China, and a limited proportion was actually manufactured domestically. But that proportion has now grown, and nearly, if whatever research says, is that nearly 60-70% of the overall demand of modules can be actually manufactured here in the country. Similarly, if 18 odd gigawatt is the overall module demand, that is also the cell demand per se. But at the moment, the indigenous capacity of the cells is quite low, and a lot of it is actually imported from China. I think that is where the endeavor is, to ramp up the cell capacity, so that just like modules, we are also able to manufacture cell within the country. Right now,
how much of solar modules and cells are imported right now? How much of it is served domestically in terms of percentage?
So almost, if I have to say, almost all of it would be imported from China at the moment, because there is hardly any cell capacity. You will find some cell capacity which is there, but you may say that nearly 10% of the overall cell requirement would be there within the country, and a lot of it is actually coming from outside. It is actually assembled into modules, and then modules are being sold within the country.
Okay, all right. You know, we have a few players from the listed point of view, but that aside, some of them are talking about having module capacity, and now they're getting backward integration. That is, they're putting up cell capacity as well. A couple of names, Premier, Vare as well, they have been talking about that. But we wanted to understand from you, what could the potential savings be? If you're backward integrated, then what is the cost? How much do you save on the cost aspect?
So I'll talk about the manufacturers here, because for the developers it's slightly a different story. But for manufacturers, if you're just assembling if you're just assembling cells into modules, you are manufacturing cells from wafers and converting into modules, there is a differential of 5% on a margin that we see, including the conversion costs which are there.
Who are the companies? Right. Who are the companies that are backward integrating right now?
I think your major module manufacturers, all of those guys have shown interest as a part of the PLI scheme to integrate into cells as well. So your players like players like Wari, Premier, Adani, even Reliance, all of those guys, they have actually shown interest to integrate vertically backwards.
And that would improve their margins by about 500 basis points immediately, as your research says.
So it is, yeah, so that indeed is true, but it not only is the question of the margins. You know, when you are actually growing quite fast, and in the coming years, if you have to reach the target which the government has in mind, which means that on an annual basis, the capacity additions of solar, which you saw in fiscal 24, say 19-18 gigawatt, that should ramp up to over 25, close to 30 gigawatt, and even further going years ahead. You want security on your supply chain as well. So you cannot, when you're talking about scale, when you're talking about such numbers, you want to be assured of the quality. You want to be assured of the supply. And I think that is also one of the motives for people to actually integrate backwards.
Okay, all right. We have that ALCM and ALMM that are currently protectionist measures for the industry.
When does this expire? When does it come in for renewal? And what is the next trigger? I believe sometime in this year itself, there is one of them who comes up for renewal. Could you explain that to us?
So, in terms of the implementation is what I can talk about. Renewal, when they expire, is something that I'll have to get back on.
Okay.
But ALMM was implemented in the previous fiscal. In fact, it was in the works for quite some time, and the deadline was extended, but it got implemented somewhere, I think, the 1st of April of the previous fiscal. ALCM is expected to come in the April of this calendar year. And yes, these are measures which will support the manufacturers, but it actually somewhere is also required if you are to compete with imports.
And the ALCM that you're talking about, that has to come into play this year. Do you see it getting implemented, or do you believe that there'll be a delay? And if it gets implemented, what could be the the benefit for the domestic guys?
Yeah. Whether it can, I'll take your first question first. Whether the deadline can get extended, it can only be actually, it'll have to be monitored and seen whether the deadlines are indeed extended. But the second question, what are the benefits of ALCM to the manufacturers? If you take cell from, if you are just importing cell and then converting it into modules, vis-a-vis you are importing wafers, converting into cells and then to modules. Of course, there is an EBITDA benefit to the manufacturers. However, there is the cells that you will manufacture domestically will actually come out to be much costlier than what the imports are as of right now. So there is a differential for the players. So the point is that the manufacturers will be selling these cells at a much higher cost than what the developers can get if they import it. However, alluding to my earlier argument that if the scale is going so much and you have to protect your supply chain, you need certain protective measures for the manufacturers also. And that is where these protective measures will help these cell manufacturers in the near time when the economies of scale are yet to develop. Once the economies of scale develop, then we see that the conversion costs of cell manufacturing will also go down and will slowly they will start to become competitive. But at this point in time, they will require these protection measures just because the cell prices domestically would be very different from what you get from imports.
Quickly, before we let you go, what is the current differential in prices from the imported products and the ones that are manufactured domestically?
So our understanding from the various players, the manufacturers, is that if you import cells and you manufacture it domestically, the domestically manufactured cell would somewhere be 80 to 90% costlier than the imported cells landed cost.
80 to 90%. All right, we take that point. There is an opportunity, but there is also, an expensive cost. So we'll keep an eye out on any regulatory action that takes place out there as well. Thank you so much for joining in and giving us a lowdown on this sector. We take a short break, come back, focus on the market, stock-specific action on the other side.
Very good. One of those massive words, though.
Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge, so it's our 4th biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million right now. So
breaking news.
the last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
We've now matured our ML and our AI teams to adapt to this new technology, and we've pivoted every product team inside Canva now to think AI first.
Some kind of recovery is what you're seeing from the low point of the day, because the select stocks, they have seen some buying interest. Grasim has cut its losses into half. It's still down, but it's recovered from the day's low. Shriram Finance is another one that's seen some kind of recovery from the low point of the day. And I think L&T, the one that was down more than 0.5% an hour or so ago, that one is on the verge of moving into the green. And that's a rather large weight that we're seeing out there. In terms of a sector that's doing a relative outperformance today, tech is the name yet again. So the tech index should come up for you. You have stocks like Wipro, Infosys, they're perked up a little bit. But tech's up close to around 0.5% while the markets are struggling. I'll tell you what, we'll slip into a short break, come back, continue to focus on markets and stock-specific action. Welcome back. Well, let's take a break from the equity markets. Talk about the commodity corner then. My colleague Manisha Gupta spoke to Ragnar Ud, the Chief Commercial Officer of BHP, to discuss the global trade picture and their business outlook amidst the tariff concerns. She began by asking about the company's first half performance and where is it headed from here on. Let's listen in.
I think what you've seen through our first half year results that we've just posted is actually a company in excellent position. We are positioned well in terms of the current environment, despite the fact that we've actually seen declines in iron ore and met coal prices decreasing by about 20%. Nonetheless, you're seeing a very healthy profit result being posted and distributions to our shareholders that fall within our dividend policy, and also a fantastic growth portfolio in front of us, reflecting our strong operational performance and capital discipline as an organization.
Rag, how would you look at the tariffs that are being thrown around, splashed around all over the world? Started from US, and then we've seen some retaliation coming from China. There's a conversation with Europe as well. What is your sense? How long could this go on? Do you see some of these being pulled back, as we've seen in most cases?
We're really taking a wait-and-see approach on this at this point. So obviously there's a lot of rhetoric and positioning that's taking place on this. Nonetheless, for ourselves as an organization, we think we're well positioned in terms of what the world's needs are going to be and also the commodities that are actually going to drive that. And for our perspective, we'll wait and see where it goes to. But overall, we think we're very well positioned as an organization.
The other important thing in the global markets to look at really is the currency volatility. And how are you reading into that? Is that impacting trade in some sense as well, or is expected to impact?
Look, volatility is part of any business that you're a part of. And I think for ourselves as an organization, we feel we're well placed for what the world needs moving forward. So if I take a look at the geographies that we operate in, the commodities that we operate in, these are all multi-use commodities that can be used in a number of different facets, depending on where the world pivots to or shifts to. Copper is a great example. We see population growth occurring that will continue to drive the need for more copper. But in addition to that, we also see growth in copper coming forward in terms of AI and data centers and increasing expectations on that, and decarbonization continuing to be a focus that will need more copper as well. Now, we recognize that there will be ebbs and flows in any one of those demand signals over time, but that's part of being a company like ourselves that actually has a really solid strategy focused on those commodities.
Like, how are you looking at various geographies, as you spoke about, especially Asia and specifically India? How does that look in your whole scheme of things?
Really exciting prospects in Asia and India more specifically. What an exciting country. If I take a look at what's taking place in India, already the world's largest country with global GDP growth of over 6%, with a budget that's actually, I would actually characterize it not so much as a budget, but more a vision in terms of where India is going to. And when we think about the commodities we produce, whether that's in iron ore, where we see steel production in India potentially increasing from 140 million tons to a clear path to 300 million tons and maybe 400 million tons. This is something that we're well equipped to actually provide the raw commodities needed for that steel growth. We see copper growth in India growing 5-fold over the next 25 years as demand for more traditional uses, data centers, and decarbonization comes forward. And even in potash, we know that the world is actually going to need more fertilizers to bring more food to the world. And this is something that we're specializing at and have some of the best deposits in the world to actually meet those needs.
If you look at 2024, Rag, it wasn't such a great year for metals. We did see highs, but we didn't close the same way. 2025 has begun on a stronger note as well, but the concerns about Chinese demand just about continue. Most people now tend to say that China will perhaps never ever go back to the kind of growth rate or numbers that we saw. But with the stimulus measures, expectations, tariffs ongoing, what's your sense from Chinese markets coming now?
Look, we're probably have a more of a strong view in terms of where China's going to. And you're right, the GDP growth rates in China have decreased from the 8% we saw a decade ago. But still, 4 to 5% GDP growth on the scale and size of China at the moment, that is unbelievable growth moving forward. Now, for ourselves, when we look at China, we still see steel production sitting at over 1 billion tons a year. 6th year in a row that they actually delivered that in calendar year 24. We expect to see that in the next couple of years as well. In terms of copper, there's an insatiable demand for copper concentrates in China and growing demand for copper cathodes as well. So while, yes, there have been some down signals in terms of housing, we think we've actually hit the bottom on the housing market. And in addition to that, the Chinese economy has been so resilient in terms of pivoting their steel use from housing into manufacturing, decarbonization products, and a whole host of other areas to keep that country moving forward. I expect that we'll continue to see stimulus measures take place, but I think that'll be in response and in reaction to some of those tariffs that you actually mentioned, if they take place or not. But one way or the other, we think China's probably best positioned to actually weather tariffs.
I want to talk about specific commodities now, and I'll start with copper, where we are looking at COMEX and LME price gap now standing at a 10%. Tariff concerns yet again. But what is your sense on demand going forward globally, and what is the price range that you are putting for copper for this year?
So copper demand is, we're expecting a 70% increase in copper demand between now and 2050. And the reason being, as I mentioned, those three pillars, whether it's traditional growth, data centers and AI, and decarbonization, all of those actually are providing signals that copper will actually be quite an exciting commodity to be a part of in the foreseeable future. When I come back specifically to BHP, that's why you've seen a 24% increase in copper production over the last 3 years, which positions BHP as the world's largest copper producer. And in addition to that, the growth pipeline we've got in front of us in Chile, South Australia, Argentina, and potentially the United States as well, we think that actually sets us up very well for the future and is bang on strategy, rock solid performance in terms of our operations, and this sets us up well for the future.
And you as a company seem pretty excited about potash. You forayed into that in a big way, and food clearly is a big market right now. Where do you stand on that, and what are the plans therein?
We see potash as a tremendously important commodity for the world, and the reason being is that we know that fertilizers are going to be indispensable as the world's population continues to increase. We're forecasting that the world's population will increase from 8 billion to about 10 billion by 2050, and that's going to require basically high-quality fertilizers to actually bring forward the crops and nutrients necessary with less arable land than in the past. Now, when we look at our deposit in Saskatchewan, this is a Tier 1 basin that we've actually developed with a lot of our expertise. It's the first new underground potash mine in that region in 30 years, which is enabling us to bring forward cutting-edge and new technologies that others just won't be able to repeat based on the investments that are necessary up front. And we think this sets us up very well starting in 2026 when we get into production.
Rag, talk to us about overall commodities as a space as well, with so much happening in the background, whether it's about uncertainties with tariff, interest rates, currencies, geopolitics as well. How are you looking at overall commodities as a sector going forward, especially for this year?
Well, it's a really interesting point. And so as an organization, you've got to make decisions about what commodities you enter into and what you don't. And that's when you think about investments with BHP, you need to be thinking about what's the strategy and the long-term decisions that you've actually taken. And for ourselves as an organization, we've been very deliberate in actually maintaining our focus on bulk materials like iron ore and metallurgical coal, making sure those portfolios are right-sized for the future, but then actually segmenting our growth into copper and into potash, which we think have multi-use, multi-geographies, multi-customers, and we think that that will allow us to actually not only survive, but thrive in the environment that's in front of us in terms of this volatility and uncertainty.
जब दिल्ली में जगह जगह पावर कट होते हैं, जब उत्तम नगर, नवादा, संत नगर, बुराड़ी, त्रिलोकपुरी, संगम विहार, देवली में 3-3 घंटे, 4-4 घंटे बिजली जा रही है, तब भारतीय जनता पार्टी वाले कहते हैं नहीं नहीं नहीं, अभी तो आतिशी सीएम है, अभी तो केयरटेकर सीएम आतिशी है, वो जिम्मेदार है दिल्ली की बिजली व्यवस्था के लिए। जब यमुना में कोई मशीन उतरती है तो कहते हैं नहीं नहीं नहीं, बीजेपी चला रही है सरकार, एलजी साहब चला रहे हैं सरकार।
खुद अरविंद केजरीवाल ने चुनाव से पहले ये कहा कि हरियाणा गवर्नमेंट ने
जहर मिला दिया है पानी में। इससे दिल्ली के लोग और नाराज हुए और दिल्ली में अरविंद केजरीवाल के खिलाफ जमकर वोट किया। अब हम लोगों पर जिम्मेदारी है कि जमुना साफ हो पूरी तरह। तो सरकार तो बनेगी, 20 तारीख तक सरकार बन जाएगी, लेकिन उससे पहले ही लेफ्टिनेंट गवर्नर साहब ने जमुना की सफाई का काम शुरू कर दिया है।
More incomes in the higher bands have also been brought into the lower bands so that they'll benefit from a lower tax rate. So if you would only look at the rate charts that we've come up with, where the income bands and the rate applicable to them are also rehashed in favor of every taxpayer. So if you are talking of the new regime, the new higher incomes are coming into lower band, the rates for all of them have also been brought down. So on the question of your FIIs and the retail investors, it is true, and I thought you were implying it in your question itself, that FIIs also go out when they're able to, in a position to book profits. Indian market today, Indian economy today, has an environment in which investments are also yielding good returns and profit booking is also happening. And I'm sure you would have seized that fact also.
But the merger between JioCinema and Disney Hotstar is done, and there's a brand new app. Now, the most obvious benefit will be that users don't have to choose between these two apps or toggle between the two different apps to get to the
Midcaps come under pressure again as stocks edge lower amid continued uncertainty over Trump's tariff moves. Telecom, industrials and consumer durables are big drags. Bharti Group Arm sells 0.8% stake in Bharti Airtel for near 8,500 crore rupees via a block deal. Marquee investors pick up lots along with Bharti Singtel JV, Bharti Telecom. ABB beats estimates on all counts with revenue growing strongly across segments barring process automation. Margins too expand on back of better pricing, cost optimization and higher service income. BHP Chief Commercial Officer Ragnar Udd sees demand for copper in India growing 5 times in the next 25 years and steel output rising from 140 million tons to between 300 million to 400 million tons in the coming years. Hello, good afternoon and welcome to Business Lunch on CNBC-TV18, coming in live from CNBC-TV18 Motilal Oswal Studios. I'm Vinny Motiwala. Thank you so much for tuning in. A quick look at what the market is doing today. Not a pretty picture again coming in for the markets. Look at the Nifty, 22,860 levels around that of the day's lowest point, but not making a good comeback or a recovery. Let's wait out for the second half of the trading session because yesterday we did see that Nifty made that comeback and ended in the green. Is that going to be happening today? Something to watch out for. As of now, Nifty Nifty down 0.4% in trade. Nifty Bank, that's seeing a decline of around 0.5% in trade as well. 48,980 levels is what the Nifty Bank is holding on to. Mid and small cap, sharper fall on that front because Nifty Midcap is down more than 1%. Small cap also is down more than 1%, almost near the day's lowest point is what the broader market is trading at. One sector that is trading in the green today is Nifty IT. That's the only one which is managing to hold on to gains. So we have seen 4.5 to 5% of gains coming in for Nifty IT, but that has also come off the day's highest point. And mid-cap IT names are something that is supporting the growth this time. Nifty Metal is the top sectoral loser, and along with that we have Nifty Auto that is also seeing a top track coming in. So that's how we're seeing the market coming in. A bit of a red on the screen is what we're seeing. Not a sharp recovery, at least for the Nifty as of now. Keep an eye out on the second half of the trading session. But let's move on, and as the market remains volatile, let's go across to Nigel, who is standing by on the wall to talk to us and take us through what is the market outlook coming in from top voices of few brokerage houses. Over to you, Nigel.
Let's get you all the top voices that we have got. Let's start off with the most bullish. Rhythm Desai of Morgan Stanley says that Q3 earnings growth was up sequentially, which was better than the subdued expectations. He says that the market looks good for a near-term bottom, given the improving growth trajectory. Goes on to add that if global cues do not surprise negatively, India should resume its outperformance in comparison to emerging markets rather soon. They are overweight on L&T, Bajaj Finance, ICICI Bank, Mahindra & Mahindra, Trent, Titan, Maruti. Those are the overweight stance. On the underweight side, they're talking about Eicher Motors, RBL Bank, Wipro, as well as Concord. So that's about Rhythm. Moving to the Citi view, Surendra Goel of Citi says that the headline trends in Q3 missed expectations, with EBITDA growth at just around 7% on a year-on-year basis. But with the pickup in central government capex in the past few months, the budgetary support which will help consumption trends later on in the year, and also the start of the rate cuts, they expect growth to pick up from here on. They also go on to add that the impact of the reciprocal tariffs from the United States will be something to watch out for, and the kind of impact it can have on select sectors. They also say after a 12% decline from the peak, valuations on the Nifty at around 19 times 1 year forward is below the 5-year long-term averages. And the FIs, well, they're underweight on the benchmark, which is the highest we have seen in nearly around 15 years. They wind down by saying that India looks relatively well placed post this correction, and their December 2025 Nifty target is at around 26,000. Rajiv Batra of Morgan Stanley says that Q3 was another subdued quarter with regard to earnings growth, which was driven by the moderation in urban consumption, the tighter liquidity, a depreciating rupee, and also the rise that we saw in input cost. But they expect a nascent recovery in Q4 earnings owing to the sustained upswing in rural demand, a rise in government spending, and also the lower raw material costs. They add that despite the recent earnings downgrades, consensus earnings expectations for this calendar year as well as next, that's 2025 as well as 26, are still elevated. And also there could be further downgrades specifically in energy, materials, industrials, as well as in passenger vehicle players. They reiterate the overweight stance on financials, consumer staples, consumer discretionary, healthcare, as well as real estate. But let's wind this down with a technical call coming in from Lawrence Blanco of CLSA, and he's talking about the dollar index. He says that the dollar is threatening the 106 support, though in the past 3 months, the US dollar index has been capped at around that 109.8 to around 110.18, and it's found support in this vicinity of around 106 as well as 107. A break, though, below that 106, 107 support would suggest that December's breakout from that 2022 to 2024, that trading range was not a genuine one, leaving the dollar index ranging back to around the 99-100 odd handle to around that 106 to 107 trading range. Within the old range, well, he goes on to add that the 200 DMA offers the initial support on the dollar index at around that 104.8. So that's what all the top market voices are making of the Indian markets. Back to you guys.
Okay, Nigel, thank you so much for that. Now let's move on. The Aviation Festival Asia is underway in Singapore. Speaking to CNBC's Dan Brown, SpiceJet Chairman and MD Ajay Singh spoke about the Indian aviation sector and commented on how the company plans to use funds for fleet modernization and expansion. Listen in.
We've been in a very competitive environment for several years, and while there is a duopoly that has been created in the Indian market, I think the Indian market needs many more players. SpiceJet is certainly one of them. Despite what is happening in the space in terms of the competitive nature of the market, SpiceJet has actually been doing exceedingly well. If you look at the load factors for SpiceJet over the last several months, they have averaged above 92%, and our yields have gone up very significantly over the last few months as well.
Indeed, and you know, a lot of the analysts that we speak to, including executives at IATA, say India is indeed one of the fastest growing aviation markets, and certainly something that airlines and carriers are looking at. So when you assess the demand outlook moving forward, is there the financial resources right now at SpiceJet to continue that international expansion, or are you still in recovery mode? How much financial buffer do you actually have to continue to expanding those routes to tap into the demand that you're talking about?
So, SpiceJet raised $400 million in 2024 in a very short period of time. We still have in excess of $100 million after all the settlements that we did and the liabilities that we cleared out. So we think we are very well positioned, and now that we have cleaned up our balance sheet, we are looking to expand the fleet once again. So we think we are on a good wicket. In terms of the larger demand outlook, India all in all has just about 800 aircraft. All airlines put together, we have 800 aircraft for 1.4 billion people. That's less aircraft than most American carriers have in their fleet individually. So there's no question that there is a shortage of capacity, and with all the infrastructure that's being built, all the airports, India is building about 350 to 400 airports over the next 10 years, and the economy is growing at 7 or 8%, so we expect aviation to grow about twice of that, about 15-16% a year for the next decade or so.
How big are you thinking when it comes to this expansion? Are we talking wide bodies here? Are we talking about long haul? Are we maybe even talking about a merger in the mix as well? What's next?
Well, our first task is to get back to the 100 aircraft airline that we were. We shrunk from that to very, very few aircraft. We need to go back to that 100 aircraft mark. We hope to first repair all the aircraft that are on the ground, get them flying once again. That's about 30 aircraft in SpiceJet's fleet that are on the ground that we need to get back in the air. In addition to that, we need to restart deliveries from Boeing. So we are doing that, and in terms of wide body, certainly we are talking to both the manufacturers at this time. At some point, it is absolutely inevitable that all Indian carriers will use the hubs that are in India, Delhi, Bombay, Bangalore, Hyderabad, and fly Indian passengers directly into Europe and the United States, and SpiceJet will certainly be a part of that.
Okay. On that note, let's just slip into a very short break. More on news and update on the other side.
Very good.
One of those massive roads today.
Is an IPO the next logical step in this journey?
I think it is the next logical step. When we need to take that step? I don't know. We have been very cognizant about getting investors who are as excited about every part of our vision as we are.
You don't have managers in the company?
We have what we call coaches.
Yeah.
We take a very coaching mindset into people's growth at Canva. Part of our grander plan of the two-step plan, which is step one, build one of the most valuable companies in the world, which we're well on the way to doing. And step two, probably the more important step, is to do as much good as we can. We're up to 24 million subscribers now, so
Breaking
grows pretty rapidly.
Not just law, but a little bit of DJing in your previous avatar as well.
I've not given up on it. It's still a distant dream, and I inflict it on every Canva party that we have. I have to get up and DJ.
You're the DJ, is it?
I am, yes.
The new Jio Hotstar app will have it all, over 3 lakh hours of content across 19 languages. So potentially we will now have India's largest OTT player, with the company saying that it will have a user base of over 50 crore. Now, these 50 crore people are not necessarily all paid users, but that just means that there's potential to convert them. So what happens to your existing apps? Now, Jio Cinema will now redirect you to download the new app or prompt you to open the Hotstar app if you already have it on your phone. Now, the Hotstar app should automatically have been updated to Jio Hotstar or will prompt you to install the latest update. Now, your existing premium plans will continue on Jio Hotstar for the remaining duration of the plans, and once those plans expire, you will have to subscribe to the new plans. Now, these new plans start from 149 rupees for 3 months for a mobile plan, and it goes up to about 1499 rupees or 1500 rupees for a premium ad-free plan that allows you to access 4 devices. And what does Jio Hotstar now entail in its new avatar? Well, everything that both apps used to individually offer is now under one umbrella. Now, Jio Hotstar will also aggregate the libraries of NBC Universal Peacock, Warner Bros, Discovery, HBO and Paramount as well. Now, it also plans to double the South Indian content to about 1100 hours, taking on what has been the USP of platforms like Prime Video or ZEE5. But the biggest draw for Jio Hotstar will be sporting events. Now, the new entity holds rights to all the sporting events that Jio and Disney Plus Hotstar held individually. So that's IPL, ICC events, English Premier League and Wimbledon are all covered. Now, the company has also plans to widen its offerings to bring more sporting events under its umbrella. Does this now mean that then you'll have to pay for IPL? Maybe not, because the company says that some content will be available for free every day. But whether this includes IPL or not, that we don't know yet. Now, what will be interesting to see is what this means for the OTT landscape in India. With nearly 36 million paid users, Hotstar was already the market leader here. And it was followed by Prime Video, Netflix and then Apple TV+. Now, the merged app will actually have about 52 million paid subscribers to start with. And this could shoot up once the IPL starts in a month's time.
We are actually using AI to tackle AI. It has to be like that. We've actually used a lot of AI for a very long time now. We always had models where we could detect that this number is likely to be a spammer or this message sender is likely to be a spammer. Those were some of the basics that we did a long time ago. We're now looking at AI almost across the business, not only protecting consumers and improving consumers' communication, but also from a business point of view, from our biggest revenue stream is advertising. How can we help?
Welcome back and thanks for staying tuned into Business Lunch on CNBC-TV18. Let's move on. And India has a new Chief Election Commissioner, Gyanesh Kumar, who was serving as one of the 2 election commissioners, and he will take over from Rajiv Kumar, who leaves office today. The latest appointment is the first under the new law governing the selection of election commissioners. His term will run till January 26, 2029, just days before the next Lok Sabha elections are scheduled to be announced. Now let's move on and to more updates. Meanwhile, the controversy has erupted over the appointment after leader of the opposition, Rahul Gandhi, raised objection to the retired IAS officer's appointment. The Association for Democratic Reforms has moved Supreme Court against the appointment, claiming violation of the Supreme Court ruling. The Supreme Court has listed the case for hearing tomorrow. And in more national news, the government has extended the tenure of Niti Aayog CEO BVR Subramaniam by a year. The former Chhattisgarh IAS officer was due to complete his 2-year term on 24th of February this year. And moving on to some news from the world of diplomacy, Qatar's Emir Sheikh Tamim bin Hamad Al Thani received a ceremonial guard of honor and was welcomed at the Rashtrapati Bhavan today. Al Thani, who is on a 2-day state visit to India, is holding extensive talks on energy, economic cooperation and expertise, all of which strongly bind India and Qatar. Okay, on that note, we're going to slip into a very short break, but here's some good news coming in for our viewers. India's business news leader is now a click away. Introducing CNBC-TV18's all-new app, get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app from the Apple Store or Google Play Store, or you can just scan the QR code on your screens.
AI on our platform and get better bang for their buck. We've invested very heavily on various parts of our business, even operationally. We're using AI on customer support, for example. Even our legal team is looking at AI products. Our developers looking at AI products. So AI is very deep into our business now, and pretty significant investments are being made into AI.
Let's double down on India and your focus here on India. How do you see this market evolving? How do you see this market growing for you? What are the opportunities that you want to build on, considering the fact that the lion's share of your revenue comes from the market? I mean, do you believe you've hit saturation here in India?
So India, firstly, is our most exciting market. I think globally, for a lot of companies globally, India is the most exciting market, right? It is for us as well. Our biggest investments in the last, I would say, 6 or 7 years have been in India. We actually have more engineers in India than we have in our head office in Stockholm now. We build in India and we ship globally. A very large chunk of our product is shipped globally out of India as well. India continues to grow very, very rapidly. The entire stack that is available to an Indian citizen now to conduct business digitally has made the mobile phone number even more important than it used to be. And that's where we believe our relevance continues to grow in India. We haven't reached saturation at all. We are fortunate to have a large user base in India. I think we crossed 350 million users in India, but we still have a huge space.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.
Welcome back. Thanks for staying tuned into Business Lunch on CNBC-TV18. Let's move on. Chinese President Xi Jinping held a meeting with the top names in the Chinese tech sector, including big guns like Alibaba's Jack Ma. Xi Jinping urged the companies to showcase their talents and promised the companies a wider market access. Listen in.
President Xi Jinping held a rare meeting with some of the biggest names in China's tech sector Monday. It marked a turnaround in Beijing's approach to its tech giants after a regulatory clampdown 4 years ago. The likes of Alibaba founder Jack Ma and DeepSeek's Liang Wenfeng were present at the highly choreographed event. Analysts said it was a show of support to rally private companies. The first images from Chinese state media showed Xi speaking to executives aligned in rows before him.
We hope that all private enterprises and private entrepreneurs will have the ambition to serve the country, strive for development, operate in accordance with the law, and promote common prosperity so as to make new and greater contributions to promoting Chinese-style modernization.
Investors raced to see who was in and out among top business leaders. Images showed bosses from Huawei and electric vehicle giant BYD sat directly in front of Xi. Leaders from Chinese giants including Xiaomi, Meituan and Tencent were also reportedly present. Shares of Baidu dropped more than 8% after no top executive was spotted. Two sources said the founders of Baidu and ByteDance were among those who did not attend. Jack Ma's attendance was notable. The once high-profile entrepreneur largely withdrew from public life after the IPO of his fintech company Ant was stopped by authorities 5 years ago. That move was triggered by a speech he gave the same year criticising China's regulatory system. Analysts said Xi's move to gather business leaders underscores the new importance of private sector innovation for China to gain ground in technology.
And following Elon Musk's meeting with Prime Minister Narendra Modi, the electric vehicle manufacturer Tesla looks to set and make its foray into India. Sources also tell CNBC-TV18 that the company is looking to hire in the country and has posted job openings for 13 roles, including service technicians, advisory roles, customer engagement manager, and delivery operations specialist. Sources also tell us that the company is in the process of scouting for showroom locations in major cities like Delhi and Mumbai. Tesla is set to launch a new low-cost model car in the United States priced at around $25,000, and sources suggest that this could be the first model to be introduced in India. In yet another accident for the aviation sector in the United States, at least 18 people were injured and 2 were taken to the hospital in a critical condition after Delta Airlines plane crashed and flipped after landing at Toronto Airport in Canada. Delta Airlines said in a statement that the aircraft had 76 passengers and 4 crew on board at the time of the accident. Investigations are currently underway to figure out the reason behind the crash. And with that, we're absolutely out of time on this edition of Business Lunch on CNBC-TV18. Thank you so much for tuning in. Up next, you have Midcap Radar.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself.
as India's longest-running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
China was very cheap and on the margins, especially with the DeepSeek. I think this has really rekindled hope. And by the way, you know, their Xi Jinping is meeting the corporate investors and business people as well. So I think this is kind of bringing back the hopes that, you know, China may not be as against the capitalism as earlier thought out to be, right? So I think all this combined, plus I think, yeah, Indian market was good, fairly valued, good story, but there's no surprise there. There's no big trigger. It's good, but not for the time being, right? So if you're invested, that's fine, but otherwise there might be short-term money might be chasing, you know, China for the time being, right? And US, by the way, right? So there's no, I mean, it's a popular trade. It's, I don't know whether it'll be right or wrong, but currently the trade is go long US, long China. Second is the credit growth in India. It has come to 11-12%. If RBI is able to just manage this economy in the manner that monetary policy and fiscal policy work in tandem, and the credit growth comes back to 15 to 18%, that's a thing to watch. I have always maintained a positive stance on India. It is just on the margins, where do you go underweight, overweight? Look, that's what the world does. If $100 start from US, 80, 70 go to US, 20 go to Europe, 10 go to emerging markets. Within this 10, about 2 comes to India. That's the 20% allocation. So about 1 trillion, about 20 billion goes to India. That is the long-term equation. That is how the number.
You're watching us here on Midcap Radar. I'm Mangalam Malu, with me Vivek. Here we have seen, you know, the midcaps underperform this afternoon. Nearly 2,200 stocks declining for just about 400 stocks which are advancing. Not particularly good for the midcaps.
Good afternoon, Mangalam. The mid-cap and small-cap index under severe pressure. The small-cap index, in fact, down over 2%. But we have quite a lot lined up on the show. Let's start off with the top headlines. Markets off the day's low, but still trade weak. Mid-caps come under pressure again amid continued uncertainty over Trump's tariffs moves. Auto, PSU banks and consumer durables are the big drags.
IT sector relative outperformer today in an otherwise weak market. Mid-cap IT stocks like LTI, Mindtree, L&T Tech Services gain persistent system gains after JP Morgan issues an outperform call. Says the company is a credible growth compounder candidate.
ABB India beats estimates on all counts, with revenues growing strongly across segments. However, the stock falls from the intraday high as management indicates moderation in order inflow and growth rates in their conference call.
MGL in focus after Mumbai civic body BMC issues directions to all eateries, bakeries and hotels along with roadside vendors for switching to clean and eco-friendly fuel like CNG or PNG by July 8th.
Braid gain under pressure for the second straight trading session after weak commentary from the management. The company cuts revenue growth guidance to 12 to 13% from the earlier 15%.
Well, you're watching us here on Midcap Radar. While the midcaps are largely under pressure, a couple of them are surging as we speak. We have 3 of them that stand out. One is Godfrey Phillips after a big gain yesterday, continues to gain today as well. And the other one we're looking at is Gillette. Gillette is up nearly 15%. There's no dinky toy stock. It is, extremely well bid in today's trading session. Stock had seen a correction of almost 30% from the highs, but now at lower levels, Street is buying into the improvement in urban discretionary. For them, the big trigger is increased revenue coming in from their female products as well. So that's a positive. Emami is another one which is actually doing well too. That's up around 3.5%. Swiggy, after having declined a fair bit, much below its issue price as well, has seen some bits. So that stock doing well too. But the stock under pressure is Borosil. So pull up the intraday chart of Borosil. You would see a decline of nearly 9%, opened with a cut of 15%. The company recently reported its third quarter numbers as well, where net profit and margins came under pressure due to increase in other expenses. So to discuss this and more on demand trends, we have Shrivar Kheruka, who's the MD and CEO of Borosil, joining in. Thanks a lot, Shrivar, for joining in. One of those rare days where, in the morning we got to speak to Mr. Pradeep Kheruka of Borosil Renewables, and that stock was higher. He foresees the future to be a lot stronger. And then in the afternoon, we get to speak to you as well. Both stocks in different directions today, but a rare occasion. So be that as it may, let's talk about your third quarter numbers itself. Two things disappointed the street. One was the lack of revenue growth, revenue growth being at the lower end of what the street's expectations were. And secondly, your margins coming off as well. I was looking at your conference call details. You said that the lack of revenue growth was largely because of B2B going off because of the new, rule coming in with regards to sale or uniform code for pharmaceutical marketing practices. And the second part is to increase your e-commerce sales. You had to increase the cost of customer acquisition, and that impacted your margins as well. On both these fronts, if you could give us some clarity, how much do institutional sales account for in your overall mix? How much was, that impacted by? And secondly, what proportion of your sales come in from e-commerce? And what are the margin differentials between e-commerce and other sales?
Well, thanks for having me. Well, firstly, I'd say that we actually did not have a bad sales growth. It was, if you look at the first 9 months, we were somewhere in the 16 to 17% revenue growth area, which I believe is leading, amongst, say, our peer set. So in the last few years, of course, we've been growing more in the 20 to 25%. So from that perspective, yes, it's a bit lower, but we've always guided for a 15 to 20% CAGR, and we're currently somewhere in the middle of that. So that being said, yes, as far as margins are concerned, there were actually two separate impacts. One is what I would say above EBITDA, and one is below EBITDA. So, as far as below EBITDA is concerned, I think we've started a new plant last March for borosilicate pressware, which is the one of its kind in India. And, the depreciation has come into the balance sheet, or rather to the P&L statement from there, which has, dented the PAT margins or the PBT margins. As far as above the EBITDA line, I would say, yes, the 2 points you mentioned, corporate gifting specifically from pharmaceutical companies has been, much lower this year compared to the years past. I wouldn't like to exactly give you numbers because we don't share the channel-wise sales breakup. But I would say it's taken at least 2-4% of our overall top line sales growth. So that has been a negative. As far as customer acquisition costs are concerned, we do see our basic strategy is we must reach the end customer. We love all our channels, but we love the customer more. And therefore, the customer must be able to access us from wherever she or he desires. So at the moment, we have seen increasing revenue share in, say, e-commerce. And this is since the COVID phenomena, e-commerce as well as in quick commerce. And there you do need to spend more on advertising. So there has been a higher advertising cost as a result of that. But I would say in the long run, or let's say medium run, we have guided to an EBITDA improvement to between 20 and 22%. And that doesn't change because of one quarter. So that's likely to continue to be our goal in the medium term. And we are quite confident to achieve it. Also, one more thing that's changed, since the last quarter, of course, I think the budget was very positive from the middle class perspective. with more money in the hands of the middle class. And therefore, we do hope and we do expect that discretionary spending for household items will increase post the budget announcement. So in general, I would say we are going as per plan. One quarter down doesn't really do much. There's no longer term, negative story here.
What proportion of your sales currently comes from e-commerce versus what it was, say, pre-COVID? And how much are your ad spends as a percentage of sales? Where is that number likely to stabilize at?
Yeah, so as far as the ad spends are concerned, we are roughly around 8% of sales, which is much higher than the industry average. And in the past, it used to be 10, it's come down to 8. And I believe in the next, as we scale, operating leverage will allow us to get to about 6. So we should add another 2 percentage points in EBITDA from there. The other point is in terms of, like I told you before, we don't really share channel-wise sales mix for competitive reasons, but I would say e-commerce has multiplied manifold compared to before COVID. And we see that trend continue.
Not the exact number, but a broad range if you could give us, low teens, mid-teens, mid-single digits, high single digits.
It's definitely in double digits. It's definitely in double digits, but and it's rising rapidly.
Srivar, if you could, we are facing paucity of time, but if you could help us, number one, FY25, where will you end in terms of top line margins as well as PAT? FY26, what is the outlook like? If you can't quantify it, can you give qualitative outlook as to how exactly you see FY26 pan out?
Look, as far as the growth is concerned, if you look at the 9 months average, we've grown 16-17%. I don't see any reason why that should change in the last quarter. So you could just, multiply that. And I would hope that we could continue that same momentum in the next year. And as far as margins are concerned, I would say we're at about 17% operating EBITDA margins. And our goal is somewhere in the 21-22 range. And probably we should be able to add 1 or 2 percentage points to that 17% in the next year and hit that 21-22 probably somewhere in FY27.
Just a quick word before we let you go on your opalware business and your non-glassware business. Non-glassware has been a growth generator for you. Wondering whether you are looking at, manufacturing non-glassware products in-house versus completely outsourcing right now, because you're working on a few categories there as well. And in opalware, you are expecting some competition coming by. So will that impact your margins going forward?
Well, as far as non-glassware is concerned, we absolutely have grown that business a lot. We do expect, or rather the government has been, encouraging companies to make in India, and we are fully, cognizant of that. And therefore, we do have plans to set up non-glassware manufacturing in the near future. Those plans haven't yet been fructified into a formal, say, approval from the board, which should happen shortly. Once I have that, I will definitely share that with you. But in principle, yes, we will be manufacturing some non-glassware in India in the short run. And as far as opal glass, yes, competition is coming, no doubt about it. There have been, there was a one-player industry, now it's a three-player industry. There may be a fourth player coming, no doubt. But these are all well-established and I would say mature players. And I don't think that margins should hurt because of that. I mean, it's only that the industry will take more share from competing, say, dinnerware, let's say, segments like maybe ceramics. So I don't believe the margins will be impacted from that.
Right. Thank you so much, Srivar, for joining us, giving a sense of how Q3 panned out and how exactly you see the competitive landscape pan out. Well, we'll now shift into a short break, but here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
clearly today, financials looks interesting category from a valuation front. We are possibly at a bottom in terms of, what we've seen historically on financials. Earning growth is on track. Even last quarter or so, financials continue to report a nice earning growth. In fact, if you look at quarterly, financials are almost 40% of NSE 500 profits. So it's a large, profit surprise or profit growth coming from that segment. Financials are interesting. Yeah, consumers can be a nice sweet spot for, lot of volume growth, stroke profitability growth, because post budget, that large number of 80,000 crores to 1 lakh crores range for tax saving by individuals, which can flow into consumption related activities.
Welcome back to Midcap Radar. Well, we have a very interesting discussion lined up. Sachin Mehta, Director of Investment Banking at Anand Rathi Advisors, joins us now. They've written a very interesting note as far as the global aviation as well as the aerospace market is concerned. Thank you so much for joining us. First off, Sachin, give us a sense of the opportunities that you're seeing in the global aviation market. How does India fit into the scheme of things?
Yeah, thanks. Good afternoon, Vivek. Thanks for having me here. Look, the global aerospace industry is worth more than $1 trillion. It's one of the largest industries out there, and one of the very few industries where you have a order pipeline which is available for the next 20 years. As you know, that there are more than 42,000 aircrafts which are currently on order, which will be delivered over the next 20 years. So this is a huge TAM to play for several Indian companies who are focused on precision engineering, very specifically within the aerospace and the defense segment. As we are seeing, a lot of Indian companies are rising up to the challenge with the support from the government as well. So I think it makes for a very exciting case for the aviation industry to grow within India as well.
Understood that. Sachin, the other thing which we want to look out is, what is the kind of opportunities, which are the Indian companies, both listed as well as unlisted, that stand to benefit from the increased spends that you're seeing as far as the entire segment is concerned?
Sure. So look, the aerospace industry, and when we specifically talk of the civil aircraft segment, you have various different segments within it. So you start with the aerostructure, which is roughly around 40% of the cost of the aircraft. Within that, you have different components, like you have fuselage, you have landing gear, you have several other things which make up the aircraft minus the engines. Now over there, as you can see, there are several Indian companies who are already making a mark. You have companies like Dynamatic Technologies, Data Patterns, Bemel, Sansera. These are companies on the listed side which have already tied up with some of the large global OEMs and have already become a key link in the global supply chain for them. On the unlisted side as well, there are many other companies like Many Precision, you have Aegis, you have Tata Aerospace, Godrej. These are some of the larger companies who are yet to go public. And, I expect a lot of them to start thinking of going public as well, because this is an industry where, as we see currently, there is tremendous amount of demand and growth is only restricted because of capacity.
Understood that, Sachin. Sachin, the next question is, how do you see the entire MRO market develop as far as India is concerned? Key players there, what kind of order books are they sitting on? What kind of order book growth can you expect them to see?
Yeah, very interesting point, Vivek. MRO market in India is very unique. As of now, 90% of the MRO services in India are outsourced to markets like UAE, Singapore, and even Sri Lanka, right? We have roughly around 713 to 760 commercial aircrafts which are operating in India, and there are around 1,200 more aircrafts which are on order. So 1,200 aircrafts means you have roughly around 2,500 engines which are also on order. Typically, you have a A check, B check, C check, D check in the MRO market. Now, for the more expensive, services like the C check and the D check, almost around 10,000 crore of spending is done by the airlines operating in India, outside India. So that is a huge opportunity. Plus, Indian airlines have, placed large orders for which now it makes a lot of commercial sense for a lot of these OEMs as well as third-party MRO operators to have their presence in India, because now there is a large fleet operating from India. And if you see, government has also, announced 100% FDI in the aircraft MRO sector. They have lowered GST as well. In fact, Safran has announced its largest MRO factory in Hyderabad. This is going to be their largest facility outside the United States. And of course, you have other JVs which have been announced. So ACUS is has already announced setting up of MRO with Magellan Aircraft and so on and so forth. So this is a very large market, first to cater to the opportunity within India. And once you have a good base, you can also attract a lot of foreign airlines to come and do the MRO services in India. In fact, you also have Adani's who have already announced takeover of Airworks. So you will see a lot of activity in the MRO space as well.
All right, take that point, Sachin. Thank you so much for taking the time out and explaining the sector macro to us. The next time we speak to you, we'll get a little micro and ask you for some of the best ways to play this in the listed space as well. Though, as you spoke, the picks were up for our viewers on the screen itself. Take a short break, come back, focus on the markets. A lot more stocks which are buzzing around, more on the downside than the up.
Very good. One of those massive words,
So much longer, much more. But 2025 it went up very volatile.
Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge. So it's our 4th biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million now.
Breaking news. The last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
We've now matured our ML and our AI teams to adapt to this new technology, and we've pivoted every product team inside Canva now to think AI first.
If you look at markets, whatever concerns of, valuations were more in the, the larger market, like small cap, mid cap indices had these challenges of valuations. I think on a large index, Nifty, reasonably, comfort on valuation front, plus all those factors you mentioned, economy on a better track, especially, the December GST collection was pretty good at, double-digit collection growth we saw for quite some time. So yeah, macroeconomy angle, things looks okay. Government policies in place, RBI policy also has changed the, the dynamics in terms of giving a lower rate environment we've started. So that way looks good.
More incomes in the higher bands have also been brought into the lower bands so that they'll benefit from a lower tax rate. So if you would only look at the rate charts that we've come up with, where the income bands and the rate applicable to them are also rehashed in favor of every taxpayer. So if you are talking of the new regime, the new higher incomes are coming into lower band, the rates for all of them have also been brought down. So on the question of your FIIs and the retail investors, it is true, and I thought you were implying it in your question itself, that FIIs also go out when they're able to, in a position to book profits. Indian market today, Indian economy today, has an environment in which investments are also yielding good returns and profit booking is also happening. And I'm sure you would have seized that fact also.
Before we take your leave on Midcap radar, just keep an eye out on the frontline indices. The Nifty, when we started the show, was lower by almost 70-80 points, but now has been a smidge of recovery, largely led by the IT pack. But no respite for the Midcap end of things. The Nifty banked still down about 0.5%. All frontline indices, as you can see, in the red. We take a short break. On the other side, we have the Mutual Fund Corner when we return.
जब दिल्ली में जगह जगह पावर कट होते हैं, जब उत्तम नगर, नवादा, संत नगर, बुराड़ी, त्रिलोकपुरी, संगम विहार, देवली में 3-3 घंटे, 4-4 घंटे बिजली जा रही है, तब भारतीय जनता पार्टी वाले कहते हैं नहीं नहीं नहीं, अभी तो आतिशी सीएम है, अभी तो केयरटेकर सीएम आतिशी है, वो जिम्मेदार है दिल्ली की बिजली व्यवस्था के लिए। जब यमुना में कोई मशीन उतरती है तो कहते हैं नहीं नहीं नहीं, बीजेपी चला रही है सरकार, एलजी साहब चला रहे हैं सरकार।
खुद अरविंद केजरीवाल ने चुनाव से पहले ये कहा कि हरियाणा गवर्नमेंट ने जहर मिला दिया है पानी में। इससे दिल्ली के लोग और नाराज हुए और दिल्ली में अरविंद केजरीवाल के खिलाफ जमकर वोट किया। अब हम लोगों पर जिम्मेदारी है कि यमुना साफ हो पूरी तरह, तो सरकार तो बनेगी, 20 तारीख तक सरकार बन जाएगी, लेकिन उससे पहले ही लेफ्टिनेंट गवर्नर साहब ने यमुना की सफाई का काम शुरू कर दिया है।
Hello, good afternoon and welcome to Mutual Fund Corner on CNBC-TV18. I'm Vinny Motiwala. Today what we will be discussing is small cap index mutual funds. Now small cap index, when you look at that, that's down nearly 20% from its peak. And in the current market volatility, what are the key strategies that investors should consider while investing in small cap mutual funds? Should they actually remain invested, or is it time maybe to switch to large mid-cap funds? What should be your strategy? We'll be discussing all of this and more with Kshitij Mahajan, co-founder at Complete Circle Consultants, joining in with us this afternoon. Kshitij, good afternoon and thank you so much for joining in with us. Volatility is what we're seeing creeping into the markets. It's continued for the last few months. And in this downturn that we're seeing, especially coming in for small cap mutual funds, small cap index and overall small and mid cap where they're investing, how should a mutual fund investor look at the current scenario? What should they be doing with the small cap mutual fund investment? Is it time to start rethinking their strategy?
Well, hi, always a pleasure to be with you. I very strongly feel that whenever you invest in any of the funds, it should be aligned with your goals. And, most of the people, learned people on your show I've seen talking about that small or mid-cap funds should be aligned with your long-term goals. That's how you should look at it. And if you have done your asset allocation properly, if you have done your risk profiling properly, I think if you are very much in line with and your goals are not nearing soon, then you should not look at what is happening in the market, and you should keep on putting your money through a SIP route, because this is the best time when you can actually add on to more units of these this category of funds. But if you have done some lump sum investment, looking at there is a upward trajectory which is looking at the fund side, and you are a little high on allocation towards small cap as a sector, as a market cap. So then you can actually think of tapering it off and reallocating it to maybe a flexi cap fund or a focus fund, maybe a flexi cap fund or a multi cap fund where large cap allocation is a little more. That's what one should do in present scenario.
Just a follow up, what is more? How much allocation is more to small and mid cap in this current scenario? Like, what is the limit that they should be having as an investment in small and mid cap?
I always say it should be 50, 30, 20. 50 should be large cap, 30 should be mid cap, and 20 should be small cap. But there is a catch to it that, it doesn't mean that you should have 20% in small cap fund and keep getting your small cap allocation towards the flexi cap, multi cap funds also. So do this exercise on a portfolio level. Let's say you have 5 funds where you have a couple of flexi cap funds, a multi cap fund, a mid cap or small cap fund. Then see on the portfolio level how much you have small cap allocation. So it should be 50, 30, 20 at any given point in time, whether markets are rewarding small cap or mid cap, and your small cap fund allocation should be aligned with your long-term goals, which is an excess of 10 years from now. So somebody who's approaching its goal and have some allocation towards small cap fund, then that person can think of redirecting its allocation toward, because from the peak small cap index is down 22% right now. And if you have a substantial allocation towards small cap set, then you should look at or revisit your strategy and maybe change the gears.
Okay. Kshitij, what about a new investor? Should they enter now? If they're looking to invest maybe in a small cap mutual fund, is it time to start investing now? And like you were saying, with your long-term goals, keep them aligned as well. So if everything is in place for them, should they start now? Or maybe there's a further downside risk and should just hold on before they start investing in a small cap mutual fund?
So nobody knows how much more there is a downward trajectory, but what is very much evident is there is a major valuation mismatch which was there when market started correcting, and in many companies is still there. But yes, somebody who has not invested and was thinking of that they have missed their rally on the small cap space, they can start their investing from today itself through a SIP route. I think that's the best thing to do while you're looking at small cap or a mid cap basket to invest. As let's say if market will further give some correction on this in this space, then you can still get much more units, because best use is when you have market correcting. With the same type of money which you're putting, you'll get much more units to your basket. So very much right. I'm with you that one should look at participating or start adding to their small cap kitty if they don't have fund right now. But through a SIP route, that is what advisable in present scenario.
Okay, SIP is what is more advisable in the current scenario, is what you're highlighting. you know, like you mentioned a bit as well, if the allocation is too much to a small cap fund, then they should look to switch to just large caps, or maybe mid cap is also something they should look at. Where could they get better stability if they just want to not take too much of a risk?
In present scenario, I think flexi cap is a better option rather than going for a pure large cap, because flexi cap fund manager has liberty or has that advantage that he can maneuver between large cap, mid cap, and small cap. And most of the flexi caps are now little towards the growth oriented flexi, but little towards large cap side. 60-70% allocation toward large cap side. That's a better way of doing it. Let's say if some valuation gap which will reduce between small cap earnings and valuations, or mid cap earning and valuation, the fund manager at his level will only allocate some money towards small and mid cap. So mid cap again is not advisable from moving from small cap to mid cap, because there also we have seen substantial correction of almost 18.5% from the peak on the DEX side, and we might see further some correction also in that space. So advisable is, or let's say what I feel the right thing is, that one should look at moving or adding flexi cap to their basket.
Flexi cap, surely one should look to add to their basket, you know, if there's not much of a concern, and if they're looking to switch, that's the best option and best play that you're highlighting. Also, just any other alternative categories of mutual funds that one could look at, or you would recommend looking at currently? You know, we have seen those interest rate cuts coming in as well. So, you know, that does benefit some bit in terms of debt mutual funds. So would that also be something less riskier right now, or hybrid funds? What is the suggestion there?
So interestingly, what as a house we feel that in fact fixed income GSEC funds and right now equity basket is capable of delivering 11-12% return over this is just a number which we are estimating that over next 1 year, because all these fixed income GSEC fund which have modified duration, which measure price sensitivity with regard to rate card, which has more than 10 years, even 0.5% rate cut, and with right now yield of 6.5, 6.7, or you can easily get 11-12% return on your fixed income debt fund also. The only catch with fixed income is you are taxed as per your tax slab, income tax slab, depending on that. Yes, there is always good to diversify, and fixed income should be a part of one's portfolio. Second, you can look at a multi-asset fund also, because obviously gold has a good run-up, but I still feel that gold should be a part of anyone's portfolio. Around 5 to 7%, it should be a part of it. You don't buy it directly, you can do a multi-asset fund where there's a 10%, 15% gold allocation is there. That's again one category which one should look at, where you can get benefit from market which is corrected. Broader index is corrected almost 14%. You get benefit from rate cut, as you said, through your fixed income allocation, as well as some run-up on the gold side. So all three engines will fire in a multi-asset fund also. So that's also one category which one should look at.
Okay. Kshitij, you did talk about it, that, how SIPs in the small cap mutual fund or current market scenario would be something that's beneficial. So as an investor, there are a lot of people asking, should I stop my SIP now? Should I pause it? Your answer would be no.
Yes, any day. You have actually done SIP for the present day only. So SIP in an upward market will always lag the lump sum return, because somebody who has participated, let's say, at 16,000 Nifty, or let's talk about from the bottom of 2020 March, where Nifty was around 8,000. They must have seen upward rally only. The Nifty has gone up to 26,400. But when you participated through SIP, it has given you units at, every time at a higher valuation only. But this is a time when you will get units at a lower valuation, and you will actually make much more bucks vis-a-vis a lump sum investment somebody would have done 6 months or 1 year back, because you are getting with the same amount, you're getting much more units because market is corrected. So the rewarding point or rewarding part of SIP is when markets correct. That's the time when you should step up your SIP, or at least please don't stop your SIP. I know that most of you who have in the last 1.5 years must have seen negative returns, but that's the character of markets. You can't get every year returns. So it depends on what valuation you're entering on, what type of global scenario is pertaining, what type of scenario is in your country. I think this is a time when you should step up your SIP rather than stopping it.
Step up your SIP rather than stopping it. That's a word coming in from Kshitij. Do not panic right now and just start pausing or selling off your SIP, stopping your SIP. That's not the right advice coming in from any of any of the investors. Kshitij, current scenario, like you're saying, SIP surely one should go for SIPs, but why not lump sum, right? If I'm investing at such a cheap rate and buying it at such a good value, then doesn't it make sense to do lump sum as well?
Yes, if you have lump sum money on your side, and if you don't require that funds for next, let's say 5-7 years time, then let's say you can do a STP. Let's say if you have 100 rupees, you can put 40-50 rupees right now at current levels. And for next 50, you can do 6 weeks or let's say 8 weeks STP, which is like every week some funds will go from your liquid fund to the respective equity funds. One can look at that. And because we are already I feel we are at already a reasonable valuation. So I think 40 to 50% should go at one go in present scenario, and the remaining one should do a STP. So, but you should have time frame of 5-7 year plus in present scenario.
Okay, and Kshitij, you know, if overall right now, I have to look at it, one, could you tell me how current small cap valuations are comparing themselves to historically what we've seen when you've seen such a correction coming in the market, and long-term buy opportunity you've highlighted. But what is your strategic recommendation for small cap funds when an investor is investing right now?
So I will take you back in 2017, where 1 year return for small cap index was around 57%, and for mid cap index around 48%. 2018, we all have seen what has happened. The new regulations have come with regard to SEBI, long-term capital gain has come, and then different baskets of mutual fund has been created, and there was a lot of shifting between small and mid cap. And that year return for small cap, I'm talking about calendar year, was around 60% negative. And then we have seen 19 where small cap space struggle, and then 20 COVID happened, and then there was no looking back from September 20 onwards. So this category has very high volatile with regard to other cap, but at the same time very rewarding also if you give time to the overall fund which you are holding in your basket. So you have to align your long-term goal with regard to small cap basket. Presently, as we speak, we are 23% down from the peak on small cap index. I'm talking about on the index side.
Right.
Many of the funds have fallen in the same ratio. Fewer up, fewer down. But a very evolved fund manager category we have, where you must have seen big houses like Nippon, HDFC, SBI are maintaining very high number of stocks in small cap basket, because as per regulation you need to have at least 65% in small cap category to get the benefit of small cap fund. And as for equities also. So I think they're maintaining it really well, and somebody who's looking at to participate in their basket, I think in small cap especially, what we talk about the STP part, one should not look at a lump sum participation right now. One should look at STP participation of 10 to 12 weeks or a SIP participation, because you don't know how much more pain is left in the seed. And but at the same time, it's been very well managed at the portfolio level. There are many funds which you can look at, and you can actually align 10-year plus goal with your allocation.
10-year plus goal, long-term approach, flexi cap, SIPs, that's a word coming in on small cap funds from Kshitij. But on that note, we're going to slip into a very short break. But don't go anywhere, because after the break, we're discussing about global mutual funds as an option, and what does that look out and pan out for you as investors. Welcome back to Mutual Fund Corner on CNBC TV18. We still have with us Satish Mahajan, co-founder at Complete Circle Consultants. And now we're going to be discussing international mutual funds. Which are the themes, which countries with good exposure could one look at as a mutual fund, whether US, China funds, what's looking interesting for an Indian investor? We'll talk about all of that. Satish, let's start by talking current global economic scenario. We have those tariff issues coming in. China is ramping up their, business. A lot of commentary coming in from that side as well. Which international mutual fund theme looks attractive for an Indian investor? Where should I be looking?
So if you see, somebody who has missed Nasdaq from 2010 to 2022, the compounding return was 26%. So, you can't have that type of run with the US index, but what you can look at, whatever markets you're targeting, global markets you're targeting, three sectors which you have to keep in mind is like for sure, which is your tech, your EV space, your pharma space. I think 3-4 sectors are which is very talked about and which is a futuristic sector is very important. I think US, China looks attractive because, China last 5 years return, and although YTD return is around 17%, but last 5 years return is around minus 17%, last 3 years return minus 13%. So I'm saying valuations are attractive, but then there's crackdown on many of the businesses, private companies. It's more of a closed economy. I don't have much to say, but there are a couple of options to participate in China, and many of the participants have taken allocation towards that. And 1 month return also looks very attractive at 17%. But I'm saying it's more of a diversification tool. You can participate. You can look at taking some emerging market MSCI index. Motilal has an option, Franklin has an option which you can participate, which can give you some allocation towards Southeast Asia also, where Korea and Vietnam is also there. Then you can have an allocation towards a broader index in US also, where S&P 500 index funds are available, and Nasdaq is there, which is totally a tech index. So I think between these two countries, you can have some allocation of 15-20% in your portfolio. But then you should be aware of the fact that, they are subject to many of the geopolitical risk also. They are subjected to, right now, our currency depreciating, which is there, but tomorrow you don't know what the scenario is. So then you should be aware about that. But if you actually are looking at a diversification from INR, I think then you should participate in these two countries. And my preference is S&P 500 broader index US, and that's what I will look at rather than. But yes, China looks reasonable, but then there are a lot of ifs and buts when you participate in China.
Yeah, I was just going to ask about those ifs and buts only because, yes, it is underperformed, so it looks attractive as an opportunity-wise. But there is high risk, right, to China. If you are looking to enter, then you should do higher due diligence. Is that the case?
Yes, one should do that. Or maybe you can play with small allocation. One is that because they are respected fund houses who are actually participating in these funds through a fund-of-fund route, then at least you can have a smaller allocation vis-a-vis, let's say, in US, you can go up to 8-10% allocation. In China, you can have 4-5% allocation. So downside is limited. That's what is very important. So one is you are making return. Second is you are cutting your losses also, and maybe protecting your downside also. So this is something which you should do.
Okay. And what is the percent of allocation that I should have to an international mutual fund currently?
So, I feel that one should have 15 to 20% is what at the diversification you should look at, because there is always a valuation gap because of the inflation part, which is a little high in India vis-a-vis other emerging economies or let's say emerging economies, developed economies. So we will keep on having our currency depreciation, which will keep going. So this will actually give you a little bit of hedge when you invest there. So 15-20% is one should look at. But then please, if you understand this, only then do. Otherwise, you can easily take 13-14% compounding return in India also if you have a good combination of 4-5 good mutual fund. Subjected to markets will keep on doing good.
Sure. And Kshitij, as an investor, what are the options right now available for global mutual fund or China funds? Anything that you could name for us in India where we could look at right now, or where is it possible to invest from?
So there is a cap on most of the fund because RBI has kept a cap on foreign funds allocation which one can do. But yes, there are a few funds which are taking money, like Franklin India Opportunity, Global US India Opportunity Fund is there. Then in emerging market, Motilal Index Fund is there, which is taking some money. So there are 2-3 funds which are taking money. You have to weight your, plus and minuses on these funds, and you have to allocate as per that. But I hope so that because because the markets have started moving up in US as well as in China. I'm hoping that maybe that window will get over, and might be that RBI will open a new window, which we were expecting since last 1 year, but it's not been opened. But otherwise, there are a few funds which are open for SIP in Nasdaq as well as S&P 500. So lump sum investment, I'm sure right now has been offered by only a couple of normal mutual funds. For index fund person, you can do SIPs through Kotak and Motilal.
Okay, that's the option there. And just a quick one, a long-term prospect for these funds. How do you see that?
So, I think World Helicopter has two engines right now, and third one, India is emerging, but right now is US and China. And any innovation which is happening, most of it is in US and then in China. I think I very strongly feel that US is something which I can bet on, that the country will keep on doing well. But we have to keep a check on the higher debt which they have right now piled on, and the valuations, where the valuations are stretched. But I'm still hoping that come what may, from long-term view, and let's say long-term view for foreign fund, it's as riskier as small cap fund. So you should have 8-10 years on your side, and you will see that you'll make a decent amount of return. So US for sure, I'm 100% game about US. I'm not sure about China.
Okay, Kshitij, thank you so much for joining in with us today, explaining us everything in terms of the international mutual funds as well, what is looking attractive and what are the options available for an Indian investor. So thank you so much for that. But with that, viewers, we are absolutely out of time on this edition of Mutual Fund Corner. Thank you so much for tuning in. Closing bell up next.
But the merger between JioCinema and Disney Hotstar is done, and there's a brand new app. Now, the most obvious benefit will be that users don't have to choose between these two apps or toggle between the two different apps to get to the content they want. The new Jio Hotstar app will have it all, over 3 lakh hours of content across 19 languages. So potentially, we will now have India's largest OTT player, with the company saying that it will have a user base of over 50 crore. Now, these 50 crore people are not necessarily all paid users, but that just means that there's potential to convert them. So what happens to your existing apps? Now, JioCinema will now redirect you to download the new app or prompt you to open the Hotstar app if you already have it on your phone. Now, the Hotstar app should automatically have been updated to Jio Hotstar or will prompt you to install the latest update. Now, your existing premium plans will continue on Jio Hotstar for the remaining duration of the plans, and once those plans expire, you will have to subscribe to the new plans. Now, these new plans start from 149 rupees for 3 months.
To understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
.04% decline that we've seen coming in for the Taiwan index.
Urging them to contribute more to tech innovation amid intensifying rivalry with the United States.
Finally, your portfolio will be feeling good yesterday after a while because the number of stocks that were advancing, well, that moved up a little bit.
The orders should pick up in the Q4 and Q1. So we are looking forward to that.
And now as we start getting in the first rates, about 4 to 5 points up on the Nifty. It's already flashing a little bit of red.
We're going to clock a bit lower than what the number was at the beginning of the year in terms of FY25.
There could be a quarterly difference based on how the mix in our portfolio plays out.
The Nifty at this point of time managing to hold on to the 22,800 mark.
Shridham Desai of Morgan Stanley says that Q3 earnings growth was up sequentially, which was better than the subdued expectations.
How a function of these two, that is price to embedded value, reacted to that growth.
We feel we're well placed for what the world needs moving forward. So,
first task is to get back to the 100 aircraft airline that we were.
We have seen, the mid-caps underperform this afternoon. Nearly 2,200 stocks declining for just about 400 stocks, which are advancing.
All right, well, this is closing bell, and that was the day so far. Markets, of course, have recovered quite a bit from the day's low. And I mean, that bid is there, which is good to see. It's down about 20 points, I think, if I've got the prices right, 22,943. I'm Prashant, with me, my colleague Surabhi and Nigel. Guys, hi.
Hi, afternoon. I guess it's down, but not out.
Yeah.
Which is better than what we've had in the recent past, right?
I think, just looking at the screen, that in the near term, I think the bulls want to fight for the 22,700, 22,800. Maybe I'm talking too soon, but, that's the sense you're getting just looking at the screen. Even this morning, in the first hour, we were down, I think, close to around 100, 120, 130 points or thereabouts. And from there, it's shown some kind of recovery. Though the breadth of the market, more than what the index does, I would like a higher number of stocks to advance. For the time being, we're at around 450 stocks. Hopefully, by the time we wind up, that advanced decline ratio improves, because that's what makes portfolios feel good.
Absolutely. They say that, what are the 7 stages of grief, right? I think 7 stages of market.
Where are we now? Which stage?
I think we are maybe
stage 4,
5.5
5.
or 6, right?
Oh, that's good.
Somewhere close to disgust. And I think that's, but I don't know if that is, if typically sentiment that bad means that you're at some sort of a bottom. Should we read it like that? I mean, good enough for a bounce, but a durable bottom from where the market can sort of, maybe see some recovery and repair. I'm not really sure. But I mean, there is this one decent bounce which has got to come. I mean, otherwise it doesn't work like that. But 10, 15 points lower, 22,940 is where we are at on the Nifty. So it's a flattish kind of start. Look at the ABB India, and we'll talk more about the numbers. Were good numbers across the board for an MNC company to beat by some 20% across the board, and the stock being down 2%. And that kind of shows you the state of the market, and generally, that disdain or whatever you want to call it, that is out there, and that's starting to set in. So, I mean, most people just waiting, watching. Everyone is down. Everybody is down by varying degrees depending on what they bought, when they bought. So just, in a way, not everyone in the same boat. That will be wrong thing to say. But I think most people are have been feeling the pain quite severely. Look at market breadth, still 4:1 declines to advances ratio. 2,200 stocks are lower and about 570 stocks are higher. So the broader market, while the Nifty may be flat, the broader market is still seeing a fair bit of pressure. Surabhi.
Absolutely. I mean, we still have a fair amount of red on the mid-cap index, and that advanced decline chart is still quite negative. Can't take away from that. However, I will start with some of the positives. I mean, some of the green because there's so much of red. Midcap IT, actually even large cap IT. IT has been a bit of a safe haven today. There's been a small move towards stocks like LTI, Mindtree, 3.5% higher. Persistent is doing really well, about 5% up on Persistent as well. And of course, the large cap names are also managing to keep the balance on the Nifty. That's Persistent for you. Look at Tech Mahindra on the large cap screen, Wipro. These are some of the names. Coincidentally, Kamaljeet Saluja of Kotak Institutional Equities was with us in the morning, and he was actually outlining how some of these stocks, and if you put some of them for a balanced portfolio then it could actually work out. His large cap picks included Infosys, Tech Mahindra. Stock has done really well, and even the likes of Coforge. So he was saying that there is some growth potential here, and things are better off for this part of the market, and that's actually doing pretty okay. But after the gainers, you have to talk about a lot of the losers, and that's where the disappointment still is quite apparent. Zen Technologies, look at the stock. We'll talk about it as we go forward. It was down 20% yesterday. The numbers came in. We spoke with the management. They're promising to come back to margins of 35%. They're promising, for the growth trajectory to continue. 50% CAGR. Is the market convinced? Not at all. 10% down again on that stock. Rate gain, and these are some examples. Borosil, we spoke to a lot of these managements today. Borosil has been another result casualty, 8-9% gone from that stock. So it's still, hurting. There's no taking away from that. But I guess the market will just hope that, eventually this is the fag end of the fall. It's somewhere sort of, coming close to the end of this tunnel.
Maybe on the headline index, right? But maybe select stocks, there'll be more pain out there. And I think a couple of those names like Zen Tech as well as Senco, the problem is they went to the market and they raised money. And then you're giving these sort of numbers. A bit of a heads up would be helpful. That's why, look at Senco. Senco in today's trading section actually is bouncing back because yesterday they put out this clarification after having an interview with us here on CNBC-TV18 as well. They put it out to the investors, a Q&A, with regard to clearing out all the doubts. So I think that's one of the reasons that's up. But otherwise, look at the screen, a couple of stocks. Triveni Turbines, I think that stock has seen a hard knock in this year so far. In the last few minutes, I'm seeing decent volumes on that particular name. It's now moved to the high point of the day. So select stocks, well, after seeing a correction, I think Triveni Turbine, just pull up the last 1 month chart. I think it's down close to 20%, or year-to-date chart, it's down 20%. So some of these names they've corrected and now they're pulling back a little bit. So keep an eye out on that. Let's get Mitesh back onto the show. Hi, Mitesh. Good afternoon and good to see you win. Today, at least we didn't go down to those lows, right? 22,750 odd. We went to around 22,800. What are the odds that we bounce a couple of 100 points from here, Mitesh? Or do you think these bounces will be very, very good shorting opportunities?
Well, I think, good afternoon. We've repeatedly taken support around these levels, 22,800, 750 zone. I think today also, the morning low was close to 22,801. And the bounce backs are not very strong. So what I want is some kind of a strong reaction. Otherwise, in the next 2-3 days, I will presume that, we might actually be preparing for a breakdown. One, I think getting past 20,000, 20,000 is the first level. That's where the new intraday pivots are placed. And then once we do that, then I think we need to get a closing about 23,150. I think once these things happen, at least the immediate fear of declining or a downside move will be arrested, and then we can look at a bounce back. So till then, I think just wait it out. Let's see which way the market plays it itself, And on the stock side, I think you were highlighting technology stocks. In fact, Nifty IT is an index which is showing good reversal on the hourly chart. So it should be some IT names on the long side. So I have Tech Mahindra as a buy call. Keep a stop below 1680. Look for a target of around 1740. And the other one is Persistent Systems, which I would recommend buying. On a mild decline, let's say around the 5750, 5740 zones, buy with a stop below 5670 for a target of 5820.
Okay, all right. Mitesh, we come back to you in just a bit with more questions. Well, thanks for that for now. ABB India, actually, I was talking about how the numbers were good, but I saw a flash saying maybe the con call happened. I missed that. Yes. Commentary's been a little cautious. So let's get the lowdown from Vivek, who's standing by. Vivek, take it away.
Well, absolutely right. When you're talking about ABB India, it was a very strong quarter for the company. we did highlight the fact that the order inflow, we typically had a quarterly run rate in the range of 3,300 to 3,400 crore. This time around it had cooled off to close to 2,700 crore. So, that was something that the management explained, saying that, it was on account of a very high base, and the base quarter actually had a one-off large order as well. So even that is something that post all of the adjustments, the order inflow growth actually went up marginally by close to 4%. That is something that the street saw as a bit of a blip. But what's actually transpired in the conference call is the fact that the company has actually alluded to some moderation as far as the high EBITDA margins that they enjoy, and also some moderation in terms of the growth rate that the company had been enjoying, especially in the last 4 to 5 years. So moderation in order inflow, moderation in growth rates. Along with that, even when you're talking about the current order backlog, remember ABB India actually typically has short cycle orders in its order book. So the company has said that 65 to 70% of the existing backlog will be executed over this year itself, and the balance 30 to 35% will be executed over the next year. Now, along with that, what they have said is that the lower growth as far as the order inflow is concerned, they have gone ahead and accepted that, but they have said that this is largely transient in nature. It's not a structural slowdown as far as order inflow growth is concerned. They've also highlighted that there could be some moderation as far as growth is concerned before the next cycle of an uptick actually starts. So they're saying correction in the demand could probably span out over the next couple of years. As far as government capex is concerned, they're not directly exposed, but they said that they do supply to players who are directly exposed. So 30 to 45% is the kind of exposure that they have over there. Moderation in commentary, moderation in growth rate, moderation in EBITDA margin, something that they've alluded to, and this is something that has led to a bit of a sell-off from the highs that we saw today.
No, not just from today, from the top as well, I guess. I was just looking at it, Vivek, about 40 to 42% down from the peak ABB. Sorry, throwing an out-of-syllabus question to you just like that. But from the highs of almost 100 times forward PE, now I guess valuations would have come down to what, 60, 70 times for ABB?
Absolutely right. And, when you're talking about ABB India, also have to keep into context a whole host of other, capital goods companies as well. So not just ABB, look at Siemens, look at Cummins, look at L&T. All of these companies have actually seen multiples moderate quite significantly. A little bit of a concern in terms of domestic capex, not revving up as expected, and that is something that a lot of them have alluded to. Even when it comes to Siemens, they also said that one particular segment, process automation, etc., is not growing as they expected, and ABB too is actually one of the companies that's been impacted by that. But overall, especially in the last 4 to 5 years, management, was at pains to explain that they were very high growth years, so they are now on a higher base, and growth to go ahead and actually continue at that pace could be a little tough.
Okay, all right, got it. Thanks very much for that, Vivek. Thanks for the perspective there. So ABB not quite firing up the street today. Let's take the conversation ahead. We have Deepak Shenoy, founder of Capital Mind, joining in. Deepak, hi, good afternoon. Great to have you on. So tell us, what have you been doing in this big market fall? Have you been buying, staying on the sidelines, what? And throwing a word on a stock like ABB, I mean, it's got everything going against it. Now there's slightly muted management commentary. Anyway, there was this whole worry about whether the government of India's capex will be as strong as it has been last 2-3 years. So, all the noises are on the negative side. Your views?
Yeah, things seem to have changed quite a bit in terms of narratives in the last two months. But generally, if you look at the market results, and most of the results are out now, in general, we haven't done too badly. Our portfolio average growth is now at about 18 or 19% in terms of net profits. Even the Nifty is done reasonably. I think it's still at about 10% odd, and we're looking at median numbers. We're looking at even mid and small caps delivering decent returns. Of course, you could question valuations, but I think there are lots of individual companies where valuations are at a much more affordable level. We are constantly on a rebalancing portfolios. So sometimes when we find alternatives that are better, we will move from one stock to the other. We have some cash now because of this process of rebalancing. In some of our momentum portfolios, which typically follow price action, naturally cash levels are higher simply because there isn't enough momentum in the market or even enough price action in the market to justify 100% allocation. But that's by nature and that's by design. Even in past falls, we have seen very high cash levels as well. So I think at this point, if you're a fundamental long-term investor, this gives you more room potential to pick up stocks if you've had cash or rebalance your stocks to more alternative positions that may have been unaffordable earlier, are probably more useful to get into now, including in the large caps, in the financial space, which has traditionally been a little bit overvalued, but now is probably the most undervalued of them all. So it gives you opportunities there. And, even within the other spaces where people are talking of 10, 20, 30% falls, sometimes the stocks are still expensive. So they're not come to a position where they are worth buying. But in other cases, in sectors like even in defense and even in manufacturing, I think some stocks have come to very reasonable levels. So we are in the process of, this is the time to work.
Give us the names. So Deepak, give us some names. Whether it's capital goods, MNCs, defense, that's the biggest question. Where is value emerging with some prospects of growth? That's exactly what everybody wants to know now.
Yeah, so to give you an example, if you look at the credit situation in the market, most of the fears around unsecured loans have gone away. And I think market is going to price people who companies that give unsecured loans in a better way going forward, and we're going to see this when RBI loosen up on that in terms of growth, because it's fallen to like single digits or close to single digits now. One of the stocks we own, and we've started to own it very recently, is Bajaj Finance, where we're saying that, okay, it's had its period of consolidation. It's probably going to outperform its peers simply because it has better capital management strategies, better ability to manage its liabilities, and potentially growth comes back in the sector. And it's probably going to benefit from this growth meaningfully compared to even some of the private sector banks in the space, and perhaps compared to most other NBFCs as well. So it's a large cap, but that's where it is. There's Bharti Airtel, which showed a pretty interesting result this time. Of course, there was a one-timer, but even if you discount the one-timer, there were pretty decent results. And I feel going forward, the problems with Vodafone are going to become more and more evident, and more flow is going to move to Bharti and Jio. I think now more Bharti than Jio, because what's left in Vodafone are mostly the corporate-ish kind of customers, which will have a natural flow to Airtel. So there is that naturally flows. And then, of course, you got consumption, even hospitals. Hospitals seem to be doing, we have Narayana, and that's been doing okay. It's not been doing badly, which is nowadays considered, the most bullish thing of all.
Okay, all right. Thanks a lot, Deepak. Good to hear a couple of names coming in from you. But let's get your view on rate gain as well. But first up, let's get in Upasana. The stock is under some pressure. They've cut their guidance for the second time in this fiscal. The street doesn't like it. Upasana, fill us in with some details there.
Certainly, Nigel. The stock is down 17% in the last 2 days. It's down for the 8th day in a row. Now, company held a conference call, and here are some of the important highlights wherein company has cut its revenue growth guidance to 12 to 13% versus 15% earlier. Remember, this is the second cut in revenue guidance for FY25, which was earlier guided around 20%. Now, company is expecting a single-digit revenue growth in Q4. This is due to delay in signing of certain deals, is what the company has highlighted. And it says that the company has experienced delays in decision-making in some markets due to various factors, such as significant increase in deal sizing, also coupled with delay, which is due to strategic structuring and cautious spending, particularly in US and European market. And company has also shared its outlook on the margins. It says that the Q3 margins of 22% will not be a base margin going forward when asked upon it. And it says in the short term, some compromise can be expected on the margins, but in the long term, it is confident of achieving 20 to 25% margins as the company will scale its business to 2,000 crore plus revenues, is what the company has indicated.
Sorry, profit growth, Upasana, what are they saying for, the guidance that they put out? Sort of earnings growth, what are they saying? 10 to 12%?
10 to 12%, yeah.
10 to 12%. So basically they did 145 crores in sort of net profits. I was just looking at, used to trade at 50-60 times earnings, but growth also for something like a rate gain used to be, I remember their stated guidance for a couple of years used to be 60%, along with, but that was including acquisitions, etc. The company also raised money through a QIP about a year back, but the money is still with the company. It was raised to make an acquisition, but there's no acquisition in sight. So now, assuming a 15% growth on top of the 24 numbers, On a FY25 basis, it's trading at about 35 times earnings. It's 5,900 crore in terms of market cap now. Deepak, any thoughts? Rate gain, if you've owned it, you've studied it, any thoughts?
No, we own it, so we have seen the difference. I think still interested in it in more longer term. In the short term, I think there is going to be pain. Like they said, the margins are likely to contract, but they have grown more than 60% in the last 9 months. So the first 9 months of the year, they've already done 154 odd crores in net profit. I think growing that, now their earnings, I mean, the trailing 12-month P is about 29 times even at today's prices. This would be okay if they were growing much further. Of course, short-term growth, I think, will suffer largely because of all the issues that are happening with world trade and, the uncertainty with respect to what is happening with tariffs. Obviously, all of the plans that any corporate abroad may have will get derailed to a point where clarity emerges on tariffs. So I think if you're a shareholder, your options are to either wait out this time or lower your position size to a point where the pain may not be as much in terms. So for us, it's more comfortable at a position level. But if it was too high a percentage of your portfolio, you might want to bring it down to a point where some of the visibility comes back, at least to management more than to us. But also that this uncertainty around effectively what people will invest in terms of world transport, travel and transportation in general will give them more visibility into revenues. I don't currently see this as a long-term problem, but I think in the short term you will have to face more pain. Stock's already down, I think 40 or 50%, more than around 40% from the top. So it's already seeing that pain.
Okay. All right. Got it, Deepak. Let's focus on another stock, Zen Technologies. I'm looking at a Nuvama note which has just come in. They maintain a buy rating on the stock, but their target price now they've kept it at 1,650 from around 2,200 earlier. The stock, though, continues to reel under pressure. Upasana, tell us more about this one. The numbers were disappointing. We had the management earlier today as well. Tell us more.
Well, the stock has now lost 60% of its value since Jan this year. Now, the stock is down 30% in the last 2 days after its Q3 results. Now, company's growth lowered this quarter as compared to past other quarters' performance and missed the street estimates. Now, promoter holder in the company also slipped down below 50% in the December quarter. This was mainly due to equity dilution of 1,000 crore QIP launched last year, mainly on account of acquisitions and working capital needs of the company. We spoke to the management earlier this morning, and here are some of the important details. Now, company says it has no plans to buy shares from open market, and it also sticks to its FY25 guidance of 900 crore revenue and 35% EBITDA margin. It has also guided that top line will be growing at 50% CAGR for the next 3 years, and margins of the company, which was the main concern, were down about 1,400 basis points. This was mainly impacted due to change in the product mix. Also, companies emphasized that 800 crore orders will be finalized by Q1 FY26. Listen in.
The dilution has been mostly done because of the QIP that we did. We did sell, we did sell 4% of our stake, on 2 occasions. But the dilution has mostly been because we raised the money for acquisitions and working capital needs. I don't think we will be entering the market to buy it. Because the intention was not to trade sell high and buy low. The intention was we wanted to have some money on the table. With respect to by 27, I think it should at least double. The revenue should at least double for ARI. That's our expectation. And margin, I think it should get to the margin of 35 EBITDA and 25 net. Even though now it's around 13-14%, we expect that to ramp up, especially when we go with our value addition. We have been saying that there will be a CAGR of 50% over the next 3 years, average CAGR of 50%. So depending on the inflows of the order in Q4 and Q1, we will be able to actually predict what will be the top line on for Zen in 26. But we expect a law, even if it is muted, we expect that the 27 and 28 will more than make up the gap in terms of absolute number that we are planning to achieve. I would say, the pipeline, we say whenever the fund allocation happens, etc., we think by the first quarter, almost about 800 crores worth of orders would have been decided.
Okay, all right. So that was the management. Deepak, what do you make of this one? The numbers are disappointing. The street is a little bit skittish with regard to whether they'll achieve it, their 900 crore target. But the problem is the management is saying the near term, those orders are not really coming in, but they're optimistic that in future they'll continue to grow at 50%. For the time being, the street doesn't like it at all. 20% down yesterday, 10% down today. To be fair, intraday there was a bit of a recovery, but then that got sold into. What would you do with the stock? This is the same company that raised money at around 1,600 crores via the QIP route.
Yes, in fact, I think we own the stock, so we have a small percentage in our fundamental portfolio as a tracking position. But it's interesting because this is where you have a no debt company, relatively with 1,000 crores in cash, about 8,000 crores in market cap, so 7,000 crores is what you're paying for the core business. That core business seems to be growing quite reasonably well, although they've guided for 50%. They've grown 44% revenues. They've grown a reasonable in profits as well. There is some investment that is happening in terms of growth, in terms of acquisitions, some of which they have demonstrated. We know that government spending is poor because even now the government has a 1,40,000 crore balance sitting with the RBI, which is not spent. These balances usually happen after the March quarter advance tax numbers. Nowadays, it's happening, 1 month before, which means that the liquidity situation is where the government isn't spending much at all. It may be there is a considerable amount of expense that is going to happen next year anyway. It's part of the budget. But what they have planned for this budget has also not been fully allocated. So I think to that extent, the government orders should continue to flow in. Maybe there is some pausing in spending for multiple reasons. They've talked a little bit about how the government is looking for more indigenous supply rather than anything with foreign components also, and therefore scrutiny is increased. But let's assume that that is just a management defense. But either ways, I believe the spending will come in the next 2 years. Their numbers are relatively small compared to the overall spend of 1.5-2 lakh crores per year that the government will do just on capex. And I think long term, you will still find that this company should do well going forward. I don't believe that in the short term. I mean, the disappointments and the valuations were high enough for, I think, the stock to get beaten up quite a bit. Provides an opportunity to look if you have a 3-year horizon. But nowadays, nobody wants to look at the opportunities. It's just like how much more will it fall? It's a good time to be silently kind of going about your business and looking at it objectively rather than to just say that everything is going to, hell in a handbasket. So I think, there is potential here.
Okay, there is potential. Deepak, thank you very much for joining us. It's a pleasure, and hopefully next time we chat, maybe we get a bit of we get some green on the screen, right? And maybe fleeting, but corrections in small doses is better than one large non-stop slide that we've had for a while now. So thanks very much once again. Thank you. Well, we'll take a quick commercial break here. Barun Goyal, Senior Fund Manager, Equity at Mirai Asset Investment Managers, will be joining us on the other side. Stay tuned.
Up to about 1,499 rupees or 1,500 rupees for a premium ad-free plan that allows you to access 4 devices. And what does Jio Hotstar now entail in its new avatar? Well, everything that both apps used to individually offer is now under one umbrella. Now, Jio Hotstar will also aggregate the libraries of NBC Universal Peacock, Warner Bros, Discovery, HBO and Paramount as well. Now, it also plans to double the South Indian content to about 1100 hours, taking on what has been the USP of platforms like Prime Video or ZEE5. But the biggest draw for Jio Hotstar will be sporting events. Now, the new entity holds rights to all the sporting events that Jio and Disney Plus Hotstar held individually. So that's IPL, ICC events, English Premier League and Wimbledon are all covered. Now, the company has also plans to widen its offerings to bring more sporting events under its umbrella. Does this now mean that then you'll have to pay for IPL? Maybe not, because the company says that some content will be available for free every day. But whether this includes IPL or not, that we don't know yet. Now, what will be interesting to see is what this means for the OTT landscape in India. With nearly 36 million paid users, Hotstar was already the market leader here. And it was followed by Prime Video, Netflix and then Apple TV+. Now, the merged app will actually have about 52 million paid subscribers to start with. And this could shoot up once the IPL starts in a month's time.
We are actually using AI to tackle AI. It has to be like that. We've actually used a lot of AI for a very long time now. We always had models where we could detect that this number is likely to be a spammer, or this message sender is likely to be a spammer. Those were some of the basics that we did a long time ago. We're now looking at AI almost across the business, not only protecting consumers and improving consumers' communication, but also from a business point of view, from our biggest revenue stream is advertising. How can we help brands leverage AI on our platform and get better bang for their buck? We've invested very heavily on various parts of our business, even operationally. We're using AI on customer support, for example. Even our legal team is looking at AI products. Our developers looking at AI products. So AI is very deep into.
Okay, welcome back. Varun Goyal is now joining our Senior Fund Manager, Equity at Mirae Asset Investment Managers. Varun, good to have you with us here. Thank you for your time. Good to have you back in the program. So tell us a little bit about what you guys at Mirae are doing, and how are you navigating this very sharp fall that we've seen. I mean, I was looking since the beginning of this month, the mid and small cap indices are down themselves 10% each, just this month. And of course, stocks are down 20, 30, 40%. When we say Nifty is at almost 23,000, if you look at some mid caps, the appropriate level would be, I don't know, 20,000 Nifty, because it doesn't show the pain that we've seen in broader markets. So what are you guys doing?
Yeah, good afternoon, Prashant. Thank you so much for having me on the show. I think if we look at the broader markets, a lot of froth is getting cleaned up. There were certain sectors like capex-oriented sectors, railways, defense, some of the PSU names which had moved up quite a bit in the last 2 to 3 years. We are seeing a fair bit of correction, and there's some pockets of froth in the small and the mid cap space, which is getting corrected now. Our sense is the economy as such will start seeing a cyclical uptick come April. We would have completed 4 quarters of slowdown, and by coupled with what the government has done in the budget and the RBI policy, and the cooling off in valuations, I think it looks a much better environment for investing going forward. And our sense is, a large part of the pain may be behind us. We have to look at stocks from a bottom-up perspective. There are ample opportunities for bottom-up stock picking, and we believe that as the growth picks up, we would see much better earnings scenario in FY26 as compared to what we saw in FY25. So our sense is, we would see almost 11-12% kind of earnings growth in Nifty in FY26 as compared to almost 2-3% kind of growth that we've seen in FY25, and that should lead to better performance from the market as a whole.
Okay, hi Varun, good afternoon, good to see you. And Varun, with regard to the headline index first, what is your take? We went through a period of, say, exuberance. The Nifty went up. It's pulled back a goodish bit right now, and at least the reading on ground is things are improving. We have got those rate cuts, you got the consumption boost, you got liquidity that's coming in there from the RBI via the swaps, via the OMOs as well. So do you think that at least on the Nifty, bulk of the correction is in the price? Would you think so?
Well, if you look at the valuations, Nigel, so I think we take 1,200 rupees of EPS for Nifty for FY26. We're trading at around 19 and a half times. If you look at the 10-year average, it's around 17, 18 times. So maybe you are 5% more expensive than the historical average. The markets may or may not correct. I think we could see a time correction. We could see a 5% kind of price correction, but there is not much to lose, I think, as far as Nifty is concerned. So broadly, our view is that as earnings growth come back, market should stabilize. Of course, things have become a little more expensive as far as the small and the mid-cap space is concerned, and certain cyclical sectors, and there the correction has been much deeper. And there also we see quite a few pockets of value are beginning to emerge.
Your top, the sector that you like the most, I think, is tech.
Yeah,
one of your top sectors. Yeah, Varun, go ahead.
So our view is that with the very sharp rupee depreciation, all the exporters, be it pharma, be it IT, be it chemicals, all of them will benefit. And we are anyway seeing, as far as the IT sector is concerned, the demand in North America, especially the BFSI space, is extremely strong. And considering that North American BFSI is 1/3 of the revenues of most Tier 1 Indian IT companies, we believe the environment is only getting better. And I think rupee will definitely cushion the margins. In fact, most companies should see better margins than what this one FY25. So outlook on IT is definitely good. I think pharma, again, we're seeing a fairly good growth as far as domestic market is concerned. And both the CRAMS opportunity and the US generic opportunity continues to be extremely strong. Notwithstanding the concerns about US Biosecure Act and other things. I think there is a true business case which will find its own ground going forward. So we remain quite constructive on some of these export-oriented sectors. Other than that, of course, banking remains the cheapest part of the market, and I think valuations seem fairly reasonable. Our sense is we may have seen the worst as far as margins are concerned, and this year onwards, we should see a healthy double-digit earnings growth for most banks.
So from the banking pack, I think private banks is what you like.
So I think both public and private, I think looks like credit growth will be 10-12%, and most Tier 1 banks will do well.
Okay, all right. I was looking at the RBI data. I think a couple of months ago, you had that blip where the credit growth dipped below the 12% odd mark, and now I think it's back at that 12% odd mark. So that's good. And just a quick question on tech. You like large tech, or do you think some of these mid-cap IT stocks, they've come to levels that you like because they have been more expensive than the large cap names? But given the current market setup, what's your preference?
Well, we continue to like Tier 1 IT names. I think the mid and the small cap space also, wherever there is comfort on earnings growth, I think some of these mid and small IT companies can grow much faster than the large cap players. So as such, we expect they will continue to do well.
Okay. So large cap IT, some big banks, got that, Varun. But Varun, what about mid caps? I think that is the trickier question. Buying, good large caps is, they're all season plays, right? May not work in 1 year, year two. At least you can sleep peacefully on most of those stocks. What is the approach that you're taking to the mid-cap market? Have you been sort of buying in the fall? Have you been, churning positions? And what's the advice to investors? Where do you now find reasonable safety and good value emerging within some of the mid-cap sectors?
So, Sophie, I've been in the markets for almost 18 years. And every 4 or 5 years, you see a shakeout, and this time is no different. So I think if you look at the small cap as a space, we have seen a 24-25% correction from the top. I think mid cap may be more like 15 to 18%. So I think a very large part of froth has been cleaned up. I think there are definitely pockets of value emerging across the space. If you look at some of the cyclical sectors, be it capex related stories, be it some of the defense stories, if you see real estate, which has done incredibly well. So a lot of these high beta sectors, which kind of moved very fast, very hard in the last 2-3 years, they've also seen the worst kind of correction, and they definitely select pockets of value emerging in some of these spaces. I think again, as far as IT, pharma, wherever we are seeing correction, we are looking at those opportunities. So I think calendar year 25 is a great year for stock pickers as far as the small and the mid cap space is concerned. I don't know how much returns you will make this year, but if you construct a good quality portfolio in the small and the mid cap space for this year, I believe that will lay the foundation for good compounding for the next 3, 4, 5 years.
Problem is people are already invested, right? So that's always the problem. I mean, when it's the right time to buy, you're out of funds, or maybe you can't do because you're already invested. And I think this boom has been so large that even sophisticated investors, I think, are feeling that crunch, because people are invested not just in listed stocks. I mean, the boom in unlisted, the boom in SME, and those are relatively illiquid spaces. So, and I think that is one of the reasons why there is very little bounce which is coming. The market just sort of drifting lower at about 22,950. But that point is well taken, that those who created cash early, now's the time to then slowly start to build a good quality, reasonably priced portfolio, which of course was a hard thing to do over the last couple of years or so. Just maybe a couple of more names before we go any further. So, Zen Tech, of course, we mentioned. Look at something like a Goldium International, right? I mean, again, much fancied name. Stock got to almost, I think, 600 rupee levels. Stock's at about 362 now. Look at Swan Energy, huge volumes. Swan is now at about 400 bucks. Stock was at about 800 rupees, not very far back. Look at RateGain, of course, I think we mentioned. EMS Limited is another one. Stock's at about 620 EMS. Again, I mean, had a bit of a one-way kind of a move sometime back. High was about 1,000 plus. All Cargo Logistics has come off very, very sharply, and that's the other one. Nelco is down to about 791, and here the high was about 1,500 rupees. So you just have to look, and stocks are down easy 30-40% in many cases at this point in time. I must point out the market, the Nifty did come back into the green a little bit, and market breadth has also improved a little bit. So we're done, it's about under 3:1 in terms of declines to advances. Survey.
I just wanted to go back to Varun, because I did pull up the small cap fact sheet for Mirai, and Varun, among the other funds that he manages, is also one of the funds that he looks at. And Varun, I was looking at the top 10 holdings. So you do have some of the capital market plays like MCX, you have CAMS. Then from the defense space, there is Bharat Electronics in the portfolio, PSU in defense. And I want to take up these two segments particularly because obviously there's a maximum amount of flutter around these two places. Capital markets for obvious reasons, and defense because the narrative has suddenly turned completely. I'm not sure if you've pruned your positions in these kind of stocks in these segments, or whether you're willing to keep the faith and ride this out. If you could just briefly explain.
So we just raised our small cap fund. In fact, we are in the process of portfolio construction, and it so happens that with a very large drawdown that we're seeing in the small cap space, I think it is giving us a lot of opportunities to pick and choose, especially in some of the spaces where we believe earnings growth will sustain, while the valuations may have pulled out very materially. So I think as far as the financial savings as a theme, we believe is a multi-decadal theme. We will continue to see various companies in this theme, whether it's AMCs, whether it's wealth management companies, whether it's depositories, exchanges. We believe there is a fairly long runway for growth as savings shift from physical to financial, and various market participants will continue to benefit out of that. While there might be a blip of a few quarters because of market sentiments, but broadly the trajectory continues to be in place. Similarly, for some of these capex sectors, be it defense, be it railways, wherever there is visibility on earnings growth, where there is a large order book, we believe as and when the valuations are attractive, we would like to buy, and we hope that we should see sustained earnings growth over a longer period of time.
And interesting time. I'm glad you brought this up. It slipped my mind as well. Correct. I mean, Mirai is you never had a small cap fund as a house for the longest time. It's only in the last 1 month that you folks decided to open up a small cap bouquet as well. So very, very interesting times, and maybe, as you're saying, getting an opportunity to pick stocks at much, much better valuations as well. All right, Varun, thanks very much. Good conversation as always. Look forward to more in the future. Right now, we have to move to our special segment, D Street Chatter. Nimesh, as always, joining in with insights from the sidelines of the conference, where he has been camped out pretty much, getting all the buzz and the chatter. Nimesh, so what's the mood like? The market stabilized at least a little bit between yesterday and today?
Well, simply enough, from a mood point of view, I'll tell you the mood is very, very bad. I spoke to so many fund managers and investors here, and everybody seems to be creeping about the fact that there's so much of panic and so much of damage in the broader market stocks in the last couple of weeks. And also, mood clearly is very, very somber. But from a market perspective, we've seen a good recovery again in intraday today. I guess 22,800 is getting respected again in today's market. So that's a very crucial level to watch out for. But I guess this pullback is also backed by some bit of institutional buying. I've been saying for the last couple of days that there is some signs of nibbling in the broader market names by institutions. So that continues even in today's market. And for a change, there is a MOC basket buying at a leading FI desk. So that's something to watch out for. But again, today's FI number will look a bit skewed, largely because of the large Bharti block. Remember, only 25% of that block was bought by Bharti Telecom. The rest was bought by institutions. So both FI and DI number may look big because of that Bharti block in today's trade. In terms of activity, from a sector point of view, as I broadly said about broader markets, there is a bit of buying interest. On the sell side, there is a lot of pain still in the mid cap, small cap, especially the small cap and the micro cap names. And within the large cap stocks, there is a bit of selling again in the PSU basket. So that's one space which stood out in terms of the sell side. But I guess today's recovery is largely because of FI buying, and there is a MOC basket as well towards the last 30 minutes of trade.
Okay, all right, valid. So when the institutional numbers come later today, we need to keep that in mind, that big Bharti number that things look lopsided. But Nimesh, tell us individual stocks, what are you picking up?
Well, so in terms of individual names, the first stock is Grasim. After a long time, some bit of interest seems to be back in that particular name. So there is delivery-based buying in Grasim in today's state. Some large FIs seems to be quite interested in that name. So that's the first stock. The second stock is Asian Paints. This is interesting. For a very long time, that stock has really underperformed. There has been massive selling as well. Now I'm getting a sense that maybe that large selling from a global fund seems to be largely getting over in Asian Paints. So that's a flow that need to track in Asian Paints there. The third is a couple of stocks where this FI selling. Kotak Mahindra Bank stands out. Despite such a good, positive commentary and the RBI, lifting the ban, still there is selling in Kotak Bank. So that stands out. And IRB Infra is the other name where there is aggressive selling from larger FIs. So both these names on the sell side, so expect high deliveries there. And the last is Aarti Pharma. Weak market, that stock has been buzzing off late. In fact, the stock is at 52-week high. Stock was up 10% yesterday. Even today, the stock is buzzing in trade. I understand for the last couple of days, a leading family office has been an active buyer, and hence you're seeing that outperformance in Aarti Pharma.
Okay, all right, Nimesh, thanks a lot for giving us, all those cues. By the way, keep an eye out on Vedanta. The stocks move to the high point of the day. There will be that creditors meeting later today, and it moves in the direction of the demerger that was announced, a year or so ago. So they've already said that by the first quarter of next fiscal, that's when the demerger will actually take place. And for today, there is that creditors meeting. So that's where the street is bidding up the stock. It's seen a sharp correction from the peak. So that one's low. And you have Reliance Infra that's popped up in trade because they're looking at moving into solar as well as renewable energy manufacturing. So that explains why that stock from the lows of the day has seen a bit of a recovery. Well, we'll slip into a short break. Come back. We'll get you some technical trading calls. Don't go anywhere.
And pretty significant investments are being made into AI.
Let's double down on India and your focus here on India. How do you see this market evolving? How do you see this market growing for you? What are the opportunities that you want to build on, considering the fact that the lion's share of your revenue comes from the market? I mean, do you believe you've hit saturation here in India?
So India, firstly, is our most exciting market. I think globally, for a lot of companies globally, India is the most exciting market, right? It is for us as well. Our biggest investments in the last, I would say, 6 or 7 years have been in India. We actually have more engineers in India than we have in our head office in Stockholm now. We build in India and we ship globally. A very large chunk of our product is shipped globally out of India as well. India continues to grow very, very rapidly. The entire stack that is available to an Indian citizen now to conduct business digitally has made the mobile phone number even more important than it used to be. And that's where we believe our relevance continues to grow in India. We haven't reached saturation at all. We are fortunate to have a large user base in India. I think we crossed 350 million users in India, but we still have a huge space.
informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown.
Welcome back. Well, just keep an eye out on Deepak Nitrite. That's a stock that I'm looking at. I think there's some open interest shedding out there. So that could be one of the possible names that, come out of the F&O ban. So we'll keep an eye out on this stock. It's got pummeled in the last 1 month or so. But that one, I think, should be on your radar. One of the probable names that come out of the F&O ban. Mitesh is back with us, though. Mitesh, tell us, what are your trades?
Wipro is something, which has come on my radar. That's a BTST. Keep a stop below 310 odd levels and look for a target of around 320 over here. And the other name on the list is STBT call, which I would recommend on the charts of AU Finance Bank. STBT here with a stop at 506 for targets of 495.
Okay, all right. Thanks a lot for that, Mitesh. For the time being, we slip into a short break. On the other side, Jay Bala is waiting for us. We'll wait to hear from him with regard to what's the outlook on the Nifty Bank as well as individual stocks. Stay with us.
Very good. One of those massive words today.
So much longer, much more. 2025 is like a very one time. Let's talk about Canva's startup story.
220 million people that use Canva as a product as well. They launched with 5 languages in 2016. They then ratcheted that up to 100 languages in 2017, including Hindi, Tamil. I think India could be huge. So it's our 4th biggest market at the moment. I think it could reach the #1 position, very soon. We've been able to move large parts of the company towards thinking in an AI-first manner.
Interesting.
24 million subscribers now. So,
breaking news. The last few years have really been about the shiny objects, and 2025 is probably going to be much more about real use cases.
We've now matured our ML and our AI teams to adapt to this new technology, and we've pivoted every product team inside Canva now to think AI first.
And ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC TV 18 and CNBC-TV18.com. CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhan.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
China was very cheap and on the margins, especially with the DeepSeek. I think this has really rekindled hope. And by the way, their Xi Jinping is meeting the corporate investors and business people as well. So I think this is kind of bringing back the hopes that China may not be as against the capitalism as earlier thought out to be, right? So I think all this combined, plus I think, Indian market was good, fairly valued, good story, but there's no surprise there. There's no big trigger. It's good, but not for the time being, right? So if you're invested, that's fine, but otherwise there might be short-term money might be chasing, China for the time being, right? And US, by the way, right? So there's no, I mean, it's a popular trade. It's I don't know whether it'll be right or wrong, but currently the trade is go long US, long China. Second is the credit growth in India. It has come to 11-12%. If RBI is able to just manage this economy in the manner that monetary policy and fiscal policy work in tandem, and the credit growth comes back to 15 to 18%, that's a thing to watch. I have always maintained a positive stance on India. It is just on the margins, where do you go under?
Okay, all right. Welcome back. As promised, Jay Bala of Cash the Kiosk joins in on the show. Hi, Jay. How are you feeling, Jay? What do you make of this? A little bit of a bounce. Everyone, the bulls are saying we're getting bounced. We have made quadruple lows. You don't think so? I guess you believe it's a good shorting opportunity. Okay, so tell us, what are the levels you're looking at on the down and on the upside?
Hi, Nigel. Good to be here. And they're not that wrong. In December, I pointed out two time pivots for the markets. One was January 24th, another one was February 18th. The January bottom was on Jan 27th, one trading day after Jan 24th. And we got a low on February 17th to balance that one day of January. We got probably one day ahead at 22,724. So there is a good possibility that if the markets can hold the low registered yesterday, it can see a sizable rally, probably into the 24,000 if the bulls can pull their acts together. But it's very important that the market doesn't break February 17th low of 22,724 for the next 2 days. If it does, it can expand lower. If it doesn't, it can expand higher to somewhere close to 24,000. Even there's a possibility of 24,500. But in the higher time frame, looking at the broader markets, this looks like a counter trend bounce.
Jay, I mean, that's been a while since you have to join the channel on a Tuesday and said that we can put, if we protect the lower levels, maybe we rally another 3.5–4%. I think that's the most bullish I've heard you, in the last many months. So I think the bulls will be cheering for you. Okay, but they'll be wondering, what about the small cap index? Because that's got a hard knock. If the Nifty can protect lower levels and maybe bounce a little bit, what about the small cap index? Where is that one headed?
Yeah, I think the small cap index has a potential to rally somewhere into the 17,000s from current levels. So 17,200, even 17,500. But I know the damage has already been done in the medium to long-term charts. We'll come to that on some of the day when there is bullish possibilities. We'll discuss that. So as long as today's low or yesterday's low is protected, if the small cap index can finish in the green tomorrow, I think there's a good rally potential to about 17,200. But portfolio holders must note that that might be an opportunity to exit longs for the medium to long term. But we'll evaluate as the market unravels.
We'll see that later, Jay. If you're saying that from these levels, the small cap index can bounce 10%, the bulls will be very, very happy. I'll tell you, 10% is from around 15,200 all the way to around 17,000. Let's get to a couple of stocks then. I believe you've got a call on Thermax as well as on Coforge. And you seem to be in a bullish mood because there are two buy calls you have got for us. Tell us more.
It's the market, Nigel. I'm just a slave to the market. I just follow what the market is saying or whatever the interpretation I'm making out of it. So Thermax, it's had quite a bit of negative run from July, but the price structure says that there is a potential that a recent low is likely to hold. So as long as the stock can hold about 3,100, you can see about 15 to 20% rise from current levels. But for both the picks, stay in the shallow end of the pool. Keep it experimentative longs, not as a head-on bullish signal. The other one is Coforge. Today Persistent is doing quite well. So if Coforge can hold close above 8,100, I think the low of 7,500 registered a couple of sessions ago, that's likely to hold. If not an attempt at the all-time high, probably somewhere between the 10,000 mark and current levels. That's the potential for Coforge.
Okay, what about the dollar index? Jay, if I have to look at some positives in the recent past, one has been that the dollar index cooled off from around that 110 to around that sub 107 odd mark. Lawrence Blanco earlier today was talking about, in his note, he says 104.7 is important. If it breaks that, we can see lower levels. Where do you think it's headed?
Absolutely. 104.8 is my level. So, we are in sync there. And before Trump's inauguration, I had pointed out that the dollar index and the US 10-year yields are likely to cool off, and that's playing out. But contrary to many eliticians, including Lawrence, I'm seeing this as a bullish potential, a bullish correction for the dollar index. But I will drop that bullishness if the dollar index were to exceed 103, not an exact number, slightly around that number. But I see the dollar index heading to 114 in the short term, by 2026 to 126. That's been my call for quite some time now. But it's absolutely important what it does between here and 104 and 4.8. So watch the dollar index quite closely.
All right, Jay, stay with us. What we're going to do is we'll just come back, but that's very useful and it's an interesting conversation.
I think multiple Tuesdays, though just in the near term.
Just in the near term. I mean, that's the point, right? Small cap, for example, is saying a bounce. But that's an opportunity to exit is essentially what Jay's view is. And of course, similarly for the Nifty, etc. as well. So we'll see if that bounce is going to come. But as he said, next couple of days or next few weeks are going to be important. Nifty 22,920. We'll leave about 35 points lower, about 100 points off the day's low. Nifty Bank will end, I think, about 300 points, less than 300 points off the day's lowest point. Mid-cap and small-cap indices, of course, the small-cap index, no real respite, about 2% lower. Mid-cap down 0.4. Market breadth, of course, quite negative as well. The gains really today stood out in names like NTPC, Tech Mahindra and Wipro. Actually, these were the only three names on the Nifty with gains in excess of 2%. And of course, on the downside, you had names like IndusInd Bank, which was the top loser. There was Trent and Bharat Electronics, which were down between 1.8 and 2.5%.
Yeah, the pain is now all about the small cap market. And you look at names like Mahindra Logistics, smaller names, VST Tillers and Tractors. It's the smaller stocks that are still feeling the pinch. Nelco, by the way, is down 9.5%. Nitin Spinners, a lot of these smaller names have had cuts between 8-9% today. And then, of course, the stocks that you've heard us talking about through the course of the day, which is Zen Technologies, rate gain, about 9 to 10% down on these stocks. Small caps still hurting, but the larger mid caps have started seeing some bottom fishing. Look at GSK Pharma, the stock's ending 12% higher. Thermax 6% higher. Persistent 4.5% higher. Gillette has had such a good day today, 8% up on Gillette. So there is some bottom fishing that has started, but it's restricted to the larger mid caps, more well-tracked names. Overall, the Nifty ends flat at around the 22,945 mark. Well, that's where the team of Closing Bell will take your leave, but don't go anywhere because Prashant and I stay on. We get you a wrap of the day's action in Markets Forward right after this break.
That's what the world does. If $100 start from US, 80, 70 go to US, 20 go to Europe, 10 go to emerging markets. Within this 10, about 2 comes to India. That's the 20% allocation. So about 1 trillion, about 20 billion goes to India. That is the long-term equation. That is how the numbers stand.
The Bazaar one that's playing.
Markets saw some recovery in the last hour of trade while Nifty defended the levels above 22,900. Sensex closed near the 75,900 levels.
ABB shares trade in red despite strong fourth quarter numbers. Net profit soars 56%. The company reports highest revenue in the last 5 years. Also declares a dividend of 33 rupees and 50 paise per share.
Shares of Bharti Airtel slipped in trade. This after promoter entity offloads 0.8% stake in the company worth nearly 8,500 crore rupees. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we wrap up the day, of course, but also look ahead and prepare you for what's coming next. Well, I hope what comes next is a bit of a bounce. Today was a better day, relatively speaking. I'm Prashant. With me, my colleague Surabhi. Surabhi, hi.
Hi, Prashant. Absolutely. After those deep gashes and what looked like a bottomless pit, I mean, this is a much better looking screen right now. We don't have the green, but at least the fall kind of stemmed to a large extent today. At least even mid-cap's relatively better off.
There are some buyers, right? It's not buyers are not absent completely.
Yeah.
And I think that's a scary situation like we've had over the last many days when it's absolute no buyers and people just wanting to exit at any prices. Today, of course, was not that kind of a day. The Nifty recovered 100 points from the day's low on your screen. Nifty Bank will come up again, off the lows by almost 300 points. Midcap index recovered, but not so much. It was down more. And of course, the small cap index is another story, down about 1.8%. And that's the reason why, if you look at the NSE advanced decline, there was negative, with declines outnumbering advances, some 2.5:1 or so by close, depending on what index, etc. you look at. But that's essentially the overall NSE advanced decline up on your screen. So, I mean, it's still painful out there, absolutely. But, you know, I guess we are in that phase where the pace of declines, even though in specific stocks, is very sharp, and Vivek will come in and talk about that. But broadly, I mean, you are starting to find some interest, at least in large caps, at lower levels. Surabhi.
Absolutely. And, you know, today we were more or less in sync with our regional markets as well, barring Hang Seng. The Hong Kong market has a thing going of its own. Again, the Hong Kong market was rallying 1.5% today. But given the context, this was probably a pretty decent performance, buying from the opening lows and then more or less sustaining, at least in the mid caps and the large caps. The small cap index was down about 2%. If you look at the sectors where the buyers kind of emerged today, two pockets stood out. There was some buying in PSU stocks, which have been beaten down quite badly in the last couple of days. And there was some buying in the IT space as well. And the IT buying was not just the large cap buying. A lot of the tier 2 stocks, the mid-cap IT stocks like Persistent, etc., they also found buyers. So it's telling us that now people are being brave enough to venture out in the market and start nibbling in, start sort of taking some bets, you know, on the buy side as well. Just want to round up by talking about the downside. Today, very, very decided moves on the consumer side of the market on the way down, both staples and consumer discretionary stocks. Throw in autos as part of discretionary as well. So these were not in you know, flavor today at all. They were on the downside. Finally, an eye on the VIX. Now, the VIX has spiked in the last couple of days, the volatility index. India VIX moved up to 16 yesterday. Today, with the market recovering a little bit, it's come down back below the 16 handle, which is good news. But let's see, the VIX needs to perhaps settle. And we have to watch it for the next couple of sessions as well. Let's move on then and tell you what we've got lined up on the show today. As always, it's a packed next 20-odd minutes, starting with the movers and shakers. Vivek will get us the details over there. Stocks on the radar. Today, we will be looking at names like ABB India, Bharti Airtel rate gain, as well as Zen Technologies. All of these stocks were in focus today, and many of them coming under pressure because of either earnings or weak commentary. On Bharti Airtel, there was a large trade, so we'll tell you more about it as we go forward. But first, let's kick off the action with Vivek. Vivek, take us through the breakup of how the day was.
Well, thank you so much for that. You know, like you mentioned at the start, actually there was a certain amount of buying seen, especially at lower levels. So some nibbling was seen, and you know, no other sector encapsulated this better than the buying that we saw as far as the IT space was concerned. The entire IT pack, especially the mid-cap IT, like you mentioned, the entire space saw some buying activity today. In fact, the mid-cap IT names like LTI, Persistent, Wipro, all of these stocks ended higher with significant gains, actually. The other set of stocks that saw a bit of recovery, especially in the second half of the trading session, was the metal pack. All of these names actually bounced off quite significantly from the lows, largely flattish, but there was a bounce that you saw across the entire metal pack. The other set of stocks that saw a bit of a bounce from the intraday lows was actually the utility or the power sector stocks. A lot of these stocks have been beaten down quite significantly in the recent past, but today you did see some buying emerge with NTPC amongst the top gainers, over 3% higher. From the broader end of the markets, one particular stock stood out, strong volumes. Gillette India, over 8% higher. This particular name, top gainer as far as the NSE 500 index was concerned. And Thermax, you know, even while the entire capital goods space continued to witness selling pressure today, this particular stock, after the steep sell-off it's seen post-results, actually stood out today over 6% higher. But in the list of losers, you know, none stands out higher, better than ABB India. You know, it actually saw an intraday gain of 5% at one point of time, but this particular stock cooled off quite significantly, slightly muted commentary in terms of order inflow, in terms of margin moderation, and this particular stock saw quite a bit of a sell-off. The entire defense and the shipbuilding pack, you know, this entire space continued to witness significant and intense selling pressure. Names like Bharat Dynamics, PTC Industries, HAL, all of them fell on high volumes. Rate gain travel tech, you know, this particular stock, we've been highlighting it for the past couple of trading sessions. Another very sharp downtick there. You know, the company has gone ahead and downgraded the revenue guidance, and Street doesn't like it. And lastly, Natco Pharma, another stock that cooled off very significantly after the muted Q3, another 4% fall as far as Natco was concerned.
Okay, all right. A good comprehensive wrap out of what happened today in terms of stocks. Vivek, thank you very much for that. Jay Bala is with us to run us through what he's making of things. Sudeep Bandyopadhyay is with us as well. Gentlemen, good to have both of you here. Jay, for people who are watching now and looking at markets after the correction, you were expecting maybe the possibility of a sort of, I don't want to say meaningful, but somewhat of a bounce from here?
That's right, Prashant. See, the markets have come to an important time pivot and significant support. As long as the markets can hold about 22,650 to 22,700 for the next couple of sessions, I think there is a good potential for the market to see some counter trend bounce, which could be a sizable one. I'm anticipating if the Nifty small cap index were to hold today's low or maybe register another low tomorrow and hold that on, there's a potential to rally to somewhere close to 17,000 plus. And when it comes to the Nifty, if it were to hold today or tomorrow's low, which I mean, it's holding on to February 17th low, which is important. And if that were to sustain tomorrow's sessions, there's a rally potential to even somewhere close to 24,000. But in the medium term, I anticipate this to be just a corrective bounce, and though a sizable one, as the market unravels over the next few weeks, assuming that this current low holds, I would think that that will be a corrective bounce. But if the markets were to break below 22,650 today, tomorrow, or the day after tomorrow, there's a potential the Nifty, the large caps could drop to somewhere close to 22,200, which has been the June 4th low objective for me. But if the low of February 17th were to hold, there is a rally potential for the market.
So basically 15 to 17, about 13% on the small cap index. And so what's the trade to take? I mean, small caps, I mean, I'm assuming people own many of these names in their portfolio, but if you had to trade this bounce, wait for a day, 2 days, see if this holds, and then do what?
That's right.
What index or what stock?
That's right. See, the Nifty IT index has been the strongest in the entire correction. So you might want to do some fishing out there, but stay in the shallow end of the pool because this is an experimentative long, and this is a counter trend bounce. Although it would look attractive because of the size of the move, but you might want to keep your allocations to to a very low level, not plunge head on into the market as a bullish reversal for the market. So IT is one area, and in the broader markets, strong stocks like some of the pharma, some of the ITs, some in the defense, very, very selective in the defense sector. Be very careful, but it's all staying in the shallow end of the pool.
Okay, all right. Stay at the shallow end. Don't get too adventurous. That's the advice going out from Jay. We'll come back to Sudeep as well for some more questions in just a bit. Let's look at some of the active stocks today that were in focus, and ABB India definitely tops that list. Now, there was a lot of buzz around the stock after coming out with the numbers quarterly update, but the stock declined despite what looked like a good set of numbers. So was there something in that analyst call that the street didn't like? Let's go back to Vivek and understand. Vivek?
Well, absolutely right. It's the analyst con call that the street didn't really like in terms of the kind of commentary the management gave in terms of order inflow, in terms of moderation as far as margins was concerned. First, when you're talking about the numbers themselves, a beat across the board, very strong, beat across consensus as well as the CNBC-TV18 poll. The only blip as far as the numbers that were declared yesterday was concerned was the order inflow that actually saw degrowth, but on account of a higher base. But what is it that the management said as far as the conference call was concerned? Some moderation indicated both in order inflow as well as growth rates. Also, the management, remember the ABB actually works a lot on short cycle orders, and the management indicated that almost 65 to 70% of the order book would probably be exhausted in terms of execution in this particular calendar year itself, and just around 30-35% would be executed in the next year. So order visibility a bit of a concern. Also, what the management did allude to and they accepted was that lower growth is something that they are penciling in, but they said that the lower growth is more transient in nature and not structural in nature. They've also indicated that there could be a moderation both in terms of EBITDA margins as well as growth before the next cycle of strong growth resumes. So this is something that has spooked the street, and on the back of that, you did see ABB cool off quite significantly in trade. Company also said that PAT margins will be in the range of 12 to 15%, taking into account the fluctuation as far as Forex is concerned as well.
All right, Vivek, thank you very much for that. By the way, ABB was one, but it's completely unrelated. But look at stocks like Gillette, stocks like GSK in trade today, some of the biggest volume-led gainers in the NSE, MNC names basically. Any thoughts, Sudeep? Good afternoon. Sudeep, can you hear me? Okay, I think we lost the line there. Do we have Sudeep? Okay, I think we lost the line. Jay, any thoughts on any of these names?
See, I pointed out BSE Capital Goods being at a very important point sometime in December. It broke through a trend line, and it's a medium-term trend change. And I even pointed out Siemens clocking a triple top. And the BSE Capital Group index is trading at about 56,000 and change. And, it's coming to a support level of about 55,000. So it's not surprising that ABB and Siemens are underperforming. It's behaving as expected, but it's a bit a stretch into the downside. So expect some bounce to come around 4,900 mark.
Got that. Let's actually talk about the other one, right? The big block which happened today. I'm talking about Bharti, and promoter entity offloaded a significant amount of shares. Sudarshan is here with details and some contours of the deal. So over to you.
So first about the deal blocked is 5.1 crore shares worth rupees 8,485 crore changed hands, and that happened in block deal window. So who was the seller? Promoter entity, that is Indian Continent Investments, which is a company of Mittal family, has sold 0.84% stake. Now who was the buyer? Bharti Telecom, which is a joint venture of Mittal family and Singtel, have bought 24% of that 0.84%. That comes to 1.24 crore shares. Now, what was the reasoning of Bharti Telecom buying in the block days? Company says Bharti Telecom's share buy has helped allocation to only key long-only names, and key long-only names are both global and domestic. And then what happens to shareholding post this block days? Bharti Telecom, which is JV between Mittal family and Singtel, now it holds around 40.47% stake. Singtel via its subsidiary Pastel holds 9.50% stake, and ICIL, that is India Continent Investments, now its holding comes down to 2.47%. Remember, a few months ago, both Singtel and Sunil Bharti Mittal had announced that at the end of any strategic announcements or deals that happen over the next few months, both Singtel and Mittal family want to have a similar shareholding in Bharti Airtel. At the end, stock closed with minor cuts today.
Right, so thank you very much for that. That's Bharti for you, and the stock up on your screens. Just two other names, right? And these are all both casualties that we've had over the last 2 days this week. RateGain is one. They've slashed their guidance for the second time. Stock's down about 18% this week. And Zen Tech continues to fall like a stone. I mean, third session in a row now. Again, there were numbers here. We spoke with the management as well. So let's wrap these up with Upasana. Upasana, over to you.
First up, let me talk about RateGain. The stock is down 18% in the last 2 days. Company has cut its revenue growth guidance to 12 to 13% versus 15% earlier. Mind you, this is the second revenue guidance cut for FY25, which was earlier guided at 20%. So 20% cut to 15%, and now it's cut to 12 to 13%. Now, company is expecting single-digit revenue growth in Q4. This is due to delay in signing of certain deals. And company has also highlighted that it has experienced decision-making delays in some of the international markets. Company has also shared its outlook on margin. It says that the Q3 margins of 22% cannot be considered as a base going forward. And in the short term, it expects some compromise in the margins, but in the long term, it is confident of achieving 25 to 30% margin as the company will scale its business to 2,000 crore plus revenues. Now, moving to Zen Tech, this stock has lost nearly 60% of its value since January this year. The stock is down 30% in the last 2 days after company announced its Q3 results. Now, company's growth lowered this quarter as compared to the past performances, and it is also a miss to street estimates. Now, promoter holding in the company also slipped below 50% in the Q3. This was due to equity dilution of 1,000 crore QIP, which was launched last year. Now, management joined us earlier this morning, and company says that it has no plans to buy shares from the open market. It sticks to its FY25 guidance of 900 crore revenue and 35% of the EBITDA margin. It has also guided that the top line will be growing at 50% CAGR in the next 3 years, and margins, which were the key concern for the street, which were down nearly about 1,400 basis points, they This, the management has said, it is mainly because of the change in the product mix of the company. Also, companies emphasize that 800 crore orders will be finalized by Q1 FY26. Listen in.
Diluted, the dilution has been mostly done because of the QIP that we did. We did sell, we did sell 4% of our stake, and on 2 occasions. But the dilution has mostly been because we raised the money for acquisitions and working capital needs. So, I don't think we will be entering the market to buy it, because the intention was not to trade sell high and buy low. The intention was we wanted to have some money on the table. With respect to by 27, I think it should at least double. The revenue should at least double for ARI. That's our expectation. And margin, I think it should get to the margin of 35 EBITDA and 25 net. Even though now it's around 13-14%, we expect that to ramp up, especially when we go with our value addition.
Okay, that was Zen Technologies, also a stock that lost another 10% today. We've been talking about a lot of losers. As we take the break, let's talk about a winning sector in the market today, and that definitely was IT. There was buying coming in both large cap names as well as several mid caps. We caught up with Kotak Institutional Equities' Kamaljeet Saluja, who's the Senior Executive Director over there, and he's also Head of Research, tracks the IT sector very, very carefully. He spoke about some of the bets that one can perhaps look at in a market like this, both in large cap as well as mid cap IT. Take a look. We'll take that break and come right back.
See, essentially, it's a recovery. It's a very gradual recovery. It's a frustrating recovery as well. So let's say if you're penciling, if these companies would have grown by around, on an average, 4 to 4.5% in FY 2025, then at best you can pencil in 6.5 to 7% growth in FY 2026. Accenture, I think the valuations have almost converged with Infy and TCS. Cognizant, you cannot compare on valuation because the growth rates are lower and the company is in a turnaround phase. Avoid engineering services because there are headwinds in engineering services across multiple segments, whether in autos, whether it's in high tech, etc. So I would avoid engineering services. When it comes to between the incumbents and challengers, I mean, there has to be some fun, right? And there has to be what I would say, some sugar as well, rush as well in names like Persist and Coforge. So you end up buying. I will recommend Coforge because the growth will be turbocharged, far better than what basically the street is building in.
Clearly today, financials looks interesting category from a valuation front. We are possibly at a bottom in terms of what we've seen historically on financials. Earning growth is on track. Even last quarter or so, financials continue to report a nice earning growth. In fact, if you look at quarterly, financials are almost 40% of NSE 500 profits. So it's a large, profit surprise or profit growth coming from that segment. Financials are interesting. Yeah, consumers can be a nice sweet spot for a lot of volume growth, stroke profitability growth, because post budget, that large number of 80,000 crores to 1 lakh crores range for tax saving by individuals, which can flow into consumption related activities.
Welcome back. You're with us on Market Forward. Let's take a look at some of the key management commentary pieces that we picked up during the course of the day. Borosil was under pressure on the back of the company's third quarter numbers. The management says the company's corporate gifting business faced some challenges. Hence, it has lowered its sales growth guidance. Further, the company expects a EBITDA margin of 20 to 22% in the medium term. Also, the management expects EBITDA margins to be around 21% by FY27.
Borosil Renewables is next up. Shares of the company, shares of the stock gained in trade post its third quarter numbers. Management says that they expect the company to achieve 30% margins in the future. For Q4, they've guided EBITDA margin to be between 25 and 30%. Okay, well, let's quickly wrap out with what to watch out for as we come back tomorrow. Events to watch. Upasana is here with that list. Upasana.
First up, let me start with the global economic cues. Japan will be reporting its trade balance data for the month of Jan. UK will be reporting its CPI Y-on-Y numbers for the month of Jan. And back in Europe, ECB will be holding its non-monetary policy meeting tomorrow. Now, mind you that the FOMC meetings will also be out tomorrow. And this is past midnight for us. Now, Hexaware Technologies IPO will also be listed on the bourses tomorrow, and Apple announces a new launch event tomorrow, but there are speculations on iPhone SE launch, which is likely to be announced tomorrow. So all in all, these are the entire host of events that we'll be closely tracking for tomorrow.
All right. Thanks very much, Upasana, for that. Well, with that, it's a wrap on this edition of Markets Forward. Thank you very much for staying with us. But news and updates will follow and continue on the other side of a quick commercial break.
If you look at markets, whatever concerns of, valuations were more in the, the larger market, like small cap, mid cap indices had these challenges of valuations. I think on a large index, Nifty, reasonably, comfort on valuation front, plus all those factors you mentioned, economy on a better track, especially, the December GST collection was pretty good at, double-digit collection growth we saw for quite some time. So yeah, macroeconomy angle, things looks okay. Government policies in place, RBI policy also has changed the, the dynamics in terms of giving a lower rate environment we've started. So that way looks good.
More incomes in the higher bands have also been brought into the lower bands so that they'll benefit from a lower tax rate. So if you would only look at the rate charts that we've come up with, where the income bands and the rate applicable to them are also rehashed in favor of every taxpayer. So if you're talking of the new regime, the new higher incomes are coming into lower band, the rates for all of them have also been brought down. So on the question of your FIIs and the retail investors, it is true, and I thought you were implying it in your question itself, that FIIs also go out when they're able to, in a position to book profits. Indian market today, Indian economy today, has an environment in which investments are also yielding good returns and profit booking is also happening. And I'm sure you would have seized that fact also.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty end with March losses after a last hour recovery. Mid-caps and small caps see some wild swings. IT stocks buck the downtrend. A promoter group entity at Bharti Airtel pairs nearly 1% stake in the company for 8,500 crore rupees. Another promoter entity along with marquee global and domestic investors pick up the stake. Tesla posts job offerings on its LinkedIn profile for 13 positions in India days after Elon Musk's meeting with Prime Minister Modi in DC. Sources say the EV maker is likely to enter India with a low-cost model, which would be launched in the US later this year. Opposition leader Rahul Gandhi protests the appointment of Ganesh Kumar as the new Chief Election Commissioner, says it's disrespectful and discourteous to make a midnight decision when a case is pending before the Supreme Court. The apex court will hear a petition filed by the Association for Democratic Reforms tomorrow. The US and Russia begin talks in Saudi Arabia to end the Ukraine conflict, but neither Ukraine nor Europe get a seat at the table. Zelensky warns his country will not abide by any peace deal made without Ukrainian representation. A Delta Air passenger jet crashes and flips on landing at the Toronto airport. All 80 people on board evacuated, 18 people injured, 2 in critical condition. Well, let's start with the market action. We saw a late recovery which wiped out the losses on Dalal Street today, but the Sensex and the Nifty still closing in the red. The Nifty, though, managing to close at 22,945 flat, down about 14 points. The Sensex coming off its lows, closing 29 points lower. The Midcap index was up 600 points from the day's low, but the small caps continue to sell off, with that index down by about 170 odd points. That's the Nifty Bank, down about 170 odd points today. Prashant standing by now to wrap up the market action for us. Coming off their intraday lows, Prashant, but nevertheless, the weakness continues.
I mean, the silver lining was that we did not fall that much and it was only mildly lower, if that. So the Nifty is up on your screen. From the lows of the day, there was a 100-point recovery. The Nifty Bank also recovered 300 points from the day's absolute lowest levels. Mid-cap index, flattish close, decent recovery, but no such luck for the small-cap index, which ends down about 1.6, 1.7%. And that's the reason why market breadth declines to advances were still steeply in favor of what was down today. Now, the large caps and where there was some activity, and I'll start for a change with what was up. So you had NTPC, Tech Mahindra and Wipro, which stood out as stocks which looked up. On the losing side, IndusInd Bank, of course, has been dilly-dallying, no clear direction, but it's come off the lows and it's not making fresh ones. Trent and Bharat Electronics is the other one which participated on the downside. Now, broader markets, I'll start with what was down. Zen Tech, big cut once again, 10%. Turning out to be a pretty tough week for this. RateGain is another one, about 18% gone in 2 days now. That's basically this week. Swan Energy, Goldium is another lab-grown diamond company, had rallied quite hard to about 600 levels. And now, of course, is seeing corrections. Wellspun Enterprises, EMS Limited, All Cargo are some of the other names which come up on the radar. In the broader market, what was up, these IT companies, Persistent, LTI Mindtree, some of the MNC names like Glaxo, Gillette was up, and these are, by the way, some of the top volume-led gainers today. The consumer names, Swiggy, Phoenix Limited, Senco, and then, of course, you had names like NLC India, Triveni Turbine, and Thermax, which also saw some recoveries. But these are just recoveries after what have been extremely, extremely sharp cuts. We'll have, of course, US market for company tonight, which was absent yesterday. So more cues, more commentary, which we will wake up to. But it's, taking each day at a time. The market, of course, has been sold very, very aggressively. And people have been waiting for that bounce, even if fleeting, a bit of a bounce here. Back to you.
All right, Prashant, many thanks. That was the stock market action. The rupee weakened marginally against the US dollar. It depreciated by 7 paise against the greenback, tracking most Asian currencies. The dollar index continues to gather strength after US President Trump's tariff threats. India's 10-year bond yields remained largely steady in trade today. And gold extending gains as President Trump's tariff plans fueled safe haven demand. Significant buying by central banks has also supported gold prices. In fact, prices surging in India. But it's not just physical gold. More investors are betting on paper gold as an investment as well. Data shows that investments in gold ETFs are on the rise, while demand for traditional jewelry has been softening. Shivani standing by with more. Shivani.
India has been a country that loves gold, and that too in its physical form. But the gold market in India is seeing a shift towards financialization. This is clear from the numbers. Let's take a look at the data. Jewelry demand in India has seen a decline over the past 3 years. According to the World Gold Council, in 2021, demand was at 610 metric tons, but it dropped to 600 metric tons in 2022 and further to 575 metric tons in 2023. In 2024, the demand fell further to 563 metric tons. That's a 7% drop compared to 2022. This indicates a shift away from ornamental gold as consumers become more price sensitive amid rising gold prices. Now, if we look at the bars and coins, traditional investment gold is still holding some interest. In 2023, demand for bars and coins increased by nearly 7% with further jump of 29% in 2024. But their growth has been overshadowed by financial gold products like gold ETFs. Speaking of which, gold ETFs are the real star here. In 2024, they've experienced a staggering 216% increase in inflows, reaching over 9,200 crore rupees. This marks a huge shift towards paper gold as investors increasingly prefer these financial gold products over physical assets. Now, this is happening for various reasons. Important among them are liquidity issues, ease of purchase of ETFs on exchanges, favorable taxation, and also the convenience of storage of digital gold. So all of this is leading to Indians to move away from physical gold towards financial gold. Back to you.
All right, Shivani, many thanks. Shares of Bharti Airtel declining in trade after stake worth 8,500 crore rupees changed hands through multiple block deals. The telecom company said that a promoter entity called Indian Continent Investment sold 0.8% of its stake. Another promoter entity was among the buyers, which also included marquee global and domestic investors. Sudarshan is standing by with more on the contours of this deal. Sir.
So first about the deal block deals, 5.1 crore shares worth rupees 8,485 crore changed hands, and that happened in block deal window. So who was the seller? Promoter entity, that is Indian Continent Investments, which is a company of Mittal family, has sold 0.84% stake. Now, who was the buyer? Bharti Telecom, which is a joint venture of Mittal family and Singtel, have bought 24% of that 0.84%. That comes to 1.24 crore shares. Now, what was the reasoning of Bharti Telecom buying in the block days? Company says Bharti Telecom's share buy has helped allocation to only key long-only names, and key long-only names are both global and domestic. And then what happens to shareholding post these block days? Bharti Telecom, which is JV between Mittal family and Singtel, now it holds around 40.47% stake. Singtel via its subsidiary Pastel holds 9.50% stake, and ICIL, that is India Continent Investments, now its holding comes down to 2.47%. Remember, few months ago, both Singtel and Sunil Bharti Mittal had announced that at the end of any strategic announcements or deals that happen over the next few months, both Singtel and Mittal family want to have a similar shareholding in Bharti Airtel. At the end, stock closed with minor cuts today.
Well, that's Bharti Airtel. So many thanks for joining us. In earnings, ABB India has reported a strong set of numbers for Q4, beating street estimates on all fronts. The company reported a 56% jump in net profit on an annual basis, revenue up 22%, making this the highest quarterly jump in the last 5 years. Just 5 days after Prime Minister Modi met Elon Musk in Washington, Tesla has begun its recruitment drive in India. The company has posted 13 job openings online, covering both customer-facing and operational positions. Parikshit Luthra standing by with more details. Parikshit, Elon Musk has been exploring the India market for a bit, and it's restarting the process of hiring in India, but at this moment only to kickstart retail operations.
That's right. If we look at all the 13 roles that have been advertised on the company's career page and also the LinkedIn page, it is for a store manager, a service advisor, a service technician, a customer engagement specialist, an operations delivery specialist. So all of this points out to retail operations only. And this is something that we have been reporting on over the last few weeks. The Tesla is actually gearing up for starting retail operations in India this year. They've been scouting for locations across different metros to start company-owned showrooms. That means to bring electric cars into India from either Germany, where their manufacturing plant is, or from China, Shanghai in China, and sell them in India before they start any kind of manufacturing operations. And somehow that seems to be getting shape. But let's also point out to our viewers that since 2020, Tesla and Elon Musk have had an on and off relationship with India. In 2020, he said that in 2021, he'll definitely come to India. In 2021, he also tweeted to say that India is a very high tariff jurisdiction and the tariffs on electric cars are the highest anywhere in the world. And this is a challenge for the company. In 2024, he was all set to come to India but cancelled his plans. He had also recruited an India team earlier between 2020 and 2024, which had a charging head of HR, a head of marketing, a head of government affairs. But all those people have actually quit the company over the years and they've joined different firms. So this in a way restarts the entire hiring process. We are told that he is very keen on India, but whether he will manufacture in India, that remains to be seen. India is on the cusp of launching guidelines for the scheme for promotion of manufacturing electric cars in India, which would give Elon Musk a concessional 15% duty as opposed to 100%. But he'll have to make a commitment of $500 million towards manufacturing in India. Will he make that commitment or would he prefer to only sell? That remains to be seen. But what we do know is that he had a very important 1 hour-long meeting with the Prime Minister where they discussed everything from electric mobility to space cooperation.
Yes, we'll have to see if he does decide to make in India or just sell in India. Parikshit, many thanks for joining us. JK Tyre Industries has informed the stock exchanges that Anuj Kathuria, its president for India operations, has resigned, citing personal reasons, and has been relieved from services of the company. Kathuria's resignation comes days after a complainant filed an FIR against him under various sections of the Bharti Nyaya Sanhita. The sections include those that criminalize sexual intercourse obtained by deceit and deals with deceiving a woman into believing she's legally married to him. Now, the government has signed an agreement with Reliance New Energy Battery under a PLI scheme for advanced chemistry cell on the 17th of February. The agreement will award the company a 10 gigawatt-hour ACC capacity. The ministry has said this agreement will make the company eligible to receive incentives worth 18,100 crore rupees. A CNBC-TV18 analysis has found that share price multiples of life insurance companies have not kept pace with the strong growth in their embedded value. What is the cause of this derating in valuations? Yash is standing by with the answer to that question and more. Yash.
Well, Shireen, through these few numbers from the last about 4.5 years tied up in this piece, we've intend to demonstrate what has been the growth in embedded value for life insurance companies. Also, what has been the growth in the market capitalization for these life insurers and how a function of these two, that is price to embedded value, reacted to that growth. To start with the embedded value itself, which has grown at a CAGR of about 8 to 23% when compounded over the previous 4.5 years between FY20 to H1 FY25 for listed life insurers. HDFC Life showing the strongest CAGR of 23%, followed by Max Financial at 21%, followed by ICICI Pru and SBI Life at 16.6 and 6%. LIC being the slowest, but still growing at about 8.4%. On the other hand, when compounded over the last 1.5 years, LIC has seen the strongest jump in its market cap, growing at a CAGR of 53%. When compounded over the last 4.5 years, Max Financial's market cap grew at a CAGR of 36%, followed by SBI Life at 27%, ICICI Pru at 19%, HDFC Life at 13%. Now, what we've done is we've spoken about two things, embedded value and the market cap. Now let's look at the function of these two things, and that's how life insurance companies get valued. That is on the basis of price to embedded value. And the big question here is that with the strong growth in the embedded value, has the multiple for these insurance companies responded in a similar fashion? The answer is an emphatic no. Look at how the price to embedded multiple has moved between FY21 to FY26 estimated figures. The biggest derating has come for HDFC Life from 4.8 times in FY21 to 2.1 times for FY26 estimates. This despite HDFC Life witnessing the strongest growth in its embedded value. Now, price to embedded value for all listed life insurance companies except for LIC have gotten derated. Now, if valuations are supportive, then what's really coming in the way of the share price growth? We spoke to a few analysts on this particular issue, and there are three big reasons which they point out. The first one is the fear of regulatory intervention either from the government or the regulator. We saw so many regulatory interventions coming in the last 1.5 years itself. The second reason is how the product mix for various life insurance companies have turned very ULIP heavy,
which has led to a significant deterioration in the margins for these insurance companies. Finally, the problem has also been the Indian insurance market, which is not growing at all. Penetration, density, both staying at the same point for a very long time. And out of that stagnant market also, unlisted players are taking large part of market share, which is again becoming a negative for the listed life insurance companies.
Yash, many thanks for joining us. We will head into a break, but up next, opposition leader Rahul Gandhi protests the appointment of Ganesh Kumar as the new Chief Election Commissioner, says it's disrespectful and discourteous to make a midnight decision when a case is pending before the Supreme Court. That and more when we return.
जब दिल्ली में जगह जगह पावर कट होते हैं, जब उत्तम नगर, नवादा, संत नगर, बुराड़ी, त्रिलोकपुरी, संगम विहार, देवली में 3-3 घंटे, 4-4 घंटे बिजली जा रही है, तब भारतीय जनता पार्टी वाले कहते हैं नहीं नहीं नहीं, अभी तो आतिशी सीएम है, अभी तो केयरटेकर सीएम आतिशी है, वो जिम्मेदार है दिल्ली की बिजली व्यवस्था के लिए। जब यमुना में कोई मशीन उतरती है तो कहते हैं नहीं नहीं नहीं, बीजेपी चला रही है सरकार, एलजी साहब चला रहे हैं सरकार।
खुद अरविंद केजरीवाल ने चुनाव से पहले ये कहा कि हरियाणा गवर्नमेंट ने जहर मिला दिया है पानी में। इससे दिल्ली के लोग और नाराज हुए और दिल्ली में अरविंद केजरीवाल के खिलाफ जमकर वोट किया। अब हम लोगों पर जिम्मेदारी है कि यमुना साफ हो पूरी तरह, तो सरकार तो बनेगी, 20 तारीख तक सरकार बन जाएगी, लेकिन उससे पहले ही लेफ्टिनेंट गवर्नर साहब ने यमुना की सफाई का काम शुरू कर दिया है।
The big national story, leader of the opposition in the Lok Sabha, a member of the selection panel, Rahul Gandhi, is protesting the appointment of the new Chief Election Commissioner. Late last night, the government appointed current Election Commissioner R. Ganesh Kumar as the new Chief Election Commissioner. The Chief Secretary of Haryana, Vivek Joshi, was also appointed as an Election Commissioner. The appointments came hours after a meeting of the high-level selection committee led by the Prime Minister. The committee also comprises of the Home Minister Amit Shah and the leader of the opposition in the Lok Sabha, Rahul Gandhi. This marks the first time a selection panel was involved in picking India's top election watchdog. The government passed a law in 2023 changing the appointment process and giving powers to this high-level committee. At the meeting, Rahul Gandhi opposed the appointment. He's now made the dissent note he submitted on the matter public. In the note, Rahul Gandhi said it is disrespectful and discourteous to make a midnight decision when the selection process is being challenged before the Supreme Court. Rahul Gandhi argued that the composition of the committee is tilted in favour of the government and a case will be heard by the Supreme Court within 48 hours. But his dissent was overruled and the government went ahead with the appointment. The Association for Democratic Reforms moved the Supreme Court today opposing the appointment. The apex court has listed the case to be heard tomorrow. Ashmit is standing by with more. Ashmit, take us through what happened in court today and give us a quick background to this matter.
Well, allow me to bring in some context here. In March of 2023 is when the Supreme Court had frowned on the fact that there is no law that governs appointments to the Election Commission, and at the time had appointed a temporary selection panel comprising of the Prime Minister, the Leader of Opposition and the CJI, the Chief Justice of India. This was meant to be temporary. Now, subsequently, later that year, in December of 2023, the Centre passed a fresh law which replaced the CJI with a Union Cabinet Minister in the selection panel, which is what prompted a whole host of challenges being filed here before the apex court, which is what prompted these very same questions to come to light with the appointment of Gyanesh Kumar as the new Chief Election Commissioner. The question that was raised first by Rahul Gandhi, then by the petitioners here before the apex court, is that why is this appointment being rushed through? The question that Rahul Gandhi had raised as a part of his dissent note is that the Supreme Court is already seized of the matter. The Supreme Court is already hearing this case. The matter is sub judice, and if that is the case, why rush through this appointment? Why not wait for the Supreme Court to hear and decide this case? Finally, this was the very same submission that was made this morning by the Association for Democratic Reforms. They said that the Supreme Court judgment is being made a mockery of, that constitutional norms are being violated, and that there is no independence as far as this new selection panel is concerned, and therefore there is an urgent requirement for intervention for hearing by the Supreme Court. So importantly, the Supreme Court has agreed to hear this case. Tomorrow will be a critical day where the Supreme Court will look to give guidance on what happens with respect to this new selection panel, what happens in the interim, and what happens by when the Supreme Court will finally hear and decide this case.
All right, Ashmit, many thanks for joining us and staying with Action in Court. The Supreme Court has granted interim relief to podcaster Ranveer Alabadia after his controversial comments on the show India's Got Latent. The court has granted a stay order on his arrest and directed that Alabadia seek protection from the Mumbai police against death threats. However, the apex court tore into Alabadia for his comments, calling it shameful and perverse. The court added that such behaviour must be condemned. The government has extended Niti Aayog CEO BVR Subramaniam's term by 1 year. His initial term was slated to end on the 24th of February. Subramaniam joined the Niti Aayog in 2023. Prior to that, he served as the Commerce Secretary and also as the Chief Secretary of Jammu and Kashmir. In global news, the US and Russia begin talks in Saudi Arabia to end the Ukraine war without any representation from Ukraine or Europe. Ukrainian President Zelensky has warned that his country will not abide by any peace deal made without Ukrainian representation. After attending an emergency meeting with European leaders in Paris, British Prime Minister Keir Starmer has said that the US must provide security commitments to Ukraine to ensure lasting peace in Ukraine.
There must be a US backstop, because a US security guarantee is the only way to effectively deter Russia from attacking Ukraine again. And I've been clear today, Britain will take a leading responsibility, as we always have, because Ukraine must have a secure future, Europe must have a secure future, Britain must have a secure future, and democratic values must prevail.
Keir Starmer there. A Delta Air passenger jet crashed and turned upside down on the runway at Canada's Toronto airport while attempting to land. All 80 passengers on board were evacuated. 18 passengers injured, 2 are in critical condition.
A Delta Airlines plane flipped upside down while landing in Toronto on Monday. Officials say over a dozen people were injured on board, 3 of them critically, including a child. However, there were no fatalities in the crash. The plane first took off from Minneapolis-St. Paul International Airport, and after an 86-minute flight, came to rest belly up on the snowy tarmac at Toronto's airport. Audio from air traffic control paints a picture of what arriving fire crews first saw.
Just so you are, there's people outside walking around the aircraft there. Yeah, we've got it. The aircraft there's upside down and burning.
Delta said a CRJ-900 aircraft operated by its Endeavour Air subsidiary was involved in a single aircraft accident with 76 passengers and 4 crew aboard. The CRJ-900 jet is made by Canada's Bombardier and powered by GE Aerospace engines. Canada says it will investigate the cause of the crash, which is not yet known. The incident came amid windy weather following a snowstorm. The airport had said earlier on Monday it was dealing with high winds and frigid temperatures. However, on Monday evening, Toronto Pearson Fire Chief Todd Aiken had this to say about runway conditions.
This is an active investigation. It's very early on. It's really important that we do not speculate. What we can say is the runway was dry and there was no crosswind conditions.
The crash in Canada follows other recent air travel incidents in North America. In late January, at least 7 people died when a medical transport plane crashed in Philadelphia. And days before that, an Army helicopter collided with a passenger jet in Washington, D.C., killing 67 people.
Well, another aircraft tragedy there, this time in Canada. With that, it is time for us to wrap up this edition of Business 360. More news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
Hello and welcome to Commodity Champions. I'm Manisha Gupta and this is a special one that we get to you from MEWA India 2025. This is the second edition happening right here at Geo Convention Center, and very important because one, we've seen higher numbers come in here, and also important from India's perspective because we are looking at India continuing to be a major consumer of almonds, cashews, dates and much more there. And also India, this is an important season here because we do see demand growth increase, especially in winters, and also because this is wedding season. So what does this summit mean, where we have various international associations and countries taking part of? Joining me are very eminent people here. I have with me Mr. Gunjan Jain, who from Natraj, Rajiv Pabreja is from Commodities Trading Corporation, and Yash Gauli from Kandor Foods. They also are NDFC's founding members. Thank you guys so much for joining in. I'll start with you, Gunjan, first. And you started NDFC. You guys started NDFC last year. What was the reason behind that? Because we do understand that dry fruit majorly is a very unorganized market. So is this an opportunity or a way to bring everybody together?
Yeah, that was exactly the intent. The nuts and dried fruit market today stands at a whopping $8 billion on a retail level. And there was no national body that was unifying all of us together to get us together to have one common body, one voice, with the honorable government, with various international boards, and just getting the whole industry together as a family. So the Vasudev Kutumba, we really took that when our Prime Minister Modi ji said that, and we said we want to have a nuts and dried fruit world together, the Vasudev Kutumba of nuts and dried fruit. So that's where the idea of NDFC came.
So Gunjan, this is not just the largest in India. From what we understand from the scale of it, this perhaps is the largest international gathering that we've seen.
Yeah, for the nuts and dried fruit world, MEWA 25, which is the flagship event that we do for the NDFC to get all our members together, it's become the international event for nuts and dried fruit, and the response has been phenomenal. Any origin you can think of, whether it was US, Chile, Argentina, there are countries which still do not have a phytosanitary protocol with India, but they have a 20-people delegation visiting us. We've had a launch of Turkish dried fruit here. We have had a very major press conference releasing the health benefits on pistachios on Indian by a very major Indian doctor. So lots of stuff happening. You can see the display we have. That's the world of nuts and dried fruit. Close to about 100 different displays, varieties here to talk about. That's the scale of the nuts and dried fruit world.
Rajiv, so people come together, and as Gunjan said, if there are 7,000 people here, they are clearly looking to network, expand and do business. So what are those kind of numbers looking like?
See, this is one of the biggest, as Gunjan told, this is one of the biggest gathering on the nuts and all the dry fruits. If you see total, the business will be more than $50 million of business is going on here. You find each and every supplier in the world of nut is here, and nobody wants to miss. If he's missing, that means he's not in the business of nuts and dry fruit. He has to be here, then the business is going on. People are all the way flying from every corner of the world. You find flying out here. We had a one-day cricket match here also, as I told you, and 3 days of networking, business, fun, and a lot of business is going on.
Yash, Make in India, as Gunjan pointed out, and that perhaps is the thing going forward from here. I want to understand the mathematics here. When you talk about Make in India, what is India doing right now? What are the kind of imports that we have? And what is the demand growth that India does see in sense of dry fruits?
So Manisha, most of the dry fruits and nuts are traditionally imported. We do have our own crop as well, which is for raisins, for cashews, and for walnuts. But for what India can consume, we don't grow as much, and that's one of our agendas at NDFC, that we're going to be promoting that along with support of the government, and trying to see our farmers and our cooperatives kind of getting together and growing these cash crops, and India is consuming, right? So but traditionally, or I think we're more importing dates from the Middle East, importing nuts from Australia and California, and we import them in big numbers. So India, and for all of us in India, we've been traditional consumers of all the nuts and dry fruits on a daily basis.
Yes, since we're talking about imports right now, and look at the global markets, and we're looking at tariffs, we're looking at currency being very, very volatile. How is the dry fruit as an industry reacting to all of this?
So these are challenging times for the whole industry, and I'm sure it's for the other commodities as well. But food being very, very basic, and it's a staple now. We look at almonds and raisins and cashews being staple. So I think the consumers are reeling with it, and we've, as an association, we've gone out to the government. We've been giving some representation that we need to look favorably to our industry, look at the GST, look at the customs tariffs, and the other things that could enable our consumers to have nutritious food, and all of which is highly, highly nutritious, right? So we hope that we'll
you're heard very soon, that you're loved more. All right. Gunjan, we do import a lot, we do consume a lot as well, and there was a time that dry fruit demand was very cyclical. As I mentioned, winters, wedding season, gifting, Valentine, does that do anything for your business at all?
Valentine, not so
Not
much.
so much.
I would love to have, I wish instead of a rose, if there were boys gifting girls chocolate-coated almonds or chocolate-coated nuts. We have to start a revolution to do that. So that's something I mentioned. Yash talked about farmers, and two things I want to mention. We have been highly motivated by our Prime Minister. So we wanted to do a Make in India. So earlier, this show is a classic example of Make in India. Earlier, we were sending all people out. We were going out to international shows to buy nuts. All the buyers, all the sellers used to be there. We used to go to Gulf Food and other conferences. This is for the first time when we created. So instead of foreign exchange going out, this is the first time that the foreign exchange is coming back into India. All the sponsorship. This show is 100% based on sponsorships from the various growers and grower organizations across the globe, because they wanted to come in India and have the visibility. If you'll see all the sponsor names, you'll see all foreign people sponsoring. So we've got a lot of foreign exchange into India. It's kind of a Make in India campaign where all of them are coming into India. There's tourism increasing. All the hotels are booked out. 7,000 people, a lot of them foreign visitors. So you can imagine all that in a small way. The nuts and dried fruit industry is adding to the Make in India dream of Modi ji.
It sure is. Let me also come to you, Rajiv, then, and let's talk about the growth as well in sense of numbers. I remember talking to you last time, and you said it's increasing by 10, 15, 18% as well in sense of some dry fruits. How do you look at the vision now? How is 2025 looking to you as you meet all these people here?
See, we think that actually the ratio will go on because it's a healthy nut. And I think again the 18%, I think the growth should be 15 to 18% minimum. It will not go down. People are, especially see this, the middle class is growing up, and now they prefer to have nuts. And as you were talking about the Valentine, I heard people buying rose almonds because there are some rose flavor almonds also there. So you will see little different varieties also. Regarding growth, there will be no stop. Everything is growing fast, and India will be soon in top every nut. Now we are in top 3 for 3 nuts. You will find everything in next 5 years. We will be topping in pistachios. We'll be talking, and other nuts are also coming up. Exotic nuts which were not coming to India, they are also in a big demand in India now.
Well, yes, I saw macadamia and some hazelnuts and a lot of things.
Macadamia, Brazil nuts, and pecans. Every nut is coming up. And 2 days back, you will say that Shah Rukh Khan wife, that she did the promotion for the, she started eating pecan nuts.
Oh yeah, oh well, that is happening. Yes, this one is to you then. And even as we are looking at various categories in the markets, we've seen dried fruits come into the business. Makhana, I was talking to Gunjan earlier, and there are big numbers continuing here. What categories would you say is surging, growing faster than the other when you look at within the space?
Definitely the new nuts, since the base is so low, so you're going to see a much higher growth number there. But most of the categories across the board, depending on the and if the rates are good, we're going to buy more, and we're going to spread that out across our country. The categories that we look are going to grow more majorly are the ones with a smaller base. So things like, again, exotic nuts, some of the berries, prunes. I think they're all very healthy products. And we also see a lot of emphasis from the marketing boards. So as and how you start seeing more advertisements, Jasmeet Bumrah is the brand ambassador for Californian pistachios. I'm sorry. all the young consumers are going to look up to all the sportsmen and the idols, and they're going to start consuming that. So I think we're going to see a lot more, growth coming in our industry, and we're very excited.
Absolutely. So before we go to a break, Gunjan, our last question, and while Makhana board is on now, any other boards that the dry fruit industry is pushing for with the government now?
Actually, the Nuts and Dried Fruit Council on its own will try to act as that bridge and be the kind of a quasi, I wouldn't say we want to be a board, but that's the thing. We want to represent the whole industry, look for growth, look for development. We are doing marketing efforts on our own. We have done free tree plantations to the farmers. We did a plantation drive for cashew nut plants. We've done a plantation drive for walnut plants. For the first time, Indian government has allowed now the phytosanitary protocol to import good planting material, because we did not have planting material. So there's a protocol now in place, and we will be looking at higher plantations in India, because that's again one of the dreams, as Yash mentioned, to bring that up. So not a board as such, but these activities, if we can do marketing, we're starting to do small level marketing. Okay. What we would look forward to is maybe if the government can help, like in the international world, USDA for US, in fact, they give an equal kind of a budget, or like a reciprocal, like if the trade today adds a budget of, let's say, $100, they get a $100 grant, and that $200 then can be used to market, and that's what's happening for their growers and their crops. If we could have some kind of an arrangement like that, we as a trade body have come forward. We will have the fund. We want to market the health benefits of these nature's health pills in India. So we would love to do that. Indian consumers need to eat more of nuts and dried fruit.
Yes, so very excited team here we can see, and a lot of hopes and aspirations as well. Thank you guys so much for joining in, and with that we'll go for a very short break. But after this break, we'll take you exactly inside the area and show you all of those dry fruits and talk to some more guests.
But the merger between JioCinema and Disney Hotstar is done, and there's a brand new app. Now, the most obvious benefit will be that users don't have to choose between these two apps or toggle between the two different apps to get to the content they want. The new Jio Hotstar app will have it all, over 3 lakh hours of content across 19 languages. So potentially, we will now have India's largest OTT player, with the company saying that it will have a user base of over 50 crore. Now, these 50 crore people are not necessarily all paid users, but that just means that there's potential to convert them. So what happens to your existing apps? Now, JioCinema will now redirect you to download the new app or prompt you to open the Hotstar app if you already have it on your phone. Now, the Hotstar app should automatically have been updated to Jio Hotstar or will prompt you to install the latest update. Now, your existing premium plans will continue on Jio Hotstar for the remaining duration of the plans, and once those plans expire, you will have to subscribe to the new plans. Now, these new plans start from 149 rupees for 3 months for a mobile plan, and it goes up to about 1499 rupees or 1500 rupees for a premium ad-free plan that allows you to access 4 devices. And what does Jio Hotstar now entail in its new avatar? Well, everything that both apps used to individually offer is now under one umbrella. Now,
Welcome back. You're watching Commodity Champions, and joining now is Georgia Crane from Crane Walnut. Georgia, I thank you for joining in. Walnuts are doing quite well, especially in India as well. We've seen that number continue to go up, and I do understand that the best walnuts come from Crane Walnut. How is that, and why is that?
Thank you. Well, we're both farmers and processors, so we control the quality all the way from the field through to the export to India. So we have control over every step of the way. And we are very focused on quality and making sure that everything we ship here is top-notch.
Georgia, what is the kind of number that you've seen continue to gain in from India?
We saw a lot of growth a few years ago before we had a duty that impacted our export business into India. So we're hopeful that in the future we can have some political support to reduce our duty so that we can increase our growth in sales here.
So what is the number like right now, and apart from India, what are your major markets as of now?
Right now, our major markets are the U.S. market, Europe, so Italy, Germany, Spain are the big players there. And then in the Middle East, Turkey, Dubai, and then India, of course, is one of the fastest growing ones. And then we also ship into Asia, into Japan, Korea, those markets.
So yes, 100% import duty for walnuts into India can be a bit of a deterrent. How have you seen, has it changed the numbers a lot, or do you think the demand has been steady?
It has changed the numbers. It has also impacted the price of the commodity for the grower in California. The last 3 years, it has had an impact where consumption dropped from California and shifted more to Chile, and the price of walnuts dropped below the cost of production. So we lost some volume because of it.
And from walnuts to something that India really eats is dates, and India is the largest importer of premium dates as well. And who better to talk about that but Anup Gowdy from Candor Foods. Anup, hi, thank you so much for joining in. And you are one of the major ones when it comes to dates in India. Do explain to us on what India eats, what India grows, what India imports, and how have been the numbers increasing?
So dates as a category over the last 5 years has grown tremendously in India. Earlier we used to consume the low quality dates, as we called it. So when you talk about low quality dates, they are in the range of 100 rupees or sub 100 rupee category, which is there. But now in the last 7 or 8 years, we have seen India consuming the higher value ones, which is there in the range of even 2,000 rupees a date. So we specialize in those categories. The difference between both of them is essentially the way you store them. So the more the moisture is there in the product, the more premium it is. The size is also then mattering across over there. So India is seeing a drastic change in terms of its dates consumption. So what we are seeing across is initially we used to have close to around 10 tons of sales of those premium, but right now we're doing 600 tons in the last 7 years. So that's the scale that has grown across. We are expecting this to at least triple in the next 3 to 4 years. Why? Because first the supply side is increasing.
Okay.
So there are lots of farms in Middle East as well as in Egypt, which is one of the biggest suppliers of dates which is there. They have invested a lot. So we are expecting them to push their products into India. So we are seeking that for everybody, like you're seeing in this environment also, dates is becoming a hot topic. So there's
not just dates, but
everything.
date powder, date syrup, there's just so much that's coming out. So that brings me to value addition. Yes. And when it comes to dates and various other products as well, as we can see here, would you say India now understands value addition in this premium product?
Yeah, they understand it much better. And the new generation is more demanding. So it's not like the traditional way. So if I say the generation shift, how it is happening across is on the value addition side. So people want a quick bite. For example, energy bars, which is one of our range, which is here behind. It's becoming one of the most popular range. So it's got a clean label. It's got no glucose. It's not got any added sugar in it. So that's what the new generation is demanding. And that is where the value addition is also coming from.
So Anup, how much is the value addition market right now when it comes to dry fruits?
It is increasing. So if I say in terms of tonnage, it would probably be around Right now, we are around 15 to 20 tons monthly consumption on the value-added side, but we are expecting this to be at least 100 tons in terms of our own scope, which is there. But what we see across in terms of the derivative markets, coming back to the dates part, the mithai shop guys, now they want a replacement of sugar.
Yes.
So what best than date paste? So because it gives the sweetness, it gives the profile. So we are speaking with a couple of big mithai people who are interested in it. They are developing recipes across over there. You'll be probably seeing across in the chef also side, which is the category which is there. So that is also very good. Right now, if I might touch base across, I just tasted across pan raisins.
Yeah.
So these are the
and
flavors.
Cheese cashews and wasabi nuts.
Wasabi nuts. So all these things are the flavors which the youngsters are getting attracted to. So we are expecting this to be the next, you can say, the frontier that we'll cross over, and our scale would be like too high.
So Anup, you're saying that it's not just about importing dry foods, but value addition that India is doing also a big market now.
And India is also, we are expecting India to become one of the most largest exporters also out of us. So not only are we importing it across, the demand of our produced products across the world is also increasing. For example, our energy bars are becoming very popular. Although the ingredients are coming from US, we can do a lot of jugaad ourselves. So our jugaad is the best. So when our jugaad is the best, it goes very nicely across in the system.
Joining me now from Kimia Dates is Saviz. Saviz, I thank you so much for joining in. I do understand that you're one of the largest exporters of date to India. How have you seen the demand increase? How have you seen the numbers go up as well?
Totally. I think the date is coming as a routine of the people using it in India. Before, they mostly use it for the Ramadan time or so some occasions, but now it's because of the very good nutrition inside. So mostly use it as a regular basis food. Yeah.
How have you seen the numbers go up? If you compare last 10 years into India, what would you say a percentage growth into Indian demand has been like?
I think the growth is very nice. The percentage, I think at least between 30 to 40% increase we had in the usage, and this is because of what I already told you. The people understand the value of the nutrition in the dates. You already have something with a very nice quality, no added sugar, nothing, full of nutrition, fresh, and with it very nice and proper prices, So I think the people understand the value of this, and they're going to use it more and more. And this is good for us, of course.
It sure is. So Saviz, talk to me about the kind of varieties that dates has, and what varieties does India predominantly gets in?
We have lots of varieties, but most of the varieties are not commercial ones in the market. So in Iran, we already have, Iran as a second biggest producer of the dates, has more than 450 varieties. But most of them they are using domestically. But 12 of them are mostly commercial ones. We are working on 5-6 kind of the commercial ones. And people like it here too much. There is a good relationship between Iran and India from the past. So we also have a very good market here. We're enjoying India too much. People are lovely people. So yeah, you're going for 12. Mostly 12 kind of the Iranian comes here in India, Iranian dates.
Well, value addition in dry fruits really seems to be the norm. Gone are the days when you had to eat those boring 5 bhigoye hue badams. It's all about value addition, adding more flavor and color to it. Talking about the same is Sameer Bhanushali. Sameer, hi, thank you so much for joining in.
Thank you,
value addition, newer brands within brands really seems to be what's happening right now.
Yes, I think the people have realized that if you now want to reach the Gen Z, then the young audience they want things in a different way. It's not going to work the same traditional way where you're going to, as you mentioned, big hoya badam. That's gone. I think the Gen Z wants color, glamour. And as you can see in our packaging, that's what we have tried to achieve. We have tried to make dry fruits the snack. It's dry fruits has always been a commodity and a staple. We want to make it a snack. Where people are not choosing the 10 rupee of unhealthy chips, and they are rather going for a 20 rupee pack of an almond, right? So I think brands are now making and taking efforts to make it glamorous and accessible and affordable to people.
Sameer, as you said, it's affordable one. It's easy to carry around, and it's becoming a snack as well. Is it more about flavors? Are you talking to millennials? Are you talking to Gen Z here, and what really is needed going forward?
Oh yes, today's generation is very demanding. They'll not take anything which is not there, not what to their expectations. So we are in touch. We do our research. We talk to the target audience, and the feedback that we are getting is that they want more flavors that resonate with the global trends. Now with social media, the trends become viral within minutes and seconds. So what's happening in US and Europe is also happening here, and we have to match that, and that's happening. And you can see that with our energy bars and with all the things that we have launching. It's with the research and the conversations we have with our audience.
So what is the value addition market right now within the segment?
Right now it's not that big. It's probably 10% and 90% is still commodity staples. But we foresee in the next 5 years this is going to take the lion's share, and we can see a 60-40 or probably 50-50 in a few years.
All right. We also have Bilal Khimji here, and you've joined in with Samir in some sense with an app now. We do understand that this is a very, very unorganized market, and maybe because of the e-commerce or quick commerce, there were a lot of Kirana guys who were losing out. So how have you pulled or plugged that gap?
Thank you, Manisha. So with Trades app, which is our new application, we are trying to move Kiranas to online. They face a lot of threats from e-commerce and quick commerce players, and they're kind of left back. What we're doing is we're creating a new store for them. They can connect with their consumers directly through an application, and it becomes very seamless through tech. We of course have multiple value-added features with it to encourage them to go through the entire trade.
And have a lot of people onboarded this? What is the kind of traction that you're seeing on this one right now?
There's a lot of interest. We have a crazy amount of applications already. We're kind of struggling to get them all onboarded, and it's fun. The team has taken a lot of effort behind this application, and I think it'll do really well by the amount of interest that we're seeing.
Also aggregate the libraries of NBC Universal, Peacock, Warner Bros, Discovery, HBO and Paramount as well. Now it also plans to double the South Indian content to about 1100 hours, taking on what has been the USP of platforms like Prime Video or ZEE5. But the biggest draw for Jio Hotstar will be sporting events. Now the new entity holds rights to all the sporting events that Jio and Disney Plus Hotstar held individually. So that's IPL, ICC events, English Premier League and Wimbledon are all covered. Now the company has also plans to widen its offerings to bring more sporting events under its umbrella. Does this now mean that then you'll have to pay for IPL? Maybe not, because the company says that some content will be available for free every day. But whether this includes IPL or not, that we don't know yet. Now, what will be interesting to see is what this means for the OTT landscape in India. With nearly 36 million paid users, Hotstar was already the market leader here. And it was followed by Prime Video, Netflix and then Apple TV+. Now, the merged app will actually have about 52 million paid subscribers to start with. And this could shoot up once the IPL starts in a month's time.
We are actually using AI to tackle AI. It has to be like that. We've actually used a lot of AI for a very long time now. We always had models where we could detect that this number is likely to be a spammer, or this message sender is likely to be a spammer. Those were some of the basics that we did a long time ago. We're now looking at AI almost across the business, not only protecting consumers and improving consumers' communication, but also from a business point of view, from our biggest revenue stream is advertising. How can we help brands leverage AI on our platform and get better bang for their buck? We've invested very heavily on various parts of our business, even operationally. We're using AI on customer support, for example. Even our legal team is looking at AI products. Our developers looking at AI products. So AI is very deep into our business now, and pretty significant investments are being made into AI.
Let's double down on India and your focus here on India.
Hello and welcome to News Centre. I'm Parikshit Luthra. The big national story, leader of opposition in the Lok Sabha and a member of the selection panel, Rahul Gandhi, is protesting the appointment of the new Chief Election Commissioner. Late last night, the government appointed current Election Commissioner Gyanesh Kumar as the new CEC. The Chief Secretary of Haryana, Vivek Joshi, was also appointed as an Election Commissioner. The appointments came hours after a meeting of the high-level selection committee led by Prime Minister. The committee also comprises of Home Minister Amit Shah and Leader of Opposition in the Lok Sabha, Rahul Gandhi. This marks the first time a selection panel was involved in picking India's top election watchdog. The government passed a law in 2023 changing the appointment process and giving powers to this high-level committee. At the meeting, Rahul Gandhi opposed the appointment. He has now made the dissent note he submitted on the matter public. In the note, Rahul Gandhi said it is disrespectful and discourteous to make a midnight decision when the selection process is being challenged before the Supreme Court. Rahul Gandhi argued that the composition of the committee is tilted in favour of the government and a case will be heard by the Supreme Court within 48 hours. But his dissent was overruled and the government went ahead with the appointments. The Association for Democratic Reforms moved to the Supreme Court today, opposing the appointments. The apex court has listed the matter to be heard tomorrow. Ashwin Kumar is here with the details. Ashwin, give us a sense of what happened in court. Give us a quick background and what can we expect now?
Well, allow me to bring in some context here. In March of 2023 is when the Supreme Court had frowned on the fact that there is no law that governs appointments to the Election Commission, and at the time had appointed a temporary selection panel comprising of the Prime Minister, the Leader of Opposition and the CJI, the Chief Justice of India. This was meant to be temporary. Now, subsequently, later that year, in December of 2023, the Centre passed a fresh law which replaced the CJI with a Union Cabinet Minister in the selection panel, which is what prompted a whole host of challenges being filed here before the apex court, which is what prompted these very same questions to come to light with the appointment of Gyanesh Kumar as the new Chief Election Commissioner. The question that was raised first by Rahul Gandhi, then by the petitioners here before the apex court, is that why is this appointment being rushed through? The question that Rahul Gandhi had raised as a part of his dissent note is that the Supreme Court is already seized of the matter. The Supreme Court is already hearing this case. The matter is sub judice, and if that is the case, why rush through this appointment? Why not wait for the Supreme Court to hear and decide this case? Finally, this was the very same submission that was made this morning by the Association for Democratic Reforms. They said that the Supreme Court judgment is being made a mockery of, that constitutional norms are being violated, and that there is no independence as far as this new selection panel is concerned, and therefore there is an urgent requirement for intervention for hearing by the Supreme Court. So importantly, the Supreme Court has agreed to hear this case. Tomorrow will be a critical day where the Supreme Court will look to give guidance on what happens with respect to this new selection panel, what happens in the interim, and what happens by when the Supreme Court will finally hear and decide this case.
And joining me now to take this discussion forward is Jagdeep Chokhar, co-founder and trustee of the Association for Democratic Reforms. Mr. Chokhar, thank you for joining us on the program. Let me begin by asking you about the issues raised by you in your plea. ADR, the Association for Democratic Reforms, has approached Supreme Court about the manner in which this appointment has been made, while the process of appointment has been challenged before the apex court.
Let me first correct what your colleague said. The ADR did not raise the matter today after Rahul Gandhi raised it yesterday. ADR filed his petition 2 years ago, soon after this law was passed. And for the last few months, ADR has been filing applications to the Supreme Court, seeking an urgent hearing, repeatedly bringing to the attention of the Supreme Court that the current CEC or the then CEC will finish his tenure on February 18 and a decision should be taken before that. The last hearing was held on February 12, and one of the judges in the bench was taken ill, and therefore it was decided to postpone that hearing from the 12th of February to the 19th of February. Even at that time, our counsel informed the Supreme Court that the appointment might happen on the 18th or before the 18th, and therefore the hearing should be held early. But the Supreme Court said that we will take a decision, we'll hear it on the 19th, and if something happens before that, we will see what to do about it. So it is not post Rahul Gandhi's dissent note, it is 2 years before that, number one. Number two, since we have challenged this law, because we are the ones who had filed the original petition about making a law for appointing the election commissioners. We are the original petitioners, and we have challenged that this law, which is regarding the appointment, follows the letter of the Supreme Court judgment, but not its spirit. The Supreme Court judgment of 2023 spent about 200 pages explaining the rationale for this appointment, why this appointment should not be entirely within the domain of the government or the executive. The opposition and some other independent, neutral people should be part of the appointment. So, since the opinion of the Supreme Court, since the rationale of the Constituent Assembly has not been honored, we have gone to say that this law is violative of the Supreme Court direction and needs to be modified. We will know about that.
So you're saying, sir, essentially right now you're saying that considering that your plea, which you had filed 2 years ago, and the Supreme Court's own decision, the matter is pending, therefore the CEC should not have been appointed before the court had thoroughly disposed of the matter.
We had filed an application to the court to this very effect.
Right. What are you now seeking? What are you now hoping for in terms of relief, Mr.
We are hoping that the Supreme Court will say that this law that was being made by the Parliament is not constitutional, number one. And number two, it should say that the appointments made under this law are not valid because it was already under challenge before these appointments were made.
Right. Thank you so much, Mr. Chokar, for joining us with your view. Let's also see what happens before the apex court. Now, one more question, if I could ask you before we end this discussion. What do you think will be the challenges before the new CEC as far as conducting elections are concerned? The outgoing CEC has spoken about the questions raised by political parties time and again for political convenience regarding the electoral process.
I do not speak on behalf of any political party, but we as a civil society organization who has been working on elections for 25 years, we have worked with many election commissioners in the past, but over the last 6, 7, 8 years, the situation of the Election Commission seems to be that they do not think that people at large have a stake in the electoral process. They seem to think that only the candidates who contest elections and political parties are the stakeholders. They have steadfastly refused to give any information to citizens when it is asked for. And that is not an appropriate thing because the Election Commission of India is answerable to the Constitution. And through the Constitution, it is answerable to the people of India. So the primary responsibility of the Election Commission is to the people of India, neither to candidates, nor to political parties, nor to the government of the day.
Right. Thank you much, Mr. Chokar, for joining us. Let's see what happens now in the apex court. We're taking a short break on that note, but coming up on the other side, United States and Russia begin talks in Saudi Arabia to end the Ukraine war. But neither Ukraine nor Europe get a seat at the table. A special discussion when we return with Meera Shankar, the former Indian envoy to the United States, and also Ambassador K.C. Singh, India's former ambassador to Iran.
How do you see this market evolving? How do you see this market growing for you? What are the opportunities that you want to build on, considering the fact that the lion's share of your revenue comes from the market? I mean, do you believe you've hit saturation here in India?
So India, firstly, is our most exciting market. I think globally, for a lot of companies globally, India is the most exciting market, right? It is for us as well. Our biggest investments in the last, I would say, 6 or 7 years have been in India. We actually have more engineers in India than we have in our head office in Stockholm now. We build in India and we ship globally. A very large chunk of our product is shipped globally out of India as well. India continues to grow very, very rapidly. The entire stack that is available to an Indian citizen now to conduct business digitally has made the mobile phone number even more important than it used to be. And that's where we believe our relevance continues to grow in India. We haven't reached saturation at all. We are fortunate to have a large user base in India. I think we crossed 350 million users in India, but we still have a huge space.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and interesting.
Welcome back. You are watching News Center. United States and Russia have begun talks to end the war in Ukraine without any representation from Ukraine or Europe. U.S. Secretary of State Marco Rubio and Russian Foreign Minister Sergei Lavrov are leading the initial discussions in Saudi Arabia. The Kremlin has said that Russian President Vladimir Putin is serious about negotiating a settlement to end the war. It added that Russia would prefer to achieve all its aims peacefully. The Russian government has also said that Putin is also ready to hold talks with President Zelensky if needed. However, Moscow has questioned the legitimacy of the Zelensky presidency. Meanwhile, the Ukrainian premier has maintained that his country will not abide by any peace deal made without Ukrainian representation. European leaders have also insisted that they must have a say in the talks to end the war in Ukraine following an emergency meet in Paris. European officials also discussed the possibility of deploying peacekeeping troops in the region. British Prime Minister Keir Starmer has said that the deployment of US troops can maintain lasting peace in Ukraine.
There must be a US backstop, because a US security guarantee is the only way to effectively deter Russia from attacking Ukraine again. And I've been clear today, Britain will take a leading responsibility, as we always have, because Ukraine must have a secure future, Europe must have a secure future, Britain must have a secure future, and democratic values must prevail.
Joining me on the show, our former diplomat K.C. Singh, who's been a secretary in the Ministry of External Affairs, and Meera Shankar, former ambassador to the US. Ambassador K.C. Singh, let me begin by asking you, what's the significance of having these talks between US and Russia in Saudi Arabia, in Riyadh? This was also the US president's first foreign trip in 2017. Saudi Arabia was the location. So this seems to be a preferred destination. But how can this help end the war in Ukraine?
Well, Saudis have had very close relations with the Trump family. We know their money has gone into his son-in-law's investment fund and so on and so forth. But that's not the reason. I think both Emirates and Saudi Arabia have played a neutral role. Even when they went to Geneva for Ukraine talks, they didn't sign the final statement that came out. And both of them are crucial to an agreement on the production of oil with Russia. They have OPEC plus, and the plus in that is Russia. So there is a channel that the Gulf countries have kept open to Russia. But what is happening in Saudi Arabia today has been building up for the last 10 days or 15 days. It's not something which has happened overnight. And we saw at the Munich Security Conference, you had the American Vice President literally cutting Europe loose. He even did the unprecedented thing of not meeting the German Chancellor, but having a meeting with the AfD, which is the Alternative for Germany, a far-right party, which indirectly he has also been supporting. That's why the Europeans met in Paris yesterday, because they realize that Trump is moving in a certain direction, and the Europeans have to look at securing their own security or the future of NATO with or without or with partial assistance from America. So there is a larger game which is afoot. And it's always been known that President Trump has been soft on Putin. There have been allegations that we don't know what control Putin has over him, but he simply just likes these autocratic, authoritarian leaders. But his ability to negotiate is highly overestimated by Trump, and that is how he mishandled North Korea. He went around, he walked into North Korea, took a step inside North Korea at the free zone, just crossing it, and so he has an overestimation of his ability. And in this case, I think very clearly the signal that's gone out is he's engaging the Russians. They will present a deal ultimately to Zelensky. Zelensky, incidentally, was in UAE yesterday and is then headed to Saudi Arabia. So he may not be at the table, but I think there is some indirect connection. They are keeping him in the loop because yesterday he was being received by Mohammed bin Zayed, ostensibly because it's for children to be handed back, but that's part of dealing with the Russians. So there's a much larger game which is afoot. And in that, what emerges is, I think, a status quo where Zelensky will probably have to lose all the territory which is with Russia. What is being discussed is how do you make sure that the Russians don't then resume fighting after some time? What are the security guarantees? How do you ensure that Ukrainians are, they get compensation for all the destruction done? One last thing, and surprisingly, the Americans made an offer to Ukraine that you give us half your mineral wealth and we'll come to your aid. Now, that is the most transactional and, you can say un-ally-like offer that could have been made to a country in Europe, which is fighting to retain its sovereign integrity, territorial integrity and sovereignty.
All right. Ambassador K.C. Singh, stay with us. Let me get in Meera Shankar as well. Ambassador Shankar, what do you think is the strategy by having direct talks with the Russians in Saudi Arabia, but not having Europe on the table at this stage and not having Zelensky either? Yes, Zelensky will have a meeting with Saudi Arabia on this issue in a few days from now. But what do you think about the optics as of now?
Look, Trump has signaled that he is going to proceed with the peace negotiations, and he's not looking at long and protracted wrangling as the Europeans were hoping. Both Zelensky and Europe were looking at somewhat protracted negotiations and, building up leverage and so on. And what Trump is signaling is impatience to get a deal done. And if Europe and Zelensky are not on board, then not to have them as part of the discussions. He has had his defense secretary say very clearly to the NATO contact group that NATO membership for Ukraine is unrealistic. And it is also unrealistic for Ukraine to expect to gain back the territory that it has lost since 2014. So he's putting very bluntly the terms on the table and putting kind of red lines for unrealistic expectations in Europe and Ukraine, which actually could kill the possibility of a deal and mean that there will be prolonged fighting. As far as Europe is concerned, they are trying to have their own position. And so is Zelensky, where he has said that he is not at the table in Saudi Arabia, and at the same time that he is not going to automatically accept the outcome from that meeting in which Ukraine is not a part. Europe is also stressing that there can be no solution to which Ukraine is not a party. It has to be Ukraine specific. So the Europeans are positioning themselves for somewhat of a nuanced difference with the US on the contours of any possible deal and negotiations with the Russians. What the outcome is going to be, I don't really know. But Zelensky is very keen on security guarantees, and he wants the US to be a part of security guarantees, which will ensure that Russia doesn't move in. US has said they are not going to be part of security guarantees for Ukraine at this stage. So where finally a consensus emerges, I don't know. Putin, of course, has signaled that he wants the core issue to be addressed, and that is NATO's eastward expansion and offer of membership to Ukraine in NATO, but also the kind of, 21st century order that there will be in Europe. He's also signaled that he's willing to resume nuclear discussions with the US. And Trump has also signaled that he wants to start nuclear talks, but he wants China in. He doesn't want China out of the talks because they see that China has been expanding and modernizing its arsenal. And therefore, it's become a consequential player in this nuclear triage. And there can be no meaningful agreement which leaves China out of.
Ambassador Shankar, I'm going to come back to you. Let me get in K.C. Singh, Ambassador K.C. Singh once again. Ambassador K.C. Singh, we have seen Donald Trump, and even during that conversation with Prime Minister Narendra Modi at the White House, he said it repeatedly that this is a ridiculous war. It needs to end. Many young people are dying every day. And he's spoken to Putin. He's spoken to Zelensky. They are trying to find a way out. Do you think that both Russia and Ukraine are somehow now ready to end this war? Is Putin ready to probably come to some sort of conclusion and ending this war? Because that is probably the most important thing right now.
I think Putin was probably waiting on to see the outcome of the US election. He knew that if Trump comes in, he will have a much better deal than a Democrat would have offered him, because there are sanctions on America. Now, if you're directly engaging the Russians have brought their NATO plus agenda on the table. So just not joining NATO is one thing. I don't think there was any urgency. That could have been settled without war. I don't think war was necessary for that. But what they also want is they want to demilitarize Ukraine. They want certain Russian influence of Russia or Russian language or culture to remain there. Now, he'll have a longer list. He wouldn't have had that list if the Americans had not straight away traded off what was on the negotiating table, which was membership of NATO or a future security order in Europe. Now, Trump again did the same thing in case of Afghanistan. He may keep blaming Biden for mishandling the deal with Taliban, but he struck the deal with Taliban. And he struck it by setting an exit date. Now, if you have an exit date, then Taliban are not going to be, they realize ultimately they are not in any hurry. You are in a hurry to leave. So you undercut your own negotiating strategy. In this case, I think he has done that. He's given away the basic negotiating position that you had. And now it's only a question of details and seeing how much you can press Ukraine and how to maintain a status quo. And the Russians have come to Saudi Arabia with wider offers of, oil. You have lost $200 billion. Your oil companies can come back into Russia. And business and trade, that makes sense to Trump. You must remember that all this is happening alongside his trade war with China and with the rest of the world. That's April the 1st, when he says reciprocal tariffs are coming in. So he's conducting a trade war. In the meanwhile, I think he wants to disengage here. He wants to break Russia away from China. He thinks he'll be able to do this by selling Ukraine down the drain. He may or may not be able to achieve it. I think he underestimates feelings of nationalism, feelings of nationhood, that just because countries are under pressure and Europeans ultimately will have to think that if Ukraine can be sold out today, tomorrow they're already prepared to see NATO troops, American troops being pulled out from Europe. So they are already, that's what they would have discussed in Paris. But unfortunately, the German election is 5 days away. The French have emerged weaker from the last parliamentary election. The president himself is weaker. So there is a degree of stress and political turmoil in Europe.
Okay.
And in that, you find J.D. Vance, the U.S. vice president, urging the extreme far-right party, encouraging it in Germany. I don't know what their game is, but really it's highly disruptive over what is happening in Europe and the existing order.
All right, my final question to Ambassador Meera Shankar. Ambassador Meera Shankar, what do you think will be the kind of deal, kind of face saver that will be acceptable to Ukrainian President Zelensky right now?
I don't think that he will really matter, because if push comes to the shove, the US will bring about regime change in Ukraine. Since Zelensky and the existing order in Ukraine was very much created with US assistance. So I think Zelensky will have to lump it. That's basically the bottom line. The US will do whatever deal it wants with Russia. It may give some sweeteners to Ukraine in terms of defense equipment. If Ukraine falls in line, they might arm Ukraine. How that will play out with the Russians, we don't know. For the Russians, I think removal of sanctions will also be an important aspect of the negotiations. At the moment, the US is not talking of full withdrawal of sanctions. They're really talking of withdrawal of some sanctions in exchange for a ceasefire, a demilitarized zone, and monitoring. And in the meanwhile, discussions go on for a final peace agreement. And when that peace agreement is signed, then maybe the remaining sanctions will go. But Putin is pushing and saying, I don't accept a temporary ceasefire because it can always come apart. I want to go for a final settlement. And that final settlement must address the root causes of Russia's concern.
All right. Thank you very much, Ambassador Meera Shankar and Ambassador K.C. Singh for joining us. Let's see what way these talks in Saudi Arabia go and how this war in Ukraine will come to an end. That's all we have time for here on News Center. Thank you for watching. Goodbye.
Most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
China was very cheap and on the margins, especially with the DeepSeek. I think this has really rekindled hope. And by the way, you know, Xi Jinping is meeting the corporate investors and business people as well. So I think this is kind of bringing back the hopes that, you know, China may not be as against the capitalism as earlier thought out to be, right? So I think all this combined, plus I think, yeah, Indian market was good, fairly valued, good story, but there's no surprise there. There's no big trigger. It's good, but not for the time being, right? So if you're invested, that's fine, but otherwise there might be short-term money might be chasing, you know, China for the time being, right? And US, by the way, right? So there's no, I mean, it's a popular trade. It's, I don't know whether it'll be right or wrong, but currently the trade is go long US, long China. Second is the credit growth in India. It has come to 11-12%. If RBI is able to just manage this economy in the manner that monetary policy and fiscal policy work in tandem, and the credit growth comes back to 15 to 18%, that's a thing to watch. I have always maintained a positive stance on India. It is just on the margins, where do you go underweight, overweight? Look, that's what the world does. If $100 start from US, 80, 70 go to US, 20 go to Europe, 10 go to emerging markets. Within this 10, about 2 comes to India. That's the 20% allocation.
Big relief for Kotak Mahindra Bank as the RBI has lifted the supervisory restrictions that were imposed after 10 months. Now, the bank can onboard new customers through its mobile as well as online banking platforms. The RBI has also lifted the embargo on the issuance of fresh credit cards by Kotak Mahindra Bank. Now, remember, the RBI embargo was estimated to cost the bank about 450 crore rupees annually. Joining me now for the first interview after the RBI lifted those restrictions on Kotak Mahindra Bank is the MD and CEO, Ashok Vaswani. Mr. Vaswani, many thanks for joining us here on CNBC-TV18. Relief, I would imagine. The last conversation that we had, you were talking about the possibility of the RBI lifting those restrictions. You believe that a lot of work had been done by the bank, and you hope that the RBI would be satisfied. It's taken 10 months, but it's finally done. I want to understand from you, Mr. Vaswani, what are the top things that you have changed in order for you to be able to get the RBI to lift the embargo?
Shirin, first of all, great to be with you again, and particularly under these circumstances, now that the RBI has lifted the embargo. I think, Shirin, like we kind of talked about last time we were together, we have utilized this embargo period not only to make basic fixes in terms of resilience, in terms of security, in terms of capacity, but also to position the bank for the future. Right? And we've actually defined our new digital strategy, the new digital apps and the net banking platforms that we're going to go and take ahead. So those have been launched, and we are getting very good customer response from those. So I'm really looking forward to this with a great sense of excitement as we land these new things into the marketplace.
Well, let's try and understand from you what that excitement in your words can potentially mean in terms of numbers, Mr. Vaswani. But before I talk about the onboarding that you're likely to do on account of the lifting of the embargo, I want to understand from you whether that 450 crore rupee number, which was expected to be the hit on account of the restrictions annually, what has been the actual impact of the RBI's actions?
Yeah, so Shirin, like we've been reporting out in our analyst calls every kind of quarter, and I can only talk about up to the last quarter, it was very much in line with the kind of guidance we gave to the market, and therefore pretty much in line with the kind of number, that 450 crore number that we've talked about.
Okay, so now, Mr. Vaswani, what should we expect in terms of next steps? You said that you feel digitally ready as well to attack the future. The expectation is that there will be a calibrated approach, or will there be an aggressive approach to reclaim market share, both as far as the unsecured side is concerned and to go after the credit card segment as well? So I want to understand from you, what is the appetite now that you have on the back of the measures already undertaken and the green flag being waved by the RBI?
Sure. So Shirin, for starters, we're going to launch a complete brand repositioning campaign, which I'm really, really excited about. That should hopefully happen before month end, where we start presenting Kotak as the go-to financial services organization for the aspirational Indian, right? And that's what we stand for. And for the first time, we're going to bring all the group companies and everything under one kind of Kotak brand.
If I can now sort of bring you down to some numbers, and I want to understand from you where you actually see growth coming in as far as the unsecured side of the business is concerned. You've dropped to about 10.5% in the third quarter. The aspiration of taking that number back to, mid-teens, high teens, what is the expectation in light of the supervisory action now being lifted?
So, Shirin, we've always maintained that we would like our unsecured exposure to our total loans to be around the mid-teens. That continues to be the kind of goal. Now, as you know, we've dropped to about 10.4, exactly as you quoted. We did the acquisition of the Standard Chartered portfolio, so that will take it up a little bit. And the idea still is to get to that mid-teens number. Now, included in that is retail microfinance, and as you well know, microfinance is going through a bit of a hard time right now, so we're not going to kind of grow that book till things kind of stabilize. So directionally getting to that 15% is where we're going to go. The mix may change as we kind of get there.
So what can we realistically expect in terms of the broad timeline that you're looking at in terms of moving from this 10.5 to 15%, which is the aspirational number there, also given the fact that there are challenges in the environment today?
Yeah, so Shirin, you're absolutely right? The space, right now we're not going to go out on all three engines of unsecured growth. Microfinance is going to be muted till we kind of sort out stuff. And so let's see how long that takes. Frankly, as of now, it still seems to be in a kind of difficult spot. Like I said on the last analyst call, we feel very good about our personal loans. That's kind of, clearly the credit situation is improving quite dramatically. And on credit cards, it's kind of plateauing. So that kind of continues. And as we see green shoots, we're going to ramp up. So in the first instance, the personal loan ramp up, 3,200 crores with the Standard Chartered portfolio, more organically, get the credit card going, and then microfinance follows a little later when things have got a little better and more stabilized.
If I can just double down on what you spoke about there, the pain as far as the microfinance side of the business is concerned, and this has been something that we've been reporting here on CNBC-TV18. You said that the problems continue to exist, and what I gather from your commentary is that we're not done yet with the pain. So we possibly could see a lot more or a little bit more pain on that side. What's the expectation?
So, Shirin, what has happened, at least in our case, is that we kind of picked up that things are getting difficult pretty early. Pretty much January of last year we picked up, and therefore we kind of slowed down things. So obviously our exposure and our loan book has come down quite dramatically. We are seeing, it playing out in different states at different points in time, and we will continue to see an elevated losses at least I think for the next quarter or two, and I'm hoping after that it kind of eases out. By then, a lot of our book also would have kind of rolled off, and I think that's common, and I think that's a industry issue that we're seeing through and through. So I suspect we will see the same level of pain, maybe even slightly more elevated for this quarter and next quarter.
Elevated losses for this quarter and the next quarter, perhaps slightly more as well. That's the outlook there as far as the MFI space is concerned. And you're right, this is a industry-wide situation that we are seeing at this point in time. But, just to take that forward on the unsecured side, because red flags have been raised, do you anticipate elevated concerns there as well?
No, Shirin, there clearly the personal loan book, at least in our case, like I said in our last analyst call, the personal loan book has improved quite dramatically. Cards is already plateaued, so we expect that to improve as well. So that commentary is very, very consistent with the commentary that I gave at our last analyst call.
Right. On the credit card side, now that, you have the ability to go out there and chase growth once again, what should we expect now in terms of the next steps, in terms of reclaiming market share? And how much share have you lost, Mr. Vaswani, on account of the restrictions?
So, Shirin, clearly our spend share has fallen. I think we've lost about 40 or 50 basis points of spend share, but I think we can get that back. I think the team has done a remarkable job of increasing the value on our existing card so that customers still found a lot of value, and our existing customers helped us through the embargo. Now, as we go out, and acquire new customers, I'm hoping our market share improves, and at the very least, we claw back our market share. We've also got a couple of new products on the anvil, and those new products, I'm hoping, will make a big difference as they land in the marketplace.
And by when can we expect these new products to be launched, Mr. Vaswani?
So I'm hoping pretty soon. All of them will not be launched, obviously, at the same time, but hopefully pretty soon we launch in the next couple of months the first product, and then the second, and then the third.
Mr. Vaswani, in terms of private capex, and I think that continues to be a challenge, what is the indication that you're getting at this point in time? You talked about some green shoots. Where are you seeing the green shoots today? And what's the expectation from here on, given the many measures that have been taken by the Reserve Bank as well as by the government?
So, Shirin, really, honestly, private sector capex, we are still not seeing it kind of kick in, right? So a lot of it is really still dependent upon government spending, and as you know, government spending has been a bit muted in the first couple of quarters, but hopefully that kind of kicks in, and on the back of that, we get the private sector capex happening. But as of now, still not seeing a kind of firm trend on that front.
Not seeing a firm trend as far as private capex is concerned, and that continues to sort of have a cloudy outlook from what I gather, again, from your comments. But what about deposit mobilization, deposit growth, Mr. Vaswani, and how you see that playing itself out, given, again, the environment that we're seeing today? We've seen a significant correction as far as some parts of the stock market is concerned. How do you see that impacting deposit mobilization? Because a lot of that money was ostensibly also moving towards the stock markets.
Yeah. So, Shirin, I think there are a couple of macroeconomic indicators there, and then there are a couple of, things which are more unique to Kotak. From a macroeconomic indicator, I think, obviously the stock market has kind of corrected somewhat, and, there are people who kind of invested a long period of time. They're stable. They can continue. For them, it's more a loss of profit as opposed to anything else. The people who have been more recent entrants into the marketplace obviously have got hurt. So as you know, and as has been reported, there has been some slowdown in the SIP kind of momentum. Not significant, but some kind of slowdown. I think the second big macro environment actually is the budget, where, the minimum level of tax only starts at about 12 lakhs. So that's going to be money that's kind of released into the system, which is very, very encouraging. And that will be low-cost, granular kind of deposits for the banking industry, as a whole. And that should help. And finally, I suspect that government expenditures are going to kick in stronger into the fourth quarter. So that should ease up the kind of liquidity. Plus, the RBI has done its share of helping on the liquidity. So hopefully this will start kind of showing up in the numbers and in the balance sheets of the banks. Now, coming to Kotak, I think in Kotak, the question is not really quantum of deposits. Shirin, as you would have seen, we've grown our deposits quite nicely year on year, and we're continuing to grow. The question is, can you maintain a cost of funds? And we've maintained our cost of funds through the kind of period, right? And what is really working for us is products like Active Money. And Active Money has grown very nicely and gives us a lower cost, a much lower cost than time deposits. Very excited about now onboarding new 811 customers, because that gives us granular low-cost deposits, which we can kind of grow. And then, obviously, as we go back into the marketplace and get affluent customers, I'm hoping to attract more deposits with higher ticket sizes there. So overall, let's just say and cautiously optimistic of continuing to grow the deposit franchise at Kotak.
We will take a break here on CNBC-TV18 and continue our conversation with Ashok Vaswani, the MD and CEO of Kotak Mahindra Bank. Remember, the RBI has lifted its supervisory restrictions on Kotak Mahindra Bank. What does the future hold? We'll find out.
$1 trillion, about 20 billion goes to India. That is the long-term equation. That is how the numbers stand.
Welcome back. You're watching the CNBC-TV18 exclusive. We're in conversation with the MD and CEO of Kotak Mahindra Bank, Ashok Vaswani. Now that the RBI has lifted its supervisory restrictions on the bank, they can issue credit cards again and onboard new customers. What does the future hold? Let's find out. Well, you were talking about being cautiously optimistic as far as deposit growth is concerned, Mr. Vaswani. But, CNBC-TV18 analysis of the third quarter for private sector banks clearly highlights the fact that Kotak Mahindra Bank has outperformed versus the large private sector banks in Q3. Now, what do you feel confident in being able to deliver the kind of performance that you have been able to do, whether it's as far as your NIMs are concerned or even on your slippage ratio, as well as, firing on some of those new engines of growth that now have reopened for you?
Yeah. So, Shirin, I think I feel very good about where we are. And obviously, changes in the repo rates and stuff like that will have some impact on stuff. The fact that we are out of embargo and are going to go out strong with brand campaigns and credit card campaigns and 811 means we will see accelerated expenditures. But Shirin, like I always have told you, right, this is not about a day in the sun or quarter in the sun. This is about building a world-class, sustainable kind of franchise. And I think you'll start seeing those things as we go along in the next couple of quarters.
Largely organic growth, or are you also open to inorganic possibilities? You talked about the Stancy book. That's, of course, done. How much appetite do you have in the current environment to look at inorganic opportunities?
Shirin, we are very excited about inorganic opportunities. In fact, any kind of portfolio acquisitions is something that we absolutely love, and we would look at every opportunity that comes our way. Obviously, it has to make sense from a strategic perspective, and then has to make sense from a financial valuation perspective. And if it ticks those two boxes, we are very, very much up for such opportunities.
But are there any opportunities on the radar at this point in time? Or let me reframe that. Are there any specific gaps that you believe that you could perhaps address better by buying rather than building?
So, Shirin, it really is a matter of what comes up, right? If there are things that kind of come up at a decent valuation and fit in strategically, we will definitely execute against that.
Okay. Anything on the radar?
We look at everything, Shirin.
Well, we're still waiting to hear from the government as far as IDBI Bank is concerned, so we don't know where that currently lies. But, you know, again, Mr. Vaswani, going back to that one Kotak approach that you spoke of, again, detail for the benefit of our viewers what we should realistically expect in terms of next steps, in terms of kickers, and what that could mean in terms of numbers, and how soon we should anticipate any kind of accretive move on account of it.
So, Shirin, what we're really saying is, we are going to build propositions for our various customers. So immediately out of the gate is going to be 811, and 811 provides a holistic range of products and services for the core Indian customer. That we're going to ramp up with immediate effect. Then a little down the road, we're going to ramp up affluent, and then we can see how these things land in the marketplace and how they get taken up. I'm very encouraged by the response that we are getting on 811. But obviously that was muted because we were under the embargo. And when we open it up, we will see how that goes. So in our next conversation, I can report out how that's kind of going.
Yeah, but you know, if you can leave us with some indication of, because you said you've got very positive response even before the restrictions were lifted, what's the indicative number that you can leave us with, or what's the aspirational target that you've set for yourself as far as 811 is concerned?
So, Shirin, we were, you know, if we can get back to acquiring the 400,000-500,000 customers a month that we were pre-embargo, for a starting point, that would be a great place to be.
Okay.
A month.
Acquiring 400,000-500,000 customers a month, that's the run rate that you're working with?
Yep.
So, Mr. Vaswani, let me end by asking you, you know, what do you see as the big opportunities, or where do you believe you get most confidence from at this point in time? And what would you signify or qualify as the key risks that you're going to be mindful of?
So, Shirin, look, the way we think about Kotak is actually runs on like 4 engines, right? It's obviously got the asset management engine, the capital markets engine, the insurance engine, the banking kind of engine. And that is the beauty of Kotak, that really, whatever the situation is, this kind of diversification helps in managing cyclicality. It also helps us in meeting needs of customers. So, you know, whichever way the market kind of develops, we have an opportunity and we can go ahead. And that really kind of helps us. Obviously, right now, on the horizon, very, very, very conscious of how the economy is growing and what is the implications from a credit perspective. And that is something we monitor very carefully. We want to manage through any kind of credit cycles and make sure that we kind of keep the super tanker going in good stead.
So how confident do you feel about the state of the economy today, Mr. Vaswani? I mean, you know, you gave us some indications of private capex, as you pointed out, hasn't kicked in just yet. There's an uncertainty there. There is pain on the MFI side as well. But, you know, overall, how confident do you feel about the state of play as far as the economy is concerned today?
So, Shirin, I think that, look, the RBI has taken measures. I think the government spending will kind of come back. So I think we should get back to a decent level of growth. I think it's in the minds of everybody. And I think there are actions being taken to make that happen.
Mr. Vaswani, back to the stock markets and what you're seeing there, there is a fair degree of pain that we've seen, especially in the last few weeks on the mid-cap and the small-cap side particularly. What's the outlook from here on, given the fact that we've seen significant FII selling? And also, what does this portend then for the IPO market? 2024 was a breakout year as far as the IPO market is concerned. What do you foresee now for the capital markets in 25?
So, Shirin, I think that IPO trend was actually very strong, and from everything what I see, it continues to look very, very strong. A lot of the stock market kind of corrections have really been on the back of foreign investors selling out, which is due to a completely different thing around, the dollar, or what is famously now being referred to as the kind of Trump trade, right? And I think, in a sense, that these kind of corrections is actually healthy. In the last 4 or 5 years, customers have not seen a kind of downturn. Now they know what it means to a downturn, and this is bubbles kind of being deflated, which is a good thing. From an economy perspective. Now, where this goes and stabilizes, and does it go down another 5 points or goes up another 5 percentage points? I don't have a crystal ball in front of me. Like we keep telling our customers, you're invested for the long term, and the long term, these kind of investments make a lot of sense. So we'll see how it all plays out.
I just saw a post, Mr. Vaswani, and I'll end with that, suggesting that there's something happening on the 25th of the month. Is that the relaunch that you were talking about, or is there something else that we should be prepared for?
No, Shirin, that's what we're talking about, the launching of the brand campaign.
Launching of the brand campaign. Mr. Vaswani, always a pleasure. Appreciate you joining us here on CNBC-TV18. We wish you the very best of luck with the future actions as the RBI has lifted its supervisory restrictions placed on Kotak Mahindra Bank 10 months ago. Always a pleasure. Appreciate you joining us here on CNBC-TV18. That's the MD and CEO of Kotak Mahindra Bank there on the road ahead now that they can onboard customers digitally as well as issue credit cards once again. We will take a break. There's a lot more coming up. Don't go anywhere. Back in a moment with more.
Clearly today, financials looks interesting category from a valuation front. We are possibly at a bottom in terms of what we've seen historically on financials. Earning growth is on track. Even last quarter or so, financials continue to report a nice earning growth. In fact, if you look at quarterly, financials are almost 40% of NSE 500 profit. So it's a large, profit surprise or profit growth coming from that segment. Financials are interesting. Yeah, consumers can be a nice sweet spot for a lot of volume growth, stroke profitability growth, because post budget, that a large number of 80,000 crores to 1 lakh crores range for tax saving by individuals, which can flow into consumption related activities. If you look at markets, whatever concerns of valuations were more in the the larger market, like small cap, mid cap indices had these challenges of valuations. I think on a large index, Nifty reasonably comfort on valuation front, plus all those factors you mentioned, economy on a better track, especially the December GST collection was pretty good at double digit collection growth we saw for quite some time. So yeah, macroeconomy angle, things looks okay. Government policies in place, RBI policy also has changed the the dynamics in terms of giving a lower rate environment we've started. So that way looks good.
More incomes in the higher bands have also been brought into the lower bands, so that they'll benefit from a lower tax rate. So if you would only look at the rate charts that we've come up with, where the income bands and the rate applicable to them are also rehashed in favor of every taxpayer. So if you are talking of the new regime, the new higher incomes are coming into lower band, the rates for all of them have also been brought down. So on the
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The Sensex and the Nifty end with March losses after a last hour recovery. Mid-caps and small caps see some wild swings. IT stocks buck the downtrend. A promoter group entity at Bharti Airtel pairs nearly 1% stake in the company for 8,500 crore rupees. Another promoter entity along with marquee global and domestic investors pick up the stake. Tesla posts job offerings on its LinkedIn profile for 13 positions in India days after Elon Musk's meeting with Prime Minister Modi in DC. Sources say the EV maker is likely to enter India with a low-cost model, which would be launched in the US later this year. Opposition leader Rahul Gandhi protests the appointment of Ganesh Kumar as the new Chief Election Commissioner, says it's disrespectful and discourteous to make a midnight decision when a case is pending before the Supreme Court. The apex court will hear a petition filed by the Association for Democratic Reforms tomorrow. The US and Russia begin talks in Saudi Arabia to end the Ukraine conflict, but neither Ukraine nor Europe get a seat at the table. Zelensky warns his country will not abide by any peace deal made without Ukrainian representation. A Delta Air passenger jet crashes and flips on landing at the Toronto airport. All 80 people on board evacuated, 18 people injured, 2 in critical condition. Well, let's start with the market action. We saw a late recovery which wiped out the losses on the Lal Street today, but the Sensex and the Nifty still closing in the red. The Nifty, though, managing to close at 22,945 flat, down about 14 points. The Sensex coming off its lows, closing 29 points lower. The Midcap index was up 600 points from the day's low, but the small caps continue to sell off, with that index down by about 170 odd points. That's the Nifty Bank, down about 170 odd points today. Prashant standing by now to wrap up the market action for us. Coming off their intraday lows, Prashant, but nevertheless, the weakness continues.
I mean, the silver lining was that we did not fall that much and we were only mildly lower, if that. So the Nifty is up on your screen. From the lows of the day, there was a 100-point recovery. The Nifty Bank also recovered 300 points from the day's absolute lowest levels. Mid-cap index, flattish close, decent recovery, but no such luck for the small-cap index, which ends down about 1.6, 1.7%. And that's the reason why market breadth declines to advances were still steeply in favor of what was down today. Now, the large caps and where there was some activity, and I'll start for a change with what was up. So you had NTPC, Tech Mahindra and Wipro, which stood out as stocks which looked up. On the losing side, IndusInd Bank, of course, has been dilly-dallying, no clear direction, but it's come off the lows and it's not making fresh ones. Trent and Bharat Electronics is the other one which participated on the downside. Now, broader markets, I'll start with what was down. Zen Tech, big cut once again, 10%. Turning out to be a pretty tough week for this. RateGain is another one, about 18% gone in 2 days now. That's basically this week. Swan Energy, Goldium is another lab-grown diamond company, had rallied quite hard to about 600 levels. And now, of course, is seeing corrections. Wellspun Enterprises, EMS Limited, All Cargo are some of the other names which come up on the radar. In the broader market, what was up, these IT companies, Persistent, LTI Mindtree, some of the MNC names like Glaxo, Gillette was up. And these are, by the way, some of the top volume-led gainers today. The consumer names, Swiggy, Phoenix Limited, Senco. And then, of course, you had names like NLC India, Triveni Turbine, and Thermax, which also saw some recoveries. But these are just recoveries after what have been extremely sharp cuts. We'll have, of course, US market for company tonight, which was absent yesterday. So more cues, more commentary, which we will wake up to. But it's, taking each day at a time. The market, of course, has been sold very, very aggressively. And people have been waiting for that bounce, even if fleeting, a bit of a bounce here. Back to you.
All right, Prashant, many thanks. That was the stock market action. The rupee weakened marginally against the US dollar. It depreciated by 7 paise against the greenback, tracking most Asian currencies. The dollar index continues to gather strength after US President Trump's tariff threats. India's 10-year bond yields remained largely steady in trade today. And gold extending gains as President Trump's tariff plans fueled safe haven demand. Significant buying by central banks has also supported gold prices. In fact, prices surging in India. But it's not just physical gold. More investors are betting on paper gold as an investment as well. Data shows that investments in gold ETFs are on the rise, while demand for traditional jewellery has been softening. Shivani standing by with more. Shivani.
India has been a country that loves gold, and that too in its physical form. But the gold market in India is seeing a shift towards financialization. This is clear from the numbers. Let's take a look at the data. Jewelry demand in India has seen a decline over the past 3 years. According to the World Gold Council, in 2021, demand was at 610 metric tons, but it dropped to 600 metric tons in 2022 and further to 575 metric tons in 2023. In 2024, the demand fell further to 563 metric tons. That's a 7% drop compared to 2022. This indicates a shift away from ornamental gold as consumers become more price sensitive amid rising gold prices. Now, if you look at the bars and coins, traditional investment gold is still holding some interest. In 2023, demand for bars and coins increased by nearly 7% with further jump of 29% in 2024. But their growth has been overshadowed by financial gold products like gold ETFs. Speaking of which, gold ETFs are the real star here. In 2024, they've experienced a staggering 216% increase in inflows, reaching over 9,200 crore rupees. This marks a huge shift towards paper gold as investors increasingly prefer these financial gold products over physical assets. Now, this is happening for various reasons. Important among them are liquidity issues, ease of purchase of ETFs on exchanges, favorable taxation, and also the convenience of storage of digital gold. So all of this is leading to Indians to move away from physical gold towards financial gold. Back to you.
All right, Shivani, many thanks. Shares of Bharti Airtel declining in trade after stake worth 8,500 crore rupees changed hands through multiple block deals. The telecom company said that a promoter entity called Indian Continent Investments sold 0.8% of its stake. Another promoter entity was among the buyers, which also included marquee global and domestic investors. Sudarshan is standing by with more on the contours of this deal. Third.
So first about the deal block deals, 5.1 crore shares worth rupees 8,485 crore changed hands, and that happened in block deal window. So who was the seller? Promoter entity, that is Indian Continent Investments, which is a company of Mittal family, has sold 0.84% stake. Now, who was the buyer? Bharti Telecom, which is a joint venture of Mittal family and Singtel, have bought 24% of that 0.84%. That comes to 1.24 crore shares. Now, what was the reasoning of Bharti Telecom buying in the block days? Company says Bharti Telecom's share buy has helped allocation to only key long-only names, and key long-only names are both global and domestic. And then what happens to shareholding post these block days? Bharti Telecom, which is a JV between Mittal family and Singtel, now it holds around 40.47% stake. Singtel via its subsidiary Pastel holds 9.50% stake, and ICIL, that is India Continent Investments, now its holding comes down to 2.47%. Remember, few months ago, both Singtel and Sunil Bharti Mittal had announced that at the end of any strategic announcements or deals that happen over the next few months, both Singtel and Mittal family want to have a similar shareholding in Bharti Airtel. At the end, stock closed with minor cuts today.
Well, that's Bharti Airtel. So many thanks for joining us. In earnings, ABB India has reported a strong set of numbers for Q4, beating street estimates on all fronts. The company reported a 56% jump in net profit on an annual basis, revenue up 22%, making this the highest quarterly jump in the last 5 years. Just 5 days after Prime Minister Modi met Elon Musk in Washington, Tesla has begun its recruitment drive in India. The company has posted 13 job openings online, covering both customer-facing and operational positions. Parikshit Luthra standing by with more details. Parikshit, Elon Musk has been exploring the India market for a bit, and it's restarting the process of hiring in India, but at this moment only to kickstart retail operations.
That's right. If we look at all the 13 roles that have been advertised on the company's career page and also the LinkedIn page, it is for a store manager, a service advisor, a service technician, a customer engagement specialist, an operations delivery specialist. So all of this points out to retail operations only. And this is something that we have been reporting on over the last few weeks. The Tesla is actually gearing up for starting retail operations in India this year. They've been scouting for locations across different metros to start company-owned showrooms. That means to bring electric cars into India from either Germany, where their manufacturing plant is, or from China, Shanghai in China, and sell them in India before they start any kind of manufacturing operations. And somehow that seems to be getting shape. But let's also point out to our viewers that since 2020, Tesla and Elon Musk have had an on and off relationship with India. In 2020, he said that in 2021, he'll definitely come to India. In 2021, he also tweeted to say that India is a very high tariff jurisdiction and the tariffs on electric cars are the highest anywhere in the world. And this is a challenge for the company. In 2024, he was all set to come to India but cancelled his plans. He had also recruited an India team earlier between 2020 and 2024, which had a charging head of HR, a head of marketing, a head of government affairs. But all those people have actually quit the company over the years and they've joined different firms. So this in a way restarts the entire hiring process. We are told that he is very keen on India, but whether he will manufacture in India, that remains to be seen. India is on the cusp of launching guidelines for the scheme for promotion of manufacturing electric cars in India, which would give Elon Musk a concessional 15% duty as opposed to 100%. But he'll have to make a commitment of $500 million towards manufacturing in India. Will he make that commitment, or would he prefer to only sell? That remains to be seen. But what we do know is that he had a very important 1 hour-long meeting with the Prime Minister where they discussed everything from electric mobility to space cooperation.
Yes, we'll have to see if he does decide to make in India or just sell in India. Parikshit, many thanks for joining us. JK Tyre Industries has informed the stock exchanges that Anuj Kathuria, its president for India operations, has resigned, citing personal reasons, and has been relieved from services of the company. Kathuria's resignation comes days after a complainant filed an FIR against him under various sections of the Bharti Sanhita. The sections include those that criminalize sexual intercourse obtained by deceit and deals with deceiving a woman into believing she's legally married to him. Now, the government has signed an agreement with Reliance New Energy Battery under a PLI scheme for advanced chemistry cell on the 17th of February. The agreement will award the company a 10 gigawatt-hour ACC capacity. The ministry has said this agreement will make the company eligible to receive incentives worth 18,100 crore rupees. A CNBC-TV18 analysis has found that share price multiples of life insurance companies have not kept pace with the strong growth in their embedded value. What is the cause of this derating in valuations? Yash is standing by with the answer to that question and more. Yash.
Well, Shirin, through these few numbers from the last about 4.5 years tied up in this piece, we've intend to demonstrate what has been the growth in embedded value for life insurance companies. Also, what has been the growth in the market capitalization for these life insurers and how a function of these two, that is price to embedded value, reacted to that growth. To start with the embedded value itself, which has grown at a CAGR of about 8 to 23% when compounded over the previous 4.5 years between FY20 to H1 FY25 for listed life insurers. HDFC Life showing the strongest CAGR of 23%, followed by Max Financial at 21%, followed by ICICI Pru and SBI Life at 16.6 and 6%. LIC being the slowest, but still growing at about 8.4%. On the other hand, when compounded over the last 1.5 years, LIC has seen the strongest jump in its market cap, growing at a CAGR of 53%. When compounded over the last 4.5 years, Max Financial's market cap grew at a CAGR of 36%, followed by SBI Life at 27%, ICICI Pru at 19%, HDFC Life at 13%. Now, what we've done is we've spoken about two things, embedded value and the market cap. Now let's look at the function of these two things, and that's how life insurance companies get valued. That is on the basis of price to embedded value. And the big question here is that with the strong growth in the embedded value, has the multiple for these insurance companies responded in a similar fashion? The answer is an emphatic no. look at how the price to embedded multiple has moved between FY21 to FY26 estimated figures. The biggest derating has come for HDFC Life from 4.8 times in FY21 to 2.1 times for FY26 estimates. This despite HDFC Life witnessing the strongest growth in its embedded value. Now, price to embedded value for all listed life insurance companies except for LIC have gotten derated. Now, if valuations are supportive, then what's really coming in the way of the share price growth? We spoke to a few analysts on this particular issue, and there are three big reasons which they point out. The first one is the fear of regulatory intervention either from the government or the regulator. We saw so many regulatory interventions coming in the last 1.5 years itself. The second reason is how the product mix for various life insurance companies have turned very ULIP heavy, which has led to a significant deterioration in the margins for these insurance companies. Finally, the problem has also been the Indian insurance market, which is not growing at all. Penetration, density, both staying at the same point for a very long time. And out of that stagnant market also, unlisted players are taking large part of market share, which is again becoming a negative for the listed life insurance companies.
Yash, many thanks for joining us. We will head into a break, but up next, opposition leader Rahul Gandhi protests the appointment of Gyanesh Kumar as the new Chief Election Commissioner, says it's disrespectful and discourteous to make a midnight decision when a case is pending before the Supreme Court. That and more when we return.
FIIs and the retail investors. It is true, and I thought you were implying it in your question itself, that FIIs also go out when they're able to, in a position to book for profits. Indian market today, Indian economy today, has an environment in which investments are also yielding good returns and profit booking is also happening. And I'm sure you would have seized that fact also.
जब दिल्ली में जगह जगह पावर कट होते हैं, जब उत्तम नगर, नवादा, संत नगर, बुराड़ी, त्रिलोकपुरी, संगम विहार, देवली में 3-3 घंटे, 4-4 घंटे बिजली जा रही है, तब भारतीय जनता पार्टी वाले कहते हैं नहीं नहीं नहीं, अभी तो आतिशी सीएम है, अभी तो केयरटेकर सीएम आतिशी है, वो जिम्मेदारी
The big national story, leader of the opposition in the Lok Sabha, a member of the selection panel, Rahul Gandhi, is protesting the appointment of the new Chief Election Commissioner. Late last night, the government appointed current Election Commissioner R. Ganesh Kumar as the new Chief Election Commissioner. The Chief Secretary of Haryana, Vivek Joshi, was also appointed as an Election Commissioner. The appointments came hours after a meeting of the high-level selection committee led by the Prime Minister. The committee also comprises of the Home Minister Amit Shah and the leader of the opposition in the Lok Sabha, Rahul Gandhi. This marks the first time a selection panel was involved in picking India's top election watchdog. The government passed a law in 2023 changing the appointment process and giving powers to this high-level committee. At the meeting, Rahul Gandhi opposed the appointment. He's now made the dissent note he submitted on the matter public. In the note, Rahul Gandhi said it is disrespectful and discourteous to make a midnight decision when the selection process is being challenged before the Supreme Court. Rahul Gandhi argued that the composition of the committee is tilted in favour of the government and a case will be heard by the Supreme Court within 48 hours. But his dissent was overruled and the government went ahead with the appointment. The Association for Democratic Reforms moved the Supreme Court today opposing the appointment. The apex court has listed the case to be heard tomorrow. Ashmit is standing by with more. Ashmit, take us through what happened in court today and give us a quick background to this matter.
Well, allow me to bring in some context here. In March of 2023 is when the Supreme Court had frowned on the fact that there is no law that governs appointments to the Election Commission, and at the time had appointed a temporary selection panel comprising of the Prime Minister, the Leader of Opposition and the CJI, the Chief Justice of India. This was meant to be temporary. Now, subsequently, later that year, in December of 2023, the Centre passed a fresh law which replaced the CJI with a Union Cabinet Minister in the selection panel, which is what prompted a whole host of challenges being filed here before the apex court, which is what prompted these very same questions to come to light with the appointment of Ganesh Kumar as the new Chief Election Commissioner. The question that was raised first by Rahul Gandhi, then by the petitioners here before the apex court, is that why is this appointment being rushed through? The question that Rahul Gandhi had raised as a part of his dissent note is that the Supreme Court is already seized of the matter. The Supreme Court is already hearing this case. The matter is sub judice, and if that is the case, why rush through this appointment? Why not wait for the Supreme Court to hear and decide this case? Finally, this was the very same submission that was made this morning by the Association for Democratic Reforms. They said that the Supreme Court judgment is being made a mockery of, that constitutional norms are being violated, and that there is no independence as far as this new selection panel is concerned, and therefore there is an urgent requirement for intervention for hearing by the Supreme Court. So importantly, the Supreme Court has agreed to hear this case. Tomorrow will be a critical day where the Supreme Court will look to give guidance on what happens with respect to this new selection panel, what happens in the interim, and what happens by when the Supreme Court will finally hear and decide this case.
All right, Ashmit, many thanks for joining us and staying with action in court. The Supreme Court has granted interim relief to podcaster Ranveer Alabadia after his controversial comments on the show India's Got Latent. The court has granted a stay order on his arrest and directed that Alabadia seek protection from the Mumbai police against death threats. However, the apex court tore into Alabadia for his comments, calling it shameful and perverse. The court added that such behaviour must be condemned. The government has extended Niti Aayog CEO BVR Subramaniam's term by 1 year. His initial term was slated to end on the 24th of February. Subramaniam joined the Niti Aayog in 2023. Prior to that, he served as the Commerce Secretary and also as the Chief Secretary of Jammu and Kashmir. In global news, the US and Russia begin talks in Saudi Arabia to end the Ukraine war without any representation from Ukraine or Europe. Ukrainian President Zelensky has warned that his country will not abide by any peace deal made without Ukrainian representation. After attending an emergency meeting with European leaders in Paris, British Prime Minister Keir Starmer has said that the US must provide security commitments to Ukraine to ensure lasting peace in Ukraine.
There must be a US backstop, because a US security guarantee is the only way to effectively deter Russia from attacking Ukraine again. And I've been clear today, Britain will take a leading responsibility, as we always have, because Ukraine must have a secure future, Europe must have a secure future, Britain must have a secure future, and democratic values must prevail.
Keir Starmer there. A Delta Air passenger jet crashed and turned upside down on the runway at Canada's Toronto airport while attempting to land. All 80 passengers on board were evacuated. 18 passengers injured, 2 are in critical condition.
A Delta Airlines plane flipped upside down while landing in Toronto on Monday. Officials say over a dozen people were injured on board, 3 of them critically, including a child. However, there were no fatalities in the crash. The plane first took off from Minneapolis-St. Paul International Airport, and after an 86-minute flight, came to rest belly up on the snowy tarmac at Toronto's airport. Audio from air traffic control paints a picture of what arriving fire crews first saw.
Just so you are, there's people outside walking around the aircraft there. Yeah, we've got it. The aircraft there's upside down and burning.
Delta said a CRJ-900 aircraft operated by its Endeavour Air subsidiary was involved in a single aircraft accident with 76 passengers and 4 crew aboard. The CRJ-900 jet is made by Canada's Bombardier and powered by GE Aerospace engines. Canada says it would investigate the cause of the crash, which is not yet known. The incident came amid windy weather following a snowstorm. The airport had said earlier on Monday it was dealing with high winds and frigid temperatures. However, on Monday evening, Toronto Pearson Fire Chief Todd Aiken had this to say about runway conditions.
This is an active investigation. It's very early on. It's really important that we do not speculate. What we can say is the runway was dry and there was no crosswind conditions.
The crash in Canada follows other recent air travel incidents in North America. In late January, at least 7 people died when a medical transport plane crashed in Philadelphia. And days before that, an Army helicopter collided with a passenger jet in Washington, D.C., killing 67 people.
Well, another aircraft tragedy there, this time in Canada. With that, it is time for us to wrap up this edition of Business 360. More news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
व्यवस्था के लिए जब यमुना में कोई मशीन उतरती है तो कहते हैं नहीं 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 बीजेपी चला रही है सरकार एलजी साहब चला रहे हैं सरकार।
खुद अरविंद केजरीवाल ने चुनाव से पहले ये कहा कि हरियाणा गवर्नमेंट ने जहर मिला दिया है पानी में। इससे दिल्ली के लोग और नाराज हुए और दिल्ली में अरविंद केजरीवाल के खिलाफ जमकर वोट किया। अब हम लोगों पर जिम्मेदारी है कि यमुना साफ हो पूरी तरह। तो सरकार तो बनेगी, 20 तारीख तक सरकार बन जाएगी, लेकिन उससे पहले ही लेफ्टिनेंट गवर्नर साहब ने यमुना की सफाई का काम शुरू कर दिया है।
Hello and welcome to Startup Street. I'm Shruti Mishra. These are the top headlines from the startup space. Temasek-backed meat and seafood startup Licious is preparing for a 2026 IPO with a $2 billion valuation goal. The firm plans to open 50 stores and turn profitable by August 2025. AI-powered visual merchandising platform for the automotive industry, Spine, raises $16 million in its Series A round led by Vertex Ventures. The round also saw participation from existing investors, including Axel, Storm Ventures, and Ulterior Capital. Tesla posts job offerings on its LinkedIn profile for 13 positions in India days after Elon Musk's meeting with Prime Minister Modi in Washington. Sources say the EV maker is likely to enter India with a low-cost model, which would be launched in the United States later this year. Elon Musk-owned AI company xAI launches Grok 3, an AI chatbot that surpasses its predecessor with groundbreaking capabilities in science, math, and creativity. During the launch event, Elon Musk said, and I quote, "We are very excited to present Grok 3, which is, we think, an order of magnitude more capable than Grok 2 in a short period of time," end of quote. OpenAI is considering granting special voting rights to its non-profit board to preserve the power of its directors as the ChatGPT maker fends off an unsolicited takeover bid from Elon Musk, the Financial Times reported. CEO Sam Altman and board members are evaluating new governance measures as the company transitions to a traditional for-profit structure, the report said. Well, those were the headlines we've been tracking for you this evening. On what's brewing today, Kinara.ai, formerly known as Deep Vision, has been acquired by NXP Semiconductors, Europe's third largest semiconductor company, in a deal worth $307 million. One of the largest deep tech M&As from India, this acquisition not only highlights the potential of India's AI and semiconductor ecosystem, but also proves that deep tech is ready for investments and exits in India. I have with me Ravi Annavajal, CEO of Kinara.ai, and Chinu Senthikumar, managing partner at Xfinity Venture Partners, which has been one of the key investors in Kinara.ai, to talk about this deal. Gentlemen, welcome to Startup Street. Ravi, let me start with you. What does this deal mean for the future of Kinara.ai? And now with NXP Semiconductors, what is the impact you hope to make? And will Kinara work as an independent entity? What happens to your team?
First of all, Shruti, thank you for having me on your show. Delighted to be here for the first time. We are very excited to be part of NXP. As you mentioned, NXP is the third largest semiconductor company in Europe. What this means for us is that we will get the reach and resources of NXP, beginning with the customer base, which is massive, and as well as all the resources that they have. It'll help us expand our products into a much larger customer base. So we are very, very excited about it. To answer your question about the team and the future of Kinara, we will clearly be part of NXP after regulatory approvals are cleared and after integration is complete, which we expect to have happened in the first half of 2025. And once that occurs, we'll be part of the secure connected edge business line, and we'll be catering to the rapidly growing AI needs of the secure connected edge business line, especially the industrial IoT markets, for which NXP is a big leader in that space.
All right. Chinu, coming to you now, Xfinity has supported Kinara through both Series A and Series B rounds, including the high-profile investment led by Tiger Global. What does this milestone mean for Xfinity? What kind of returns have you made?
So thank you, Srishti, for having me in the show. And, with this return, actually, we are returning 40% of our fund. And we'll be touching a DPI of 1. Basically, we'll be returning our entire fund with this exit. We made partial exits earlier also, but this will make us to touch the DPI of 1. And Xfinity has been always in the forefront, looking at deep tech trends well ahead of the curve. And Kinara is one such company we spotted about 5 to 7 years back. And this validates our thesis in the deep tech. And we also played a crucial role helping the company to set up the cost-effective R&D center in Hyderabad. And this also demonstrates frugal innovation in the US-India corridor. And we have many other investments of this kind in the deep tech sector. We are very happy, we are excited, and it's a good exit for the deep tech landscape in India.
Sure. Coming back to you, Ravi, over the years, multiple LPs have questioned whether the Indian ecosystem is ready for deep tech. Now, this deal proves that it is ready for investment as well as exits. Ravi, what are the new partnerships you're building? And if you could also take us through some of the offerings that are in the pipeline.
Excellent question there. First of all, yes, the ecosystem is ready. We are seeing many more deep tech deals happening in the market. Very delighted to see that. In terms of the actual pipeline, what I can give you is a high-level overview. This is a $40 billion market, growing at a 30% CAGR from today to 2028. Clearly it's a very, very hot space. And what I can say is that NXP caters to the industrial IoT and the edge markets in a big way. They have a microprocessor lineup, and we'll be complementing that lineup. For example, we'll be pairing up with their IMX line of processors, creating modules, creating system-on modules, die integration maybe, and maybe in the future, we'll be part of their microprocessors as well as an IP block. And what we are looking to do is cater to the industrial IoT and automotive edge. And a couple of examples here, right? For going back a month, we were at CES and jointly demonstrating a very cutting-edge model called Lava, which is large language and vision assistant model. This combines elements of large language models as well as interpretation of images. So, for example, a video is coming in, you can interpret the video and describe the video using a large language model in real time. And that's the capability we are unleashing. And if you think about it, this has massive implications for industrial markets in terms of safety. Is somebody wearing a hard hat? Is there a slippage? Is the floor slippery? Automotive infotainment, for example, the car manuals will be integrated into the infotainment, directions, etc. Without the assistance of cloud. So these are some of the use cases and sectors that we are going to go after.
All right. Okay, let me go across to Chinu. This acquisition, like I mentioned earlier, is being hailed as a significant proof point for India's AI and semiconductor ecosystem. Chinu, how do you think this deal will influence future deep tech startups and attract more global attention to the Indian tech scene?
So I think if you look at India's landscape, the GCCs, the Global Capability Centers, have been expanding. The skill base has been developed, and it was natural choice. We bring the entrepreneurs together and promote deep tech companies. And Kinara is one such company where we have invested in a US-India corridor company. And we have also several companies of this kind. But this is a great validation for our India's deep tech landscape that the IP creation can be done. And also this is recognized by global players like NXP Semiconductor. And this will encourage more people to invest in this deep tech semiconductor. The second thing is actually what I see is that this also helps India because, like Ravi talked about, this is bringing the edge capability to the AI capability to the edge. Actually, this will promote a lot of applications around edge AI, which is needed in India. Also, it kind of opens up the aspirations for India to think about full stack compute, because I think that's what the goal India wants to get into it actually. And there are multiple things I see from here. The future looks very, very promising in the landscape of AI computing actually.
Okay. All right. On that note, it's time for me to wrap up our conversation. But Ravi and Chinu, thank you so much for the insightful conversation, shedding light on a transformative moment for India's deep tech and semiconductor or industries. Thank you so much for your time once again on Startup Street.
Thank you. Thank you. Thank you, Shruti.
All right. Moving on, also on What's Brewing, Apollo 24/7, which is the omni-channel digital healthcare arm of Apollo Hospitals, is all set to leverage the quick commerce boom in India. The healthcare platform launched 2-hour deliveries 5 years ago and had recently launched a pilot project for 19-minute deliveries in select cities. The company is now getting ready to take 19-minute medicine deliveries pan-India. My colleague Parikshit Luthra spoke to Madhivanan Balakrishnan, CEO Apollo 24/7 earlier, who says they plan to roll out the 19 guaranteed delivery offering in 20 cities by year-end. Take a look.
Tell us, when is this 19-minute delivery program likely to launch pan-India?
So as of now, we are in around 4 cities, the 4 major cities. We expect to roll out across most of the major cities in the country over the next 6 to 9 months.
Okay, and give us a sense of what's been the experience so far of having 19-minute deliveries in 4 major cities. How many deliveries have you made? What has been the total revenue collected through this particular model?
So typically, in a day, we do anywhere between 40,000 pure online deliveries. Combined with the home deliveries that we make from our various retail outlets, it's almost 100,000. Out of this pie, that is 100,000 deliveries per day. Out of this pie, roughly around 20 to 25% of the deliveries happen in the 19-minute segment, which is primarily driven by emergency and acute medicines. So that's in terms of the count. In terms of revenue share, it could be slightly lesser because the ticket sizes when it comes to instant medicine is lower than what you would typically do in any kind of the other medicines which we try and deliver within the same day. Almost 90% of the deliveries are made within the same day.
Could you give me a sense of how many cities would you have covered by the end of 2025?
As of now, from 4 cities, we will roll out immediately to 6 cities, which are the top 6 cities of the country. We intend to roll out the next 4 over maybe 2 quarters and then focus on another 14. So think of it like 6, 4, and another 14. So we will try and cover around 20 cities by the end of this year from a 19-minute perspective. As a proposition, it will be available.
Okay. What is the kind of investment that you've lined up so far on this? What are the hiring plans?
See, typically what does this involve? Unlike the other quick commerce entities, we do not have to depend on an expansion of a dark store. For us, we are an omni model. What does it mean? It effectively means that we have 6,500 pharmacy outlets, which we currently have, which you can pick into. As of now, roughly around the top 100 to 200 outlets, which we call as the prime hub, is where the omni feature works out. So whether it be compliance, whether it be regulation, all of them are very much inbuilt into our process. So from an investment perspective, the incremental investment is effectively in the last mile delivery. And that depends on the kind of orders that we are able to aggregate in the markets that we are launching. So it's what does it mean? We do not depend on variable workforce when it comes to the last mile delivery. Our emphasis is on creating our own captive delivery forces. And that's the investment that we're talking about. The technology, which we have experimented in the top 4 cities, whether it be supply chain, whether it be our ability to demand, manage the demand, build forecasts around it, are reasonably well tested and can be scaled up reasonably well. So from an investment perspective, it wouldn't be such a big cost structure for us.
Well, on the hot seat today, we have electric mobility startup River EV, which is on an expansion drive. It is targeting to open 100 stores across India by March 2026, up from 25 stores by March this year. In a chat with my colleague Ritu Singh, River EV's co-founder Arvind Mani said the company plans to be present in at least 120 cities before its next product launch, which will be a utility scooter. Take a look.
I think we started selling around 12 to 15 months back. Since then, we have sold close to 5,000 vehicles. And last month, we have 12 stores now. So from the 12 stores, we sold 750 vehicles, close to 750 vehicles last month. With that, we are probably at number 10, 11 in the country. In certain markets where we got better distribution, like Bangalore, where we have 4 stores, we are like number 5 last month. So traction's been good. People have been loving the Indy. We are growing slow and steady.
Well, but when you launched, you spoke about market leadership. Are you happy being the number 10, number 11 in the country? And what is the plan to get or break into the top 5?
See, to break, we are a 3.5-year-old company. And for us to sell 5,000 scooters, for us to design and develop a scooter from scratch, set up a manufacturing facility, and sell 5,000 scooters all in 3.5 or less than 4 years, is in itself an achievement. We are very happy where we are. So the next phase that we are focused on is to scale up distribution. So the important point to note is that we sold 750 from 12 stores. Now we want to open 100 stores. We'll have 25 stores by March 25 and then slowly scale. So we'll get there. But the focus that we have is to provide the customers the service they deserve for a product that they're buying, right?
Sure.
So we do not sell a product in any place without a service center.
Sure.
Yeah, so sustained growth.
From 12 stores, you're able to sell 750 units a month. You're expecting to double it to 25 by 2026 March.
25 stores.
Okay. When you get to those 25 stores, should we expect a doubling in the number of units you're selling, or will that be more exponential?
Increasing, right? We've been steadily increasing. Like, for example, October 24, Diwali, we were at around 520. So since then, January became 750. As and when we are opening more stores, we are able to sell more.
Okay. It's been about a year since you last had your fundraise. Are you looking at any, more anytime soon? Are you looking to expand your manufacturing capacity, for instance, which is at 8,000 to 10,000 units a year currently?
So, see, as I told you, we're less than 4 years old and we've done 4 rounds already. We have raised around $72 million cumulative, the 4 rounds. So we're already always fundraising. We are going to hit the market sometime soon, not immediately. We're comfortable where we are. Manufacturing capacity, yes. So, as I told you, the current factory is 8,000 to 10,000 units a month. We are currently producing 1,000. Now, we will reach that 8,000 units a month by the time we open 100 stores, which will be by middle of 2026. By the time we want the next factory to be ready, we are already talking to the state governments for sourcing land, securing land and doing a greenfield construction.
And that will be in Karnataka as well?
Karnataka is one of the options, and Karnataka is very special to us because we are also the only EV manufacturer who has the R&D and manufacturing inside Karnataka. So Karnataka is very special, but we are also keeping the options open.
All right. Speaking of fundraising, is an IPO anytime in the near horizon for River?
We are still 4 years old. No investors asking us the money back. So we'll take our time and do a proper IPO.
Sure. Lastly, of course, we can see the Indy behind us. What's next in the pipeline? What are you working on?
2026, you will see the second product launch.
Okay.
I can't give you too many details, but it'll still be a scooter within the utility lifestyle space.
Okay.
And so the focus right now is scale up distribution. Right? We need to be present in maybe 100, 120 cities before the second product comes.
Okay.
Yeah, that's the idea.
All right, Arvind, and we wish you the best with those plans.
Thank you.
Well, with that, it's time for us to head into a short break. Coming up next, Bengaluru-based electric aircraft startup Sarla Aviation's flying taxi prepares to take off. The startup expects to start flying commercially in the next 3 to 4 years. Stay tuned to get a glimpse of this flying taxi. Welcome back to Startup Street. Bengaluru-based electric aircraft startup Sarla Aviation showcased its electric vertical takeoff and landing or eVTOL aircraft or a flying taxi at the recently concluded Invest Karnataka Summit. eVTOL aircraft is a fully electric flying taxi which will be able to fly for around 160 kilometers on a single charge. The company has currently developed a complete prototype of a 7-seater eVTOL aircraft. My colleague Ritu Singh spoke to its co-founder Rakesh Gaonkar on what to expect. Take a look.
Well, Indian cities and traffic jams, a never-ending love story, right? But what if I told you the solution was not in the gridlock roads on the ground, but up in the air? Well, I'm talking about this machine, this bird that you see behind me, a futuristic air taxi that has been built by Sarla Aviation. Think of it as a cross between a helicopter and a drone, only, larger. It can seat 6 people, quieter and fully electric. It is yet to become commercial, but, to find out when exactly that will happen and how it's going to solve for traffic problems in cities and beyond, I have with me the co-founder of Sarla Aviation, Rakesh Gaonkar. Rakesh, thank you very much for speaking to CNBC-TV18. Start by telling us about this model that we're seeing behind us, what exactly it is.
So what you see behind me is actually a 6-seater, completely electric. 1 year back, we started our journey. It's a Bangalore-based company, basically 100% built in Bangalore, in Karnataka right now. And as I said, it takes 20 minutes to fully recharge, and then it gives you a range of 180 kilometers, basically. Yeah. Okay. And rightly said, it's a cross between a helicopter and a plane, but as more like a plane than a helicopter, basically. The safety factor is similar to a plane. Yeah.
So you're going to start with Bangalore when you get clearances. So tell us, what is the distance you're looking to cover? How soon you'll be able to do it? What is the plan? Which are the new cities you're hoping to expand to after Bangalore?
Right. So we all facing this problem in congestion in Bangalore. We believe very much, right? I mean, it's need of the time right now. Currently, we will start our home ground as Bangalore. We'll start pilot test here. We'll do a couple of routes. Our initial plan, if you speak to Adrian, it's from Bangalore airport being a hub, and then a lot of spokes, that is being the 5-star hotels in the initial period, and then IT hubs, and then hospitals as well, and then slowly populate more helipads and then give you more possibility of different routes, actually, basically.
So give us an example, getting from point A to point B, how much time would it take on air versus what it would take on ground, and more importantly, how much is it going to cost?
For sure. So if you, any premium ride-hailing service will charge you around 2,000 to 2,500, depends on which time you're booking it, and will take around 150 minutes to reach, whereas we will take 20 minutes with the same cost or even lesser. Okay. So that's our disruptive idea, basically.
So how soon before we see these flying taxis in Bengaluru?
So this is a prototype that you see behind. We will start, there's another bird that we are building right now while we are talking, and that will take to sky, start testing in May, basically this year. And we will spend another 2 years testing it. While the certifications are there, we are speaking to DGCA and MOCA, and they are there with their initial drafts, and we will be 6 months away from global players like FAA or EASA. So when they release their type certificate, we will be almost there with that, basically.
Okay, so another 2 years before we actually see these.
So 28, late 28, early 29 is our commercial plan.
Okay, so currently, if you could show us, so this can seat about 6 passengers at a time. Will it be manually operated or will it be remotely operated? How would it work?
No, it will not be remotely operated. When we are in operation commercially, we'll always have a pilot, basically. We'll have a lot of pilots that we would have to transition into flying eVTOLs, basically, so the huge demand will be there.
All right. A quick word on, the kind of range this will have. You gave us a sense of, 20 minutes of charge will give you 250. But what is the maximum range that this can have, and how long will the charging take?
So the range that I said was in 20 minutes, 160 kilometers, which will change because this is based on the current battery technology. We are aiming for 28 or 29 early. So by that time, we'll aim for 200 plus of range, basically.
So Sarla Aviation's air taxi will fly commercially by 2028-2029. There is still time for us to sit in one of these flying taxis. But with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
But the merger between JioCinema and Disney Hotstar is done, and there's a brand new app. Now, the most obvious benefit will be that users don't have to choose between these two apps or toggle between the two different apps to get to the content they want. The new Jio Hotstar app will have it all, over 3 lakh hours of content across 19 languages. So potentially, we will now have India's largest OTT player, with the company saying that it will have a user base of over 50 crore. Now, these 50 crore people are not necessarily all paid users, but that just means that there's potential to convert them. So what happens to your existing apps? Now, JioCinema will now redirect you to download the new app or prompt you to open the Hotstar app if you already have it on your phone. Now, the Hotstar app should automatically have been updated to Jio Hotstar or will prompt you to install the latest update. Now, your existing premium plans will continue on Jio Hotstar for the remaining duration of the plans, and once those plans expire, you will have to subscribe to the new plans. Now, these new plans start from 149 rupees for 3 months for a mobile plan, and it goes up to about 1499 rupees or 1500 rupees for a premium ad-free plan that allows you to access 4 devices. And what does Jio Hotstar now entail in its new avatar? Well, everything that both apps used to individually offer is now under one umbrella. Now, Jio Hotstar will also aggregate the libraries of NBC Universal Peacock, Warner Bros, Discovery, HBO and Paramount as well. Now, it also plans to double the South Indian content to about 1100 hours, taking on what has been the USP of platforms like Prime Video or ZEE5. But the biggest draw for Jio Hotstar will be sporting events. Now, the new entity holds rights to all the sporting events that Jio and Disney Plus Hotstar held individually. So that's IPL, ICC events, English Premier League and Wimbledon are all covered. Now, the company has also plans to widen its offerings to bring more sporting events under its umbrella. Does this now mean that then you'll have to pay for IPL? Maybe not, because the company says that some content will be available for free every day. But whether this includes IPL or not, that we don't know yet. Now, what will be interesting to see is what this means for the OTT landscape in India. With nearly 36 million paid users, Hotstar was already the market leader here. And it was followed by Prime Video, Netflix and then Apple TV+. Now, the merged app will actually have about 52 million paid subscribers to start with. And this could shoot up once the IPL starts in a month's time.
We are actually using AI to tackle AI. It has to be like that. We've actually used a lot of AI for a very long time now.
Busting private sector and public sector myths and
Let's
realities.
start here. Let's start here. Chapter 1 on the Young Turks podcast.
I'm actually honored that you called me for the Young Turks series.
Because you're young at heart and you're not willing to give up.
I have written a book called Indomitable, and I see a range of hills, still waiting for me to climb.
I want you to recount the day that you walked into the State Bank of India.
You cannot believe, just trying to add 25 rows of numbers, like 4 and 5 started making 7 and 3 and 2 started making 6. End of the day, my face was filled with black streaks. And then somebody comes and suddenly opens my drawer and plonks something in and goes away. So I wondered what it was. I opened it and it was a packet of, jhalmuri.
Things that we take granted today, bathrooms and so on and so forth. We've heard these stories, but that was the reality then for a woman.
Absolutely the reality. In fact, in that particular branch, there were bathrooms that were labeled as women, ladies and gents and executives. I was supposed to be executive. I was also a lady. Which one do I go to?
Not just the first woman banker, but the first public sector banker in India after 70 years of banking in this country to be awarded the Padma Shri.
We have taken servers on the back of elephants to various branches. We've taken, servers on boats to Lakshadweep and the Andaman Islands, literally, braving the waves. So we've done all of this, but there's never been a person that's been acknowledged from that sector. I hope that this opens the gates, so to speak. The people on the interview committee were a little disappointed that NPA wasn't the first on that list.
To come back to the point that you actually made in your book, very often that acronyms are thrown about. So yes. we're going to de-jargonize NPAs. We're talking about non-performing assets.
Today, it's not only banks that are your competitors.
No.
There are so many others.
Apple is your competitor.
Exactly. How do you keep ahead of the game? All of these fintechs, they have technology, they have solutions. They look at particular pain points of a customer and address that pain point. And that's how they get their customers. These are pain points that the banks know about, but it's a take it, leave it attitude.
Yeah. Where do you believe that this second-guessing business comes from?
When we were growing up, we didn't really have too many role models. In a sea of blue and black and brown, we were the only ones that were wearing pistols and,
But did you try to invisibilize yourself?
I didn't.
Or were you like, this is me and you?
No, I didn't. I didn't try to invisibilize myself at all.
Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan. They say a name says a lot, and it certainly does for my guest today. Her name quite literally means unstoppable, and that's been her career trajectory. It is my pleasure to welcome on the program Arundhati Bhattacharya, one of India's foremost bankers. In fact, the first woman to head India's largest bank, not just the public sector bank, India's largest bank, the State Bank of India. She has many more firsts to her credit, but let me not put words in her mouth. Let's hear her story in her own words. Arundhati Bhattacharya, what an absolute pleasure it is to have you join us here on the Young Turks Reloaded podcast. Thank you very much for your time.
Thank you very much, Shireen. And it's always a pleasure, to talk to you. And I'm actually honored that you've called me for the Young Turks series. because I'm anything other than a young Turk, I'd say.
And here's why. Because who would have thought that after your stint as the chairperson of State Bank of India, you would have decided to have a second innings as the chairperson now of Salesforce? And that's the reason, because you're young at heart and you're not willing to give up.
Well, actually speaking, like everybody else, I didn't have any idea of this career trajectory of mine. I have written a book called Indomitable, and in the last pages of that book, I talk about, what I'm seeing going forward. And I see a range of hills, still waiting for me to climb. I had never imagined that this would be one of the hills. But to that extent, I would say that I love experimenting. I love meeting new people. And the young people that I actually work with today, they really give me a lot of energy. So yes, it's been an adventure and something that I think, I'm very glad I undertook.
Well, and that's exactly why you're here on the Young Turks podcast. But let's go back to those many hills that you have climbed and traversed and peaked as well. And let's start, I want you to recount the day that you walked into the State Bank of India at 22 as a probation officer. This was sheer chance. You wouldn't have considered a career in banking if it was not for your friend who decided to get you to take that exam, which you then took. But that moment when you walked into State Bank of India, relive that for us.
Well, that actually, if I relive it, as you know, we used to join at the Staff College in Hyderabad, in Begumpet, and we joined in batches. So I was still doing my post-graduation. The courses at that point of time were a little delayed on account of the problems of Naxal problems that Bengal was having. So our examination still hadn't taken place. Our classes had just got dissolved. And 3 days later, I was supposed to get on a train to go to Hyderabad. And my brother came to see me off because my parents were in Bokaro and I was in Calcutta. And he had strict instructions from my father to ensure that he found somebody on the train would sort of look
chaperone you.
Yeah, to chaperone me. And my brother looked around the platform and he found one guy who looked, like he's a very serious kind of person, surrounded by his family. And he said, that guy also must be going to join the same program. Let me go and find out. And he found out, and it was actually one of the guys who came along and who is my batchmate. So that's the way I met my first batchmate on the platform. And my hostel mates had come to see me off. And I tell you, they embarrassed the life out of me because I had a single ladies coupe. There was nobody else in that. And they literally, this was the first time I was going in first class, not by paying anything because the bank was paying my fare.
Right.
And they sort of really lived it up. There was no song that they didn't sing, whether it is English, Hindi, Bengali, and they were literally bouncing on the seats. And I was trying to control them that, look, you can't do stuff like this. And they were like, so what? And anyway, so this guy then, after the train started, he came to sort of say hi to me and see that I was well looked after. And the moment he entered, the conductor came running and he said, this is ladies coupe, how are you here? Get out. So before even, we could talk a few sentences, he was ushered out. So I realized that I was being well looked after. So that was my first journey. And then, of course, I joined the SBI. The actual entry to the branch was far worse. Like in the staff college, we were really well looked after. So we had white-coated, white-gloved waiters coming in the morning and pouring our tea. And believe me, this coming from Jadavpur hostel, where I used to have morning tea in a cracked cup. Okay, that was the...
So this was the epitome of luxury.
Exactly. It's a white-gloved waiter, for heaven's sake, pouring out your tea for you. And then, of course, you come down to the branch. And it so happened I was positioned in Alipur branch, which at that point was India's largest treasury branch.
Okay.
Because it used to look after the entire 24 paraganas, which, by the way, now have been divided into two districts, north and south. And it was Panchami, that is 2 days before the Durga Puja.
Okay.
And as you know, just before the Durga Puja, all the bills get paid. So government bills, government checks, there was a huge crowd in front of the branch. And I was trying to get in through the back door, and the guy was sort of guarding it, and I showed him my letter and I said, I'm joining. The moment he realized another fresh set of hands, like everybody
Grabbed
gave me,
you.
more work to be done. And I was plonked into a seat, and I was told all that you have to do is we will pay the checks and we will send it across to you, and you have to number it 1 to 25 in 3 duplicates. So you have to put carbon paper in between and write really hard so that it shows, and you have to put all those 25 checks down and add them. You cannot believe, just trying to add 25 rows of numbers, like 4 and 5 started making 7 and 3 and 2 started making 6. After a little while, I didn't know what I was doing, And then somebody comes and suddenly opens my drawer and plonks something in and goes away. And I'm like very offended. What the hell? How can somebody come and touch a lady's drawer kind of thing, and take it, open the table thing. So I told them that, what is this? And another guy, a more or less seasoned veteran, he looked at me and said, that's what will keep you alive. So I wondered what it was. I opened it, and it was a packet of, jhalmuri, which Bengal is famous for. So I said, what this? So he said, yeah, you will not...
Superfood.
Yeah, superfood. And he says, you will not have time to leave your desk till 8 in the evening. If you want to survive, every once in a while, have a fistful of that, and it will keep ulcers at bay. So, that was my introduction.
Trial by fire.
Yeah. And imagine, after having been sort of really looked after in staff college, you come and face, and then if you saw the crowds that day, they literally had to have policemen keeping the crowds at bay. And in those days, we used to have these nets in front of the cashier's desks. We were sitting behind the cashier's desk because they were, and what was happening was they were paying the checks as quickly as possible. They were being put in, waste paper baskets, kind of baskets, and they would simply get poured onto your desk. And you would keep grabbing them and writing them. Okay. Nowadays, all of that is no longer.
I know, that's what I was going to ask you. From the days of carbon papers to now, everything being online.
End of the day, my face was filled with black streaks because, while you're changing the carbon, it comes onto your fingers. My hands were aching. My head couldn't even probably add 2 plus 2. So, the first day was like one whirlwind. I can't even remember what it was like. And by the way, I was at that desk for, I think, about 3 weeks before I got changed. And in 3 weeks, I managed to have a corn on my finger in trying to write really, really hard, So that's the way it was in the beginning.
And this really brings me back to, I think, things that so many of us, and, we've had it a lot easier than your generation. We had you probably had nobody to look up to in terms of role models, in terms of mentors. I remember a conversation that I had with Indira Nui, and she said when she was going to her first interview, she didn't even know what would be appropriate for her to wear. And I would imagine that things that we take granted today, bathrooms and so on and so forth. We've heard these stories, but that was the reality then for a woman.
Absolutely the reality. In fact, in that particular branch, there were bathrooms that were labeled as women, ladies, and gents, and executives. Okay, there were 3 classes. And I didn't know whether I was supposed to go to the ladies or the executives. Okay, so I was supposed to be an executive. I was also a lady. Which one do I go to? So with a little embarrassed and stuff like that, I asked one of the ladies, where do I go? And she said, no, you have to use the branch manager's toilet. I said, what do you mean? So there is a attached toilet for the branch manager. She said, all lady executives go to that one. So I said, you mean I just walk into the branch manager's room and go there? She said, yeah, do that. So, I walked in and the branch manager had met me, of course, and he looked up and he had a customer, and the customer looked up and I didn't look at either of them and I walked straight. The way back again, I looked the other way and walked straight out. Like, it was horrible, absolutely. But that's the way it was in those days.
Models where we could detect that this number is likely to be a spammer or this message sender is likely to be a spammer. Those were some of the basics that we did a long time ago. We're now looking at AI almost across the business, not only protecting consumers and improving consumers' communication, but also from a business point of view, from our biggest revenue stream is advertising. How can we help brands leverage AI on our platform and get better bang for their buck? We've invested very heavily on various parts of our business, even operationally. We're using AI on customer support, for example. Even our legal team is looking at AI products. Our developers looking at AI products. So AI is very deep into our business now.
Considering the fact that the lion's share of your revenue comes from the market, I mean, do you believe you've hit saturation here in India?
So India, firstly, is our most exciting market. I think globally, for a lot of companies globally, India is the most exciting market, right? It is for us as well. Our biggest investments in the last, I would say, 6 or 7 years have been in India. We actually have more engineers in India than we have in our head office in Stockholm now. We build in India and we ship globally. A very large chunk of our product is shipped globally out of India as well. India continues to grow very, very rapidly. The entire stack that is available to an Indian citizen now to conduct business digitally has made the mobile phone number even more important than it used to be. And that's where we believe our relevance continues to grow in India. We haven't reached saturation at all. We are fortunate to have a large user base in India. I think we crossed 350 million users in India, but we still have a huge space.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most
making your way through the ranks of SBI to the top. I mean, State Bank of India, and I don't think people understand the magnitude of that decision of putting you as the chairperson. I want to understand what that process was like of actually going through the interview and, the enormity of being in that position. Again, people don't realize how large State Bank of India really is. When did you believe that this was something that you truly wanted to do?
So, when we joined at Hyderabad, we had a lot of seniors coming and addressing us in those first 10 days of orientation. And one of them said that, the chairman who's there today joined just like you as a probationary officer, and so have many others. So who knows? And, that night, as we were going to sleep, I'm sure this thought must have come to every one of us in our batch, that who knows, maybe one of these days I could be one too. And of course, as you then go into the routine of day to day, you forget it. It becomes like a distant star. You don't even think about it. But when it begins to sort of come together and gel is by the time you are CGM, you are then beginning to play that game of snakes and ladders. If this moves up, then I get there. And then, what happens to somebody else? And, you begin to start thinking whether it's a possibility. And I thought it was a possibility because I had the years. That is, in those days, you couldn't appear for an interview unless you had 2 years remaining. And I had joined very young. I had joined at the age of just 21 and a half. So I had tenure that was required. And so to that extent, maybe when I was CGM or DMD, it
became to become real.
A possibility, a reality, no, a possibility, yes. And then you begin to think, if you did get there, what would be your agenda? What would you do? How would you do things differently?
And so you actually crafted a 6-point strategy that you took with you to the interview.
Yes, I did. And the people on the interview committee were a little disappointed that NPA wasn't the first on that list. But I explained to them, and risk, by the way, was first on the list, but not NPA. So I told them actually the reason why NPA is not first.
And for those who are watching, NPAs, to come back to the point that you actually made in your book very often, that acronyms are thrown about. So yes. we're going to de-jargonize NPAs. We're talking about non-performing assets. So go ahead, ma'am.
That's true. So, everybody was so, caught up in the non-performing asset story at that time. And yes, it was a huge burden on the banking system, huge burden on the economy. All of that goes without saying. But what I told them is that, NPAs are something that we already know has happened. What we know has happened is not what we should worry about. We just have to go about acting in order to resolve them. But what we need to do is to stop this wave. If you don't stop the waters from coming on, the flood will continue. So to stop the flood, you have got to dam up the waters. And that you cannot do unless you have the rest 5 points that I put on my agenda, including risk, including cost controls, including your customer satisfaction, including technology. So all of those form very large parts of what I wanted to do. But yes, I think I did have some framework of what I was going to do. But I think that framework really expanded once I actually got into the role.
Yes, it did expand, and you went through a very difficult period as far as the banking sector was concerned, and you managed to navigate that as well. And I want to understand from you, through that difficult period where tough decisions needed to be taken, where the cleanup was warranted, where consolidation also became something that you needed to look out for and look after. What was that period like for you, and what has that taught you about what we need to now focus on as far as India's banking sector is concerned?
So one thing that it really taught me is that it reinforced my belief that unless you have a very strong technology backbone, it would be very difficult for us to keep on top of our game. Okay, the times when you could intuitively do things were over. If you really wanted data, you had to constantly triage the data to understand that they are really reliable. If you're looking at the non-performing assets, why were we not able to control them at the outset? Because the data quality wasn't good enough for us to have a clear understanding of where this particular unit was.
Technology and the use of technology has been crucial to not just addressing the NPA problem, but also ensuring that the waters don't come back, as you pointed out.
That's absolutely right. The more the technology we use, the better will be the quality of the decisions that we are taking. We were taking decisions not based on, data that was verified. We were taking it based on data that was being supplied but not data that had been verified. And I think that was the gap. We needed to close that gap. And I think, most of the banks have managed to do that because it's important that we do it. Otherwise, we are going to get into problems going forward again.
Well, speaking of problems and the problems and challenges that that face Indian banks and the banking sector in general, and we've gone through many phases, but banks are at perhaps their strongest that they have ever been in the last few years, both in terms of profitability as well as in terms of the strength of the balance sheet. What do you see as the key challenges ahead of India's banking sector today?
So, Indians' banking is actually evolving. I talked about it to you in our recourse as well, that, we had been dependent on deposits for a very, very long period of time. That is going to change because the people who were putting deposits in the banks now have many other places to put it in. Bank deposits, people will still continue to keep because they understand that liquidity is required, but it will not be the default option. Okay? As these younger people, they mature and they get more money in their hands, they will use all kinds of avenues in order to make investments. Now, as that happens, banks will also have to move from just being deposit-oriented to actually also borrowing in the market and understanding how they should borrow in order to still retain their margins. That's on one hand. On the other side, if you look at the demand for loans, there also we are going to see, there has already been a quantum change on the retail side.
Yeah.
On the corporate side, though, while the retail side is being very strongly digitized in order to enable banks to handle volumes, on the corporate side, digitization is in comparison is still low. And that is where I think banks need to really focus on because, again, as I told you, it's the quality of the data that's going to determine how well we do on the corporate side of the lending piece. And there, I think there is much that banks can still do. They need to really up their game, digitizing the corporate side of the, lending platform. Over and above that, I think, we also have to understand that today it's not only banks that are your competitors.
No.
There are so many others.
Apple is your competitor.
Exactly. So, to that extent, you have to understand that there are competitors just popping out of the woodwork, so to speak. How do you keep ahead of the game? And there, I think the best way is that all of these fintechs, they have technology, they have solutions. They look at particular pain points of a customer and address that pain point. And that's how they get their customers. These are pain points that the banks know about, but it's a take it, leave it attitude.
Yeah.
They've got to get rid of that attitude. Banks have the trust of the people. If they can only punch in the agility and the customer awareness of the fintechs, or at least do this in collaboration with the fintechs. They bring the solutions and the customer awareness. Banks bring the trust and their customer base. If the two come together, that would be a really good...
possible realistically, as far as public sector banks are concerned? Forget private sector banks. For public sector banks, forging partnerships with fintechs, because as you pointed out, they've been able to identify the pain points and provide solutions as well. Agility, not something that we associate with public sector undertakings. Do you believe that there is a possibility of forging this partnership?
I think there is. We did quite a bit when I was there. And I'm sure my successors have been continuing that. They are not still into the core banking areas. They are there as partners in the peripheral areas. But I think there are ways and means in which, they can be sort of incorporated in the entire ecosystem so as to form a very strong
Give me an example.
Today, for instance, partnerships are already there in respect of sourcing of loans, okay? But not in providing technology, okay? So maybe that is one area they could look at. They could also look at areas like, the peripheral stuff that we do with, giving them investment avenues, giving them things like credit cards, other services that could actually be done by them at, lower costs and in a more agile manner.
Since we're talking about PSBs or public sector banks, and I think you've probably answered this question many times during the course of your career. What is it about the public sector that that often carries this perception of not being good enough, not being agile enough, not being responsive enough.
At the end of the day, there is still perception and there is reality. And I often joke with my friends with my current colleagues that once I leave the organization, I'm going to write another book called Busting Private Sector and Public Sector Myths and Realities.
Let's start here. Chapter 1 on the Young Turks podcast. Let's bust some of those myths.
No. So one myth is that, people don't work in the public sector. Total myth. In the public sector, the last 4 years of my life, and this is true throughout, okay? In the last 4 years of my life, at least, I never went to sleep before 1:30 in the night.
1:30 at night?
Yeah, never ever. And sometimes I woke up at 3, sometimes I woke up at 4, sometimes at 6:30. That's when I used to wake up. It's become such a bad habit. Even today, I'm not able to go to bed before 12. I'm trying very hard to...
But why was that the case?
Because, the number of files that I had to clear throughout the morning, during the office hours, I would be having either customer meetings or internal meetings, okay? I would have no time at all to look at the files. And then, I would come back home. I was supposed to be carrying a briefcase back home. I came back with 2 middle-sized suitcases and I had to clear all of those files, They are far worse than the British, the boxes that accompany, that you must have seen in Westminster. They're far, far worse than that. They're big, solid suitcases filled with files. And
this is every day?
Every day. Every single day. And the thing is, I'd come back home at around 9:30, take a break till 10:30 or so. At 11, I would sit down with the files, and I very rarely went to sleep before 1:30. Otherwise, most of those files wouldn't get cleared, okay? So you're reading, you are understanding, you are commenting, you are approving whatever it is that you have to do on those files through those hours. So it's a really, really tough time. And not only that, I continue to tell these people, you'll see a lot of memes about lunch hours in public sector banks, especially SBI, very, very unfortunate, but it's there. But, I served the SBI for 40 years and 1 month. I never, ever had 1 hour for lunch, ever. Okay? Most of the time, it was lunch at your desk, okay? Hurriedly had in 10 minutes time. Or it would be a working lunch in a meeting where, though I used to get food from home, my food would be warmed up and given to me.
That might hold true even as far as private sector banks or private sector in general.
Private sector, by the way, is different. They block on your calendar 1 hour and you are expected to respect that 1 hour. Nobody disturbs you during that 1 hour. That's exactly what I'm trying to say. That's a myth. That, the private sector doesn't get lunch hours. It's even in my calendar today, I can show you that 1 hour is absolutely blocked. Then it's my choice whether I want to talk to somebody or the other. But the calendar blocks it and nobody will send me a request for a meeting then, or nobody will call me during the
Okay, so myth number 1, busted that the public sector doesn't do any work. What's myth number 2?
The other myth, I think, in the public sector is that people are very laid back, that they are not agile enough. Again, I don't think it's that. I think it's the processes that we need to follow. We are agile enough. We know the challenges. We know how things are to be tackled. But there are...
But the process is the punishment.
Yeah, absolutely. And you have to abide by the process. Because the moment you break that, you actually put yourself at enormous risk. And it's not worth doing. So that is the thing. Whereas in the public sector, I think they have far more leeway in how they will process something. If they are really convinced that something is good and it needs to be proceeded on very, very quickly, they have the ability to do that because, well, they have the delegation of powers to enable them to do that.
Award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour, live on YouTube at CNBC-TV18, weeknights at 7 p.m.
China was very cheap and on the margins, especially with the DeepSeek. I think this has really rekindled hope. And by the way, their Xi Jinping is meeting the corporate investors and business people as well. So I think this is kind of bringing back the hopes that China may not be as against the capitalism as earlier thought out to be, right? So I think all this combined, plus I think, Indian market was good, fairly valued, good story, but there's no surprise there. There's no big trigger. It's good, but not for the time being, right? So if you're invested, that's fine, but otherwise there might be short-term money might be chasing, China for the time being, right? And US, by the way, right? So there's no, I mean, it's a popular trade. It's, I don't know whether it'll be right or wrong, but currently the trade is go long US, long China. Second is the credit growth in India. It has come to 11-12%. If RBI is able to just manage this economy in the manner that monetary policy and fiscal policy work in tandem, and the credit growth comes back to 15 to 18%, that's a thing to watch. I have always maintained a positive stance on India. It is just on the margins, where do you go underweight, overweight? Look, that's what the world does. If $100 start from US, 80, 70 go to US, 20 go to Europe, 10 go to emerging markets. Within this 10, about 2 comes to India. That's the 20% allocation. So about 1 trillion, about 20 billion goes to India. That is the long-term equation. That is how the numbers stand.
I want to address a separate myth, not public or private sector, but a myth that women are not risk takers or women are risk averse. And I want you to address that.
Again, I would say that this is true of every, what should I say, of every gender. Okay, there are risk takers and there are risk averse. I can show you as many risk averse men as there are women in my current organization. And similarly, the other side, as many risk takers, women as men. See, what happens is women are fewer in the organization and therefore they stand out. Now, out of that, even if, say, there are 3 women, even if one of them become averse to taking risk, she stands out. And the myth sort of perpetuates itself. I don't think it's the case at all. It's a question, it's totally, individual, ability, and not only ability, the propensity of individuals as to how they want to take their career forward. The second thing that's maybe perpetuating this is women, I think, have a habit of second guessing themselves. Because
Did you do that? Do you do that?
Oh yeah, sometimes I do. Sometimes I do. And